finally starting with a marathon. That is a revision class. Okay, now how many of them don't have conceptual knowledge? Sir, I feel I don't have conceptual knowledge. Raise your hands. I lack conceptual knowledge. In this conceptual knowledge, one who is raising your hand, sir, I'm a fresher, not a repeater, I'm a fresher. First time attending. First time I'm attending the exam. Till now, I've never heard any class. Regular class I have not attended. I have not attended regular class. Straight away I'm coming to marathon. Self-studies. Anyone in the self-study category? Hope so, no one. But first attempt, straight, pure first attempt. But attended regular class? Regular class attended? In detailed class? Online or offline? Recorded? Offline. Which batch?
Last year during summer holidays.
During summer holidays last year. Where did I handle by any chance? Where? That room only. Okay. I could not able to recognize your face. That's the reason. Okay, I can recognize her face. Okay, second and most important question. Sir, I have conceptual knowledge. But when I sit and do MCQs, life goes into misery. Oh, most of them in the class. Nice. Conceptual knowledge is there, but MCQs are the trouble. Okay, third, this is most important. In class, I will understand. But after going back home or when I sit and study, full tare zameen par. That is the trouble to me. I will understand everything in class. But after going back home or when I sit and start doing, that is when trouble starts to me. Okay, so looks like majority of the answers have come for conceptual knowledge missing and MCQ trouble. Which trouble? Okay, two options. Option number one, should I concentrate on concept or should I go with MCQ? Both, technically speaking, I need 10 days. 4 hours into 10, 40 hours. So half I will be doing, other half homework question. So you decide what you want me to do first. And let me say micro and macro. Okay, micro I have conceptual knowledge missing. Micro is a trouble. Anyone? Microeconomics is trouble. Which chapter? Fourth chapter. Fourth. Anyone other than fourth chapter? Third. Okay. Macro is a trouble. 90% of the class. Then we have to keep more time for macro and less time for micro. Chapter 1, 2. Anyone having issue? 5. Anyone having issue? Then I will dedicate lesser time for that. Wherever you have an issue, there I will dedicate more time. Remaining chapters I will dedicate lesser time. Macro 6, chapter 6, national income and Keynesian theory. Anyone finding it a trouble? Okay. 7, 8. 7 and 8. Okay, only 7. Only 7. 7 is full of storytelling about government. Okay, 8, money market. All this, money demand, money supply. Okay, 9. Chapter 9. Okay, very few. 10th or definitely full on data and information. There is nothing to teach there. Only I have to say which are the areas you should focus on, concentrate on. Okay, as per my understanding, chapter 3 you need more time. Chapter 4 you need more time. 6 you need more time. And 8 you need more time. These are the chapters where you are expecting more time. Clear? Okay. Like how many of them got 40 below in your previous attempt in economics? Economics 40 below. Economics 40 below. 50 below in economics. 50 below in economics. 50. Okay, down your hands. I attended more than 80 in exam. 80 questions and above I attended. My score was 50 below. Raise your hands. Attended 80 questions and above, but got scoring 50 below. The reason is negative marking. What is that? Negative marking. And you know why you got negatives? Over attempting of questions. That is first thing that you should stop. See, you may get hurt initially, but that is how practice works. If you are attending any test, let's say for example, they have given you the question booklet, right? You keep this target. I will attend 30 questions. How many questions?
30.
Only first 30 questions I will attend. Beyond 30, I will not attend. In that 30, whatever I know 100% accurate. That is like for 10% for sure. If I attend this, I will get marks. Only attend those questions. Let's say, sir, out of 30, I know just 5 questions, sir. Attend that 5. Enough. Attend 5. Sufficient. But are you getting 5 on 5? That matters. Suppose in 30 questions, sir, I knew 20. I attended 20. Human error will happen, sir. It's not like I will be 100% accurate there. Some 1 or 2 questions will go for toss. If that is the case, still fine. For 30 questions, if you are attending all 30 and wrong is becoming beyond 5, if 5 questions are beyond wrong, this is where you are making blunder. If you don't understand this, you will over attempt. You will eventually over attempt and you will end up losing marks in negative. When you are practicing, this is what you should primarily follow first. And let's say, sir, I know the concept, but I'm little confused between option A or option B. When you're practicing, if you feel this, I'm little confused between these two options because these two options are very close to each other. Looks like both of them are answer. If that is the case, open the book, see the concept, understand it, and then mark answer. This is how practice should go. Now, whatever just I instructed, how many of you have followed the same instruction till date? Raise your hands. Not even a single student. Did you know why I asked this question? Yesterday, one of the students, I don't want to name them, they came up and they expressed it. Sir, I have read your material. I have read twice. I have read thrice, but still unable to score beyond 50. You said by just following your material, we can score up to 80. But do you know why it is not happening? You are just reading. Reading alone will not serve purpose. Understanding matters. When you are stuck in any question, open the material, see the concept, then you mark answer. Initially, it will take time. Initially, let's say to attend 30 questions, you will take 1 hour time. But slowly, conceptual building will happen. Slowly, similar questions you will understand. Okay, boss, same question I had attended in the previous day. Same question I attended in the previous chapter. Similar connection was there. You will realize. So that is what conceptual knowledge is more important than just simply reading. Reading alone will not serve purpose. Theory papers, this is the biggest blunder everyone does. Sir, I will sit and read, sir. I will sit and read, sir. I will do MCQ, sir. It's not just reading, it's not just doing MCQs. Understanding where you are going wrong. First, you should know the root cause, where you are going wrong. Am I over attempting? Or don't I have a conceptual knowledge? Or am I stressing out myself too much with the intention to score so and so with the target? Understand this first. So if you are bad in something, rectify where you are bad at and work on that area. And don't compare yourself with any of your friends. Stop that. Oh, he got good marks, same paper, I didn't get good marks. Stop comparing. This is the biggest shit what you people can do. And now only I'm saying reading alone is not going to serve the purpose. You should practice, you should sit, you should write. Suppose if you have studied any topic, after reading, close your books, keep aside, take a sheet of paper, write. Like how you practice in law. Same thing, certain topics in economics you need to practice. When you are practicing, you will not strike with the technical word. Sometimes you will feel like, okay, giving it in a very simplified English manner. I understand this is MCQ paper. But when you practice, when you write things, that will get retained more. And if the technical word, if you are not understanding or if you are not able to strike the technical word, open the textbook, see that word, write it. See, you're not seeing the whole answer. You're just seeing that one sentence or maybe one line or that one word. That's it. That is like a glitch. That is like an error. If you get that error, you will write everything in a proper flow. That you practice. Automatically, you will remember. Automatically, concepts will go inside. And this is what the basic things that you guys have to do. This is what next 3 days you guys will be doing. This is the homework question. And now only I'm saying, if you are holding 50 questions, if you are taking 50 questions, in that 50, how much did you attend? Let's say, sir, out of 50, I attended 30. In that 30, how much you got 100% correct? Sir, this is what the answer. And error should not go beyond 3 or beyond 4. See, for 100 marks paper, usually I say this in class. If you are attending 70 or 75 or 80, consider 80. You are attending 80 out of 100 questions. In 80, wrong answer should never exceed beyond 5. For 80 marks. How much? If it is 30 marks, that means 3 questions. Technically 3. Initially, let's consider 5. Target, keep it as 5. Any paper that I attend, wrong should never go beyond. If I know answer, I will attend. If I don't know answer, I'm not attending. Sir, then what if out of 50 marks, I just know just 10, sir? Then I will not even pass. You are practicing, boss. You are not writing main exam. You're practicing. And this, whatever instructions I'm giving, this applies in your practice, not in your exam. When you're practicing, first paper you knew 10, second paper you know 12, third paper you will know 15, next paper you will know 17. Slowly that number keeps on rising. By the time before even reaching your exam, out of 50 you will be knowing 35 to 40 there. And the questions which you didn't knew, or maybe whichever you had confusion, that is second round. Now hold it. Why I didn't knew this? Did I had a conceptual knowledge and did I get confused with option marking, or I didn't even had a conceptual knowledge? Now you have to sit. That will kill more time. Second half will kill more time. First half, you know answer. You just calculated, okay, this is what I scored, this is what was wrong. Okay, this is where I made a silly mistake. First half is easy. Second half is difficult. Second half is where you should sit. Why I didn't had a conceptual knowledge? Did I study this chapter or not? Did I went to this concept or not? Open. The more you solve MCQs, it will be advantage. So when you are solving MCQs, simultaneously you should open the concept. So this is what the homework question. So after 1:15, once you take a lunch break, once you come back from the lunch break, I will be here in class till 9 o'clock. Anyhow, my regular batch is also going on. If you have any doubt, feel free. In the break time, in the middle, or if you want me to come little early to the class, let me say my class starts at 4:15. I will come at 3:30 if you want, or maybe 4 o'clock if you want. Whatever doubts is there, clarify. This is what backend preparation is. This is what we call ICU batch. Not just reading. After reading, did you understood? Did you understand? Do you have conceptual clarity? That matters. This is the manner you should follow. Clear?
Yes.
Hope so that what you should do after 1:15 is clear. Done? See, don't sit in front of book like for full 12 hours, 10 hours. You will burn out. Theory papers you can't. Always mix theory, practical. First half theory, second half practical. Like this you mix. Maybe accounts, economics, law, maths. Like this you hold two subjects. No sir, next to 3 days I will only concentrate on economics. If that is the case, even if you are having that, even we have practical part in economics. Chapter 6 is having practical, chapter 2 is having practical, chapter 8 is having practicals, numerical problems are coming in exam. Hold that with the theory. Mix match. The more you mix match and read, you will have, let me say, hold on the subjects. When I'm doing chapter 2, if I ask suddenly something about chapter 8, you can still answer. You have a knowledge. So don't focus only on that one area. So theory, practical combination you should prepare. Clear? If you're finding it difficult to follow this, yes, definitely you will find it difficult first 2-3 days because you are not used to it. Now you are inculcating the habit. It will be difficult. First to 2-3 days, it will definitely be difficult. But once you get hold on that, you will start enjoying. So year after, already you have a booklet, question paper booklet. Take out first 50 question, attend 50. In that, how much you had conceptual knowledge, how much you didn't had, why you didn't had conceptual knowledge. Understand. Do you have doubt in the concept? Clarify. If you don't know the concept at all, let me know. I will completely come up with the concept once again. Clear? Understood?
Yes, sir.
Okay, as of my understanding, detailed discussion is needed in 3, 4, 6, 8. These are the 4 chapters you need detailed discussion. Remaining chapters you need general discussion. Is that clear?
Yes, sir.
Am I correct or am I wrong?
Yes, sir.
Correct. Anyone? Any new addition? Any particular topic additions? Let me know before starting. Clear? Okay, today we'll focus on micro. Today we'll finish 1, 2, 3 and 4. We'll finish 4 chapters. So we will keep 3 days for macro. Chapter 5 is technically macro, not even micro that is. Chapter 5 is macro. More connections are there with macroeconomics. Clear? Let us get started. So in microeconomics, sir, chapter 2 also. Bindu, in which specific concepts in chapter 2? Sir, conceptual questions are easy, but GK questions seems difficult. See, first understand the pattern in which you will be getting the questions. This is most important. Wait 1 second. I will take up a new sheet for ICU batch. Quick note. Rename. Yeah. ICU batch note. See, I have taken past 5 attempts question paper. Simultaneously, I will take up this past 5 attempts and I will be discussing so that you need not to touch the previous year paper. We will be finishing with the previous year paper. Clear? Hey, where did this go? ICU batch. Okay, see, first and foremost, understand what is the question paper pattern, what kind of questions are going to come. See, out of 100 marks, first 60 marks is going to be the direct concepts. They will not twist, they will not turn, nothing. Straight away, what is in the material up front. 60 marks will come direct, straight away concepts. There is nothing twister, nothing brainstorming and all. 60 to 80 is where they will come with little tricky. Just tricky. Not even difficult. That means up to 80 you can easily score it off. What is the 60 to 80 after going back home, sitting, doing MCQs, solving the problems? All this is where 60 to 80 lies. Sir, 80 and above, 80 to 90, interconnections between the concepts. This is what question? 2 different chapters or 3 different chapters merged together, there will be one common question. That is where the 10 marks comes. Next 5 marks, that is 95 up to 95, some nook and corner of the material, they would have asked about the statement given by some economist. In bold letters, it will be there in ICAI material. For example, in chapter 3, they will be speaking about Alfred Marshall, Cobb and Douglas production function, like this certain statements, like for example, Samuelson. Now in between, Samuelson would have made some statement. Like this, certain economists have defined certain statements, and sometimes they will not ask question from the main content, from summary. They will ask from summary. So when you are reading even in ICAI material, summary is important. There are questions in exam paper, I will show. In main content, concept is not there. Summary, the concept is there. For example, chapter 8, the CRR and SLR concept was introduced by the recommendations of which committee? Narasimhan committee. And that concept is not there in the main material, that is given in summary. And one more question in chapter 8, cross rate. When exchange rates are determined based on the some other nation's exchange rate, that is called cross rate. And that concept is not there in material, it is there in summary. So like this, from summary, from economist point of view, that 5 marks will come. That is where you will find it difficult, because you have never studied ICAI material in a proper manner. Clear? And next 5 marks is GK. Hardly 5 marks. Another 5 marks is nook and corner of the book. Only this 10 marks is challenge. Except 10 mark, interconnections 10 mark, twister in the concept 20 mark, straight concept 60 mark. This is how papers are. You take up any paper, you start dividing that, you will find this. This is the ratio. And scoring 60 to bare minimal. In economics paper, bare minimal is 60. You cannot say that, sir, 60 questions I didn't even knew in that paper. Bare minimal it is. If you have conceptual knowledge, 60 to bare minimal. And above 60, this is where you will lose up in negative marking. That is what I said. If you know, attend. If you don't know, leave it. Don't over attempt. In that still, if you have put efforts after going back home, like how whatever I've said, up to 80 to guaranteed I can say. 80 and above is where I totally agree. Interconnections will be there. Little tricky will be there. Options will be confusing. And GK will come for 5 marks. Another 5 marks from nook and corner of the book. So scoring till 90, is it possible? Definitely yes. Above 90, your extra efforts. This is the pattern. So first understand what you need to do. So first foremost basics is concept, that is 60. Clear? Understood? Chalo, let us get started. We will go with the chapter 1 first. What is chapter 1? Introduction to business. See, there are only 5 topics in this, which is most important. Which are those 5 topics? Number 1, difference between micro and macroeconomics. That is important. Second one, normative signs and positive signs. One question definitely comes from that area. Next, most important, basic problems of economy. What is it? Next, types of economy, capitalistic, socialistic, mixed economy. These types of economy. 4 done. Sir, what is that? One more question. Either it comes from the initial part, Adam Smith, Alfred Marshall, or definition of business economics. These small area. That one question comes. So total 5 questions are important here. So what is the average marks weightage of this? Usually 5 to 7 marks. How much? First understand which chapter, how much of weightage is there. Based on that, which are the important topics in that chapter which you can't even ignore. That if you know, definitely. See, you observe question paper pattern, I will show. Whatever just 5 topics I said now, one questions will be there in that. When you know which topic, which question is going to come, revising it becomes very much easy. So economics was earlier a part of which concept? Political economy. Then why did we separate this economics? Because of Adam Smith. Adam Smith was the person who separated this concept of economics from political economy, and he wrote a book by name, An Inquiry into the Nature Causes. Which year? What did he said? Economics is a study about wealth. Economics is the science of wealth. What is economics? Clear. And later people started hating this subject. Sir, why did they hate this subject? Because it only speaks about wealth. Other than wealth, it will never speak about any other parameters. So people started calling this as evil science. So Alfred Marshall came up. Alfred Marshall said what Adam Smith said was correct. We need wealth, but wealth is not everything. We should attain welfare. What we should attain? Welfare of a person is important. So primarily economics is wealth, but ultimately we should achieve welfare. So welfare definition was given by. So Adam Smith is called as father of economics because he was the first person to give a proper definition of economics, and he separated economics from the subject political economy. And Alfred Marshall is called as father of modern because he spoke about the modern theories. Like for example, welfare is important than wealth. Clear. Other than this, in old syllabus, we also had something called as scarcity definition, growth definition. But in your syllabus, they have removed it. Not needed. But by mistake, if they ask in RTP and MTP, one single question is given. Who said economist must be neutral between ends? Who said economist must be neutral between ends? Robertson or Pigou? Robertson. Clear? Robertson is an economist. See, like this, they will ask from nook and corner. I said, na, some nook and corner, 5 question comes. This is where. So these are certain things which you should be reading ICAI material like a newspaper. Only that 5 questions. How many questions? So don't break your head for that 5 questions. Remaining 95% questions are there. Concentrate. Clear? If you are unable to crack any question, leave that, go to next question. Don't sit and keep on wasting the time doing the same thing again and again. Don't do that mistake. If you are unable to answer it, leave it, go to next question. See, first in 2 hours, first 1 hour is dedicated only to the questions which you know. Attend that. If you don't know, if you are getting stuck, leave it, go to next question. Leave it, go to next question. Maybe out of 50, you would have attended 50 questions. Out of 150, so you will attend in 1 hour. Remaining 50 is where you should select what to attend, what not to attend. That clarity should be there. Now, next, what are the fundamental premise of economics? That means fundamental. Premise means assumptions. What is fundamental premise? Human wants are. Resources are. Now, limited resources are there, unlimited wants are there. How do we satisfy? By using limited resources. That is the question of economics. How effectively are we using resources? Because resources are limited. To satisfy which want? Unlimited want. That is the fundamental premise. That is what economics, general economics all about. Which economics? But we are not interested much in general economics. In our syllabus, we are interested in what is business economics? Taking right decision at right time. Taking, that means rational business decision making. Technical words. See this word you should remember. In the question, they will be speaking about these kind of technical words. Rational business, that is called as business economics. What is it? Taking right decisions at right time to achieve organizational. This is important. Now, what kind of decision? Now, I have limited resources. In economics, what do we call as resource? Input. What is that input? Land, labor, capital. I can't start every business. I need to do a selection. Let's say, Shashikiran, I will be teacher. I will be market research agent. I will also be an entrepreneur. I will also be cricketer. You can't be boss. Select any one which can achieve your objectives. Any one you should select and other alternative you should reject. Like this, you understand by collecting all the basic informations. What is feasible, what is not. Taking right decisions at right time because I need to use my resource. Resources are limited. By using this resource, land, labor, capital, and I should achieve my organizational. That is business economics. And who defined this business economics? Gialdian. And this can be questioned. Who defined business economics? Clear? Next comes difference between micro and 3 differences are there. That is most important. Micro, individual aspects in detail. What is it? It will discuss about individual aspects in detail. Macro, entire economy as a whole. Like for example, national income, unemployment in the country, poverty in the nation. I will not say unemployment in Kormangla, Bangalore. No. That is discussing in detail. We are not doing that. We are considering entire economy as a whole. What is it? Entire? National income, unemployment, poverty, GDP of a nation, all these are entire economy, which is bigger picture. That is entire economy as a whole. And microeconomics is called as Why? Because determination of market price, demand and supply, market forces, that is the primary factor of micro, deciding the price. And when we sell the units, we earn income. Where do you sell? External element. External is macro. Macro is a dash theory. Micro is a clear. Micro individual in detail. Macro entire economy as a micro is full of and unrealistic in nature. Macro is realistic and there is no clear. These are the three major difference between these two. Clear. And rest remaining things. Micro is internal, macro is external. Micro is worm's eye view. A small worm, if it is crawling on Earth's surface, it can see only small area. It can't see the big space. Macro is a bird's eye view. Clear. And there is one more explanation in the ICAI material. What all are the micro elements? Demand forecasting, product pricing and costing. Whatever comes inside the organization, we understand the concepts within an organization to understand and decide the dash price. That comes under micro. Next comes under macro, business cycle, stages of business cycle, per capita income, standard of living. All this will be external. All this will be, that is macro. Clear? Now, economics is micro and as well as, but the problem with micro is and unrealistic, but macro is and there is no assumptions. Clear? Next. After understanding micro and macro, next comes nature of economics. In this, there are three topics. Whether economics is science or arts, positive science and normative. Economics is interdisciplinary in nature. Only three topics. Number one, is economics science or is economics arts? Science in theory, art in practical. In order to call it as science, there are 5 conditions. How many conditions? First one, systematic body of. That means hierarchy should be there. That means I will not study everything in advance at a time. No, first easy, next little difficult, next little confusing, next to torture level. Like this, we will go slightly one by one step up. If that is the thing, that is called as science subject. In economics also, first we will not scare you. First we will say economics easy. Next we will show you one big pit hole. We will make you to go inside. And later we will say this is dark. You need to light up. Like this, demand, supply, cost and everything. Next cocktail, market. After that, bomb, business cycle. Next, national income. Like this, slowly we will bring the difficulty. So, systematic body of knowledge. Answer should be in demand, elasticity of demand. We are quantifying answers. Next, answer should be if price increases demand, if price decreases demand. Predicting na. Next, there should be to measure the, like for example in science, to measure distance we have kilometers, to measure liquid items liters. Same way in economics, to measure utility, what is it? We have a tool called as utils. It comes in chapter 2, consumer behavior. Next, last but not the least, answer should be same throughout the globe, but in economics this will not happen, because what is the demand in Bangalore is not the same in Delhi. What is the demand in India is not the same in Australia. That means economics will satisfy only first 4 conditions. It will not satisfy universally acceptable. So economics is no doubt a science, but it is not a. Economics is a clear. Economics as science, 5 conditions are there. That 5 conditions you should know. Next, economics as a art, practical application of knowledge into business. What we learn, we should implement that in real life. That is called art. I know my people will not come and say, let me say they will buy the goods. If I say goods is 499, MRP 999, flat 50% off. Now they will buy. Because 50% off is there. Na? See, practical application of knowledge. Buy 2, get 1 free. What is it? For one single unit, it will be 500. If you buy 2 units, that means 1000 rupees. If you buy, you will get 3. But in reality, the price was only 300. Rather than selling for 900 for 3 units, now I will say buy 2 MRP and get 1 free. Practical application of knowledge. That is what DMart does to you. End of the day. That is what supermarket. See, what we learnt in theory that we should apply in the practical life. So, art is practical, science is theoretical. Clear? Now, today, if at all we see the real world, what we study and what we apply is also one on the. We have learnt our people are very good people. If we give big billion day offer, Amazon festival sale, then only they will come and buy. Normal day, you tell them to buy, we don't buy. Okay, we will also do that. So, science as well as art. Science in its methodology, art in its. That's it. Next comes positive science and Normative signs. So what is this? Positive, normative. And this topic can be merged with any of the chapters in the economics. They will ask you the question by mixing this. What is it? Now understand. Positive signs will only define problem. What is it? And they are more and more concerned with the cause and effect of facts. Let's say, for example, in Bangalore, highest number of pubs are there in Asia. Fact. What is it? Fact. Positive signs. In Bangalore, there is a more number of two-wheeler riders. Fact. Clear? Now let's say next news will come. There is a heavy rain expected in Karnataka in the next 3 days. They're speaking about problem, defining problem, but they didn't give any solution. They didn't give any. If they also give solution, normative signs, there is a heavy rain expected in Karnataka state for next 3 days and fishermen are advised not to go for fishing or schools and colleges should be shut. Defined problem, also given. That is normative. Now let's say, for example, law of demand. All other things remains constant. Only when price increases, demand decreases. What is this? Are they defining or are they giving solution? Defining. They are speaking about the facts. Positive signs. Like this, any topic, you take up any chapter, they will merge this positive and normative. See, simple logic. If they are only defining problem, positive. Along with defining problem, if they are giving solution, normative. In positive signs, they are more concerned about. This is where questions will be. Defining fact, cause and relation. These three will be there. And in the exam, you will be reading that statement. They should do it. Suggestion. They will be doing. Fact. The small statement differences will differentiate between positive and normative signs. Clear? This is the difference between positive and. Next, pragmatic in approach. What do you mean by this? See, today business economics is important. What is business economics? Taking right decisions at. See, our economist Alfred Marshall, Adam Smith, 1776, 1821, they have defined a theory. That theory may hold good even today or may not hold good even. Technology has changed. 1776, 1821, artificial intelligence was not there. Robots was not there. Machines was not there much. But today, way of conducting business has totally changed. The way we should perform should be in practical sense. Which sense? Not just following theory. So theory plus practical, both put together when we analyze, that is called pragmatic in approach, and business economics is pragmatic. See, business economics is pragmatic in approach. It tackles which problem? Which the firm faces in the clear. Next, interdisciplinary and incomplete element. These two are interconnected. What is interdisciplinary? When you are doing business, only just with business knowledge alone you can't survive. You should also have knowledge about accounts, like how to make bookkeeping, marketing, statistics, management theory. Like this, various subjects knowledge is also needed to run your business in successful manner. So business is not independent, it is interdependent. What is it? And it is incomplete element. Not just running a business knowledge alone is required. Nirmala aunty, most important lady in India, how much tax she is going to put? Where and all she has a restriction? What are the license that we should take? What are all the new rules and regulations which has been brought in? What are all the policies of India? What all we allow for export? What all we don't allow for export? What is the labor law in the country? All these rules, regulations, laws, applicables, everything we should understand. That is called incomplete element. See, what is the general price level in the nation? How prices are frequently increasing? How much people are earning income? What is the level of employment opportunity in the country? And what are the government rules, regulations, policy? How much of tax? How much of interest rate is there? How much is the industry rules and regulations? All this we should know to conduct the business in effective manner. Last but not the least, what is it? Business economics is based on microeconomics. Why? We should take decisions now for achieving what organizational goal. For that, we should understand economic tools. Which tools? Like demand, supply, cost, everything. So that is mainly based on microeconomics. Mainly based on. See, business economics is largely based on microeconomics. As a business manager, we are largely concerned in achieving dash of the. Since business economics is concerned with making aspects, so individual establishment, that means a business is heavily relying on. By this, unit 1 comes to an end. Chapter 1, basics. And in this, one more question they will ask. Business economics and normal economics. See, remember, business economics is a part of general economics. What is it? Business economics is a. See, general economics is a bigger term. Under that, one of its is business economics. So business economics is a branch of general economics. So it is an applied branch. What is it? Of general economics. So which is the wider concept? Inside that, what we have is say nothing much in the unit 1. Next comes unit 2. Basic problems of this flow chart is important. What is this flow chart all about? Simple. Resources are limited. Human ones are. How exactly are we allocating these limited resources? So the whole problem of basic economics comes from what? Allocation of. Based on allocation of resources, there are 4 problems. How many problems? First one, second one, third one. What provision should be made for economic growth and development? That is the 4th problem. Clear? Now, first one, what to produce? What type of goods and services should we produce in the country? That is also called as problem of. That means, Shashikiran, are you producing durable goods in the country or perishable? Single time use or multiple time use? Superior goods or? Like this, we should first decide, because we have a limited resources. What goods are you producing and in what these goods and services has to be produced? That should be identified. Okay, Shashikiran, now I am a chocolate manufacturer. That means it is a durable or perishable? Is it single time use or multiple time? Let's say 1 rupee, 2 rupee Alpenliebe chocolate, inferior or superior good? Let's say I am a manufacturer of luxury watch, Rolex watch. Durable, perishable, single or multiple, superior or inferior? Like this, first decide what goods are you producing. That is problem of. Okay, sir, we decided what goods to produce. Now, what technique are you using to produce? Labor are you using more or capital are you using more? That is called as. It is a choice of between labor and. See, by using labor, can you produce at lesser cost, or by using capital, can you produce at cheaper cost? That you should understand. A labor-intensive country like India, for us, labor is available at cheaper price. So we use which technique? A country like USA, capital-intensive, labor is less. They can produce at which technique? That's it. Next, for who exactly are you? Is it based on age group? Is it based on caste? Is it based on creed? Or is it based on their income level? Or is it based on any of the attributes? You divide your customers. Now, for example, now aviation sector, they will divide their customers into 2 segments: business class customers, economic class customer. Now, for book publication, school books, college books, novel books. Like this, they have attributes. Let's say, for example, hospital, old age care, young age care, normal care. Clear? Like this, we will divide on for who exactly is your targeted customer, which class of society they belong to. Is it upper class, middle class, or lower class? And what is their ability to buy your goods and services based on the price what you are setting? Understand that. That is called as for whom to divide. Understand how the nation's goods and services, that means GDP of the nation's goods and will be distributed among various people in the country. Last but not the least, what provision? Provision means setting aside. See, we know resources are limited. We can't use the resources for every other purpose. So decide what all importance is there, for what you should use the resources, and also save that resources for future generation. Which generation? Future generation. Don't exploit each and everything for just present generation. Also preserve it for which generation? That's it. So these are the 4 basic problems of economy. Clear? Understood? Okay, supply concept. What are the tricks to study for economics in 30 days? Hello, then what did I speak just now? Divya, madam, wake up. It's already 9:30 now. Nice. Clear? Yes. So how many types of economic systems are there? 3 kinds. Capitalistic. Understand the background of this. Capitalism, private people are dominated. Socialism, government is dominated. Such government is called as CPA, Central Planning Authority. Mixed economy, as the name say, both cocktail, like India, government as well as private. See, capitalistic economy. Which economy? See, first and foremost, private people are dominated, and private people will be having most of the resources, factors of production in their control, like land, labor, capital, organization, production decision making, what type of goods to be produced, how to be produced, all this, everything is decided by private people. See, private ownership of property. That means they have something called as right to property. See, this is the keyword. This you should remember. In exam, this keyword, that is where the question comes. Right to property is existing in which type of economic system? Or they will give some 4 pointers. Which among the following is not an element of socialism? They will give right to property in that. Right to property belongs to whom? That is why these technical terms should be there. And there is a freedom of entrepreneurship. That means as a private guy, you will decide whatever you want. Government interference is almost zero. What is it? Government interference is? That is what we call laissez-faire economy. Which economy? And there are 3 different names for this capitalistic economy. Private run economy, laissez-faire economy, or and private people, what is their main intention? Profit motive. And in this type of an economy, there is an existence of competition between the, because we all are working for profit, na? Competition is there. We will be fighting with each other, and consumer sovereignty is not restricted. So what do you mean by consumer sovereignty? Choice making ability to customer. It is not restricted. Now you can choose with whom you want to buy, from Mr. A, Mr. B, Mr. C, whomever you want. And based on the choice of customer, what type of goods and services to be produced, that is decided. That means demand and supply works. What is it? Market mechanism. Market mechanism is still operated in this private economy, and this economy biggest drawback is unequal distribution of. Rich will become more richer and rich, poor will remain. Exploitations are at the high level. See, same topics have been split into merits and this is where you can also expect exam question. They will ask, which among the following is not a merit of capitalism? Which among the following is not a demerit of capitalism? See, what is it? Encourages the, since competition is there, economic activity gets stimulated and maximum efficiency, because they need to earn more profits, they will try to earn maximum efficiency. Next, dash economy. It keeps on changing. Taste and preferences of people keeps on changing. Open the door, madam. Is AC not working there? This AC is right next to my face. After 1 hour, I will feel cold. And I think no other class is going on in the next room, right? No, okay, chalo, fine. In the break time, they will remove that. Don't worry. Now, dynamic economy. That means economy keeps on changing every now and then, because taste and preferences of people changes. Today you like pastries, tomorrow you will like cupcake, day after tomorrow you don't even like cake. Like this, people's preferences keeps on. So economy changes very fast and there is a rapid economic growth. So these are the advantages. Disadvantage, unequal distribution of income, and since there is dash economy, business will be unstable. That means environment keeps on changing very fast and consumers are getting, see boss, I am interested in profit motive. Whichever goods will make me to earn profit, I am only listening to those trend of demand and I will produce that. I am least bothered about poor people's demand. I am only satisfying the needs of rich. What is it? Needs of misallocation of, because profit motive intention, I will only produce those goods which will make me profit. I will not produce every economic good, which is consumed by masses. No, I will only focus on profitability. What am I focusing on? Next comes socialistic economy, also called as command economy. What is it? Or CPA economy, centrally planned economy, or public run economy. Public run. Three names: command economy, CPA economy, public run economy. This concept of socialism was introduced by Karl Marx and Friedrich Engels in the year, in the book called as, and remember, today no country in the whole world is purely socialistic. What is it? Long ago, once upon a time, between 1917 to 1990, USSR, presently called as Russia, used to follow the socialism. But now elements of socialism, see, not purely socialistic. What is it? Elements of socialism is followed by Vietnam, China, Cuba, Laos. There are still more countries, but as per your syllabus, Vietnam, China and Cuba. Remember these 3 names. They follow the elements of socialism. That means domination of government control is more. Private people are also existing, but government control is more. Socialistic patterns. Clear? Next, North Korea. See, just yesterday, he has launched one missile towards Japan. He's like, no one is inviting me to war. I will only come. Wait. He self-invited himself now in the dreams. See, he launched one missile towards Japan and Japan is already on high alert now. Now, new war is going to happen next. North Korea and Japan. Next, see, North Korea is a word, totalitarian state. That means earlier there were rulings, different types of rulings like monarchy, oligarchy, like this. Now, totalitarian, only one family has a control on whole nation. That is totalitarian. Clear? Next, features of socialism. Public ownership, no private control, nothing. Complete resources will be in the hands of whom? What is the government called as? No freedom to the private people. Full role, full control by the government. Government intention is profit motive or welfare? Social welfare. And planning mechanism. What is that? In India, earlier we had now 5-year plans. Like that planning mechanism will operate. But price mechanism works in which economy? Capitalistic economy. That is demand and supply. Clear up. Price mechanism was working in capitalism, but planning mechanism will work in capitalism. Competition was existing, but socialism, everything is decided by no freedom to private at all, and consumer sovereignty was not restricted in capitalism, but here it is. Boss, it doesn't matter whether you are rich, whether you are poor, whether you are beggar. Everyone gets same type of goods and services, and restriction on freedom on. As a private guy, you can't decide on your own. You should always follow CPA. Next, equitable distribution of same things we have divided into merits and last but not the least, which economy? Straight away will come to comparison. Wait, yeah, comparison. Ownership of property. What is it? In mixed economy, who will be having both? But in capitalism, socialism, that is CPA, and freedom of enterprise, that is public enterprise, is only existing in socialism, but private enterprises are existing in capitalism. So in capitalism, you have a freedom. Private people can choose what they want to do, everything. But here, no choosing and all. No freedom. In mixed, freedom in. No freedom in. Motive of production. Capitalism. Socialism. Welfare. And mixed economy. Profit in private. Welfare in. Next, who will produce goods and services? In capitalism, demand and socialism, CPA. Here both price as well as. Next, competition. Where is competition existing? Only in. No competition in mixed. Competition only exists in. Next, distribution of income between the people is unequal in. Equal in. Now this is important. Even in mixed economy, it is considered to be unequal. Next, who will control the government or roles of government? In capitalism, laissez-faire approach. Zero intervention of government. But here, full role in public, limited role in difference between all the three. Now this is where exam question comes. This area and one more area. Till date, the questions was never been asked, but they may ask this. Demerits of socialism from the words of Schumpeter. Schumpeter said, see boss, mixed economy is just like a temporary benefits given to public. It is a capitalism only. You are just giving temporary benefits. Which benefits? He said capitalism in an oxygen tent. They will give this. Capitalism in an oxygen tent was described by whom? Schumpeter. And they will give Adam Smith, Alfred Marshall, Robertson, Schumpeter. You will be like inky pinky ponky between Adam Smith and Alfred Marshall. On the result day, your monkey, your friend is Venki. 2 white, 1 red, fix. Clear? This is what? 5 questions I said, nook and corner they will pick. These are the kind of questions. Clear? Excessive control and heavy taxes. In which economy? Example, India. See Nirmala aunty. What is taxed? Not what and all. Everything is taxed. Who is taxed? Not who and all. Everyone is taxed. Next, you want to breathe air in India? Tax. You want to go to Kashmir? No. Very pure air is there. 300% tax. Next they will bring. Don't worry. See next. Mixed economy is difficult to. Because controlling between private and public is not always an easy task. In home, you and your sibling controlling only, your parents are unable to do it. And in the whole country, public and private, both has to be brought into proper balance. That is not an easy task. That is a difficult task. Clear? By this, chapter 1 comes to an. Madam. Let it be open, like ventilation problem for boys. Exams are going on. Close it, madam. Done? Finished? By this chapter 1 comes to an end. Any doubt in chapter 1 before moving to demand? Okay, before entering into demand, write down the important topics where most repeated questions are coming. That is where you should focus the most. Point number 1, in demand concept, law of demand and exceptions to law of demand. What is it? Law of demand and most important, elasticity of demand, especially price elasticity of demand. E greater than 1, E lesser than 1, E equal to 1, E 0, E infinite. Anyone having doubts in these concepts? Elasticity, law of demand. Yes, madam. Which one? Which one in that? Full topic. My heart skipped it beat just 1 second it skipped. Because minimum 20 hours syllabus. First 4 days in my regular class, 5 hours of class into 4 days, just only goes to chapter 2. Like full in the class, torture will be there that day. Full graph, Rangole competition, different color, everything. Okay, fine. Okay, let's get started. I will explain. Don't worry. I will teach you the shortcuts to remember. But don't you have a conceptual knowledge, or you have a conceptual knowledge but doubt with the concepts? Good. Bachao. If conceptual knowledge was not there, then I will be like Shashikiran, Govinda. Today, entire day will go only this one topic only. Okay, chalo, fine. We'll get started. So total 3 units are there: demand, supply, and whatever we discuss in demand, full opposite will be supply. See, logic you need to understand. Demand, customer point of view. Demand, whose point of view? Supply, producer point of view. What we discuss in demand, full opposite will be supply. Clear? And consumer behavior. Name itself says how a customer behave. When product is given for free, nangu na mane orgu irli. That is how they behave. When you are paying the price, kadame idre matra tagaltivi. When it is less, then only we buy. Next, we don't want to pay anything. We will go on satisfaction basis. Which basis? That is what we discussed in the last unit. Ordinal approach, cardinal approach, all that. In chapter 2, unit 1, there are 5 areas which you can't ignore at all. If you ignore this 5 area, forget 7 marks. How much? Pakka easy scoring, 7 marks gone. Which are those? Number 1, numerical problems in demand. Which problem? When I speak about numerical problem, 2 areas of numerical problems. Number 1, formula method and arc method. Which method? Formula and relationship in outlay method. What is it? Relationship in? Total outlay method. TR increases, TR decreases. Same direction, opposite direction, price and outlay relationship na, E greater than 1, E lesser than 1. That is most repeated question, that is. Clear? After that, next highest repeated area in the numerical problem is in the supply equation. Which equation? Demand function, supply function. D is equals to A minus B of P. That means here instead of D, they can also give it as Q. What is it they can give it as? Q. Quantity demanded. This equational questions. And straight away formula method, arc method questions based on using the formula. Elasticity calculation. This is so repeated. Every single attempt that question is compulsory. Clear? This you can't even ignore it. And price elasticity of demand questions, you can't ignore. And especially in income elasticity, E greater than 1, E lesser than 1. Cross elasticity, substitutes, complementary, numerical problem. Which problem? Numerical problem from cross elasticity, numerical problem from demand and supply equation, formula method and arc method. This you can't ignore. Every attempt, you take out random paper. You see whether RTP, MTP question paper. In every paper, this question is compulsory. And this will definitely come. Clear?
Yes, sir.
Let us get started.
Yes.
Okay. Now, what do you mean by demand? 3 elements are there to call it as a demand. Desire, ability, willingness. What is it? When all the 3 matches, then only we call it as demand. And this desire, ability, willingness is called as a demand. And to affect that demand, we have determinant. Shortcut to remember. PITCAT. In that most important one is, if price increases, demand. As a customer, we don't want to buy more units when price goes up. When price reduces, that is when we buy more and more units. So this is the dash rule of the chapter. And price affects demand to dash extent. Maximum. And dash is the primary factor. That means first and foremost, price changes. When price changes, then later dash changes. And now that has been classified into two elements. In demand function, D is a function of price. That is demand function. Which function?
Demand.
And same demand function is expressed as Q is equals to A minus D of P. Elaborated equation. And this is where exam question comes. This one, elaborated equation. There, this has a connection with price elasticity. What is it connection with?
Price.
Three different ways of asking question. How many different ways? Three different ways of asking question. Now, in demand function, two kinds are there. Direct relationship and
Indirect.
in that indirect is what? The main thumb rule. Negative relation. Which relation?
Negative.
Price increase, demand decrease, price decrease, demand increase. But direct relation is also called as, and this is what we call exception to law of demand. What is it? So first and foremost is price. Second one, income. Income has positive relation. Which relation? Next comes Nirmala aunty. Tax. In these two types of taxes there, direct tax and direct tax we speak in chapter 6 also. Disposable personal income. Indirect tax. Let me say general tax. When tax rate goes up, will you buy more units?
No.
So negative relation. Which relation?
Negative.
Next, climatic condition. When climate changes, we will demand different things, and advertisement, most stupid things in our country. We will influence the people in different ways. Santur, mummy. Example. Next, taste and masala dosa, golgappa, all this gobi manchuri, that crispy dosa with the broomstick. In hotel when you go with the broomstick, they will put what? Water. Full one broomstick coating. Tabak charr that will come na. All this taste and preference. Next, what is India known for? Stupid fellows. You guys are only the population. When population is increasing, demand will also. That means demanding capacity will increase. Next comes most important, complementary. And this is where you will commonly make the mistake. What is a mistake? You should always compare one product with the another product. But you will compare same product price, same product demand. Wrong. That means, let's take petrol and bike. What is it?
Petrol.
If petrol price increases day by day, will you buy more bike?
No, sir.
Decreases. Negative relation. Petrol and bike, use it together or use it one after the other. Complementary good. So complementary goods are having negative relation. Which relation?
Negative.
You should compare price of one commodity to the demand of the another commodity. But blunders, what you will do is price and demand for same product you will analyze. That is price elasticity. Clear. Cross. Cross means comparison. Cross means. And cross elasticity has one more name. What is that? Or cross. When we speak about this cross, complementary and substitutes, that is also called with one more name. Related goods. What is it?
Related.
Keep this in mind. Related goods are also nothing but complementary and substitute goods. Clear? See, in substitute, what happens? For example, tea and coffee. Sir, I wanted to go and buy coffee. Coffee price have gone up, sir. I don't want to buy coffee. I will buy tea. In substitute also, there are three different types of substitute. Close substitute, not close substitute, perfect substitutes. In cross elasticity, we will discuss all this. Clear up? Just understand the meaning now. What is substitute? Next best alternative. Next best. Sir, I wanted to buy 5 rupees dairy milk. Not there. 5 rupees gone mad. Substitute. Sir, I wanted to buy bike. Bike petrol prices are going up. So I don't want bike only, sir. I will buy electric vehicle. What is this? Complementary or substitute? Substitute goods. But complementary means, sir, with electricity only I should ride this bike. Na? With petrol only I should ride this bike. Na? Together use. What is it? That is complementary. In complementary, remember negative relation. Substitutes. And even answers for substitute will be in positive values. Complementary answers will be in. This is where blunders you will do. So be careful. What is my name? First alphabet in my name. Substitute good first alphabet. Both are positive relation. So, shortcut to remember in exam. By mistake if you get confused. Shashikiran first alphabet, yes. Substitute good first alphabet. Both are. If substitute is positive, complementary. Clear. So pit cat PC, shortcut to remember. And demand function is not only with respect to price. Demand function is with respect to pit cat PC. Functional relationship with what? Next brings the law of demand. All other things remains constant. According to whom? Ceteris paribus. It is a Latin phrase. Which phrase? And once the question was also been asked in the exam. Ceteris paribus. All other things remains equal. That means in PitCat PC only and only price changes. Everything else will remain. And Law of demand will only show the direction. If price goes up, demand will come down. But how much price went up, how much demand comes down, that is never expressed. For that, which concept do we need to study? Elasticity. Clear up? Now, law of demand means negative relation. Which relation? Thumb rule. Price increases, demand. Price decreases, demand. And there are certain places where this negative relation not works. That is called exception. What is it? Favorite questions to ICAI. This is where one or the other question keeps on coming. Giffen's goods, inferior goods, conspicuous consumption, conspicuous necessary, expectation of future change in price, or speculative goods. All of these are under exception. That means simple logic. Negative relationship will not be there. Which relationship? Number one, conspicuous goods, luxury goods. In case of gold, diamond, even though price goes up, demand will. Next, your favorite person, Giffen. And this is the most favorite question to ICAI. One or the other way, they will pull up the questions here. In inferior goods. Which goods? Inferior. That means low quality goods. Which quality goods? On which customer spends dash part of income. Both the relations should be there. See, that means these are inferior, low quality in. That means in comparison to something superior, what we are using is low quality in nature. Sir, I wanted to prepare biryani at home. For that, my mom said me to bring basmati rice. But 150 rupee kg, sir. We decided one thing. Okay, we bring normal rice only. That jiriga sambar rice, 70 rupee kg. That means in comparison to basmati, this jiriga sambar rice is inferior in nature. They need not be always low quality. They are inferior. That means low quality on which our people are spending dash part of income. Biryani rice, normal rice, Puma, Poma. Puma is virginal, superior. Poma is inferior. Even though this Poma price goes up from 200 rupee to 300 rupee, you will still buy this 300 rupee one only. You will not go and buy the 2000 rupee virginal Puma or RCB jersey by giving 6000 rupees. Highly impossible. Even though we'll buy in the local market at 400 rupees only. We are not giving 6000 rupees for Puma and all. Hey, what stupidity it is. Next, snob effect. Which effect? Snob. Next, another favorite area of ICAI. Snob effect, best example is Zudio. You went to Zudio. With great josh, excitement, you shopped. All new collections came up. Like you, everyone has done. Next day, when you are wearing that new dress with excitement, even others are also wearing the same dress with excitement. And it has become like uniform. In the class, one single dress is, let me say, 6-7 people are wearing it in common. Now you feel like, I don't want to use it. Or even though if I want to use it, once in 3 months, once in blue moon, I will use. That is snob effect. Which effect? Snob. When product becomes common, automatically we will reduce its consumption or altogether stop its consumption. That is called snob. Veblen opposite. Same like conspicuous, luxury goods. Even though price goes up, I want same product. I want to come in Rolls Royce only. No Audi, no BMW. What is my prestige? Rolls Royce only. Even though price goes up, even though I still want same product to satisfy my conspicuous needs. Satisfy my conspicuous needs, conspicuous consumption, luxurious consumption. Who does that? Same word to word will come in question. Word to word will come. Next comes conspicuous. That means demonstration, bandwagon. See this they can club with any chapter. Any question can be clubbed here. They can mix it. What is that, sir? Someone else is using, sir. I also liked it, sir. Let's say my friend bought a new watch. Good, sir. Even I want same watch. Even though price goes up, I want same watch only. That is conspicuous necessaries. Also called as demonstration effect or expectations of future change in. Sir, in future price will change. Price will increase. My parents are smart. On the day of festival, they don't buy. 2 days before only. Why? On the day of festival, prices are increase. In future, if prices are going, now only demand will increase. Positive. Same applies opposite. In future, if prices are decreasing, we don't buy now. In future, we will buy. Present demand decreases. In terms of COVID lockdown, highway food articles, when you are traveling on national highway, in that shop, 20 rupee biscuit is selling for 25. Still you will end up buying 20 rupee water bottle. You will buy at 25. Yes, next 50, 100 kilometers, no shop, emergency. I have to buy. Next, in case of betting, gambling, auction sale, price keeps on going up. Demand for the product also keeps on increasing. Next, present trends and changes. Torn jeans example in the class. Now, baggy jeans, best example. Earlier, if people used to wear a loose t-shirt, people used to tease me. When I was a student like you people and all, na, if I wear that loose t-shirt to my college, my friends, Jana Magani Mappan t-shirt hakamambudidya. That is how they used to tease. As if you are wearing your dad's t-shirt. Now, people will pay extra money to look like wearing your dad's t-shirt. That is called baggy. Loose t-shirts. See, trend. We are okay to pay. In that scenarios, law of demand will not work. So, these are the areas law of demand will. Clear? And most repeated question in exam. That's those areas. Next, this is simple concept. Demand schedule representing demand in the form of. Next, demand curve representing in the form of. General nature of demand curve is dash sloping curve. Downward sloping curve from left to. Next comes the most important topic. This is where market 100% important. Full. All the four elasticity important. Price, income, cross, advertisement. That means now we will represent numerical change. Which change? Suppose if price increases by 10%, how much percentage will demand decrease? So like this numerical changes, that is elasticity. In that four types, price elasticity, income elasticity, cross elasticity. By mistake, if question comes from advertisement elasticity, jackpot. Because nothing much. And there was numerical problems from advertisement elasticity like stupidity. Just one method you should know there. Next comes price elasticity. In this vast and the biggest one, whenever price is changing, that will also make to changes in quantity. There are 5 types of price elasticity. Relatively elastic. What is it? Madam, which topic, which one you have a doubt in this? Especially you said, sir, conceptual doubt. Which one? Okay, done. But be careful here. Now, relatively elastic. What is it? Suppose if price increases by 10%, reaction in demand is more. Let's say 30% demand will decrease. Price changes by small. Demand changes by. So it is called as more proportion. Which proportion? So E greater than 1. Elasticity reaction is greater. What is it? Greater than 1. More proportion. And the nature of curve will be flatter. Nature of curve will be, no doubt, downward sloping only. It will be dash flatter curve. Clear? And this is where exam questions are also going to come. Numerical problems, if you remember. Now, let's say P, Q, that is price. Let's say initial price. Which price? So, initial price of the product, let's say rupees 10. Initial quantity sold 100 units. Now, price we will increase it to 15. When price increases, demand decreases. Now, let's say, for example, demand has gone down to 70. What has it gone down to? Now, formula method. Which method? Price by quantity into change in quantity by change in price. Now, 1 second, listen. In ICAI material, there is no same formula. What they have given? Price divided by change in price into change in quantity divided by quantity. They same, na? It is same only. So, most of them had a doubt also. No, sir, you said something different, sir. In ICAI material only, they have given different. Basic mathematics. It is not even economics. Clear? What is that price? Initial price. What is that Q? Initial quantity. What was the initial price? Initial quantity. That's it. Next, change in quantity. Difference between old quantity, new quantity. How much? 30. Next, difference between changes in price. 15 and 10. Difference. 5. That's it. Now, here you have to ignore negative value. Ignore. See, because end answer will always be negative because price elasticity or elasticity of demand is dash relation. Price goes up, demand decreases. Price decreases, demand. It will be in the negative relation only. So answer will come in negative. But the problem is, without ignoring negative, we can't solve the problem here. Every time answers will be in negative. That means negative means lesser than 0, na? Then we are calling E greater than 1, E lesser than 1, E equals to 1, E equal to 0. There is nothing called lesser than 0 here. So we should ignore negative. What is it? And then identify the answer. If it is E greater than 1, which elasticity? E lesser than 1. E equal to 1. E 0. E infinite. What does it mean? Suppose if price increases by 10% and if the quantity changes greater than 10. Quantity changes? That is relatively elastic, more proportion. Suppose, sir, price changes by 10%, sir, but demand is changing only by 5%. That means reaction is less. Reaction is less proportion. What is it? E lesser than 1. Suppose, sir, price increases by 10%. Demand also decreases by same proportion equal to 1. Sir, whether price increase, whether price decrease, no change in quantity at all. Reaction is 0. Reaction is
0.
Perfectly. And last one, perfectly. Concept is myth, unrealistic. They say we can't even estimate the demand. Infinite quantity demanded. What is it? We can't even identify. Full infinite. This is myth, unrealistic in nature. And this topic, interconnections are there. When you come to macroeconomics, where is the interconnection with perfectly elastic? Macroeconomics. I said, 10 questions, interconnections will come. There is one interconnection with perfectly elastic. Where is that? Macroeconomics, chapter 8, unit 2. Beyond this, I can't give a hint. I have to say the answer only. Liquidity trap. Which one? Speculative demand for money will become perfectly elastic. Speculative demand for money will become. People will start holding money in hand. They will not invest. Why? Interest rate is almost 0. Interest rate is. Where is our regular batch student? Just yesterday we did. Hello, Yoga. Even you should be knowing this. Sir, last year, sir. Error 404 occurred. Error 404. What is it? Perfectly. Interconnections are there. Perfectly inelastic. Interconnections are. See, this is what? 10 questions. From different unit, concepts gets merged. That is what? If you know this interconnections, scoring 80 above is easy. Clear? Understood?
Yes.
Now, let us get started. Now, let me help you with numerical problem. There are 3 different numerical problem. How many different?
3.
Okay, now let me show that numerical problems you have to solve. This is basic problem. What is this? Price will be given. Initial price, new price. Initial quantity, new quantity. We should use which method? Formula method. Which method? What is formula? P by Q into change in quantity by change in. Now solve this. Initial price, how much? 10. Initial quantity, 100 into changes in quantity, 170 difference. Next, 10 and 15 difference. See, here it should be new price minus old price. New quantity minus old quantity. It should be minus 30. What is it? But I'm ignoring minus. I said now we will ignore minus. Clear? Next, this will be 10 ones are 10 tens are 5 ones are 5 6 are. So it is 6 divided by 10. Answer is E greater than 1 or lesser than 1? Less than. Which elasticity? Relatively inelastic. Suppose if answer was 1.6, this will be. If answer was exactly 1, answer was 0. Clear? This is first way of asking. If nothing is mentioned in the question, let's say for example, they have just given data. Nothing is specified. Formula method or arc method, nothing mentioned. Which method you will follow? If it is arc, they will only specifically mention. Solve it under arc method. Clear? Okay, next, second way of asking question. Wait, let me show the exam paper only. You solve it. In that exam paper also, there are 3 different ways of asking question. Wait. This is Jan 25 term paper. They have given this one question here. Chapter 2, chapter 2, chapter 2, chapter 2. This I should explain one. After this, I will explain. Remind me the slope of demand curve. Again, there you will make blunders. This is supply question. Wait, supply question. Supply. Maybe not in this attempt. Wait. Chapter 2. If the price of the commodity is how much? Per unit, and the price, okay, this is, 1 second, this is also supplied. We got it finally. Yes. See here. The demand function of the product X is expressed as Q is equals to 1000 minus 50P, where Q is a quantity demanded, P is the price, and price they have also given as 10 rupee per kg. What is the price elasticity? Now equation is given. What is the equation? 1000 minus 50 P. Now you need to understand one more logic before solving this equation. Now formula method just now we did. What is the formula method's formula? Change in quantity divided by. Now this portion, change in quantity and change in price. What is it? Change in quantity and? This is also known as induced portion B. Induced portion. If you remember the equation, A minus B of P. What is it? How do we identify this B value? B value is change in quantity divided by, if you remember, demand function. What is it? I spoke about this. It is a relationship between price and quantity demanded. Whenever price changes, that leads to change in quantity demanded. See, same logic. Change in quantity by change in price. That will represent the value of dash B. That is what is this B. Now, what is the equation? 1000 minus 50p. That means this value of 50 is change in quantity divided by change in price. After solving, the value is given as how much? 50. That is what induced portion B. This logic should be there in mind. Clear. Now, what have they given equation? What is the equation? Q is equals to 1000 minus 50p. Now, what are they asking us to identify? Price elasticity. Now we know this is the formula of price elasticity. We need price, we need quantity. Already we have the value of B in the equation only. Now price they have only given. Now we don't have quantity. To identify that quantity only this equation is given. Clear? This is logic. First you should know the logic. First understand the question. Now let us identify quantity. Now what is that identification of quantity? 1000 minus 50p. What is that P? They have only given na. So 50 into 10. 1000 minus 500. So quantity is how much? So we have a P, they have only given 10 and 500 is the quantity into change in quantity by change in price. Value is also given. How much? So 10 into 50 divided by end answer. But remember, price elasticity is negative relation. Price elasticity is? So answer should be minus 1. And I said you, when we are using this formula, we always ignore. But end answer we should consider. So observe, most of them went and wrote option B. 1. Stupidity. Demand concept. It is. Got it? Where you will go wrong. So have patience. First understand logic. Conceptual knowledge. Price elasticity is negative relation. Inverse relation. Answer should be in negative. If the question comes from supply, then answer will be in positive. This is the second way of asking question. Clear? See, first way of asking question, same. Price, quantity, new price, new quantity, like what we discussed just now. Wait, not this one. This is the first way of asking question. What is it? First way of asking question. And the second way of asking question is equation. This equation. Hey, wait, which question paper was it? Here. September 24. In September 24, we have a question that. Clear? Now, third way of asking question. It is not even economics. Basic maths. Missing figure calculation. What is it? Wait, let me show that. Chapter 2. This question, after this, remind me, I should explain this 83rd question. Chapter 2. Yup. Wait, supply. See, this is the missing figure calculation. Question number 29. Understand this question carefully first. Before even solving. What is it? Before even? Understanding matters the most. What is it? A customer is buying 100 units. Customer is buying of goods at the price of. That means this is initial price P. This is initial quantity Q. Suppose if the price elasticity of demand is minus 3. They have only given elasticity. You need not to identify. Minus 3. At what price? At? That means new price. See, P value is already given. Now, new price they are asking you to identify. At what price they will buy? First put all the information. So, what is the information given? Initial price is given. How much is initial price? 6. New price is what we should identify. This is what we should identify. Quantity is given now. Old quantity is. And they are saying at what price he will buy. So, common sense. Earlier quantity is. New quantity is. Convert this into percentage. Simple. Earlier it was 100. Now it is 80. How much quantity has gone down? So 20. Earlier it was 100 into 100. How much percentage? So 20 percentage quantity has gone down. Now that means price elasticity is reverse relation. That means here prices should increase. Na? Yes. We know the logic. Negative relation. Here if quantity has gone down, prices should. That means definitely answer will be greater than 6. That means definitely option B can never be the answer. Ruled out, common sense. Clear. Next, we know main formula of price elasticity. Which formula? What is that? Price elasticity of demand is equals to percentage change in quantity demanded divided by percentage change in. Just now we identified percentage change in quantity demanded. What we should identify is percentage change in price. And they have only given elasticity of demand. This PED value minus 3. Now just put up the values. Minus 3 is equals to, we have to identify what change in price. Change in quantity is how much? 20. Change in price should be identified. Simple. Change in price. LHS minus 3. Denominator RHS. 20 divided by 3. 6.66 percentage. What is it? 6.66? That means already we have 6 rupee. For this 6 rupee, we should add 6.66 percentage. For 6 rupee. What is it for? We should add how much percentage now? The answer is 6.66 percentage in 6 rupees. That means 6 plus 6.66 percentage. How much is 6.66 percentage in 6 rupee? Simple concept. 6 into 6.66 divided by 100. How much you got the value? 6 rupees into 6.66 divided by 100. Calculator use ಮಾಡಲು. So calculator, use calculator, don't give random answers. Madam, my question is, this is what? One second. Listen first, everyone. When I'm asking question, first understand the question. What was the question? 6 into 6.66 divided by. How much did you get this value? Don't add. There are people who will get confused right away if you add and if you give the final answer. For me, 0 point something is coming. How come they got 6.66 with something? They will get confused. So first go step by step. Don't skip the step. Now my simple question, 6 into 6.66 divided by 100, how much is this? 0.9. Enough. 2 decimals enough. Clear? That means 39 paisa. How much? For 6 rupee, if you add 0.39, how much is the end answer? 6 point. This is nothing but 6.4. That's it. 6.4 is the end answer. Got it? Anyone still getting confused? Yes, madam. Last part. That means, see, they have already given the initial price. How much is initial price? Initial price we know. What they are asking to identify is the new price. Clear? When we identified the percentage changes in price, how much? We got answer as how much percentage? Now, you have 6 rupees with you. In the 6 rupee, what is 6.66 percentage? That we should add for 6 rupees. So, we should identify 6.66 percentage of 6 rupee. Clear? That means, let's assume, okay, I will eliminate the 6 for a time being. Because here also 6, here also 6. That is why it is confusing. Let's assume you have 50 rupee. How much? What is 6 percentage in 50 rupees? Calculate. 6 by 100 into 50. 6 by 100 into 50. How much is that? Clear up? Like that. Assume you don't have 50 rupee now. You have how much rupees now? In that 6 rupee, 6.66 percentage. Identify. That means 6.66 divided by 100 into 6 rupee. How much did you get value? 39. That means 39 paisa. I have 6 rupees with me. In that 6.66 percentage is 39. That means 40 paisa. 6 rupee I have. 40 paisa I added. 6 rupee 40 paisa na. That is answer. 6 plus 0.39. 6.39. Rounded up as 6.4. Because in answer here 6.39 is not there. Nearest is? That is why we marked 6.4. Clear? Understood? See, these are the 3 different ways of asking question from elasticity. One straight away numerical. Second one from equation. Third one missing figure like this. Same to same goes to supply. Same to same goes to. But in the equation, observe, instead of minus, there will be plus. What will be there? Wait, let me straight away come here. Supply equation was there now. Where is that? Supply equation question, supply equation. Wait. What is this? Got stuck. Hello? No. Oh, you stop. Observe. Supply function. Which function? Q is equals to A plus B. Can you observe this plus? In demand concept, it was minus because demand is inverse relation. Supply is. Now you guys do this. Now same logic. Instead of minus, there in the middle is plus. And you know what is change in price by change in quantity? What is it? Stupidity. Wrong, na? It is change in quantity by change in price. See? Conceptual knowledge. Concept. This is what? Difference. Solve it. What is that? Change in quantity by change in price value. 6. Clear? Now solve this 90th question. Same pattern, but supply. Positive relation. Answer will be in positive. Answer will be in. Solve it. Easy question it is. They have only given price, na? Now we should identify quantity. In the place of P, you should put the 10. So 6 into 10 is how much? 60. 120 plus 60 is how much? So quantity is 180. One second. Quantity is 180. Price is 10. See, P by Q. What is it? Into change in quantity by change in price. This is the formula. We know the price. How much is price? 10. How much is quantity? Just now we identified 180. And we know this equation value. How much is that? 6. So simple. 10 divided by 180 into 6. 10 into 6 is 60. In short, 60 divided by. Now observe. Look the options first. 1 second. Look at the options. They have not given the whole value. They have just taken still a equation. Last step. Can I say 60 by 180 is nothing but 1 divided by 3? What is it? 1 by? Positive 1 by 3. Difficult? Easy. And this is where most of them made blunders. That is what? Conceptual knowledge. What is that? When you will get, when you sit and give quality time while solving questions. This is what I'm asking you to do after 1 o'clock every day. Clear? So you got to know what is that you have to do year after 1 o'clock. Take out question. When you are stuck in any question, why did you get stuck? That you should identify. Clear? Now there is one more small confusion in the concept. Now, do you have ICAI material? Open chapter 2. Go to the demand function or demand curve concept. Come to demand curve concept. Wait, let me also go there. See, sometimes now ICAI wants to play around with your happiness. How they will play, I will show. Viewers, knowledge portal, economics, demand, elasticity of demand. Okay, look at the board. I will only show. Look at the board. Come to demand curve. Can you see this demand curve? Page number 2.12. Now, read this statement. The slope of demand curve is. Slope of demand curve. I am showing there first line, top first line. Minus change in price by. Clear. Now let's come to mathematics. In mathematics, any slope of the curve, is it price by quantity or quantity by price? Reverse. Why? Who will answer? Let's see. Why has it given reverse? Why? Yes, that is agreeable. But as per mathematics, slope of a curve is quantity by price. But here it is taken change in price by change in. Why? Economist point of view. But agreed. But there is one more logic here. Where? What is that? Dash is dependent on dash. 1 second. Someone said wrong answer here. 1 second. Yoga. 1 second. Everyone remain silent. Yoga Lakshmi. Dash is dependent on dash. See? 1 second. Okay. What is the main thumb rule of demand chapter? When price increases, first and foremost, what is changing? When there is a change in price, that leads to change in. First and foremost, what is changing? Second, what is changing? That means when price changes, what changes? First and foremost, price should change. Later, That is why minus change in price. And moreover, price is negatively related. What is the price is? Minus change in price divided by change in quantity. Demand will change only because of change in. So demand is dependent on primary factor, price. First price will change. What will change first? Appa, everyone looking still wondering, sir, what is that you are speaking? Wait. Let's go back. Nice. This is what? Concept knowledge. Concept. Come back. PitCat PC. First one. Price. See this box. Price increases. First and foremost, dash is changing. Because of that dash is changing. Any doubts here? Price increases. Demand. First and foremost, dash is changing. So dash is the primary factor. When price changes, dash changes. So first change in price, later change in quantity. And moreover, it is negative relation. Which relation? Negative. So slope of demand curve. What is that? Where is that? Jan 25 paper, na? Slope of demand. Hey, where is that question, na? Chapter 2. Question number 83. Slope of demand curve. What is slope of demand curves? Everyone, most of them went and wrote. For first, most of them wrote change in quantity by change in price. Because mathematics we have learned. Every slope is quantity by price. Option A. They said CA means come again. Next, no. Shashikiran said this in class. No, not like that. Primary factor, price, secondary factor, quantity. So change in price by change in quantity. Again, CA means come again. Negative relation, who will remember? Demand concept. Minus change in price by change in. And same to same is also expressed clearly in the ICA material. That is why I will ask you to read ICA material like newspaper once. Clear? 5 questions I said na, nook and corner of ICA material. This is how. Got it? Question paper pattern. No. Sorry, economics very difficult. What difficult? Bullshit. You didn't understand the pattern at all. Without understanding the pattern, reading, what you will do then? Got it? So I hope now everyone realized what you have to do after 1 o'clock. Tomorrow, I will not be doing detailed like this, everyone opening ICA material, showing this is what is happening, this is what is there. Now this is your responsibility. Now you guys have to sit. Now you guys have to take this. Clear? Understood? Got it? Tomorrow, get ready. I will be asking questions from nook and corner. I will be picking it up. Now let's see how much conceptual knowledge is there. See, that is what I'm saying. 50% to easy questions will come. See, up to 60 scoring is damn easy. Straight away concept. They don't confuse you at all. Another 20 questions is sitting and putting your efforts. Another 10 questions like this nook and corner they will pick. And this minute details you should be knowing. Clear? Yes. Let's go to the next topic. Yes. By this price elasticity comes to an. Clear? So mainly 5 types of price elasticity is there. How many types is there? 5. Which are those 5 types? Price elasticity 5 types. So which is that? Relatively elastic, relatively inelastic, unitary elastic, perfectly inelastic, perfectly elastic. Clear? Now in that connections in the macro will come for perfectly inelastic and not just in macro, even with microeconomics in chapter 4. Perfect competition market. Which market? P is equals to AR is equals to MR. Perfect elasticity. Connections. So what we study here may look like simple concept, but interconnections are there. That interconnections you should know. Clear? Now this graphs are important of perfectly inelastic and perfectly elastic. See, this is perfectly inelastic. Price may go up or price may come down. It doesn't matter. Quantity will remain unchanged, which is parallel to which axis? Or vertical curve. Which curve? Vertical. And last one, perfectly elastic, myth, horizontal curve, parallel to which axis? Clear? Understood? Now, there are total 4 methods to calculate. First one, second one, third one, point method. This point method, this graph is important. Again, connection comes in. Chapter 4, monopoly concept. Which concept? Middle portion of AR curve. AR curve is also called as demand curve. What is another name of demand curve? Average revenue curve. Middle portion of the demand curve is unitary. Upper portion relatively elastic. Lower portion relatively. One which touches y-axis perfectly. Why? Because this is how the graph was. It was starting from the y-axis, and one which touches x-axis is perfectly. Graph was starting from the x-axis. Clear? Understood? Next, price and outlay method. In this, price and outlay, for us quantity demanded, least interested. Price and outlay column. These two columns are important. And observe, price is going down. Outlay is increasing. Negative relation or positive relation? And whenever prices are going down and the customer is spending more money, customer is spending more proportion, also called as relatively elastic. Clear? So price and outlay moving in opposite direction. Which direction? Dash elasticity. If price and outlay moving in same direction, unitary elastic. Yoga. When price is decreasing, outlay, that means spending nature is also decreasing. Customer is spending less money, less proportion, relatively inelastic. Price decreases, but spending nature is same proportion. More proportion, relatively elastic, less proportion, relatively inelastic, same proportion. And we are ignoring this quantity column in outlay method. What we are focusing is on price and outlay. So simple concept, price decrease, outlay increase. Price and outlay moving opposite direction relatively. Price and outlay moving in same direction. Whether price decreases or increases doesn't matter. Outlay remains same. This is where exam question comes. Clear? Understood? Hello over there, last bench, sleeping beauties of the class. Respond. Audio important. What is important? Audio. Next comes which elasticity? Whenever income changes, whenever demand is also changing. There are two parameters here. Normal goods, given, inferior. Clear? With normal goods, see, whenever customer earns more income, he will also demand more units. Whenever income decreases, demand will also positive relation. When there is a positive relation, graph will be upward sloping linear curve. When there is negative relation, graph will be sloping linear curve. Clear? Now, in this, see the formula, percentage change in quantity demanded, sorry, not quantity, only demand. The word quantity will not come. That comes in price. Percentage change in demand divided by percentage change in whenever income of consumer changes, dash changes. Here also we have formula method and arc method. Which method is there? Formula method and what was formula method's formula? P by Q. What is it? P by into change in quantity divided by. Now simple. Instead of P, we will replace that with Y. That's it. Now it is going to be Y by Q. What is it? And even arc method formula. What was arc method formula? Change in price by change in quantity. I know. Got it. Others are still unable to realize this. Clear? Arc method formula. Which method formula? But in ICAI material, they have given in a different manner. What is the different manner? Change in quantity. Instead of giving change in quantity, what they have given is Q2 minus Q1. What they have given? Q2 minus divided by change in price, that is P2 minus P1. Both are one and the same. Both are into P1 plus P2 divided by Q1 plus Q2. Clear? Now recently in the Jan 26 attempt. Which attempt? Hey, where is the Jan 26 paper? Here, in middle. Question paper Jan 26. Wait, I will show. Chapter 2. They have asked question of which of the following is correct expression of arc elasticity? What did we say? change in quantity by change in price into P1 plus P2 divided by Q1 plus Q2. By the way, change in quantity can also be written as Q2 minus Q1. Change in price can be written as P2 minus. Sir, you didn't do this formula only, sir. That is what mathematics does. This is not even economics. Basic maths. This is called P2 plus P1. This element na divided by change in price. Change in price can be written as divided by P2 minus P1. Q2 minus Q1 divided by Q2 plus Q1. Formula same. Not even economics. Basic mathematics. What is it? Basic mathematics. Clear?
Yes, sir.
They will ask formula also. Now instead of P, we will replace it with Y. Y2 plus Y1, Y2 minus Y1. Simple. In the place of P, we will replace it with Y. What do we replace it with?
Y.
Simple. See, erase this. Let me erase it. Wait. Change in income. What is it? Y2 minus Y1. Here Y1 plus Y2. Now these two they have taken together in a simple element, LHS, and these two have taken in the RHS element. That's it. Simple concept. I will erase this. This will lead to confusion. Change in quantity by change in income into Y1 plus Y2 divided by Q1 plus arc method formula. Now by using this formula, suppose if the end answer is E greater than 1, E lesser than 1, equal to 1, either luxury or either necessary, E0. That means even though income increased, I am not at all spending extra money. I am conjuice fellow. Who am I? Conjuice fellow. When my income was 15,000, I was spending 10,000. Even when income became 20,000, still I am spending. I didn't even change my consumption at all. I am conjuice fellow. That is E0. And if E becomes negative, it applies to both price as well as income. Goods is clear. Understood. Next comes cross elasticity. Same complementary substitute. But here we don't have formula method. We don't have arc method. We don't have this at all. Straight away percentage. Whatever the main formula is there, Allah. Which formula? Straight away main formula. Percentage. We should convert elements into what? We should convert elements into price also convert percentage, quantity also convert percentage. There are two goods. Comparison between one good to the denominator, the good which price is changing. Numerator, the good for which demand is changing. Now let's say coffee and tea. Sir, coffee price increased. Coffee is denominator. Price is tea is numerator. Next, sir, petrol and bike. Petrol is the price changing, denominator. And bike, numerator. And we should convert them into what? Percentage. Straight away. Clear. Substitute goods positive related. Graph is upward sloping. Complementary goods negative related. Graph is downward sloping. Now straight away solve this problem. Wait. Why this problem? Exam problem only I will show. Solve the exam problem itself. Question number 14. What is it? Question number 14. September 24 attempt. Question number 14. Sir, in this question, we also solve with the formula. First, we find change in price value and add it back to the old price. Yes, you can do. Aaron, you can do that. Not a problem. Weightage of chapter 2. 8 to 12 marks. Sometimes they may go maximum up to 12. 8, sometimes very least minimal. Average is 10. Yes. Done, finished? Able to do it? Anyone finding it difficult? Let me know. I will write and I will show how to do it. Done? Able to do it? See, first write down like this. Price, quantity, price, quantity. Understand which product price is changing. Which product? Only those two informations are needed for us. Here, the price of 1 kg tea is how much? Wait, let me erase and let me also write it once again for your understanding. Now the price of 1 kg tea. So information is given for tea. Tea price and tea quantity, right, like this. So price of 1 kg tea is 50 rupee and they are selling how many kg? 10 kgs of tea is demanded. If the price of coffee, next coffee. So price they have given. If it is rising, coffee prices are rising from 30 rupees to 40 rupees. The quantity demanded for tea rises from 10 to 15. That's it. We need this quantity of tea and price of. Only these two informations are needed and they're asking us to identify cross price elasticity of tea. Clear? Now, first question, tea and coffee, positive relation or negative now? Why? Which good is that? Substitute good are dash related, positively related. So answer should come in positive. So option B and option D cannot be the answer at all. Common sense. This can never be the answer. Already 50-50. Gone. Only answer will be between A and C. And there is one more logic here. If you have studied the concept, you can easily answer. Now, coffee and tea. What is it? Tea is the answer. Now, it is a close substitute or not close substitute or perfect substitutes. Close substitute. And in the class, we have done this. We have also given you the information. What is it? Note. If answer is E greater than 1 in cross elasticity, they are called as. And we know coffee and tea is a close. Answer should be greater than. Now come back to the question. Coffee and tea, close substitute. See the option A, option C, which is greater than 1. Without even solving, I can give answer here. I don't need to solve the problem at all. I can still give answer because I know logic. Coffee and tea is close substitute. If it is close substitute, answer will be greater than. If it is not close substitute, answer will be. If answer is infinite, that means they are perfect substitutes. If answer is negative, complementary. Answer is positive, substitute. In substitute also 3 kinds. Close substitute, E greater than 1. Not close substitute, E lesser than 1. Perfect substitutes, E infinite. And sir, what if unrelated goods, let's say coffee price increases, demand for bike decreases. What, you will put coffee into the petrol tank and will you ride? No. Unrelated goods, E is equal to. This is where another way of asking exam question. If not numerical problem, this logic is important. Clear? Understood? Now see, I just need this two information. Convert this into percentage. Convert this into. Earlier price was 10. New price is 15. Difference is 5. Earlier it was 10 into 100. How much percentage? 50% prices are increasing. We got to know the answer for price. Next. 30 to 40. Price increased by 10 rupees. Earlier it was 30 into 100. 33.33. Clear? 33.33%. So prices have, hey, sorry, this is quantity, na? Wait, this is quantity, not price. This is quantity has increased by 50. Here price is also increasing by 33. Now price is also increasing, quantity is also increasing. Positive relation, negative. Positive. What is the formula of cross elasticity of demand? Percentage change in quantity demanded. Now quantity how much? 50. Price how much? 50 divided by 33.33. That's it. Hardly it takes 30 seconds to solve. Difficult? Easy. Clear?
Yes, sir.
Understood? See, like this questions will come. Next comes advertisement elasticity. Which elasticity? Just you should understand the concept. That's it. When we spend more money on advertisement, there is a more chances of getting demand. So only formula is important. Percentage change in quantity demanded divided by percentage change in prices on spendings on advertisement. And if the question comes from advertisement elasticity, jackpot. Easy question. Easy donation of marks from ICAI. Now see here, even in this, after calculating, if the end answer is E greater than 1, that means we are getting more proportion demand. Let's say I spent 10 lakh rupees on advertisement. I got 30 lakh worth of demand. More proportion, E greater than 1. And if E is equal to 1, sir, we spent 10 lakh, we also got demand worth of 10 lakh. Next, less proportion, sir, we spent 10 lakh rupee, we got demand worth of 7 lakh rupee. Less proportion. So, percentage change in quantity demanded divided by percentage change in price of spendings on. See the question 15? If there is a change in demand for how much? And change in advertisement expenses by 60 by 20. Very difficult question. And like this donation will be made. Out of 60 marks, some 20 to 25 marks like this donations will come. All you need to do is a concept. And that 25 marks is like free. To be frank, in every paper, 20 to 25 marks comes like donation like this. Totally easy. And still people will say economics paper difficult. Very difficult. Now, you will understand in next 3 days when I am making you to solve from the ICAI paper itself. And you will understand what all blunders in previous attempts you did. That is why conceptual knowledge. Clear? Hello, excuse me, clear?
Yes,
Audio important, clear?
Yes,
Now by this advertisement elasticity also comes to an. Next comes expansion and contraction of demand. Increase and decrease of demand. In this connection comes with chapter 4 unit 2. What is it? Chapter 4? Graphical questions. Clear? Now if I touch that, minimum 1 hour will go. Now simple logic here. Expansion contraction occurs only and only because of. In PitCat PC, only if price changes. This is the main demand curve. Say only and one demand curve is there. Minimum median point E, that means price and quantity. Initial one. Suppose if price goes up, see quantity is coming nearer to the origin. So this is called contraction. What is it called? And if the price goes down, quantity is going away from the origin. Away means expansion. So price reduces, quantity expansion. Price increases, quantity contraction. That's it. And we are adjusting this point E. Either it will move towards E1 or move towards E2. On one single curve only we are making movement. What are we making? Movement. So expansion and contraction is called movement on same demand curve. That means only and only because of change in PitCat PC. Next comes change in other factors. Change in except. Now price will not change, except price, other factors are going to change. That means PC will change. When those elements increase, we will draw new demand line towards right side. When those elements decrease, we will draw new demand curve towards. That means we are not adjusting on the same curve like this. We are drawing or we are shifting to left side or shifting to. So increase or decrease is called shift in. That's it. By this entire demand concepts comes to an end, and supply is full of opposite of demand. Hardly takes us 15-20 minutes to do supply. It will not take beyond that. See, supply is a part of stock. Supply is a which is offered for. Let's say Shashikiran is a farmer. I am growing in 1 acre of land 100 bags of paddy. How many bags? In these 100 bags now, I am only giving market 80 bags. Only this 80 bag is supply, right? Out of 100 bags only, I am giving 80 bags, right? 80 bag is a stock. 80 bag is a? 100 bag is a stock. 80 bag is a flow. See, they full on. Intentionally, if I say other way around, everyone is like, yes sir, 80 bag is a stock. The 80 is supplied, na? Supplied is a part of this. 100 bag. 100 is a stock. 80 is a flow. So supply is a part of. That means what we supplied was a part of this 100 bag. How much did we supply? Only and only 80 bags. So supply is a part of stock which is offered for manufacturer point of view, and entire both demand concept as well as supply concept both are flow. Both are next determinants of supply. Straight away come point number 1. Now manufacturer, you earn more profits, right? Whenever prices are more. So when price is more, supply is more. When price is less, supply is. There is a dash relation. Clear? Understood. Next, price of dash goods. By the way, what do you mean by related good? Now, when substitute good prices goes up, you will not be interested to produce your commodity. You will be interested to produce that substitute commodity. Same way, whenever technology goes up, supply will also go up. Factors of. How many factors of productions are there? Land, labor, capital. Now, what do you pay for land? What do you pay for labor? What do you pay for capital? What do you expect for organization? Now you tell me, when you pay more rent, are you happy? Less rent? More wages or less wages? More interest to bank or less interest? When you get more profit or less profit? Simple, sir. See the baat, no bakwas. When we are doing business, intention is making profit. When do I make more profit? When other factors of production costs are less. I will make more profit. I will be interested to supply more. When prices of factors of productions are less, my profitability will be. Suppose if these prices are more, my profit will be. So supply will also be less. That means negative relation. Which relation? Negative. But in supply, we don't focus much on negative. We only focus on But we also have one more expectation. Future changes in price. What is it? Let's assume next week there is festival. Prices will go up. When will you like to supply to market? Now or future? Present supply. In future when price? Negative relation, na? In future price will go up. As a manufacturer, you will like to sell it in present supply. Negative relation. See, we also have negative, but we don't focus on negative. We focus on next government policy, government Nirmala auntie, Modi uncle will come and say, you should not do like that, you should not do like this, blah, blah, blah. More and more restriction means not interested to produce, supply will go down. If government policies are friendly, attractive, supply will increase. So these are the determinants of supply. Next, law of supply, same dialogue, all other things remains. When price increase, supply increase. Price decrease, supply decrease. Same. Supply function, S is equals to F of P. Elaborated form, S is equals to A plus B of P. Already we solved a numerical on that. Next comes supply curve. Again, representing supply in the form of graph, upward sloping curve. Straight line from left to elasticity of supply. Whatever we discussed, price elasticity now. Same to same. Control C, control V. But their negative relation here. Relatively elastic greater, relatively inelastic lesser, unitary elastic 1, perfectly inelastic 0, perfectly elastic infinite. But only one topic you should remember in excess. When we are drawing this upward sloping curve, suppose if we extend, suppose that means it will never extend like this. In case if you extend, in relatively elastic, it will cut which axis? In relatively inelastic, it will cut. In unitary elastic, it will intersect that origin. Clear? And perfectly inelastic, perfectly elastic graph also same. Clear? And same four methods. Formula method, arc method, outlay method, point method. Same to same. Repeat the repeat. Their negative relation here. Clear? Same logic. Expansion, contraction. Only due to change in. But here, positive logic will be there. If price goes up, expansion. If price goes down, contraction. Decision making is on x-axis. Clear? Next, increase or decrease. Now same, RHS shift. Whenever other factors are increasing, RHS, other factors are decreasing. That means determinants of supply. Price of related goods, technology, factors of production, government policies, except price. What is it? Clear? Supply also comes to an end. Full opposite of demand is supply. Consumer point of view, demand, producer point of view. Interconnection of both demand as well as supply put together is chapter 4 unit 2, equilibrium of an industry. What is it? Supply curve upward sloping, demand curve downward sloping. The point of intersection is what we call equilibrium. Suppose if at all we charge more than equilibrium price, what will happen? This particular shaded region, excess supply. Supply is more, demand is less. We are demanding, let's say 70 chocolates, but manufacturer is supplying 130 chocolates. I don't need 130, na? I only need. So there is more chocolates left out in market. So Big Billion Day, Amazon Festival sale, Munyama sale, Rangappa sale, Marappa sale will happen. Full discounts, offers, promotion. That means effect of price decreases. It will come towards equilibrium. Suppose opposite, excess demand. Sir, demand is 130 chocolates, but supply made is only 70 chocolates. If this is the case, in this particular case, prices effect will increase. It will go back towards. That means equilibrium is a position where your total demand is equal to total and price remains constant. Price will be. Price remains clear, understood. And based on this, numerical questions, graphical questions will be asked. Demand increase means RHS shift. Demand decrease means supply increase means RHS. Supply decrease means. Now they will ask numerical questions. Wait, let us discuss straight away from the exam papers only. Wait, we will make you to solve the exam paper questions. Chapter 4, Unit 2. Equilibrium. Which of the following is not true? Okay, perfect competition. Leave it. 1 or 2 questions will come from that area. Chapter 4. After this, we'll take a break. I know people are already waiting. Ayo torture saku sir break kodi. How many minutes? 20 minutes or 30 minutes? Usually 20. If it goes to 30 till 1:15 class. 20 minutes. Wait, next paper we will go. Stop discussing. Chapter 4. Question number 37. Question number? 37. When both demand and supply decreases. Both demand and supply? Decrease. See, but the problem is they have not specified in which proportion they are increasing, which proportion they are decreasing. More proportion, less proportion, nothing. If nothing is specified, you should consider it as same proportion. What does it consider it as? Now, what is the question there? Demand and supply is decreasing. See, demand downward sloping, supply upward sloping. See, normal equilibrium is this point E. Now, what are they saying? Demand is decreasing. When demand decreases, which side shift? LHS shift. Wait down. Next, when supply decreases, which side shift? RHS on the intelligent fellow. LHS. Now observe. Price is still the same, na? But you can't use a word constant. You can't use a word. Why? Because they have not mentioned which proportion. So whichever comes constant like that, you should use a word uncertain. What you should use a word? Clear. Now observe what is happening to the quantity. Quantity is decreasing. Now quantity will decrease, price remains. See, quantity will decrease, price is going to remain. See, in the option, there is also one more word called as constant. With the emotion, you will say, sir, constant, sir. Decrease and constant. Option D. Wrong. If proportion is not specified, proportion is whatever you get as constant, that has to be mentioned as. Clear? This is how the questions will be. Next, May 25 attempt paper, chapter 4. You should only do it. I will not help now. You only do it. Question number 55. Do it. What will happen to equilibrium price and quantity when demand increases, supply decreases? Again, proportion missing. They just said demand will increase means demand increase RHS. Demand increase RHS. Supply decrease LHS. Demand increase RHS. Draw the graph. Done? Finished? Answer. Equilibrium price rises and quantity will be uncertain because that was remaining constant now. Clear? Whatever that constant, when proportion is not mentioned, it should be uncertain. And there is one more way of asking question. If you remember Rangole competition, in class I spoke about this. In fact, 4 different questions I had given. It was there also in ICAI material. Yeah, see, this is Rangole. So whenever demand increases, RHS. Whenever demand decreases, LHS. Supply increases, S2. Supply decreases, S3. Like this, 4 different scenarios will be given. You should read that scenario and then you should mark the answer. Okay, let me leak one question this time. In mock paper, intentionally I will give this question this time. Do it. Let's see. I'm openly saying. Intentionally, any one question out of these 4, I will twist it little. That means same to same pattern, but questions will be twisted. Let's see. How many of you will crack this time in mock paper? I'm openly saying I will give this question. Let's see. Do it. Clear? Yes. Understood? This is mainly based on determinants of demand and determinants of. See here, we are analyzing for a normal good. Everything else remains constant. If income increases, demand will increase. Normal logic. And prices of factors of production increases. Land, labor, capital, rent paid increased, wages paid increased, interest increased. Profit will be lesser. If profit is lesser, supply will decrease. If income increases, demand will increase. When demand increases, RHS shift. D2, supply decreases. S3. So answer is 0.2. Like this you should identify. And pakka I'm going to give question this time in mock paper. I'm openly saying I'm leaking the paper. Solve it. Let's see. This time solve it. Let's see. I will trick it little. I will make it intentionally. I will twist it little. Clear? By this, except consumer behavior, entire chapter 2 is also done. Take a break. Come back. 20 minutes break. Now the time is 10:50. What is the time? We'll start back the class at 11:10. Okay, 11:15. 25 minutes. Again, 1:15 I will leave the class. 1:15. And tomorrow, what time? You guys have to decide and let me know. Same. Not 7:30. They said, no, bus is not available. 8:45. See, already people are like, 8:45. ಅದಕ್ಕೆ ನಾವು ಮುಂಜಾನೆ ಆಗಲ್ಲ ನಿಮ್ಮ ಟಾರ್ಚರ್ ತಡ್ಕೊಳಕ್ ಬೆಳಗ್ಗೆ. Okay, so we'll go continue. The next one is consumer behavior. What is it? Hey, not here, da. There only first bench you sit, I said. Oh, that is only first bench, ah? Okay. Screen. Okay, chalo. TV is there, ah, okay. Ah, there you can sit then. Second bench, come there, come here, right side, second bench, yeah. But I didn't knew that first bench was not there. I thought there is one more lane there. I didn't knew. Ah, chalo, fine. Matter sorted. Let's get started. Consumer behavior. What is it? How customer behaves in a different situation. So in this whole consumer behavior, we are interested to identify consumer equilibrium. Which equilibrium? So two conditions are there. Maximum satisfaction and... So there are two approaches. Cardinal approach and... Who introduced cardinal? Under cardinal, two theories are there. LDMU, consumer surplus theory. Under ordinal, indifference curve and... So first and foremost, LDMU, law of diminishing marginal utility. Simple concept. Whenever we keep on consuming a particular commodity more and more, it looks like we are getting more satisfaction. But reality is we are not getting satisfaction. It is going down. What is it? It is? Now observe, let's say first unit, 50 units of satisfaction. That means let's say I had first chocolate, sir. Nice, superb, good. How was the chocolate? Good. Second one, super, sir. Third one, ultimate. What was it? Ultimate. Fourth one, mind-blowing, sir. Fifth one, out of the world, sir. Like this, satisfaction level is increasing. After that, let's say my tummy filled. When I gave a sixth chocolate, sir, okay. Not that bad. After eating seventh, vomit only. What is it? Vomit. Dissatisfaction. Clear up. It looks like he's getting more and more satisfaction till the sixth one. Accepted. But in reality, he is not actually getting satisfaction. It is decreasing. What is it? Decreasing. For that, we should identify marginal. See, there are two formulas in MU. When output is continuous and when output is not. I hope you guys know the formula. Anyone having doubt with formula? Okay. Now, 50 is the first unit. So, here answer will also be 50. Next, 75 minus 50. 95 minus 75. 115 minus 95. 120 minus 10. Next. See, reality is first unit gave how much satisfaction? Second, but it felt like first one was good, second one is super. Na? Yes, you will feel that. You will feel like that. But reality is the satisfaction keeps on. When output keeps on. That is what name itself says now. Law of diminishing dash utility. Clear? And where is the equilibrium? Equilibrium is achieved at 6th unit. When TU is maximum. TU is? MU is? When MU becomes 0, that is where you will stop consuming. That means, boss, it will no more give me any satisfaction. See, when I had first sweet, how much satisfaction? Second one, third one, fourth one, fifth one. Let's see, when I add fifth one, I got how much satisfaction? With a belief, I will still get satisfaction. I consumed sixth. Only after consuming sixth. What is it? I got to know it is no more giving satisfaction. So I stopped. I will not think of having the seventh. If I have the seventh, dissatisfaction. What is it? Clear? Understood? So now there is one more logic here. Most important. Relationship between TU and MU. What is the concept? Relationship between TU and so what is that relationship of TU and MU? Simple. See, TU is increasing 50, 75, 95, 110, 120, but MU is this is where twister comes. When TU increases, MU That means TU increasing at diminishing rate. That means slower rate. Why? Because MU is decreasing. When we add MU, we will get TU. See, observe 50 plus 25. 50, 25, 20. 50, 25, 20, 15. That means when we add MU, we will derive TU. So TU is defined by adding MUs. By adding. So TU is cumulative of MU. So since it is decreasing, MU is increasing slower. Just assume instead of 50, next year it is 60, year it is 70. 50 plus 60, 110. 50, 60, 70, 50, 110, 180. That means TU increasing faster. TU increasing. But in this case, TU is no doubt increasing, but increasing slower. That is what dash read. Exam question. It has come. Already they have asked. I will show. Now, once I am done with chapter 2, I will give all the chapter 2 questions I will show. We will answer. Clear? Next. Whenever TU is maximum, TU is MU. So, point number 2. TU maximum, MU. Next, point number 3. Next, when TU decreases, last element, MU will become. When TU decreases, MU will be. So this relationship between TU and MU is important. This is where exam question comes. And there are 5 assumptions in LDMU. First and foremost, we believe you are a dash customer. They are not rascal, rational. Rational customer. Who is that? One who has consistent with choice. What I think, what I perform, one and the same. And product should be given for. And there should be continuous consumption without any time gap. Like one after the other, you should be consuming. It's not like first one, I will have it now. After 30 minutes, second one. After 1 hour, third one. No. Continuous consumption. Which consumption? Without any. And it should be dash good. Same goods and services. All the 7 sweets should be from same shop, same size, same taste. Last but not the least, cardinal measurability of. That is what Alfred Marshall said in cardinal approach. He said in cardinal approach, we can quantify satisfaction in terms of that numbers is what we call clear. That means cardinal approach said we can quantify, we can calculate satisfaction in terms of numbers. But in reality, we can't do that in real life. Can you say by eating first jamun I got 50 satisfaction. Next going out with my friend in movie, I got 80 satisfaction. Dinner 150 level of satisfaction. Can you? No. Practically you can't. That is why ordinal approach was developed. Who developed? And J.R. Hicks. They said, see boss, we can't give satisfaction like numericals, like numbers like this. That is practically not possible. Rather, we will give rank or preference. What is it? First preference, second preference, third preference. Sir, going out for a movie with my friend is first preference because I'm going for a date. After that, dinner, second preference. Last coming to your class, stupidity, assumption always. Clear? Like this. We can give only preference. First preference, second preference and third preference. Clear? Now, under ordinal approach, 2 things we will study. Indifference and under cardinal LDMU and LDMU is already done. We first discussed. That means it looks like we are getting more satisfaction. But reality is we are not getting more. When output increases, satisfaction. And remember equilibrium. Equilibrium is TU maximum, MU 0. And there are few places where this LDMU will not work. Rare. Old stamp, old coins, money and wealth. Next, harmful drugs, prestigious goods. Very small unit of consumption. You are feeling thirsty. 1 spoon of water. You will be like, hey, give 1 glass, man. That means cravingness will still increase. Next, in case of singing, dancing, bunking class. Hobby. Most of them have. What is your hobby? Bunking class. And what do you mean by CA? Come again. Next, consumer surplus. If you remember, by mistake also, example, movie, first day, first show. Very big fan of some XYZ actor. First day, first show, I have to go at any cost. I am ready to pay even 500 rupees per ticket. But unfortunately, you got the ticket at counter price only, 200. What you are ready to pay, but what you actually paid. That means just by paying 200 rupees, you got a satisfaction worth of over and above extra. How much satisfaction you got? 300. I was ready to pay 500, but I only paid. Extra satisfaction I received. That extra worth of satisfaction is called consumer. Potential price minus actual. And same example we took. Desert example if you remember. Distillery, Badal advertisement. In the middle of desert, there is a shop which sells water for camel, not for humans. Real advertisement, Bisler advertisement, Badal. Now you have been to a trip. You saw that in the middle of desert there is a shop. You said, Pakka, price will be double. Shashikiran said, na, highway food article, exception to law of demand. If this guy is charging, let's say, half-liter water bottle, 10 rupees MRP, na, this guy will charge 20. You will say, nah, 20 and all, 50%, maybe 15. And your travel guide, no, there is one stupid fellow, don't know how to do business. There is a shop in the middle. If it is 10 rupees, also selling for 10 rupee. See, first person expected it to be, but in reality he got how much extra satisfaction he got. Next, second person expected, but he paid how much extra. Now third person, your travel agent, he knows rupees 10. He also paid rupees. Consumer surplus. This is equilibrium. In consumer surplus theory, when potential price and actual price both are equal, that is called as what? Equilibrium. But life cannot be so simple with ICAI. They want to complicate it. What is it? In easy manner, when potential price, actual price both are equal, that is what? Equilibrium, or consumer surplus becomes zero. But they said, no. We will twist it little. Whatever satisfaction you are getting, that is potential price. That is called MU. What is it called? Marginal utility. Potential price is also called as what? And what you pay the price, that is P. When price paid is equal to MU. What is it? Price paid is equal to? This is the equilibrium in case of which goods? If you are only consuming single good. Next, if it is two good, like complementary good, bike and petrol. Now this formula is important. Exam questions will be asked. From this equilibrium, MU of X by price of X. See, X and Y is goods. What you get the satisfaction of first good divided by price paid for that first good. MU of Y divided by price of Y. This is for how many good? And if it is more than two good, same formula until MU of N divided by price of N. Wait, let me show that exam question only. Chapter 2. Question number 12. The condition of consumer equilibrium will be MU of X by price of X equals MU of Y by price of Y. Even from formula, equilibrium conditions, the questions will be asked. Clear? Understood? So remember this equilibrium condition. Single commodity, two commodity, more than two commodity. This will be important. From this also the questions are going to come. So what is equilibrium? When potential price and actual price both are consumer surplus becomes zero. That is the level of equilibrium. Now when we represent the same table in the form of graph, this is how graph looks like. Initially we were ready to pay. Later. That means after every consumption your intention to pay keeps on. But every time what you paid is only 10. That means when you represent in the form of graph, this triangle region, this is the region of consumer. So there is one more name for consumer surplus, also called as welfare triangle. And this consumer surplus has a connection with demand and supply concept. Demand curve is downward sloping. Supply curve is. Now remember, any value below demand and above price, the region below demand and above is called consumer surplus. See, same. Consider this as a demand curve, potential price, and this is price level. So below demand, above price, consumer surplus. Same way, above supply. Suppose if you draw supply curve like this, above the supply, below the price is called producer surplus. Which surplus? And if at all we only draw demand line, only draw, area below demand curve is called total utility. By this cardinal approach comes to an. Next comes ordinal approach. Which approach? Most question comes from indifference curve and budget line. What is indifference curve? Combination of at least, which will give dash level of satisfaction. Connected in the form of curve is indifference curve. Now we can't give numbers and all, only rank, preference, first preference, second preference, third preference. Indifference curve will be dash sloping, downward sloping from left to right, which is dash to the origin, convex to the origin. Now comes the question, why it is convex, why it is downward sloping? It is downward sloping because of limited. Boss, we don't have unlimited income, we have only limited income. Clear? That means to increase consumption of one commodity, we should sacrifice the consumption of. That is why it is downward sloping from left to. Okay, sir, downward sloping accepted, but why it is convex only? Because of diminishing rate of substitution or diminishing marginal rate of. What is this, sir? Rate of substitution. That means we are exchanging one commodity to the Now let's assume I had 100 rupees with me. I bought 1 cup of tea and 1 packet of biscuit. Now I spent that entire money. I'm in the combination A now. I bought 1 packet of biscuit and 1 cup of tea. And I spent money. Now I don't have any money. Now I felt like, yo, I wanted more cup of tea actually. But I bought only and only 1 cup of tea. Now I will find a person. Let's say Mr. Dhoni uncle. Now Dhoni uncle is ready to give me a tea and accept biscuit. Now Dhoni uncle will be said, okay Shashikiran, you please give me biscuit. I will give you a cup of tea. Now Shashikiran has only 8 biscuit. How much biscuit I sacrificed? To get 1 cup of tea. Okay, one more. So Dhoni uncle, 1 more cup of tea uncle. Okay Shashikiran, fine. 3rd cup of tea. Now I have only 5 biscuit. How much biscuit I sacrificed? Dhoni uncle, 1 more cup of tea. Okay, now I have only 3 biscuit. How many biscuits sacrificed? Dhoni uncle, 1 more cup of tea. Okay, take it Shashikiran. That means every time I am getting 1 more cup of tea, I am sacrificing biscuits. First, how much biscuit I sacrificed? Next. See, going further, my intention to sacrifice keeps on. That is what? Decreasing rate of substitution. You will not increase that sacrificing. Going further, you will only and only. Simple da. You and your sibling got 1 chips packet together. You are busy. You had some work. Your sibling had the chips packet completed. Next, when you open the chips packet, they will come and ask for me also. Pava. Okay, you will give some 2-3 chips. After eating that, again they will come. You are like, hey. Still 1 or 2 you will give. 3rd time you will come. You will be like, get lost, stupid fellow. First time you sacrificed 3 chips. Next you sacrificed 1 chips. Now no sacrificing. Full fighting only. That means your intention to sacrifice keeps on decreasing. It will not be increasing. That means because of diminishing rate of substitution. That means you are ready to sacrifice. But intention to sacrifice, will it be increasing or will it be decreasing? That is why it is convex. What is that? If your intention to sacrifice goes up, sir, first I will sacrifice 4, next to 5, next to... First of all, you should have so much of biscuit, na, stupid fellow. You don't have it at all. You only have 12. First to 4, next to 5 is 9. Next to where 6, it will 15, it will become total. You only have 12. Where will you sacrifice 15 biscuit? So indifference curve can never be concave. It will only and only clear. And remember, once you have an income, you are completely spending your income on 2 goods. Sir, you spent in A, na, when you sacrificed here, you are exchanging. That means barter system. What is it? After that, only barter system is available. Limited income, completely spending on how many goods? Clear? What is the nature of indifference curve? Convex to the... Why? Always because of diminishing rate of substitution. Rate of substitution is also called. And it is always and always diminishing in nature. So indifference curve is also called as law of diminishing rate of. But there are 2 exceptions to this rule also. That means in general, indifference curve will be always and always dash to the origin. Convex to the. But in 2 scenarios. How many scenarios? It will not be convex. Which are those 2 scenarios? Number 1. In perfect substitutes, downward sloping straight line curve. Why? Because we are sacrificing in equal ratio. Which ratio? See, sir, after going back home, I have 4 hours time. Either I will play or I will sleep. Studies and all, who will do? You are a stupid fellow. You will take example. But we never do that. So, play and sleep. Now, 2 hours I will play. 2 hours I will sleep. If you want to increase your play by 1 more hour, what you should do? Compromise sleep by 1 hour. So, what is sacrificing ratio? Equal. When sacrificing ratio becomes equal, indifference curve will become downward sloping straight line rather than convex. So, that happens in... Clear? In perfect substitute, indifference curve is downward sloping, linear curve. In perfect complementary, it should have been upward sloping like this. But in your material, they have given us dash shape. And kindly mark this important. One of the favorite question to ICAI. They will ask, L-shape indifference curve is occurring in which type of goods? Perfect complementary. Clear? Next. This is another important area. Multiple times the questions have come. Remember, there can be more than one single indifference curve in the graph. If there is more than one, we call it as indifference map. What do we call it as? And whichever is away from the origin, whichever is completely towards right hand side, will give dash level of satisfaction. Dash level of satisfaction. Wait. I will show in exam. They have in fact given the graph and they have explained. Where is that question? Question number 86. Have a look here. with reference to the following map, indifference map, which of the following curve represents dash level of satisfaction? Which one? Away from origin. IC3. Donation of marks. I said na 20 to 25 questions will be literally donation in your whole syllabus. This is how the question is going to come. Clear?
Yes.
So indifference curve, which is away from origin, will give dash level of satisfaction. And indifference curve, even though there are more than one, they should never intersect. Why? If it intersects, point number 3 will be violated. Away from the origin will give higher satisfaction. Na? Before intersection, IC2. After intersection, by the way, these two are different income level. Let's say this is 100 rupee, this is 200 rupee. How come 100 rupee can give more satisfaction than 200 rupee income level? Not possible. Next, indifference curve. Even though more than one, they may be parallel, may not be. Even though if they are not parallel, sir, still, any point they will never go and intersect with each other. Why? To increase one consumption, you are compromising on other consumption. So, there can be more than one, but they will never intersect. They will. Or they may be parallel or. And indifference curve will never go and touch any axis because always combination of how many good? If it goes and touches any axis, that means we are not consuming good A, only good B. We are not consuming good B, only good A. No, it is always a combination of. Clear? Last but not the least, budget line. So remember indifference curve, budget line, because in next unit, ISO quant, ISO cost. Same topic, producer point of view. Here, consumer point of view. In theory of production, it is producer point of view. Clear? Now, budget line. Which line? Simple concept. Boss, I have 100 rupees with me. I am consuming 2 commodity. What is that maximum of these 2 commodities I can consume? This is my budget. I can't go beyond budget. What is it? I can't go? Let's say I have 60 rupees with me. I need to buy product A and product B. Product A price is 10, product B price is. Let's assume if I'm only buying A to identify this extreme end. What is it? To identify the. Okay, if I'm only buying A with the help of 60 rupees, how many units? Only and only B with the help of 60 rupees, how many units? So 4 units of B, 6 units of A. I will draw the line by connecting this. This is called budget line. I can always spend lesser than this, but I can never spend. Whenever I touch any point on budget line, that will make me to spend my whole income. Make me to spend my whole income. If I touch any point below this, underutilization of money, you are still saving money. But beyond this, not at all possible. You don't have that income level at all. Even this budget line, this can be shifting to right side or it can be shifted to like demand curve, RHS, LHS, same budget line also, RHS and when will the RHS happen? 2 reasons, either income increase or decrease in LHS, either income decrease or increase in price. Clear? So whenever income of the consumer goes up, see, instead of 60 rupee, now I have 75 rupees with me. With the help of 75, A 10 rupee, 7.5 units. B 15 rupee, 5 units. Earlier it was 6 units, 4 units. See, this was black color line. But now 7.5 and 5 shifted to right side. Same way, if price goes up, what is it? Income is still 60. Now because of that, A I can buy 5 units, B I can buy only 5 units, 3 units. Now shifted to LHS. So either shift can happen RHS or shift can happen. By the way, what is the reason for RHS? Increase in income or decrease in LHS? Decrease in income or. Clear? This is shift in budget line. Last but not the least, equilibrium concept. There are 2 conditions in ordinal approach equilibrium. What is it? Indifference curve and budget line should be tangent. What is it? It should just touch. That means it should just come and touch like this. It should not cut. With that respect, which IC curve is tangent? IC2. IC. And at that point of tangency, both the commodities are consumed in equal proportion. Which proportion? That means MRS is equal. Or ROS. Both are one and the same. MRS and ROS are. These are the two. And this is important area. This is where another question comes. Clear? By this entire chapter 2 comes to an. That was vast. This is the biggest chapter. Hardly comes for 10 marks. From everywhere, nook and corner, they will test 2 questions. Clear? Demand 2 questions theory, 2 questions numerical. Supply 2 questions theory and 1 question practical. Consumer behavior 2 questions theory and another 2 questions from logic formula. Total somewhere, including all the 3 units, 10 marks. How many marks? 10 marks. Chapter 2 was little vast. But marks weightage is only 10. Clear? And that has interconnections with various chapters. Clear? Okay, now let's go to exam questions. Come back. Okay, Jan 26 attempt paper. Recent one. Chapter 2. Oh, okay, we'll do one thing. One also we'll finish it off simultaneously. 1 and 2 we'll finish it together. According to ACPGU. According to, I said, nook and corner from ICAI material, they will pick up. See, one such question. Modern business activities are based on anticipation and expectation of. That means what we have to do. What is customers are expecting? Consumer sovereignty. Anticipation and expectations from the consumer. I say, 1 second, same question repeated here. Next up. Precedence of dash right. Right to property than human rights. Where is right to property? Next, which of the following is not covered in product pricing? Yes, micro. Factor pricing, micro. Economic conditions of particular sector, micro. General price level and interest rates in the country, macro. Option C. Which of the following is not, okay, which of the following is a normative? Government should. Suggestion. Next, match the following. Capitalistic economy, high degree of operative efficiency. That means freedom to private, full operation efficiency. Socialistic, mixed economy, encourages more enterprise, private enterprises to participate and take more and more risk. Chapter 2. Yeah. Other things being equal, all other things remains constant. When the demand for the good and the price of the complements. That means price and demand is dash related. This is very difficult question though. Very, very difficult. Next. Calculate. Take out calculator. The price of the product is 100. If the price elasticity is, price falls. What is it? Price by 20%. The quantity increases by 120. Earlier, how much is the quantity? They have not given. That means that is Q. Q plus 120. What is it? This is not even economics. Basic maths. See, price is 100. Earlier price. And the price falls by 20%. 100, 20% damar means. That means 20%. Already we know the percentage. Now they have to identify the earlier Q. We know that new Q is plus 120. And elasticity is unitary elastic. That means price and quantity changes in same proportion. Common sense. That means simple. Here I need not to solve also. Common sense. Now let's say this Q value. I will pick up any options like this. See, whenever such question comes, listen. Whenever you need to cross check with the options, every option you should try here. Don't start with A and B. ICAI will screw up your happiness by wasting your time. They know very well. You need to take this 480 here and 480 plus 120. Total 480 plus 120 is how much? That means here it is 480, here it is 600. By using formula method, P by Q into change in quantity by change in price. End answer should come. You need to experiment on every options. You have to check with option when such question comes, whether it is maths, whether it is economics. Don't start with A and next go with B. Always start in reverse. Answer will be usually between C and D. Check here. 720 you put here. Here it is 720. What is it? Wait, 1 second. The new quantity demanded due to fall in. Oh, that means this is 720. What is it? New quantity, See, new. This is old quantity. This is new. See, understanding question also matters when you are taking assumption. So it is what? New quantity. So the options will be for new quantity. So if this is 720 minus 120 is 600. Now simple. We got the values here now. We are taking assumption. Price changed by how much? 20%. Now 600 to 720. What is the difference? 120 divided by 600 into 100. 20%. Price also 20%. Quantity also. We got the answer. Mix match. Whenever you need to cross check with options, don't start with A, don't go with B. Always go reverse. Answer will be usually between C and C. What you will do? First you will try with A. Next you will try with B. Next you will try with C. Last you will come with. By this time you would have already wasted 5 minutes. ICAI wants you to kill time. That is why they will give like this. Clear? In maths especially more questions will come like that. Next. Predominance of bureaucracy. Predominance of what? Bureaucratic setup. Hierarchy level. Top layer, middle layer like this. PM, Prime Minister, President like this. And results in. And which may lead to corruption, red tapeism. Where it will happen? Socialist. Next, consumer surplus is what customer is ready to pay. 500 rupee for movie ticket, but I got it for only what we are ready to pay and what we actually pay. Next, which of the following are the types of measurements of supply elasticity? All four methods are there. Point method, yes. Inelastic elasticity, that was not a measurement. Formula, arc, point, outlay. These are the four. Yes, point, yes. Inelastic was not a method. Arc is just its method. Perfectly elastic, no. Types, 1 and 3. Concept based. Next, laissez-faire approach. What do you mean by laissez-faire? Zero intervention of government. Minimal government interference in or regulating the economic activity. The cross price elasticity between two commodity is, if cross elasticity end answer is 0, unrelated goods. If it is greater than 1, close substitute. Lesser than 1, equal to 1. There was no concept. There is no concept equal to 1. Infinite perfect substitutes. There is no concept in equal to 1. Greater than 1, lesser than 1, equal to 1, not there. Infinite is there. See, this is what concept knowledge. Clear. So if it is 0, totally unrelated. Next, which of the following effect of non-price determinants, other than price, non-price? When there is other than price, RHS shift or LHS shift, na? Only when price changes, expansion and contraction. Which of the following is the effect of non-price determinant of dash side shift? Leftward shift means what? Hello, see the options there. Rise in price of substitute, rise in price of complementary. They are asking non-price determinant of leftward shift in the demand. Leftward shift means decrease. When there is a decrease in the demand, prices will rise in price of dash. Even complementary is negative related. Common sense. More and more of common sense it was rather than logic here. Negative relation we know. Demand, and moreover complementary will also have a negative. Substitute goods will have a positive. If price rises, quantity should also rise. Quantity rise means RHS shift, na? But here they have given LHS shift. It's common sense. That's it, I guess. One more. This already. Just now we said, indifference curve should never intersect with. See, same graph. Indifference curve concept. Last time they gave a graph whichever is away from origin. This time intersecting with. What is it? The relationship between x and y is logically observed. That means logically not correct. They should never intersect with each other. Next term. The product of price quantity ratio. What is it? Price quantity ratio at a particular on the demand curve and the reciprocal to the. Now, by the way, point method only. Particular point on demand curve. Middle point E equals to 1. Upper portion greater than 1. Lower portion y-axis infinite, x-axis 0. So particular point, in the question only answer was there. Point elasticity, clear. So you should understand the first question. See, product and quantity ratio. Sorry, price and quantity ratio. See, y-axis is price, x-axis is price and quantity ratio on the particular point, on the point method, point elasticity method. Formula method, we never spoke that. Arc method also, we never spoke about particular point. Where did we speak about particular point? Our point method. This already I spoke in class. Formula. That's it. Next attempt, September 25 attempt paper. What will happen to demand when the large proportion of people belonging to than younger age group? When old age people means medical care will go up. Geriatric care. Which care? That means old age care taking. See, there will be increase in demand for geriatric care, spectacles and walking sticks. When there is a large proportion of old age people. Next, this has a connection with chapter 4 also. Wait. Now, this is the very difficult question this was. Demand is said to be. The word simple, if they give elastic, that means relatively elastic. Only the word inelastic means relatively elastic. E. Next. Consumer is in at where price line is also called as budget line. Income line and price line is the another name. What is it? Income line and price line is the wait budget line. See here, budget line is also called as price line or income line. So price line or income line. So here they have given what line? Equilibrium of ordinal approach. By the way, indifference curve should be tangent to budget line. At the point of tangency, MRS should be equal. Just now we did na last topic. This one. Budget line and indifference curve should just touch tangent. These two conditions. Clear? That is what they are asking there. So answer. Wait 1 second. Tangent at the indifference. That is budget line should be tangent at the indifference curve. Next, how does the increase in income of a consumer generally affect the demand for? When income increases, demand also increase in demand. Next, advertisement elasticity. We did this in class now already. Advertisement expenses 20. Demand increased 40. So quantity by expenses. 40 by 20. Answer 2. This already I took in class. Equilibrium of two goods. Next, which of the following statement is true about the given goods are? But all inferior goods are not given goods. Every low quality good is not given because given goods are inferior in nature. Inferior in comparison to something superior, they are considered low quality. So all given goods are, but all inferior is not given goods. Now the concept of consumer surplus is closely related to demand. What is that? You are ready to pay demand. That means below the demand curve, above the price line. This is called consumer. So below demand curve, closely related to demand. Now the slope of which line is determined by relatively price of two goods, and that should be equal to price ratio of two goods. That means 60 rupee A, B, A is 10 rupee, B is 15 rupee. See price ratio. What is it? We are comparing between this price and then we are deciding how much goods I can buy. That is budget line. Na? That is always combination of two. Remember 60 rupees I had product A, product B. Product A was 10 rupee, product B was 15 rupee. If I have to only buy A, if I have to only buy 6 units, only and only B, this is what now? Price ratio. Comparing the price of both. Comparing the, we are drawing which line? Budget line. That is a price ratio of two goods. That's it. We'll go to chapter 1 in this. Yeah, chapter 1. Which one of the following is not the characteristics of the capitalistic economy? Capitalistic means what? Private run economy. Their profit motive? Yes. Freedom of enterprise to private? Yes. Competition is existing? Yes. Collective ownership? No. Entire economy as a whole? Are they owner public? No. This is not the ownership. Next, importance of mixed economy or important feature. Both will be existing now. Who are those both? Private and public sector will coexist. Next, which of the following statement is in respect to, that means CPR and economy, command economy, relatively inelastic of income distribution in the, relatively inequality in the distribution of income? No. Socialistic economy is equitable distribution of income and freedom from hunger is guaranteed, but consumer sovereignty is restricted. Yes. You don't have consumer choice in socialism. Yes, statement 2 is correct. Next, market forces have major role. Hello, no role at all. Price mechanism is not at all working. Which mechanism? Planning mechanism. Which mechanism? Next, buyers will ultimately decide. Consumer sovereignty full restricted. Buyers will not at all decide anything. Only statement 2 is true. Next, an ice cream company is planning to expand its business before making a decision. It studies various economic factors such as consumer preferences, pricing strategy, employee wages, and ideal location for its outlet. Which level of the economy does the company is analyzing? Only about that one ice cream company, na individual. What is individual? Micro or macro? Next. That's it. May 25 attempt paper. May 25. Which of the following is not a merit of a capitalistic economy? What is it? Because in capitalistic economy, there is no collective. Where collective ownership will come? Socialistic economy. The microeconomic theory mainly does not deal with which of the following. Which economics? Micro. Demand and supply, micro. Production and cost, micro. Inventory management, micro. Business cycle comes in, macro. Which of the following is? About economics is an applied branch. Business economics is an applied branch of economics. Business economics is a smaller one. Normal economics, general economics is a wider one. Under that we have business. So they have given reverse here. Command economy. Another name for command economy. This already we did in the class. Next, total revenue. TR. That is nothing but outlay. What is it? Total outlay method. TR of the goods increases when there is an increase in TR and price. Both are increasing when outlay and price both are increasing in same direction. Positive relation in which elasticity? Inelastic. Relatively inelastic. Opposite direction in relatively elastic. Even though price changes, outlay remains constant. Unitary elastic. I said question will come from that area. Relationship between TU and MU will also come. This is relationship between TR and price. That is outlay. TR is also called outlay. Next, which of the following statement is with respect to the greater the proportion of income spent on the commodity, generally lesser will be the elasticity. How come? Greater proportion means E greater than. When automatically if the proportion is greater spent, elasticity will also be more, na? How come elasticity will be lesser? See, these kind of questions, you should have a proper conceptual knowledge. If you don't have a conceptual knowledge, you will not identify at all. See next, goods that have a close or will be highly elastic. By the way, what is that highly elastic? Infinite. Highly elastic means infinite. That means perfect substitutes. Cross elasticity. Perfect substitutes. E is equals to. Yes, correct. Necessaries are generally. Yes, necessary goods. Even though price goes up to large extent, we will still buy. Correct. The more possible use of the commodity, alternative uses, more possible use, greater will be the price elasticity. Yes. Even if the milk price goes up small extent, many people will drop. Why? Because they will be creating butter, ghee, everything. If milk price goes down little, they will buy more and more. Necessary goods, yes, reaction is more. Correct. And there is one more topic in ICAI material. Determinants of price elasticity of demand. I discussed PitCat PC, na? Like that, there is one more similar topic related to elastic and inelastic. That is what? These two options, especially this and this. C and D was from determinants of price elasticity. What is it? It is there. Even in the ICAI material, it is there in my material. Arivupro Shashikiran's main economics material. I have given there. So this is wrong with respect to income elasticity. See, this is concept based. If you don't have concept knowledge, this you can't attend at all. Next, highly priced goods are consumed by which people? Same to same words, no difference. Highly priced goods are consumed. Rolls-Royce example, I don't want to come in Benz and Audi, only Rolls-Royce. Which effect? An expectation that price will fall in. Exceptions to law of demand. Price is going to fall in. Will you buy now or in future? Price will fall in future. Present demand. If decreases, LHS or RHS? Common sense question it is. Next, the rate at which consumer. What is it? See, this is the answer. In question only there is an answer. The rate at which consumer is prepared to exchange. Someone is scolding nicely. You guys only, I think. Rate at which consumer is prepared. Tea, biscuit. Dhoni uncle is ready to accept a biscuit. Give me tea. Rate at which. What is that? ROS are also called as MRS. Marginal rate of substitution. Two goods are positive relation or negative relation. This is very difficult question. When total utility is increasing at a dash rate, TU increases at decreasing rate. That means MU is decreasing and MU is still. See, just a few minutes back I said that will come in exam. TU increases, MU will. TU increases at diminishing rate. See, MU is still positive. Clear? Which is that paper? May paper. Next. Solve this. ARC method. Which method? They're asking you to solve in ARC method. Due to increase in price of the product X from 100 to 110. Price is 100 to 110 increased. Now supply increased from 150 to 200. Now they're asking which method? ARC method formula. Change in quantity, change in price. P1 plus P2 divided by Q1 plus. And they have specifically asked. See which method? ARC method. They are only asking specifically. You need to solve under ARC method. Change in quantity 150 and 200 difference 50. Change in price 100 and 110 difference 10. P1 P2 both to be considered, Q1 Q2 both to be considered. Answer. Everyone able to get the answer?
Yes.
Anyone finding it difficult? You want me to solve it? See, I said na, if I also take MCQ, it will kill more time. You guys said, sir, do both, sir. Concept and MCQ. See, this will kill more time. That is what either we can do with MCQ or either we can go with. And in between the concept, I was showing the exam questions. Whenever the main topic comes, that we can follow. But today I'm just showing the trailers of everything. From tomorrow, I will not be doing everything like this. Your work. After 1 o'clock, you have to sit. You have to do it from past paper. I hope you have past papers. Book? Which book? Separate. Like this, don't you have paper? Past papers. Day, what are you doing, man? Then everyone. ನಾನೇ ನಿಮಗೆ ಕಳಿಸಿದ್ದೀನಿ ಅಲ್ಲಿ ತುಮಕೂರಲ್ಲಿ ಮಾಡ್ಬೇಕಾ ನಾನೇ ನಿಮಗೆ ಕಳಿಸಿದ್ದೆ ಅವ್ರ ಹತ್ರ ಇದೆ ಬರೀ ನಿಮ್ಮ ಹತ್ರ ಲೇಟೆಸ್ಟ್ ಬರೀ ಜಾನ್ 2026 ಅಟೆಂಪ್ಟ್ ಪೇಪರ್ ಇರಲ್ಲ ಅಷ್ಟೇ ಅಂದ್ರೆ ಮಾರ್ಕ್ಡ್ ಈ ತರ ಮಾರ್ಕ್ಡ್ ಚಾಪ್ಟರ್ ವೈಸ್ like this chapter wise bifurcated with answer key. Have you guys done it? This and all before coming to revision class only you should sit and do at home or when you are practicing. This is what we call homework. What is it? Homework for every subject. What is it for? And not only for economics. You have to do this and you should be keeping it ready, not in that booklet. When the question comes they will mention. Now if I ask you, have you guys done January 26 attempt paper all 100 questions? No sir, we are still doing. Where will you do? When you have question paper like this in your hand, when it is already chapter wise bifurcated like this, you know now which chapter how many questions have come, what all type of questions have come and what is the answer. Like this, at least past 5 attempts paper you should do. It should be already done. That is first round of revision. This is second round of revision. What is it? Sir, this is only first round for many of us, sir. We haven't even opened a book also. We believing in you. You will do everything. Everything. I will only solve all question. RTP. Next, give your R ticket. I will only go and write exam also. Wow, nice idea, sir. I had a friend. These two guys were twins. Identical twins. And this guy, one was in engineering, other one was in commerce. This engineering guy went and wrote this commerce guy's maths paper. Once, he passed. Identical twins, stupid fellows. The second twin was failed in second PUC. The first twin passed and he was in engineering, first year. This guy went and wrote a supplementary exam. That is, now I'm remembering that. And you will be like, sir, Shashikiran, you only write it there. Pakka 90 above will come. You know, Pakka 90 above will come. What? I will take everyone's OMR and I will only share like that. Stupid fellows, Tandro. Imagination go limit irbekandro. Imagination satya agalla. On a serious note, every subject, at least 5 attempts paper. Like this question paper you should have in hand. At least maths and economics, that paper 3 and paper 4 like this, you should have chapter wise bifurcated with the answer key. At last moment, if you just have to flip back the page, easily. Like see, chapter wise I have given. Usually in my regular class, I will do this. Regular class, everyone will get this material. Including past 5 attempts paper, chapter wise bifurcated with answer keys marked for all the 5 attempts paper. They will get. And for ICU batch students, already my students are there. ICU batch students, where are the stupid fellows? I think you should be having this. These two, Teja will be having and also Charan is having. Even our GDP is having. By the way, where is he? Having or not? See, not that book, the stupid fellow, not that one. This document's PDF. I'm speaking about this question. See, what has happened, these guys received after economics class, that PDF went somewhere in the phone. They didn't even save. Now it's like, sir, we had. What is it? We had. Now, sir, can you send once again? Get lost. You will take it. Charan, by mistake if paper leaks. Veda, by mistake if paper leaks. And GDP, by mistake if this paper leaks. Copyright strike will come. Wait. Now, search. I know you have to sit, you have to do it. If Shashikiran is only doing, then what you will do? Take out question. If you want, I will send plain paper. Normal paper. Without chapter wise, without answer keys. Normal. Just plain paper I will send. Sit and do it. See everything. Clearly said 4 days back only. I clearly entered inside your ICU batch. Video recordings, finish it and come. I will be doing MCQ based this time. Even that bomb, sir, concept, sir. We don't know concept. Upon that, do you want MCQs? Yes, sir. Do you want concept? Yes, sir. Give your hall ticket. I will only write exam. Stupid fellows. Only today, man, I'm doing all this. From tomorrow, it is your job. Since it was first day, I'm showing what all you should do after 1 o'clock. See, anyhow, after 1:30 you're free, na? Sit. Do this. This is what we call ICU batch. I will make you to do it. It's not everything I'm doing it. So today until chapter 1 and 2, I'm showing you what all you should cover. See, first, past year exam paper, 5 attempts paper should be covered. Upon that, ICM material MCQ should be covered. And my material MCQs, 1500 questions are there. How much? 1500. Upon that, they are only torturing you with another test every day. That questions will also come. See, more the questions you are doing, you will get more grip on the concept. And you decide. But in that, what you can't ignore is past attempts paper, RTP, MTP. These things should be covered. Minimum. RTP, MTP, I have Kajana. That is nothing. I have one more Kajana. That has more than 15 years paper. 15 years paper. Right from 2011. I have it. Even old syllabus. But micro is the same. Only macro part they had BCK earlier. They removed BCK. They bought macro. Right from when I was a student in 2011. From that time I have. All Kajana I have. If you want, I can give that 7,000 questions in total. How much? I mean, test comes now, inky, pinky, ponky, from that only I will give. Because you don't have that paper at all. Even if you try to download, maximum how much you will download? Until 2017 you will get. Maximum you will get till 2017. Before 2017 you will not get at all. Where you will find? So that is where we will pick the questions. You will be, where is these stupid questions are coming? Nowhere we learned. That is how you should feel. That is what? Attend tests. Attend revision classes. That is the reason. So if you want, I will send only plain question papers. What is it? Now your job is to mark answers like this for every paper with the chapter wise. And yoga, by mistake, if paper leaks. All my already attended students of regular batch, one who has this paper already. By mistake, if you leak this to ICU students, now only I'm saying. I didn't send you, na? Good then. Good. You also do it. You already have 3, na? Remaining 2, you do it. That is what I will send. Plain papers I will send now. Normal, plain papers. Now, reminder na one. See, you are only observing morning 8:45 to 1:15. Again from 4:15 to 8:45, 12 hours. We will be inside the classroom only. So, reminder, one small, sir, reminder. Text me up, I will send now. Only plain paper. What is that? Only plain paper. I am sending only plain paper, not with the answer keys mark. You have to sit and do it now. Do it. Pre-forward it. Already I had sent that you didn't download. Then where is that? But again, why should I re-forward it? That is not opening. That means you would have opened after 1 month. Chalo, Veda. Responsibilities on you. By mistake, if paper leaks, whoever, my regular batch students, whoever is in the class, whoever is at, especially, hello, madam, here, Rajashri, she has Kajana full, present ongoing batch. Everything she has. By mistake, Rajashri leaks. You are the prime responsibility in the class now. Now, ICU batch students, now your responsibility is to sit, mark down chapter wise, answer the questions. Okay. Which of the following does not describes the nature of business economics is normative? Yes, it gives solution. Taking right decisions at right time to achieve organizational goals. Yes, it provides solution. Pragmatic in approach. What is it? And it is an art. Yes, it incorporates elements of micro. What is it? And it is abstract and purely. Now both are answers. B is also answer. D is also answer. But you can't mark both. Any one should be answer. Why? This is clearly wrong. This is conceptual wrong. What is it? It is not abstract, and moreover it is not theoretical. It is pragmatic. What is it? This is conceptually wrong. And this only incorporates the element of micro. It doesn't incorporate elements of macro. But here they have said analysis. What is it? But where they didn't use a word analysis. We said micro environment. What is it? Or business economics take decision based on microeconomics. Micro. But analysis, yes, can be elements. So it is not clearly wrong. But this is clearly. That is why I said B. This is completely wrong. Clear, like this, two options will be there. Nearest option should be the marked as an answer. Sir, what if confusion, sir? Leave it. Leave it off. I said, nah, there is no rule. All 100 questions you should attend. Even if you know 80 questions, attend 80 and come. No worries. And don't over attempt. Negative marking is where you will lose. Slope of demand curve, already done. Calculate this. Question number 84. A shopkeeper is selling. Already we did, na? By the advertisement elasticity. Simple question. 20 by. Hey, wait. Not 20 by 30. Wait. 30 by 20. Next. Excess of price, which a customer is willing to pay. That means potential price. Rather than go without a thing. Which concept is this? Already we did 86 also. Next. Latin phrase. Ceteris paribus. All other things remains. Option A. Do this. Solve this. Question number 88. Solve it. Supply. 89 to very difficult question. Perfectly elastic. What is the numerical value? Infinite. Solve it. 88 one. Solve it. So get ready. From tomorrow I will not be doing all this. Homeworks for you. So whatever main topic is there, main questions have come, that I will simultaneously take. Like how I was doing concept and question together in the class. That I will do. Like this at last I will come, I will sit, I will do everything like this. Now your job. Only today for first two chapters we are doing. Sir, till 1 o'clock only, na? We have marathon today. 1:15, not 1. 1:15 or maximum 1:30. Extendable. Stretchable till 1:30. Again, Sunday I will take the class. 4 days in total. Done? Finished? Hey, what is this? Stylus not working. 1 second. Done? Did you get the answer? Answer. 2 point. Next. This already we did in the class. That's it. Next, September 24 attempt paper. Price in capitalistic economy is determined by capitalistic market forces, demand and Sarah runs a lemonade shop. Her decision making is only about the lemonade shop. Micro or macro? Next. In which of the following the material means of production, that is land, labor, capital, mines, everything is owned by whole community at large? Next, which of the following is related to the total arrangements for the products and distributed in goods and services? This is economic system. What is that? Economic? That means how we will arrange resources will be distributed, economic system in the country. Next, business economics is basically concerned with business economics take decision based on microeconomics. Suppose the price elasticity of a demand for the firm is minus 1.2 means greater than 1, relatively elastic, and see the option total revenue, outlay method. E greater than 1, outlay method. Price and outlay will move in opposite direction if it is relatively elastic. So total revenue will decrease, profits will increase. This already we did in the class. with respect to properties of which of the following statement is higher indifference curve represents higher satisfaction? True. Indifference curve is negative sloping. Yes, downward sloping. Na? Downwards means negative sloping. Intersection point of two indifference curve is higher level. No, it should never intersect. Indifference curve is convex. Yes. Option C is wrong. Anyone having doubt with option C? Solve it, solve it. I think we did this now. Similar question. That's 6.66%. Similar question. Solve it. Same, almost similar question. The price of the commodity is rupees 10 per unit. At the price quantity supplied is 500 and the elasticity is 1.25. At what price the quantity supplied will be 20% more? Same question but little numerical change. Solve it, solve it. Anyone finding it difficult? Let me know. Done? Completed? Answer. Able to get? Anyone finding it difficult to do? Let me know. If you're unable to do it, I will write and I will show how to solve it. Able to do it? Okay, next. Mr. X and Mr. Y are rich rivals in a party. Appa? Solve madbeka? Okay. The price of the commodity is rupees 10. Okay, we have earlier price 10. Okay, at that price, quantity supplied is how much? We have initial quantity also. Initial price 10, initial quantity 500. Next, price elasticity is 1 point. Already they have given elasticity. At what price quantity supplied would be 20% more? That means new price to be identified. And 20% more. By the way, what is 20% of 500? 100. That means new quantity 500 plus 100. Total how much? We already have a quantity. Change percentage. Now we should identify the percentage change of price. For that new price is needed na. But they have already given elasticity. Now simple concept. What did we do first? First we identified the formula. Which formula to use? Percentage change in quantity supplied divided by percentage change in price. Already they have given elasticity. How much is that? And they have only given the percentage of quantity. So simple, change in price will go to LHS, 1.2 will come to denominator RHS, 20 divided by 1.25, that will give a percentage. How much? 16. What is 16% in 10 rupees? 16% in 10 rupee. 1 rupee 60 paisa. If you add 1 rupee 60 paisa to 10 rupee, how much will it become? 11 rupee 60 paisa. That's it. Got it? Clear? Next. Mr. X and Y are rich rivals in a party. Mr. X is wearing an expensive dress. On seeing that Mr. Y, who also has the same dress, decides to reject the use of the same dress further. Rather, Mr. Y will try to use even more expensive. Someone else is using, I also don't want that. Which effect? I said na, Veblen effect, Snob effect, favorite question to ICAI. Straight away. Next, income elasticity. Which elasticity? In a typical type of good is greater than 1. Income elasticity, E greater than 1. Which good? Lesser than 1. Necessary or normal goods? Clear. E equal to 1. Either luxury or necessary goods. Clear. E 0. No change in demand even if income changes. Negative. Inferior goods. Now see here. This is again common sense question it is. An increase in consumer surplus is likely to occur when? When will consumer surplus increase? We know formula. Potential price minus. Sir, I was ready to pay for a movie. How much? But I got it for let's say 150. That means consumer surplus became 350. That means either your actual price should go down or your potential price should go up. Instead of ready to pay 500, you should be ready to pay 600. And sir, instead of 500, now I am ready to pay. But I got it for 400 consumer surplus. But earlier I was ready to pay 500. I got it for 200. That means consumer surplus was. But now my ready to pay went up now from 500 to 600. That is when consumer surplus will increase. If not, I am still ready to pay 500 only. But what I got for is 150 rather than 200. Either potential price should go up or actual price should. That is when consumer surplus will increase. So in the option, there is a rise in price. No, actual price should go down. Fall in price. Yes. When fall in price happens, consumer surplus increase. This is common sense. Pure common sense question it was. Next. The others we already discussed in the class. No. This 14th we discussed. Which tool? 13th also I completed. Hey, no. Which tool does the ordinal utility? Which utility? Cardinal indifference curve budget line. Ordinal. Aha, stupid fellows. Cardinal is LDMU and consumer surplus. Indifference curve and budget line comes where? See, intentionally when I say reverse, everyone is like, oh, yes, sir. See? Cardinal, LDMU, consumer surplus theory, ordinal, indifference curve and which tool does ordinal approach, utility approaches uses to analyze the customer behavior based on the consumer preference under ordinal, indifference curve and budget. LDMU cardinal, elasticity is not under this chapter, consumer surplus is cardinal, which is ordinal. This already we have done, this also we took care. That's it. Clear? By this, chapter 1 is done, chapter 2 is done. Better, we'll go to chapter 5 now. Since we have only like 45 minutes time, na? We'll go to 5. So tomorrow we will take 3 and along with that I will take up chapter time, if time permits. We will see, based on the time availabilities. Today I can start with cost. I will finish cost in 45 minutes if you want. But in cost, most of them sets are little detail, chapter 3. If I have to go little detail, then your lunch break will get extended. And some people are like, no sir, we will bunk your class, but we are not going to bunk lunch break. Already. When I said we have to increase your lunch break, it's like, by the way, where do you have in PG? PG food, nice, Late means no food, something is better than nothing. Fine, sir. Understood, sir. Okay, sir. Okay, better. We'll go with chapter 5. We'll go with chapter 5. Chapter 5. Business cycle. And most important chapter to understand macro. By mistake, if you don't understand this chapter, Allah, gone. Or we'll go with chapter 4. 5 only, ಅದು ಬೇಗ ಆಗ್ಬಿಡುತ್ತಲ್ಲ ಸರ್, ಅದಕ್ಕೆ ನಿಮ್ ಟಾರ್ಚರ್ ಯಾರಿಗೆ ಬೇಕು? Done. Chalo, fine. Chapter 5. Business. Also known as economic cycle or trade cycle. What is that? Economic cycle or? Simple concept. Each and every country will go through fluctuations. What is that? Each and every country will go through in their trade cycle. Some time of the year they perform well. Sometimes they don't perform. Sometimes excellent. Sometimes horrible. Like this, there will be fluctuations. What will be there? And every business cycle starts from where? Trough. And from the trough, it will come to recovery. It will come to, from recovery, it will come to expansion. From their topmost position, from there downwards, what is it? From there again recovery, again expansion, again peak, again contraction, again trough. Like this, continuous. What is it? That means recurring. What is it? They are recurring in nature. What are they in? Clear, but they don't always come at regular interval. I can't say, sir, January we will be in recovery, February in expansion, March we will be in, next May we will be in contraction. No, we can't predict. So remember, business cycle can never be predicted. Business cycle can. Few business cycle are short ending, few business cycle are. That means, see, instead of like this long up, it will be like this. This is short time. This is long time. So we can never say it can be for a day, it can be for a week, it can be for a month, it can be for a year, even it can be for a decade. It is highly impossible to predict the business cycle. Clear? There are only 5 concepts in this particular unit and there will be only 5 questions. Every concept, one question will come. Clear? And most scoring, this is the most scoring chapter it is. Now, every business cycle starts from where? From trough it will come to where? Recovery. But remember, recovery is not a stage. Recovery is not a, as per your syllabus, stage 1, stage 2, stage 3, stage 4. And there is one more information of depression. Depression and trough is together explained in your syllabus. Trough and depression is one and the same as per your. But I will explain it separate because in chapter 7 and chapter 8, now we need that separate explanation to understand a concept called as. To understand a concept called as. So-called revision. See how much? Interconnection. Pump pricing, compensatory spending. Pump pricing, compensatory. Don't worry. Macroeconomics, murder is there. Now see there, business economics, each and every country will go through fluctuations in their dash cycle and that will affect a series of elements. Any one element getting triggered, all these elements will also get triggered. So any one point it starts, it will have a repellent effect. Which effect? That means overall well-being in the economy. Overall will get affected because of changes in business cycle. Now, every business cycle I said starts from trough, but stage 1 is what? So, I will start from expansion. See, sir, what is this dotted line? Growth rate of economy. That means going further, whether the economy is grow. One second. I will take this here. See, like this, economy is going like this, or economy is growing like this, or economy is dipping down like this. The dotted line speaks about growth rate of the economy. What is it? Clear up. And this horizontal line is a comparison line. Now, let's say I'm a chocolate manufacturer. Now, I'm introducing a chocolate by name Gone Mad. Which mad? Two things may happen. Either people may like the chocolate, they will increase the consumption, or they will straight away flop my product and comes through trough. Let's assume people liked it. People liked it. Now, slowly demand is increasing day by day. If demand increases, production. If I have to increase my production, employment opportunity should also. See, I should increase production, I should increase employment. I need paisa for that investment. If I don't have, whom I will go and ask? Even bank credits will also. See, red color one. Whatever I'm explaining in expansion is red color arrow marks. See, first demand is going up because of that, production should go up because of that. In order to appoint more people and produce more people, bank credits will go up. Once I have taken a bank loan, I should repay with interest. So even demand is also increasing day by day. My price level will also. If price increases, profit will. When profit is increasing, I will be paying more salaries to my staff. I will be appointing more and more people. That means in the economy, income earning capacity. When income increases, demand will. Once again, same trend continues. That means when people are earning more money, they are demanding more. What is happening to standard of living? We are producing more in the country. Now, what will happen to GDP of the country? Overall economy performance is going up, and in the expansion phase, which phase? We will also face an unemployment problem. That too, involuntary unemployment will be. That means almost every person is employed. There is no unemployment problem at all. Economy is performing in excellent way. Economy is performing in. See, output is increasing, income is increasing, employment increasing, price, profit, everything is increasing, rise in standard of living. That means overall economic performance is overall business, and but economy faces. So how do we control inflation? Now comes the connection of chapter 7 and chapter 8. Remember, be it any country for it matter, not just India, be it any nation for it matter, they will come up with an economic policy. Which policy? So it's to control their economy. Now that economic policy is classified into two kinds. Fiscal policy, monetary. Now such fiscal policy is of two kinds, and especially we call them as instruments of fiscal policy. Government expenditure and tax. That means from where government gets money to spend, tax. That is what government is spending. One is outflow, other one is. And under monetary policy, we only speak about interest rate, CRR, SLR, repo rate, reverse repo rate, RBI concepts. That will come into a picture. Now, who will create this fiscal policy? Government of the nation. Who will create? Monetary policy, central bank. In India, which is the central bank? Now, when there is inflation in the economy, people have more money in their hands. Already they have more money. That is why they are demanding more. That is why they are spending more and more now. So, government wants to control that. Because you guys are demanding more, prices in the goods and services are. That is what inflation, general price level is going up. We don't want that to happen. If price keeps on increasing like this, trouble. So what we should do? Simple. Whenever there is inflation, now government will stop spending money. Government will spend less money on infrastructure development, general government administrative expenses. They will start spending less. When government is spending less money, money circulation in the economy will. From your hands, you will not get more additional money now. Already you have more money now. Additional money will not come much. But still money is with you only. Now Nirmala aunty will come like surprise. Hello, excuse me, sleeping partner. 30%. Tax rates will. Now you tell, when taxes are going up, will you buy more goods or less goods? You will stop buying. That is what we also need. Now, stupid fellows, you are buying more. That is why prices are increasing. Inflation is going up. That is how we control inflation. But still money is with us only, na sir. Now, banks will come and say, boss, earlier if you come and keep money with me, Allah, I was giving just 2%. Now I will give 5%. I will give good, na. If you spend money, Nirmala aunty, sleeping partner. Without spending that money, if you save money, you will get good return. You will get. So, interest rates will. That is why in this, I did not touch interest. Later, I am touching this. See, what did I say? Demand will go up. Production should increase. Employment should increase. Bank loan will increase. Since I have taken a bank loan, I should repay with the interest. So, price level will. Profit will. Income will. Standard of living will. GDP will. I did not touch about interest rate at all. Now, why will interest rate go up? To control inflation. To control. Now, people, rather than spending money, if they come and save that money in the bank, they will get better interest. So, interest rate went up. Whatever excess money you had, you will start depositing in bank account, or you will buy government bonds, or you will invest it in some land, or invest it in insurance. That means financial assets. Which assets? Rather than spending on goods, you are investing. What are you doing? Why? You will get better returns. Interest rates have gone up in the economy. And if anyone coming to forward to borrow loan, even borrowing interest rates have gone up. You will not come and borrow further. Already more money, na? So we should cut down that. This is the measures during inflation. Measures during. Clear? What will government expenditure happens? Taxes. Interest rate. Clear? These are the measures during when? These are the measures taken during. Now, economy will go to the topmost place. Peak. Full. We are performing at the highest level by looking that all my neighboring countries are full. Baga baga volcano burning for them. So now they will also try to overtake me. They will also try to do like us. Now automatically this peak period, this will be usually for shorter period of time. Which period? Usually it won't be for a longer. High level of profit, full maximum level of operational efficiency will be achieved. Unemployment almost zero. Economy is performing at its topmost peak level. But slowly, my competitor, China is there. Now, he will come with number one country to produce number two products. That means duplicate products. When I am coming with something called Gone Mad, similar chocolate, he will come with name called as Come Mad. And he will name it 2 rupees chocolate. Shashikiran is selling at 5 rupees, I will sell it for. Automatically, demand gets deviated, exports, imports gets imbalanced. automatically overall nation's performance starts seeing a downwards trend. What is it? Initially, we will not recognize this. Initially, we will. Sir, how do we get to know later? Like how my closing stock is increasing. Shashikiran, he was selling some 1 lakh chocolates in a day. Now only just 40,000 chocolates have been sold. 60,000 chocolates unsold goods, na?
Yes.
When my closing stock is piling up, will I produce more or produce less? Do I need more employees now?
No, sir.
Get out, unemployment problem starts. That is what? Recession. What is it? When economy sees downwards trend, we will have a problem of deflation. When there was expansion, there was a... Now people are losing job. People are being thrown out of job in the name of cost cutting. Economy is not performing well. This is starting point. Government has to take proper measures. If they don't take proper measure, we will become like Rahul Gandhi. Goodbye. Khatam. Gaya. Tata. Bye-bye. That means economy will slip down too. This is worst phase. This is just a starting phase of trouble. This is like small pea. Small devil. This is Periya pea, like Kanchana. It will come later here. If government doesn't take a proper measures during contraction, and if at all by mistake economy slips down too, this entire fiscal policy will not work. Fiscal policy will? That is when pump pricing, compensatory spending concept comes into picture. So, chapter number 7 is what? Dealing with fiscal policy. Chapter number 8 is what? Dealing with monetary policy. Connections of the chapter. Clear?
Yes.
So, now in the nation, we have to take proper measures. Government has to come up with proper fiscal policy in order to tackle what? So how do we tackle? Deflation means people are losing job. There is less money. Economic activities are not going up. We are facing trouble in the country. We should improve the performance. Who should improve now? Government. So government starts spending more. Government will increase its spending on new infrastructure project, all other kind of public work program, sanitation, rural works program, everything they will increase. When government starts spending more and more money, money will come to hands of people. How end of the day factors of productions are owned by people. Land belongs to general public. Labor is also general public. Your own money, which is in bank, that was only given as loan. Even that money interest you will earn. As a businessman, I am only investing. Na? That is also a business person is also belonging to household. Profitability will go up. So when government spends money, money will come to the hands of people. And Nirmala aunty will say, for a time being, I will not be your sleeping partner. Tax rates will go down. When tax rates goes down, will you buy more units or less units now? And moreover, because government spent more money, you got more money to your hands. And government also reduced the... Earlier, bank was giving 5% interest rates na for keeping money. Investment was good na. Now bank will say, I will not give more. I will only give 1% or 2%. When interest rates are going down, are you interested in saving money now? You will take out. That is what government also need. When you take out your money from bank account, will you sit and will you watch that money or will you spend that money? That is what we also need. When you spend money, demand will. Production should. Employment should. Overall economic activity will. Measures during inflation, measures during. So when will the economy face deflation? Contraction phase. And during this contraction phase, because economy is not performing well, manufacturer will become negative mindset. Which mindset?
Negative mindset.
That is pessimistic mindset. Which mindset? Because he knows this is just a starting point of trouble. Next to big trouble is waiting. So he will become negative mindset. He is not ready to invest money. He is not ready to expand business. He is not ready to come and put more money into the business. He is also cutting down the cost. He is taking people out of the employment. Clear? That is in contraction phase. Which phase? Now read here. Contraction phase. This is the turning point from topmost to worst. In between what we have is a contraction, also called as a recession phase. During this time, entire economic activity will, demand starts, overall production, and not just present investment, even further investment plans are. Why? Manufacturer is becoming, and even stock markets are. Output is, income is, employment is, profits of the firm is, expansion of business, and businessman will lose the, and because of contraction phase in an economy, dash problem will increase. This is contraction phase. This is entry level. If government doesn't take proper measures, we will go to the worst phase called as depression. Worst is depression. Last, final, bottommost, zero level is called as trough. But in your syllabus, both are one and the same. In chapter 5. Don't get confused. Sir, depression is different, trough is different. No, in as per chapter 5 syllabus, both are one and the. This is worst position. After the worst, complete bottommost is trough. What happens in worst position? Now people starts losing confidence in the economic system. They will start withdrawing their money. What they will do? Why? Because interest rates are extremely low. To tackle deflation, they reduced interest rates. But they went in such a low that almost like zero. This is what liquidity trap. This is the concept of what liquidity, which we explain in chapter 8. Due to less interest rate, unemployment problem is there in the economy. Now people starts holding liquid money in the hand. Why? Due to adverse effect of the economy or war, something like this, and availability of bank credits will. That means people started holding liquid money. Why? Because of liquid money, everyone starts withdrawing money from the banking system. Dash will happen in the country. And now firms will shut down their several production facility. Temporary shutdown. What is it? Temporary. Chapter 3, I will discuss. It will come. Temporary shutdown and underutilization of. In my company, 50 people were working. I have thrown out 30. Only 20 are there. That means still for 20, I am unable to give correct work. Underutilization of. Since production is less, fallen. See, entire output trade going down, income earning capacity going down, unemployment problem increasing, consumption by the household going down, demand by the consumption of household going down. Entire economy is in big trouble. Entire economy is in. That is what. When there is a contraction itself, government has to take proper measures. If our thumbs up fellows, if they don't take proper measures, andre kannadalli ಹೇಳಿದ್ರೆ ಬೇಜಾರಾಗುತ್ತೆ ಕಣೋ ಎಬ್ಬೆಟ್ಟನ್ ಮಕ್ಕಳು ಅಂದ್ರೆ. So that will hurt them. So in style, we will call it in English, thumbs up fellows. See, certain words are there now. If you call it in local language, that will hurt the sentiments and feelings. So we have to use the Angrezi language, English. So if this thumbs up fellows doesn't take a proper measure, wait, where is it? Yeah. If this thumbs up fellows doesn't take a proper measures during when contraction phase, economy will slip down to depression. When we come to depression, extreme effect. Which effect? Fiscal policy will fail. Fiscal policy will not at all work. So finally, when entire economic activity goes to the complete bottommost phase, that is what we call trough. See, aggregate economic activity is at the causes declining price, decline in profit until economy reaches the complete bottommost trough. Now comes recovery. This is not a stage. This is not a just an activity. What is it? Slowly economy starts bouncing back, sir. How? New invention, innovations will happen. Slowly demand starts generating. People will get money in the hands. People will start slowly demanding. Slowly manufacturer will become dash mindset. He will start investing money because demand is coming. Employment will increase. Slowly economy will bounce back. And now stock market gets activated. Employment starts. Again, from this revival, we will convert ourselves into expansion. This is how continuously similar ups and downs. Similar continues. And these two statements most important from exam point of view. This is where questions are going to come. Business cycle is dash. What do you mean by recurrent? It occurs again and again, but not always hard. Clear? I can't say January expansion, February peak, March contraction. No, we can't. We can highly impossible. It is not at all possible to predict business cycle. And business cycle doesn't have a dash duration of time. Specific duration of time. Few business cycle are short ending and few business cycle are. So mark these 2 pointers most important. This is where questions will be asked more number of times. Stylus is giving issue. One second. This one. Few business cycle are short ending, few business cycle are long ending. Clear? So this is the overall operation of business cycle. When will manufacturer become positive mindset? Or when we have upward phase. That means recovery and expansion. When they will be negative mindset? Downward phase. That is contraction and depression and trough. Next, when there is the inflation in the economy? During this expansion phase, involuntary unemployment is almost zero. When there is a deflation? Contraction phase. Clear? Understood? So this is an explanation of all the stages of business cycle. Clear? Now, I also said it is highly impossible to predict business cycle. Highly impossible. But still our economist will not sit silent. We will use statistical tool. What do we use? In order to dash performance, further performance of business cycle. We know that, boss, it is highly impossible to predict. Not just predicting, we will also. And such stupid fellows are called highly impossible to do, but still we will do it. Somewhat we will do. Why? I will do it. You check and follow, they will say. But they may be accurate or they may not be. They always try to predict dash phase of business cycle. Next phase of business cycle. See, in general, it is highly impossible to predict business cycle. Clear? But still, our economist will try to predict. Which phase? Next phase. And such kind of stupid fellows are three. Leading, lagging, coincidental. And kindly mark it important, important, important. Meaning, example. Both are important. Sometimes they will ask example in the question. You have to identify which type of indicator is this. Leading indicator, lagging indicator, coincidental indicator. As the name says, leading, he will change even before economy starts to follow some change trend or pattern. Now I will say, in my, let's say for example, chocolate manufacturing unit, from tomorrow, people are becoming health cautious. They will not eat all this sugar-based chocolate. They will only eat dark chocolate. They will only eat dark chocolate. So I stopped manufacturing the normal chocolate. I only manufactured dark chocolate. But stupid fellows, no one bought. That means I'm changing way ahead. I'm changing way than people following the trend, people following the changes. So I am changing before. We are called as which indicator? Clear up. Now for example, change in stock price, new order for capital and consumer. These are the examples of which indicator? Who will change before the economy starts to follow some change trend or pattern. Next comes, as the name itself says, lagging, tube-light fellow. He will change after. Now Shashikiran, he only started manufacturing high sugary chocolates like Cadbury, full 40%, 50% sugar, 30% saturated fat, full. We started producing. And later I understood why my sales is not happening. Wow, people have become more health cautious. They don't want sugary, saturated fat. They want healthy chocolate. Then I should also change. Later, tube-light fellow, I will change after the economy starts to follow some change trend or pattern. Unemployment, corporate profit, labor cost per unit. So kindly remember these examples. Even from these examples, question will come. And last but not the least, which indicator? Coincidental indicator. So what is it? Either I will change before nor I will change later. I will change along with the, and I will only speak about the current state. What are we doing at present? Presently, how to make people bakra. Presently, how to influence people. Bring all food, let me say food bloggers and make them to say bombard, ultimate, extraordinary chocolate price. Give them some 2,000, 5,000 rupees and they will bluff like crazy. And next day, one big line will be there in front of my shop. So, we will speak only about the current state of the economy. We are going to move along with the economy. What present trend is there? We will follow the present trend. Neither I will change before nor I will change after. We are going to only speak about the example. See, present GDP, present inflation, present industrial production capacity. We speak about the present scenario. Which scenario? And there is another way of understanding this coincidental indicator. Once they have asked in the exam question, wait, let me show that question. And it is there in the ICAI material also. Some nook and corner, they will give the words. Chapter 5, chapter 5, chapter 5. One second. Not this. Chapter 5, 1 second. In this attempt only. 1 second. Look at the board. Where is it? One superb question they had asked. Oi. 1 second. Unable to find at all. There is one question related to coincidental indicator. The definition, what is given in the ICAI. Anyhow, I will anyhow do this now. That time we will come across. There is one more meaning. Another way of expressing coincidental indicator. So it is there in ICAI material. Some nook and corner they have defined that words of coincidental indicator. I will show you that. One of the paper it is there. So remember, if the leading indicator is given, they will change dash before the economy starts to follow some change trend or pattern. Lagging indicator will change But coincidental indicator will change along with the economy. They will only speak about the current state. Clear? So remember, meaning is important. Example is also important. Next comes features of business cycle. See, whatever we discussed in the entire business cycle concept, along with that, 3 more points are important. How many points are important? Which are those 3 more points? See, generally, this business cycle fluctuations, whatever fluctuation happens, that gets originated in free market economy. Which market? Also called as. Best example, 1929, Great Depression of America, USA. 2008, financial crisis, Lehman Brothers, financial crisis. 2008, Euro area bubble blast, Euro crisis, Europe. And 1993, e-commerce bubble blast, US. Recently, COVID-19, China. That was the only socialistic. They are also following mixed in the name of socialism. Clear? But majority of the fluctuations have originated. What is it? Started in which economy? And it will start in one country. It will also affect the other countries, and generally agriculture sector will not get affected more effect will be there on industry and service. Secondary and the tertiary sector gets more affected because of business cycle. Only these 3 points additional you should remember. Rest remaining things are same. See, it occurs, it has different stages, different phases. It is difficult to predict them even before there. It affects all the economic activity. It also affects the. Okay, sir, why should we study all this business cycle and all? If you remember, business economics meaning, what is it? Taking right decision for that purpose. Just assume if the economy is in contraction. Now, will you be interested to come and pump more money, expand your business?
No, sir.
You will be monkey and your friend is Venki. That point of time. That means you should know when to pump money, when not to, when to expand, when not to. When there is inflation, how economy performs. When there is a deflation, how economy. That means in order to take right decisions at right time, we should also have a knowledge of which cycle. Not only just about my country, even if I'm planning to expand, if I'm planning to go to some other country by being a multinational company, I should also understand their country cycle, na? How is the economy performing? Is it good to enter or not to enter? Where the demand is more, where demand is not at all there? Which type of economic system the country following? Capitalism, socialism, or mixed? All these informations are needed for a decision making purpose. Which purpose? So business cycle is used for dash purpose. By the way, what kind of decision? Number 1, like how as a business I should perform, what I should do and what I should not do. Policy creation and how to maximize the of my shareholders and taking right decisions. This is what we call business economics, na? And there are certain business, we call them as which business? They are highly dependent on business cycle growth rate. When the economy grows, even these kind of business will grow. Best example, man, education institutions. If your father and mother loses the job because of all this contraction phase, do you really think that your father and mother will make you to come and learn additional coachings like CS, CMA, ACCS and all? First do normal become thing. We'll think about it later. See, that is what economy is dependent on the growth rates. And let's say construction field, all these equipments, like for example, construction equipment, cement, iron and steel, no doubt demand will be there, but more and more growth will happen to these sectors when economy is performing well, economy is growing well. That means business whose fortune is closely linked to the rate of economic growth rate, such kind of business is called cyclical business. This brings to the last topic of this chapter, that is causes of business cycle. There are 2 types of cause, internal cause and. See, in this question comes in such a manner that which among the following is not an internal cause? Which among the following is not an external cause of business cycle? That is how they will ask questions. Clear?
Yes, sir.
Internal, which happens inside the country. External happens outside or between the countries. Internal cause due to changes in. When demand changes, business cycle will change. Next, due to change in. Why does the investment change? Because of mindset of the manufacturer, pessimistic and optimistic mindset. And due to change in. Somewhere we saw this, government spendings and tax rate. Fiscal. Government spendings and tax rate. Hey, stylus. Work, man. What is it? Government. Hey. Hello? Okay, fine. See here. Government spendings and tax rate. These 2 are a part of which policy? Fiscal policy. That means, by the way, why will government change that fiscal policy? To control inflation and now what is the main root cause of that inflation deflation? Money supply. See the next point, money. When the money availability becomes more in the economy, people will start getting more money in the hands and demand will go up and inflation will increase. When the money availability goes down in the economy, then what it is needed? Money will not come to the hands of people. Deflation. So due to changes in money supply, inflation and next psychological factors of the business man, positive mindset and negative mindset, optimistic and pessimistic. So these are the internal causes. Which causes? Next comes external cause. Point number 1. See, best example now present, Iran and USA. Now yesterday, ceasefire they signed. Immediately within 1 hour, Israel launched. I'm like, I don't mind your ceasefire and I'll get lost. I want revenge. I'm firing. Now just assume, Iran wanted to do business within India. What business, man? First win the war. Let's say Russia, Ukraine. Ukraine will come and say, India, come, let's do business. Hey, what business? Go first win the war. The main focus will be on winning the or coming out of that war. Okay, next war is done. Now Ukraine will come and say, India, now let's do. Where to do business? Where is your building? Where is your market? Where are the people ready to come and buy? Go redevelop your nation first. Post-war reconstruction. What is it? And based on this pointers, now they will ask beautiful question. When will the war equipments or let me say guns, arms, ammunition production will increase in the country? During the time of war. Before the war or after the war? During the war. During the war. Like these questions will come. Clear? And after a war, 2 countries have signed a peace agreement. Now they are going to reconstruct the nation with their own money. Which causes of business cycle is this? External cause. Post-war reconstruction. There's how questions. They will create one story like this and they will ask. Next comes population. See, when the population, not only in your country, global population we are speaking. When population in the economies of different nation increases, demanding capacity will also. You need not to sell just in India. Now you can also sell it outside India. There is a demand even from the other countries. Nah? Next comes technological shocks. What is it? That means changes. Technological shock means technological change. When technology changes, way of conducting business will also. See, there was a time, there was no online and all. Everything was just offline. See, because of COVID, some students have permanently remained online. We used to sit now, we used to scold now. Hey, is it your home? Sit straight. Now we can't scold at all. Whether they are sleeping, whether they are roaming around, how will I know? I can't even say that. See, because of technological changes, way of conducting business has also changed. See, there was a time, there was no concept of recorded classes and all, nothing. You want to learn, come sit in front of faculty, learn and get lost. But now recorded backup. Upon that online, if I'm not keeping well, I need not to come to class. I will be in online class. See, all technological upgradation. Because of that, more torture to teacher than student. Now student got more option, but teacher, if I start doing online class, you'll be like, not interested, sir. Please come to class. There are technological changes. What is it? Whenever technology changes, way of conducting business will also, and business cycle will change. That is external factors. Next, last but not the least, natural, like drought, famine, earthquake, COVID. COVID considering as a natural, still not proven, na? So, drought, famine, earthquake, tsunami, all this happens when business cycle gets affected. Concentration will go on eradicating that effects than doing the business. So, these are the internal cause and so today we have done with chapter 1, chapter 2 and chapter 5. So major components, whatever you guys are asking, that will start from tomorrow. Now only I'm saying from tomorrow. I'm not digging with MCQs much. It is your responsibility to do it and come. And wherever important topic comes up and such similar questions, whichever they are asked in exam, I will simultaneously open and I will show that. Clear? Only today we are doing. Okay, let's do it for even chapter 5. We'll close this off. Chapter 5. September 24 attempt paper. See, only 5 questions are going to come. When there is a fall in the level of investments and fall in employment, fall in production, does not instantaneously recognize. We will not get to know immediately in the pulse of an economy. Which stages are we in? Contraction. Immediately we will not get to know. Later we will get to know. And what is the term for the lowest point of the economic activity? Trough. And in your syllabus, tough and depression are one and the same. Clear. Next, business whose fortune is closely linked to the rate of economic growth rate is called. During the time, what time? The production of weapons, arms, etc. is going to increase. War. And in recovery phase of business cycle, process of reversal is initially felt in labor markets. Employment opportunity goes up, na? That is initially felt in labor market. Next, Jan 25 attempt paper. Which of the following is not an internal cause of business cycle? Technological shock. Technology comes in external. Next, change in stock price, new order for capital and consumer goods are example of leading variables that changes after the real output changes. Tubelite fellow. Later. Next. Which of the following is not a characteristics of business cycle? Not a characteristics. Occurs periodically, recurrent, occurs at regular interval. No, it doesn't occur at regular interval. That's it. Next. May 25 attempt paper. During the upswing phase, that means upward trend, business cycle, involuntary unemployment is almost zero. Now the level of national income and expenditure declines rapidly, rapid decline, depression and trough. Next, all the kinds of business, the different phases of business cycle generally occurs at no fixed time. We can never predict business cycle. Either it can be short term or either it can be few business cycle are short ending, few business cycle are long ending. See, this is the question which I was searching. See here, coincidental indicator. One more way of expressing. See, an indicator which gives information about rate of changes of expansion or contraction. Rate of changes in expansion and contraction at present. Coincidental. This is another way. See, that is why I have also mentioned here ICAI material. This word, same to same, lines have been given there. Clear? Next, see there. There is a war between country A and country B from the last 2 years. Now, both the countries have come to a peace agreement. After the war is ended, now both countries have started to rebuild. What is it? They have started to. The losses due to war. Which type of cause is this? External cause. Post-war reconstruction. Clear? Next. September 25 attempt paper. The advancement in the mobile phones which led to the boom in telecommunication industry exemplifies which kind of external cause? Technological change. Due to change in technology, telecommunication sector boomed. Next, which of the following best describes economic conditions during bad trade? Which trade? That means contraction phase and depression phase. During that, what happens? Fall in price, high unemployment rate. Next, business cycle typically consists of which of the following phases? Stages. Phases means what? As per your syllabus, stage 1, expansion, stage 2, peak, stage 3, contraction, stage 4, trough. Recovery is not a stage. See, expansion, peak, contraction, trough. Which of the following is true about the duration and intensity of the business? Business cycle varies in duration and intensity, but they share a common. All that starts in one nation, affects another nation. Primary sector doesn't get affected much. It starts in capitalistic economy. It has different stages. Economic well-being gets affected. All those features, common features. Next, January 26 attempt paper. Recent paper. Which of the following is not an examples important? See, unemployment lagging, labor cost per unit lagging, corporate profits lagging, stock of change in stock price leading. Option D. I said now concept is important, example is important. Which of the following is not a characteristics of? What happens during contraction phase? Every activity starts falling. Fall in level of investment, fall in employment level, decrease in input demand prices, and also bank credit expands. Is that also contracts? So chapter 5, I think that's it, I guess. No, one more question here. In which phase of business cycle demand will become stagnated? That means remains almost the same. That means at peak. Beyond that it won't go. It will be there and it will fall down. Stagnated. That is peak. In which phase business cycle is also called as downswing, downwards trend, contraction, and depression is not a part of your syllabus. Depression and trough both are one and the, and they're asking starts downswing. At the which phase it will start to downswing? Contraction. After the peak, next starting to see the downward is contraction. So don't try to answer trough and depression. Trough and depression is bottommost. Downwards trend is contraction. Clear? By this, we have also done the MCQs from past 5 attempts paper of 1, 2 and 5. So tomorrow and later, whatever you guys are asking, major topics, that we will pick up. Tomorrow and day after tomorrow, I will cover all your major topics. Tomorrow, 3 and 4 chapter. And on Saturday, I will straight away take 6 and 8. What is it? 6 and 8. Last day, I will take 7, 9 and 10. If time permits, in middle, I will instruct you what to do with the 10. Clear? So what all are the things that you should do it and come to from tomorrow? Past 5 attempts paper exam. After reading, once we are done with the concepts, you should go back, sit from past 5 attempts paper. You have to solve the questions and come. RTP, MTP book is given, na?
Yes, sir.
You should start solving that questions and you should revise the concepts and come. What is it? That means what I'm going to do for the next class, one round of revision should be made. What is it? And later, sir, no, sir, you will do, na. That is why we should do and come. Anyhow, you are doing. Hello, my revision is a second round. Which round?
Second.
At least first round of revision, you guys should have completed and come. Clear? So tomorrow, which all chapters are we taking?
Chapter 3, chapter 4,
If time permits, chapter 6 I will enter. Clear? Huh? Same. 8:45 to 1:15. 8:45 to 1:15. Clear? Understood? Online students there alive still? Anyone having doubts in any of these topics what we discussed today? Sir, I don't have question book. Shall I message you? Yes, Ram, you can. Anyhow, Ram, you are attending evening batch now. Morning batch or evening batch? Somewhere you are attending, yeah. This one, the one which is given to ICAI material students. ICAI, not PDF. It is not given by Shashikiran. This book, show it up. This book, full one. Pillow. That 3000 question. Same only, da. That same 3000 question, what is there in the app? Same only, they have printed and given it to the students. Simple. Clear? Sir, till 1 o'clock only. We have marathon today. Hey, which marathon? Only till 1 o'clock. Human in nature. I also need leisure time. Again, 4:15 I have class. Regular batch is there. Still 3 more days for them. This Saturday even for them portions gets over. Okay. So tomorrow which chapters are we doing? 3, 4, 6. 3, 4 and 6. We will start with 6 also. 3, 4 is major. 6 I will enter. At least unit 1 I will finish. Keynesian theory we will take it on day after tomorrow. Clear? Okay, bye-bye. We'll meet you guys tomorrow. What is it? Evening batch, Sir, son of Mukesh Ambani, leaving. Bye-bye. Dev. Oh, Dev is there. How come? Dev? Chennai batch student. Yes, ma. Do it, ma. That is only enough. Same. ಏನಪ್ಪ ಮತ್ ಮನೆಗೆ ಹೋಗಿ ಬರ್ತೀನಿ ಕೊಡ ಇಲ್ಲೇ ಇರಲ್ಲ ಈಗ ಆಮೇಲೆ ಬರ್ತೀನಿ 4 o'clock I will come by 4. So in the previous class we were discussing about concepts of chapter 1, chapter 2 and chapter 5. In today's class we are starting with the chapter 3 and first and foremost I will go with the theory of cost and later I will go with the theory of production. So what is the meaning of cost? All those monetary expenditure incurred by whom? Manufacturer is called as cost. There are actually 12 types of cost, but in the 12 types, 8 are most important. So which are those 8? The very first one, fixed cost. Second one, variable cost. Third one, fourth one, fifth one, 6, 7, accounting and economic. 8th one, sunk cost. See, in this, most of the question comes from the average cost, opportunity cost, accounting cost, economic cost. And remaining concepts, you will be getting the exam question, but minimal questions. Which questions? Minimal questions. Clear? Let us get started. The very first one is a fixed cost. See, rent is a best example. Whenever, let's say, for example, we have taken a premises for a manufacturing, every single month we have to pay a rent. And it doesn't matter whether I produce 1 unit, 10 units, 100 unit, 1 lakh unit, or even though I don't even produce anything, even if I'm manufacturing 0 units, still I need to incur a fixed cost. So fixed cost are monetary expenditure which are unavoidable in nature and which remains unchanged. What is it? Which remains irrespective of output. That is called as fixed cost. And fixed cost curve is going to be horizontal. What it is going to be? Clear. Output and fixed cost. See, observe. Even though output is 0, fixed cost is still 10,000. 10 units, 200 units, 3,000 units, but still fixed cost remains same. Next comes the variable cost. Those expenditure which will change because of output, like raw material expenses. You produce more, you will be incurring more raw material expenses. You produce less, you will be incurring less raw material expenses. So whenever we are producing more and more number of units, the raw material cost keeps on increasing. So those monetary expenses which changes because of change in
output.
that is called as variable. In the variable cost, there are two elements. When proportionate change is equal and when proportionate change is not equal. When a proportionate change is equal, what is it? Proportionate changes?
Equal.
That means for one single unit, we are incurring 100 rupee raw material. 2 units, 3 units. That means for every unit, it is 100, 100, 100. The changes in the proportion is always and always equal. If that is the case, the variable cost curve is going to be upward sloping straight line curve. What it is? Clear? Next, when proportionate change is unequal, and this is the general nature, it is going to be inverted S in shape. What it is going to be? So why it will be inverted? Yes, because of law of variable proportion, production function under long run. Law of returns to scale. See, in fact, I am showing law of returns to scale and I am saying law of variable proportion. Whole class. Say, went with the think. Law of variable proportion. Get ready. Today like this, biscuits will be more. You should not eat that cream biscuits. Clear? So remember, variable cost will be changing and it will be inverted S in shape because of law of returns to. Returns to scale is production function under. Then which is production function under short run? Superb. Law of variable and variable cost is inverted S in shape because of law of returns to scale. IRS, CRS, DRS. Yesterday we spoke about relatively elastic, relatively inelastic, unitary elastic. Connection is there. More proportion was also called as less proportion. Same proportion. Same. Over there, consumer point of view, now producer. Now relationship is between input and output. If input is 10% increasing and output increases greater than 10, that is called IRS. Output is increasing dash proportion. Suppose if input increases 10%, output also increases by same 10%. That is called as CRS. Output is increasing dash proportion. Next, last one, DRS, decreasing returns to scale. If output is going to increase just lesser than input, that is called dash proportion. Now, due to the combination of IRS, CRS and DRS, variable cost is inverted S in shape. And if we are operating only and only in the CRS part, again it will be upward sloping straight line curve. Upward sloping. And there are mainly two types of variable cost. Semi-variable cost, stair-step variable cost. See, auto rickshaw example. By chance, if at all you are boarding an auto rickshaw with the normal meter, I know today Ola, Uber, Rapido, you guys are busy with that. But normal meter concept, what is it? First 2 kilometers, you have to pay rupees 40. Let's take 40 as an example. Beyond 2 kilometers, if you travel, depending upon distance traveled, you will be paying the variable. So, first 2 kilometers is fixed. Beyond 2 kilometers is variable. Same happens with respect to electricity charges at your home. Even though you don't use electricity for a one whole month, you still get a minimum bill. You have to pay it. Only after that minimum slot, whatever the minimum average is there, beyond which you will be paying the electricity bill for the variable usage. Which usage? Up to some extent, cost remains fixed, beyond which cost starts varying. And there is another way of expressing this cost. A cost will be up to a certain element and suddenly jumps to the new height. Suddenly jumps to the new height. Semi-variable cost. There are different ways of expressing. That means up to a certain portion it will be remaining fixed and later it starts increasing or it will be varying. Second one, stair step. Every additional expenses are going to be, and even if the price changes, from thereafter every expenses remains uniform. Let's say, sir, I buy 1 cup of tea, 10 rupee. One more cup of tea, 10. Now, sir, tea price increased 10 to 13. From there 13, 13, 13. Like this, every additional, that means every extra expenses you make, that expenses will remain uniform. And the curve looks like a staircase. Stair step variable cost. What is it? Next comes total cost. Which cost? Combination of TFC and TVC. We will add fixed as well as variable. But one important logic is there here. When we are not even producing anything, 0 unit of output, should I still pay rent?
Yes, sir.
But will I incur variable cost? 0. And this is where you guys will go wrong. Be careful. Whenever output is 0, what is it? Whenever? Whatever will be the fixed cost, that will become the total cost. That means when output is 0, dash is equals to dash. That means in exam, intentionally they will give only the value of the TFC or only the value of the TC. Either any one value they will be missing in the unit 0. And usually they will give the value of TC. They will not give the value of the TFC. And you will be still wondering, sir, TFC is not given. Stupid fellows, when output is 0, when you are not even producing anything, the total cost is nothing but total. Clear? And most of them have made blunders here. Even after teaching, even after saying this is where you will go wrong, and when the numerical problem is given, sir, TFC not given. What is it? TFC not given. I will show exam papers. Literally, I have said when output 0, TC is what we call TFC, or TFC is equals to TC. Clear? And observe variable cost. Proportion change. Is it same? Like 100, 100, 100. Is it increasing or more than 100? It is more than 100. Now see, 10th unit, 100. 20th unit, it is not 200. 30th unit, it is not 300. Proportionate change is unequal. So variable cost will be inverted. Yes, in. Starting from where? Origin. Starting from where? But total cost will start from TFC. Why? When output is 0, dash is equals to dash. That's the reason TC curve starts from TFC. If proportionate change is unequal, even TFC will be inverted. Yes. TFC, TC, TVC and TC both will be. And this vertical distance between this TC and TVC will be TFC. And this was exam question. What is the vertical difference between TC and TFC? And basic formula it is. We know the formula of TC. What is TC? TFC plus. And by using the same formula, we can identify TFC. What is it? TC minus TVC. That's it. Same way, TVC will be TC minus. Clear? Understood? Next comes the most important, all Rangoli competitions in the chapter. Average cost. Which cost? Cost incurred to produce every single unit or per unit of output. What is it? Every single or? Let's say we are producing some, let's say 100 benches. To produce 100 benches, let's say I'm incurring a 10,000 rupees of raw material expenses. That means my TVC. And another 10,000 rupees I'm paying rent. And for every single unit, let's say my raw material expenses is rupees 100. See, 100 into 100, that is what made me to get 10,000. And rent I'm paying 10,000. So total cost producing of 100 benches is how much? 20,000 divided by 100 units. Per unit cost is how much? 200. So per unit production cost 200. Now in this 200, it will be bifurcated into two more elements. Let's say my average cost was 200 rupees. Just now we took an example. Now in this, we will identify how much of fixed proportion is there and how much of, that is called average fixed cost and average. Most favorite question to ICAI in terms of numerical. Every single time one or the other question comes from this area. What is AC formula? AC will be total cost divided by. Same way, average fixed cost will be total fixed cost divided by. Same way, average variable cost will be total variable cost divided by. Simple. That means in this 200 rupees, Shashikiran, how much is the proportion of fixed and how much is the proportion of? Let's take one fictitious example. Sir, 80 rupees is fixed in this. 120 rupees is variable. That means in every single, what is it? How much proportion of fixed element is there and how much proportion of? That is what we should identify. That is average cost concept. So in that AFC, average fixed cost. What is the formula of average fixed cost? Total fixed cost divided by quantity. And we know that irrespective of output, fixed cost is going to remain same. It is not going to change. Every month same rent, same salary paid to employees. So it is going to remain the same. And whenever you produce more and more, AFC keeps on decreasing. AFC keeps on. But TFC will remain same. Because we are dividing that number of values with the production unit, it keeps on going down. But the one important topic is, observe, it will never go and touch x-axis. At least some minute, see, one small gap is there. That means decimal values will be there. Which value? Now let's say my fixed cost is 100 rupee. I'm producing 10,000 units. Now it will be what? 100 divided by 10,000 units, 0.001. At least some minute fractional element of fixed cost will be present. So AFC will never become. Okay, what is the highest value of AFC? Highest value of AFC. What is the highest maximum value of average fixed cost? What can be the maximum value? Say it loud, madam. Infinite. When? Superb. As per the formula, TFC by Q, na? Let's assume 100 rupees my fixed cost, 0 units produced. Error. Infinite. So maximum value of AFC will be infinite, but AFC will never become. This is how the question comes. We'll be like, sir, you didn't teach this only, sir. You said it will never become 0. Basic question mark formula. 100 rupee divided by 0. Mathematical error. That is what we represent as infinite. And AFC keeps on decreasing, but AFC will never become. Clear? Next comes AVC, average variable cost, which is J in shape. Which is dash in shape? Why it is J in shape? Due to law of variable proportion. That is production function under. Initially AVC will decrease, AVC will become minimum, later AVC starts. Sir, how it is possible? Initially decreases, becomes minimum, then starts. We took one beautiful example in class. If you remember, Shashikiran will appoint laborers to his bench manufacturing unit. Every 1 hour, if a labor works, I will pay 100 rupee. I will pay how much? 100 rupee. That means if he is working for 1 hour in my organization, 100 rupees is the wages. Okay, I appointed first guy. Now he is producing 10 benches in 1 hour. How much wages should I pay? Now I will appoint second guy. Now both of them put together, not single guy alone. Now both of them together, they are producing how many benches in 1 hour? Now how much wages should I pay? 100 and 100, because 2 of them are working for 1 hour, so 200. Next I will appoint third person. All 3 put together, they are producing. How much wages should I pay? What is the formula for AVC? Wages paid is nothing but variable cost. Number of units produced is there. So 100 by 10, 10. 200 by 25, 300 by 33, 9.09. Observe, from 10 it reduced it to 8. From 8 it started to again increase. See, that means initially decreases, becomes minimum, then it starts. AVC will be dash in shape. Why it is J in shape? Due to law of production function under. Even that has got 3 stages: SIR, SDR, SNR. SIR, SDR, same. Output will increase more proportion than input, like relatively elastic concept. Next, output will increase but less proportionate than input. That means no constant returns. No constant returns will come in long run. But in short run, we have negative return. That means simple. When you are doing business, in a short run, you may also incur losses. But you will not close down business, right? You will wait. In long run, if you are incurring losses, you will close down. In short run, there is a high tendency that you may enter into negative return, but we have to make sure that we will not go to that negative. We will not go to that. So in short term, there is negative return. Long term, there is no negative return. This logic should be there in your mind. Clear? And in the short term, we have increasing, decreasing, negative. In the long run, increasing, constant, decreasing. Clear? Now, law of variable proportion is short run. Output increases dash proportion than input. That is SIR. Output will increase but less proportion than input. That is. Now, the important topic is this word, certain point. After the certain point, output will not increase. Observe, output is. But in first 2 stages, output. But after the certain point, output. Clear? Now, why it decreases? That is what we need to understand. What is the certain point? Again, connection comes in theory of production. So listen to this carefully. Now, Just now we decided AFC will be downward sloping. It will never touch the x-axis. AVC will be J in shape. Now, because of combination of AFC and AVC, AC curve will be U in shape. What will be U in shape? Why? Because of combination of dash and dash. Same. If you remember, what was TC formula? Same way, AC is also combination of AFC plus AVC, or else we can also write this as AC is equals to TC by. So total there are two formulas. Due to the combination of AFC and AVC, AC curve is dash in shape. That means AC initially decreases, next AC becomes minimum, then AC starts. Now these explanations are important in the stage 1, SIR. Both AFC is also decreasing, AVC is also. Since AC will also decrease. By end of stage 1, AVC will become minimum. AVC will become by end of which stage? Stage 1. Now stage 2 is most important. By end of stage 2, AC is minimum. Dash is minimum. Cost of producing every single unit is minimum. What is it? Cost of producing every single unit. Average cost. Clear? That is minimum. At the same time, observe, AFC and AVC is also equal. What is it? AFC and AVC is also equal. AFC is equal to AVC, and this is what we call certain point. Certain point. Beyond the certain point, if at all we try to produce, we will start incurring more and more variable cost. More and more. So that means what is happening in stage 2? Fixed cost is also decreasing faster. Fixed cost is decreasing, but variable cost slowly starts increasing. Increase in variable is slower, but decrease in fixed cost is faster. So fixed cost reduces faster, variable cost increases slower. So AC continues to decrease until AC becomes dash, until AC becomes. See, you tell me, as any manufacturer, will you be interested to produce at the minimum cost or when the cost is increasing? Any layman would say, sir, definitely minimum. As a manufacturer, my intention is always producing at a least cost. That least cost is AC minimum. What is it? Least cost is? Whenever AC becomes minimum, dash is equal to dash. When AFC is equal to AVC, AC will be minimum, and that is what we are calling. And any manufacturer will prefer to operate by end of stage 2. Why? AC is? AVC is equal to AFC. That is what we call certain. Sir, what happens if I produce beyond this? You are saying only we should produce till second level. Okay, what happens if I produce beyond second level? Simple. Variable cost starts increasing faster. For every single unit, 100 rupees increasing. But your fixed cost is going down in decimal, 0.1, 0.001. Fixed cost increases or decreases now in last stage? Slower, but variable cost is increasing. So because of variable cost going up at the faster rate and fixed cost is going down at a slower rate, AC starts. AC starts. Now you tell me, as a manufacturer, when cost is increasing, are you interested in producing? So where you should stop producing? End of second stage, when AC becomes minimum. This is the conclusion. Any manufacturer will prefer to operate in stage 2. He will not wish to go for stage. By end of stage 2, AC will be AFC is equal to, and that is what we call beyond certain point. If we try to produce output, no, we are not interested, so we will decrease our output. That is why after certain point, output will clear. This is the concept of law of variable proportion. Same element in theory of production also I will take. There I will bring all complicated concept, point of inflection, relationship between TP and MP, all that different stages we are going to bring. After this, we also understood with tortoise shell, if you remember. Shortcut to remember. What is it? Only in one area you should be careful. And there are two concepts here. One is rate of increase, rate of decrease. Other one is a value concept. So two elements are there. First we understand about rate of increase and rate of decrease. What is it? Rate of increase or rate of decrease. So what is this? Now this comes in theory of production. This is AP curve. Which curve? Still yet to be done, yet to be revised. This is AC curve. Just now we discussed AC curve. AC curve is dash in shape. Initially AC will decrease, AC will become minimum, and AC starts. And in this graph, there is one more important element we missed out to explain. What is that one more important element? In class, I made you to write. Superb. Which curve? MC curve. Which curve? Now, what will be the nature of MC curve? MC curve will be U in shape, but we only consider second part of the graph. Which part of the graph? Wait, let me go to MC curve. Let me explain MC curve and come back. See, this is how MC curve is. MC curve will be dash in shape, but we only need second part of the graph. We don't need the, and this explanation comes in chapter 4. Clear? So only second part is important. By the way, what is the meaning of marginal? One more additional, one more extra. Let's say I produce 100 bench. I need to produce 101st bench. To produce this one more bench, to produce this, you tell me, will I incur only raw material cost or also fixed cost? That means I will not pay rent again. Shashikiran, it doesn't matter whether you are producing 100 bench or whether 101 bench. Rent remains the same only, na? Will you pay extra rent for producing one more extra bench? No. That means fixed cost is same. Fixed cost will not at all. Which cost will change? Variable cost. So MC changes only because of change in variable cost. Which cost? So it is a cost incurred to produce one more extra or one additional unit of output. There are two formulas. When output continuous, when output is not. When output continuous, what is the formula? TC n minus TC n minus 1. When output is not continuous, change in TC divided by change in quantity. Clear? And in connection to this, there is one more logic. Incremental cost. Which cost? Continuation of marginal. What is that incremental? As the name itself says, na sir, mental cost. No, not like that. What is it? To produce one additional batch of output. What is it? To produce one additional. See, I was producing 100 bench. To produce 100 bench, my total cost was 20,000. Let's say I was producing in January month. My cost was producing is. Now same 100 bench. What is it? In February, the cost of producing is 24,000. Sir, why? Oh, let's say for example, now I have a customer by name Veda. Now Veda will come and say, sir, I need a soft finishing on the bench. I don't need this plain bakwas bench and all. For Montessori kids, I want this Pokemon, Dora Beam, Doraemon, Tom and Jerry, all this Disney World, like this some images is needed, and even if the kid falls, it should not get hurt. I need soft finishing. I have a special requirement from the client. So I will be incurring, let's say, extra expenses on that chemicals, on that images, and also to produce same 100 bench next month. What is the expense? Last month, what was the expense? Now, same 100 benches in January, 20,000. Same 100 benches in February. To produce one additional batch. That means 100 benches, one batch. To produce that one more extra batch. Now, 4,000 extra. That is called which cost? Why will this happen? Incremental cost due to change in business decision. Due to change in, like what kind of decision? We are changing our production line, or we are replacing our old machinery to new machinery that is taking lot of electricity. We are getting a new production, entire new layout for production or new manufacturing unit itself, or we acquired a new set of, like Veda. Now we are having a special requirement from Veda. Clear? So like this, I have an extra cost incurred to produce the same number of units of output. That is an additional batch. What is it? To produce one more additional batch of output. To produce additional batch of output. That is called as which cost? Clear? Now remember, marginal changes only because of variable. But incremental can change because of both fixed cost as well as. Clear up? And let's come back to marginal. Only second part of the graph is important. So that has a connection here. That means, observe, this is MC curve. Green color line, whatever I have drawn, the second part of MC curve. In these two important places, you should be very careful. Which are those two important places? Place number 1 and place number 2. That means MC curve. Which curve? Will cut ABC as well as AC from their below and minimum. It will cut from below and. That means MC is cutting from below. Can you observe here? It is going upwards like this. That means positive slope curve now, right side slope. And it is cutting from the minimum point of ABC and also the minimum point of. So MC cuts AVC and ATC. AC curve is also called as ATC, average total cost. Which total cost? Clear up. MC curve cuts AVC and ATC from below and there was one more beautiful question that was asked in an exam. I will show. The question is, why is AVC curve coming closer to AC curve? Why is AVC, average variable, coming closer to? Wait, I will show in the paper only. Chapter 3. That was actually beautiful question, logical question. Most of them went wrong. Chapter 3. Read question number 16. At higher level of output. By the way, what do you mean by higher level of output? Stage 1, stage 2 or stage 3? Stage 3. Last one, higher level means stage 3. At the higher level of output, average total cost, ATC curve. Which curve? ATC curve. Average total cost, ATC curve and AVC curve is coming closer. Is coming. Why? They are asking why is this two coming closer? Wait. At the higher level of output. Which level of output? That means in stage 3, SNR, at the higher level of output, why is average variable cost is coming closer to average cost. These two are coming closer. Why? Because proportion of fixed cost is reducing lesser, variable cost is increasing higher. In the AC, what is it? In the fixed cost proportion is less. Fixed cost proportion is, or else answer will be variable cost proportion is more. Any one will be the answer. Clear? Or they will ask both. AVC proportion is more, AFC proportion is less. Option A, AFC proportion less. Option B, AVC proportion more. Option C, both. Option D, none of the above. Answer will be both. So you need to know the logic here. And this was actually a superb question. Most of them went wrong. Answer is average fixed cost is accounting relatively in their average total cost. The proportion of AFC is lesser in the AC. That's it. That is the reason these two are coming closer. Common sense. And this is how. Questions will not be tough. Questions will be little tricky. What is it? Questions will be little. That's it. If you know the logic, you will crack it off. Clear? This is how actually the questions are going to come. Clear? This was the concept of average cost. Now we are discussing about tortoise shell. Rate of increase and rate of. Now what is it? Now, just now I said MC curve. Which curve? Will cut dash and dash from below and minimum. This is MC curve. Now MC will cut AVC and ATC from below and. That means now when AC is minimum, this is AC curve now. When AC is minimum, MC is cutting from below and minimum. Next, AC starts increasing at right side. Initially AC decreases, here AC minimum, here AC starts increasing. Now observe, initially whenever AC decreases, what is it? AC. I'm speaking about rate of increase and rate of decrease. Which will increase faster, which will decrease faster. Rate. In which rate they are going changes. When AC decreases, this is the only area you should be careful. What is it? Only area we should be. Average concept is greater than marginal. See, AC curve will decrease faster than MC curve. What is it? AC curve will decrease in remaining three corners. What is it remaining? Marginal is always greater than average. Marginal is always greater than. So only one area we should be careful. Which is that one area to be careful? That's it. And this comes when the concept is from rate of increase and rate of decrease. Clear? Observe, when AC is minimum, already we know the logic. MC cuts AC from below and minimum. So when AC is minimum, AC is equal to. Next, already it has become minimum and is increasing faster now MC. So whenever AC is increasing, MC is increasing faster than AC. Clear? So 3 logics here. Logic number 1, when AC decreases, when AC is decreasing, dash decreases faster than dash. I will show exam questions are there on this tortoiseshell concept. Minimum, every alternative attempt questions are coming. Next, when AC is minimum, AC increases, MC increases faster than. Now full opposite logic in AP curve, average product curve. When AP increases, MP will only increase faster than. When AP is maximum, same logic. Now MP curve cuts from above and maximum. What is it? Above and maximum. Clear? And next, these two will become equal when AP is maximum. Next, when AP decreases, MP will be decreasing. MP will be decreasing faster than AP. That means all the three corners, marginal is greater than. Only and only when AC decreasing, we should be careful. Clear? Write down, the students who have not attended my regular class, this topic is important. This is where questions are going to be asked. Indirect way of asking question. Copy this down. Done. Finished? Let's continue. Next comes Rangoli competition. LAC and see, SAC is also called as plant curve. See, even these alternative names are important. SAC, short run average cost curve, is called as. Long run average cost has 3 different names. Planning curve, least cost combination curve, envelope curve. Clear up? Now first let us understand short run curve. SAC. What is it? Now let's say I will buy this building for my bench manufacturing unit. In ground floor I have a small machinery. In first floor I have a medium size machinery. Second floor I have a. See, my small machinery can produce 1000 benches in a month. And medium machinery can produce 3000 benches. Large machinery can produce. This is the full capacity. Which capacity? Full capacity. Let's say I got an order of producing 500 benches in a month. Which machinery should I use? SAC1. Even cost is minimum. That is where every manufacturer wishes to operate. Let's say slowly popularity increases. Now my demand goes to 800 benches. That means I am at point A. Where am I at? Now I should take decision. Now cost is increasing in a small machinery. If I still continue, next cost will go to point N. Where will cost will go? If what? If I go to medium machinery, instead of producing in small machinery, if I go to the medium machinery, next if my production increases, cost will come down to point M. What should I do? Still continue in the small machinery or go to medium machinery? Superb. As expected, demand increased to 1000 benches. Now I am in the medium machinery. Point M is the cost. Later popularity increased. Now I am producing 1500 benches. In medium machinery, minimum cost. Again popularity increased. Still I am producing more machinery. Again time to take decision. Again I will jump to large machinery like this. When the capacity of the firm is varying. What is it? Plant. That means your manufacturing plant should also vary. You cannot, let's say, use the same plant for producing extra number of units of output. What will happen? Your cost increases. What increases? That is the logic. That means if there is a 40 students in the class, only the small classroom was enough. Beyond 40, see, we have lifted that entire division. Now even behind we are having the students to sit. So if more and more students are joining, I don't want a classroom now, small classroom. I want a bigger classroom. Which classroom? Bigger. Same way, if you are producing more and more unit, you cannot produce every time just with small machinery. You have to go to the bigger machineries also. That is what. First we should decide in which plant, if you produce, your cost of production is minimum. Cost of production is minimum. This is in case of short run. So decide. Now Shashikiran said, I want to produce in a year 60,000 benches. How much benches? 60,000. That means divided by 12. Every month how much benches? 5,000 benches every single month. Now I will decide if I produce in SAC4 in the fourth machinery, producing 5,000 benches is having minimum cost every month. Minimum cost. Okay, first I decided my plant curve. Now I will go to my long run. Welcome to actual Rangoli. LAC curve is one big U-shaped curve, which is tangent with all the SAC curve, which is tangent with, see this black color dotted line, this is tangent points. Clear? Now, left side, that is initial phase. Initially, see, whenever output is increasing, now x-axis represents output. Whenever output is increasing, LAC, cost is decreasing. This is because of economies of scale. And the cost will become minimum at point M. Where at point? At this point M, LAC and SAC4 both are tangent at the minimum. Both are. But if you observe in the left side, blue color dotted line, can you observe? That is the minimum point of SAC. Minimum point of. But black color dotted line is a tangent point with LAC. Tangent point with? Is always a tangent with minimum point of LAC and SAC, or is it left side tangent? See, observe this black color dotted line is left side to SAC curve as well as LAC. That means decreasing side. Which side? Now this is how question comes. When output increases, what is it when? And cost decreases. Cost? We are operating at which? Economies of scale. And during economies of scale, LAC is tangent to SAC to the left of the minimum. What is it? To the or towards decreasing side or towards, and this economies of scale will exist until optimum scale of plant. That means until this point M. This point M is called optimum scale. At this point M, even producing benches in 1 month cost is minimum. 1 year also cost is minimum. This is called optimum scale. Every manufacturer wishes to operate. Suppose if we produce beyond this, sir, that means cost going to increase. That means after certain level, after, see, this is that certain level, or beyond a certain level, or at higher level of output. Which level? LAC is tangent to SAC towards right side, towards, and this is because of my long run planning. What is it? Long run is decided based on short term plant size. Now I should decide, now I have 7 machinery. In that 7 machinery, in which machinery if you produce, your cost is going to be minimum in short term as well as in long run. Clear? That is in SAC4, least cost combination. Which cost combination? And economies of scale will exist up to least cost combination, and beyond least cost combination, that will be diseconomies of scale. That's it. This is the concept of SAC and LAC, where SAC and LAC both are minimum and tangent. Optimum scale of plant. That is what everyone wishes to produce at. Until optimum scale of plant, economies of scale. Initially, what is it? When output increases, cost decreases because of up to optimum scale of plant. Beyond optimum scale of plant, when output increases, cost because of simple economies of scale is like advantage, diseconomies of scale is like disadvantage. Clear? Understood? What's your name? Yatra, you're looking blank. I can make out. Revised after going back home. That is why I said tomorrow I'm doing cost, production and chapter 4 and national income. Revise and come. I said this is the second round of revision. In first round, whatever you will be having doubt, second round revision, it will get clarified. So that is the reason I clearly said instructed. Revise and come, first round of revision from your end, second round of revision from my end. I can clearly make out people who are looking blank alone. Didn't even open the book. I know that. And next to Yatra, what's your name, hero? Understanding, Vishal? Little bit. Nice. So that is why revise and come. What is it? Revise and come. Clear? And this area, very least chances of coming with a question. Then where exactly the question comes? AC curve, AFC and AVC. What is it? Numericals. Question number 17. A firm producing 5 units of output. How much units of output? Average fixed cost is rupees 4 per unit. That means 5 units AFC. What is this? AFC is how much? 4 into 5. That is total fixed cost. TFC. And for producing 10 units of output, rupees 7 is the average cost. Sorry, what is it? Rupees 7 is the average cost. AC is rupees 7 for producing how many units? For producing. So 10 into 7 rupees. 70 rupees is the average cost and fixed cost is how much? 20 rupees. So what will be the variable cost? 50 rupees. And see, average variable cost of producing 10 units. What is the formula for average variable cost? Total variable cost divided by quantity. Now we need total variable cost. We got fixed cost. How much is fixed cost? And we got average cost of 7 units. Sorry, 7 rupees for 10 units. Sorry, 10 units. 7 rupees is for how many units? So 7 into 10 is how much? 70 rupees is average cost. Fixed cost is how much? 70 minus 20. 50 divided by 10. This is the kind of questions will come most. Next. Wait, I should explain. Sunk cost I should explain still. This is the jackpot question. Next I will explain TP, AP and MP calculation. See here, when output is 0, dash is equal to dash. Fixed cost is equals to total cost. TFC is equals to TC. See there. Question number 47 and 48. What will be the average fixed cost for second unit of output? What is it? Average fixed cost. What is the formula? Total fixed cost divided by quantity. Now what is the fixed cost in this case? 200. Because when output is 0, whatever will be the total cost, that is the fixed cost. So simple, 200 divided by 2. In this, most of them made blunders. I said, nah, even after explaining logic, sir, fixed cost is not given, sir. They're asking us to calculate average fixed cost. How to calculate, sir? Common sense. Clear? Next. This is little tricky now. Diminishing marginal return starts to occur. That means there is a trend which is diminishing. Where the trend is going to break. Where the trend is going to... But here starts to occur. That is what? It is odd one out question. What is that? Odd one out question this is. That means that entire diminishing trend will break. It will. That is the answer here. See, observe. Identify marginal here. 310 minus 200. How much?
110.
Next, 410 minus 310. 500 minus 410. See, 110, 100, 90. Diminishing trend, na? As per question, starts to occur means from 0. That is not the answer. Next, see here. 604 and 500. Difference. See here, 110, 100, 90. It was in a decreasing trend. Now the trend got broke between. Clear? Tortoise shell question. Average product rises. We already did tortoise shell. Average product means above 1. Average product rises when AP is rising. Dash increases faster than dash. Marginal will be greater than average. But here see, they will ask in reverse way around. When average product rises as a result of increase in the quantity of variable input. Now marginal product will be greater than. And what is called as plant curve? Donation of marks. 27th question. You only calculate. What is the average variable cost? They're asking for what? Average variable cost. When the quantity produced is 100 units and the total cost is 1000, fixed cost is 200. Most easy. They have only given total cost. They have only given fixed cost. 1000 minus 200. So 800 divided by 100 units. Per unit average variable cost is 8 units. That's it. Chapter 3. Calculated. Question number 40, question number 41. Recent Jan 26 attempt paper. See there, output 0, total cost is 270. Then what is this 270? Fixed cost. Next they are asking average fixed cost for how many units? Simple, 270 divided by 3. Answer 90. Next, average variable cost of fourth unit. Now we need variable cost. Fourth unit 610 is the total cost. Fixed cost is how much? 610 minus 270. 340. 340 divided by 485. Clear? Literally donation of marks. And this is one of the favorite area for ICAI. Asking questions from AFC, AVC calculation. And if they don't ask here, tortoise shell question will come. Which one? And another most easiest, ATP, AP, MP. They're also donation of marks. Chapter 3, more and more donations are there. You just have to know the logic. There is no rocket science here. Just a simple meaning if you understand. Formula if you know, you will crack off easily out of 10 marks. 7 marks easily you will crack off. And some 2-3 questions will be little tricky. Not even difficult. What is it? That's it. And still, sir, we are unable to score beyond 50 in economics, sir. By conceptual knowledge missing. Clear? Understood? Able to understand? Anyone still finding it difficult? Hey, respond, audio. Audio important. See, that is what, once you understand the way questions will be asked, you will automatically become master in that. You know where exactly question comes and you know what is the topic, you know what is the formula. You will easily crack that. That's it. These are the numericals from average fixed cost and average variable cost. Clear? Now, accounting cost and economic. There's another important area. See, accounting cost from Akhilesh sir point of view. Whose point of view? Accountant point of view. What is it? Which can be recorded in books of accounts. Which can be? That is called accounting cost. Economic cost from Shashikiran's point of view. That means economist point of view. What is the difference? Accounting cost, we will only record those expenses which can be recorded in books of accounts. But economic cost, which can be recorded and which cannot be recorded. Sir, why, sir? Are you mad or what? Which cannot be recorded and all? Why are you taking it? For a purpose of decision making. Which making? What kind of decision? Let's take an example. Assuming Shashikiran had an opportunity of working at, let's say, KPMG. Let's say after my BCom final year. What is it? BCom final year. I went to a campus interview. Let's say I got selected. They said, we will pay you 3 lakh rupees per year. How much? Or let's say 3.5. Okay, why simply 3 lakh and all? 3.5 lakh rupees per year. But Shashikiran is like, I don't want to get lost. Even some other 2-3 companies had come, Ernst & Young, Deloitte, and they also offered some 3 lakh, 3.2 lakh, but KPMG was highest. How much is KPMG? I said, no, I don't want to work under anyone. I will start my own business. I will start my own business. What? Bench manufacturing business. Now, after 1 year, what is that after? Let's say I am earning only and only 2.8 lakh or 3 lakh. Wait, I will write it here better. KPMG. I had an offer at KPMG. Let's say 3.5 lakh rupees per annum. But I rejected that. Now let's say I'm doing my own business. My own bench manufacturing business. And I earned a profit of, let's say, 3 lakh rupees. How much did I earn a profit of?
3 lakh rupees.
Now don't you think, Shashikiran, stupid fellow, rather than doing your own business and just earning 3 lakh, you could have gone to KPMG. You will easily earn how much? Now in my books of accounts, let's say on the credit side of P&L account, if I could have worked at KPMG, I will get extra 50,000. Can I show this?
No.
Cannot be shown in books of accounts. Cannot be. And this is what we call opportunity foregone. What is it? Opportunity cost. Which cost is that? Cost of next best opportunity foregone. What is it? Cost of? See, I also had an offer, let's say from EY, Ernst & Young, let's say 3 lakh rupee, and let's say from Deloitte, let's say 3.2 lakh rupee, which is the best opportunity. Comparing to all the three best opportunities, KPMG. So I will compare with KPMG. Best opportunity what I have foregone and what I am earning. Difference between these two is called as opportunity. You tell me, can we show that opportunity cost in books of accounts? No, we cannot show the opportunity cost in books of. And why will this concept of opportunity cost comes? Because fundamental premise of economics, human ones are, resources are. Remote bekena? I think we're here only. Reduce it or whatever. Now, opportunity cost arises because of fundamental fact of economics. What is it? Human ones are. Resources are. Now, human resource. Shashikiran is also resource now. Now, he cannot work everywhere. Any one he can select and other he has to reject. Now, simultaneously, I cannot work at KPMG and simultaneously, I cannot start my own business. Any one I have to select. So, I selected my own business and I rejected the KPMG's offer. So, because resources are limited and we can use it in an alternative way. Which way? This concept of opportunity cost arises. Clear? And there is one more element, sunk cost. Which cost? Cost once incurred which cannot be recovered back. Best example, Arivupro Academy fees paid. When application letter clear note, fees once paid cannot be refunded. That is not sunk cost example. In terms of business, what is sunk cost? Now let's say, wait, I will come. I will only explain. Wait. Now preliminary expenses. Which expenses? In order to set up the organization, government fees, registration charges, can we recover that? That is sunk cost. Advertisement expenses. We will bring Virat Kohli, Sunny Leon, Katrina Kaif, and we'll make you people bakra, and we'll bring Alia Bhatt. We will make her to endorse fruity juice, cornetto ice creams, and in Kapil Sharma show, she will go and say, sugar is very bad for health. In entire life, whatever she has endorsed is only sugar items. Yes, madam. Bad debts is not a sunk cost. Bad debts is NPA, non-performing assets. That is totally different. So, economist point of view, different. Accountant point of view, different. So, now Akhilesh sir class, done. Shashikiran class, present. Clear? So, economist point of view. Which point of view? That means which can be shown plus which cannot be shown. But sunk cost can be shown in books of accounts. What is that? Sunk cost can be? Advertisement expenses, R&D expenses, research and development expenses, developing of a product. Yes, we can show that. We will be recording in books of. But here, once incurred, that cannot be recovered back. Clear? Now, in exam, they will give a numericals based on this. What is that? Just now we saw na. Sunk cost. Table was there. Wait. What will be the total amount of? On the basis of following: fuel and power, variable cost; research and development, sunk cost; rent paid, fixed cost; wages paid, variable cost. Clear? Next, advertisement, sunk cost. How much? Very difficult question. Just you need to know is logic. Preliminary expenses. Okay, traffic violations paid. What is it? Let's say I was putting all that 100 benches. I wanted to deliver it to Veda. I was going on my way. Policeman stopped me. Hey, overweight in your vehicle. Come aside. Pay the fine. Okay, traffic violation or penalty is paid. I can show in books of accounts, but can I recover? Penalty money paid recovered from client. No, I cannot show that in books of accounts, or can I show? Yes, you can show, but you can't recover. That is called sunk cost. And see, previous question, which of the following expenses included in the cost of and termed as? That means only which can be shown in books of accounts. Clear? See here, wages paid to the workers employed in the expenses incurred on research and no sunk cost. Expenses incurred on advertisement, no sunk cost. Common cost incurred for general operations of normal overhead expenses like small maintenance expenses. Yes, it can be shown, but overall as an accounting cost I cannot show. Direct, which is leading to productivity of goods and that is accounting. Here A is also an answer, D also looks like an answer, but clearly A is a main factor which is adding for productivity, so answer is A. And see, here only they have given, if you have understood these two And definitely next question is easy peasy. Clear? So just they will play with concepts. They know very well. You are by-hearted and you have been in the exam. They know very well. Just the second PUC, 11th and 12th clear students. By heart, go vomit in exam. And they also know it very well. How to screw up your by-heart mindset. This is how they will do. Same. There is no difference between these two questions at all. Logic is here also. And same thing they're asking in opposite. Here they asked for accounting. Here next they're asking. They will just play around with your mind now. Clear? So logic is important. So don't by heart. By hearting will never work. Clear? So sunk cost can be shown, but opportunity cost cannot be shown. In accounting cost, we will only consider those expenses which can be recorded in books of accounts. But economist can be and why are you considering both? For the purpose of accounting cost is also called as direct cost on explicit. Explicit means which can be expressed. Which can be. Next comes economic, which can be and which cannot be. Also called as indirect cost or part of implicit. What is it? Part of implicit. What means which cannot be expressed. Explicit means which can be expressed. Implicit means which cannot be. Explicit plus implicit both put together is what we call economic cost, or accounting cost can be recordable. Opportunity cost cannot be. That is called economic cost, or I can mix this both the concepts are accounting cost plus implicit cost. What is it? Accounting cost plus is also called as, see, in short, logic is simple. Recordable plus not recordable. Both put together is what we call. Clear? Understood? Now comes explicit and implicit. Only 2 points are there. You should remember this 2 points. Based on this, numerical problems will also come. What is it? Explicit. Simple logic, which can be recorded, which can be from accountant point of view. Whose point of view? And which is leading to the production of or hiring of factors of production in the manufacturing process. That is explicit. No confusion. Implicit is like Nityananda. Full confusion. Me talking to the outside me through the inner me from the outer me. That is how literally. What is it? Let's take one example. This building belongs to Shashikiran. Assumption. What is it? In my own building, I am running my bench manufacturing business. And in my books of accounts, I am showing as rent paid. What is it? Who is paying rent? Shashikiran. To whom? Implicit. What is it? Money is not actually going outside. It is not a payment concept. It is a receipt concept. Which concept? And these are not actual monetary expenses. What is it? But in explicit, these are actual expenses incurred by the firm and it is a payment made to outsider on hiring the factors of production, land, labor, capital and or anything which is recordable. That's it. This is explicit. This is explicit is related to accounting. Implicit is a part of economic because recordable plus not recordable put together both is called as economic cost. So we'll take one more numerical example here to make your life simple. Now let's say Shashikiran is producing the bench. So factors of production, land will expect rent, labor will expect, capital will expect, organization will expect profit. Now let's say 10,000 is my rent na. In a whole year, I have paid 1,20,000 rupees as rent. Wages, let's assume I have paid some 1,80,000. Interest, let's say I have paid some 1 lakh. Don't you think this is recordable in books of accounts? So how much is the total accounting cost? 4 lakh rupees. Do you agree? Now, Shashikiran, he could have worked where? But stupid fellow, he didn't select that and he is doing his own business and he is earning how much? Okay, for a time being, I will ignore this. I will only take this as into consideration. How much KPMG was offering me? That means as a decision making purpose, now I will say, see boss, I have rejected an work offer of 3.5 lakh. If I am doing my own business, at least, what is that? How much profit I should earn? That means whatever opportunity that I have foregone, that should be earned and recovered in the name of. How much did I forego? Can I show this in books of accounts? No. So this is an opportunity cost. By the way, how much is the opportunity cost? 3,50,000. Recordable 4 lakh plus opportunity cost 3.5 lakh. 4 lakh plus 3.5 lakh. 7,50,000 rupees. What is this? Recordable plus not recordable put together. Clear? Now let's say my sales. What is it? is 9 lakh rupee. Sales is how much? Now I produced the benches, let's say some 3,750 benches I have produced. I sold all the benches and I total made a sales of how much? 9 lakh rupees. Now identify accounting profit. Which profit? By the way, what is accounting cost? 4 lakh. 5 lakh. 4 lakh. What is it? 4 lakh. Sales is 9 minus 4. Accounting profit. What is it? Okay, I will write it here. Left side. Wait. Accounting profit will be sales minus accounting cost. How much is sales? 9 lakh. How much is accounting cost? So how much is accounting profit? Clear? Next, economic profit. Which profit? How much is sales? How much is economic cost? 9 minus 7.5? 1.5. So from the economist point of view, how much is your profit now? 1.5. So economic profit is sales minus economic cost. So how much is sales? 9 lakh. How much is economic cost? 7.5 lakh. So 1 point is the economic profit. Now, which profit is more? Accounting profit or economic profit? Remember, accounting profit will be always more than economic. Now, which cost is more? Accounting cost or economic cost? Economic cost will be always more than. Clear, understood, and remember, from this, numerical problems will also come. Wait, I will show. Solve this. Question number 52. And I need all the four. Accounting cost, accounting profit, economic profit. Done, finished? So there is a profit in economic cost or losses. Economic profit is not there. Economic loss. How much is the economic loss? 5,000. Clear? See there. They are asking which among the following is not true or which is the false statement. Accounting profit was 25.
Yes, sir.
Next, economic loss is 5.
Yes.
Yes. Economic cost is 30. No. How much was the economic cost? 1,25,000. 1 lakh? Clear? And accounting cost was? Clear? See, like this, numericals will also come. Clear? By this, accounting and economic cost also comes to an end. Clear? So, economic cost is used for dash purpose, decision making purpose. Clear? And incremental cost is also done. And there is one more, private cost, external cost, social cost. Again, this comes in chapter 7. Where does it come in? Chapter 7. Simple. When I'm producing the bench, if I only consider my primary cost of production, land, labor, capital, and organization, that is called as dash cost, private cost. And because of my bench production, chemical usage, that soft finishing, I am discharging that river, let me say, chemicals straight away into river. Now river water is getting spoiled, and that is leading to externality. What is it leading to? Now let's assume Dhoni uncle is a fisherman. Now fisherman is unable to catch proper fish because of my chemical. Let me say fishers are dying in the particular river. Now third person is getting affected. Now Teja and Shashikiran are the parties to the contract. We both are not getting affected. Who is getting affected? Dhoni uncle. Dhoni uncle is getting affected. Clear? Huh? So third party to the contract is getting affected. So because we are selling in the market and we are not including the damage cost. Which cost? It is not reflecting the true cost. So what is the true cost to the society? Social cost. We should also incur your cost of production plus whatever damages you have created in the environment. Both put together is called a social cost. That is a real cost to the society on account of production or on account of. So private cost plus external cost put together is called as social cost. Already direct, accounting cost related, indirect, economic cost related. Clear? Next brings to the another important area. Favorite question to ICAI. Shutdown point. Simple logic. When should the firm close down its operation? When should the firm? See, when I say shut down, when a firm is unable to recover variable cost. What is it? When a firm is unable to recover? That is called shutdown. In that also there are two kinds. One is short-term shutdown. Second one is a. See, long-term shutdown is very simple. When a firm is incurring losses, in the long run, condition of loss, AR lesser than AC. What is it? That is a condition of loss. Next, what is temporary shutdown or short-term shutdown? Simple concept. AR lesser or equal to. What is it? AR? Sir, just now you said unable to recover variable cost, but here equal to is there. That means, let's assume COVID lockdown. During that time, I am producing the bench. I am selling the bench. Let's say to produce my one single bench, let's assume 200 rupee in this. Fixed proportion, variable proportion. Fixed is 80, variable is. Now I am unable to sell it for 200. I sold it for how much? That means I am only recovering variable portion. I am not recovering. Shashikiran, whether you produce or whether you don't produce, any of fixed is lost, na? Every month you should pay rent, every month you should pay salary. Then why did you take that risk of producing and selling in the market and still you are only recovering variable? Only when you produce you will incur variable. If you don't produce, anyhow you will not incur variable. Whether you produce or don't produce, fixed cost is anyhow lost, na? Then better shut your organization, be at home for short term, take rest. Don't do it. That is temporary shutdown. Which shutdown? We are not permanently closing. For a temporary purpose, we are closing down because I am unable to recover back both of the cost. So remember, even though if it is equal to, even though if it is variable cost, that is also called as shutdown. So instead of calculating in per unit, we are representing it in total units. Total revenue lesser or equal to total variable cost. What is the total revenue is? Total variable cost. If not, we can represent it as average revenue is lesser or equal to average variable cost. Remember, average cost is also called as selling price, and average revenue is also known as demand curve. Which curve? Clear? By this, entire theory of cost concept comes to an end. Detailed discussion done. Usually I will not take beyond 45 minutes for cost. Almost we have taken more than an hour. Clear? Understood? Any doubts in theory of cost? Let me know. Flip back your page. Have a look. Any doubt before moving to production? Yes, madam. Sunk cost is? It is another recordable. Which among the following is an accounting? Sunk cost is shown, but you are not recovering. Accounting cost is where you are directly incurring an expenses on manufacturing, like producing goods and services, which is like immediate. In sunk cost, what happens? I will not show it in 1 year. You will learn this in inter. Like for example, I bought Virat Kohli for brand endorsement. I paid 3 crore rupees to Virat Kohli. If I show 3 crore in one single year, my profits will not be there. Straight away losses. I will divide that expenses into next 5 years and I will show 3 crores divided by 5 years and I will show for next 5 years. So it is like a recurring expenses. So I will divide that. So because of that element, I will not straight away include that into accounting. Clear? It is there in accounts. In advanced accounts, you will learn whenever you incur on any advertisement cost, huge expenses, na, I will not apportion that in one single year. We will divide that and we will apportion for 3 years, 5 years. We'll split that expenses for throughout because I have a contract with Virat Kohli for 5 years. I will advertise in his name for next year. So expenses cannot be shown just for 1 year. I will show that expenses for 5 years. That is the reason. Clear? Let's go to the next one. Theory of production. Okay, look at the board. Theory of production. So in theory of production, there are 3 major topics. Human wants, factors of production, production function, isoquant, isocost, economies of scale, diseconomies of scale. That is the last portion. Clear? And economies, diseconomies, I already explained with LAC and SAC. Advantage and disadvantage. That we will not take much. Let me say you can read it on your own there. Next, let us get started. Human wants. Are you guys humans?
Yes, sir.
What is the proof? Because we have desires, we have taste, we have motives. That is the proof, sir. DTM. What is human wants? Like KTM bike. DTM. Desire, taste and motives of a human being is called as human wants. And there are 3 types of human wants. Necessary, comfort and under necessary 3 things. Basic necessary, necessaries of efficiency, social. What is basic necessary? Food, clothing, shelter. Roti, kapda, makan. Very basic essentials of life. Next, necessaries of simple. In order to perform the work, we need lot of tools and equipments. What do we need? Lot of tools and that is considered as efficiency. See, for a teacher, camera, iPad, knowledge. These all are most important tools. Material, I mean. All these equipments. For a doctor, stethoscope, X-ray machines. All of these are equipments. Without that, I can't perform my work in effective manner. So these tools and equipments are making me to earn money. To earn. And let me say perform my work in effective and efficient manner. That is called necessaries of efficiency. Such tools and equipment is called necessaries of. Next comes social. For the sake of society, you should shut and follow. No questioning and all. Whether you like it or whether you don't like it. Your mom will say after 6 o'clock in the evening, if you sleep, Lakshmi will go out of the home. You should shut and follow. And you should not cut your nails on Tuesdays and Fridays. Very bad day in Hindu. Hey, no way. No haircut. No, let me say nail cutting and all. Very bad day. Like this. Every society, Hindu, Muslim, Christian, Jain, Parsi, Sikh. Everyone has their own religious practices. You cannot question much. You have to shut and follow that. That is called which necessary. Next comes comfort, which provides better level of satisfaction. Whatever basics are there, beyond that, which provides what level? Let's say, sir, I will come to an academy by a public transport. Basic necessary. Sir, I come with my own private vehicle. Comfort. Sir, I come by a car. Luxury. Clear. What is luxury? All extravagant spendings of a human. Unnecessary spendings of a human is called as luxury. In the 3 types. Harmful, harmless and. In this defense, luxury questions will come. So what is harmful? Which increases social status but affects on human health. Best example, refrigerator at home. AC. If you are sitting in AC for a longer duration for more number of years, health effects are there. And even refrigerator, especially in summer, when you go and open that door, cool breeze will come, sir. That is not cool breeze, chlorofluorocarbon, CFC. Effects on respiratory system. But still, cool breeze, sir. Come to Chennai, sir. You will understand all this. Because only 3 seasons are there in Chennai. Hot, hotter, hottest. Not summer, winter, rainy. Hot, hotter, hottest. That is how the seasons are. Next comes harmless luxury. What is that? Which increases social status but doesn't affect on human health. Like car, bungalow, luxurious car. By owning a car, it will not affect on your health. But if you are driving it very fast and if you go and bang someone, it will affect. Last but not the least, defense luxury. Which luxury? See, it's not CCTV camera, gun and all, which can be readily convertible into liquid cash. Stocks, bonds, shares, gold, silvers. All this, which can be readily convertible into a liquid cash. These are the 3 types of luxury and characteristics of human wants. See, human wants are, all wants cannot be. See, you will ask for cell phone first, competitive, and next to after cell phones are tempered glass, after that earphone, after that AirPod, after that recharge, everything you are using together, complementary, and they are recurring in one after the other. Sir, after cell phone, next laptop, after that new bike, after that new girlfriend, after that new home, after that new life. Like this, recurring in nature. Want varies with the time, place and person. Perfect fit for our boys. See, person with local boys, local tea shop. With girlfriend, cafe coffee day. Now cafe coffee day is also gone. So now, sir, third wave coffee. Next, want varies with the time as well as place. Suppose if you are at home, your mom will prepare something snacks at evening time. She will only give it. But if you are outside, sir, momos, pani puri, golgappa, all this. And want also varies with time. Early morning, different wants will be there. Evening, you have a different wants. Next, wants also becomes habits and best example. See, there are people, whenever anyone visits your home, coffee, tea, hey, you have to take at least anything. You cannot go like that. Customs. And some people have been habituated to that coffee and tea. Without drinking coffee, brain doesn't work at all in the morning. They will wake up, but they need coffee to brain to function. I know, he is observing there. Same habit, huh? Don't worry. Caffeine addiction. Next, want becomes or affects because of advertisements. Now that means Katrina Kaif has to come, old one mango, when droplets start falling, then you feel like drinking mango juice slice. If not, you never felt like drinking mango juice at all. Like this. Next, auntie will be there. She will be looking very bad at the mirror. And when Santur soap ad comes, Mummy, you look so young, beautiful. I want to use Santur soap. See all this. We will influence you, will make you people bakra by using advertisement. So these are the characteristics of human wants. Next comes most important, production. So one beautiful answer will come usually from our students. What is production? Converting raw material into finished good or input into. What do you mean by CA? You stupid fellow. What is CA? Chartered accountant. Confidence. Fix up. What do you mean by CA? Come again. Lay ICU batch ಅಲ್ಲಿ ಇದೆಯಾ ಕಣೋ ಮತ್ತೆ ಕಮ್ಮಗೆ ಏನಂದ್ರೆ ಕಷ್ಟ ಕಣೋ what do you mean by CA? Jana chidipe? Okay. That means if you give a wrong answer, it is called come again. If you give correct answer, it is called certainly achievable. Simple. Now, what is production? Adding utility to subject matter. That means simple. It is not always converting raw material to finished good. Let's say, sir, I will go to hotel. I will order idli vada. Let's say in the break time, I will go to that Skanda hotel in the main road or Udupi hotel, sir. Taste was not good, sir. Bakwas, yeah, simply not good at all. Next day, you will not go to that same Udupi hotel. You will go to, let's say, A to B. What is it? Assumption. Taste was good, sir. That means in both the hotel, Udupi hotel and A to B, input is converted into, batter is converted into idli and vada. But where did you like the taste? A to B. That is what. Taste is important. That utility, satisfaction is important. Not converting input into. So what is production? Process of adding to the subject matter to satisfy human wants. Now the process of creating this utility is of 4 types. Form utility, place utility, time utility, or possessional utility form. Sir, I will buy a cloth piece. I will go and give it to tailor. He will cut, he will stitch, and he will give it to as a wearable attire. We are converting from one form to. Your mom, she will bring all groceries, vegetables. She will prepare a food. Converting from one form to. Next, place utility. Simple agricultural goods. In farmland, they will grow. That they will bring it to marketplace to sell. Na? Moving it from one place to. We are creating utility. Next, time utility. Material in your hand. Immediately, it might not be useful. Yeah, before exam, definitely useful. We are storing it, we are preserving it and using at an appropriate time. Rainwater. Whenever it rains, we'll collect it in dam, reservoir, canals, and we use it during summer. Last, ownership or rented home example. Sir, that home doesn't belong to me, but I'm in a rented position. That means I'm in a possession. What is it? I have a possession, so I'm using library books. By mistake, if you go to library, not to sleep, to study, that means you borrowed a book from library. You are not a owner. Your college is the owner of it, but you have a possession, or you should buy that. You should be the owner. You should be the. So these are the 4 different ways of adding utility. Clear? Next brings factors of production. How many factors of productions are there? Land, labor, capital, and most important question from ICAI point of view. Characteristics of factors of production of all the 4. Repeated question. What is it? Repeated question. How many factors of production? Land, labor, capital. See, all these elements are studied from economist point of view, not from Akhilesh sir point of view. Clear? Land and building is an asset from accountant point of view. But from an economist, we see it is a free gift. Land is a free gift of nature. What is it? That means like air, water, even land is a free gift, not created by a human. Clear? And availability of a land is very limited. That means the supply of land is perfectly quantity remains the same. Only price can go up or only price can come down. And it is indestructible. Physical land can never be destroyed. Only fertility of the soil can be destroyed. And land is, see, when you are traveling from Bangalore to Chennai, you can't take your home or your land space in your pocket and you can't go there. You can't move a land from one location to the next. Differs in soil quality, differs in value. When you want to buy the land inside the city, outside the city, and primary and passive factor of production. Remember, land is not an active factor. Land is not an. That means land will not create matter on its own. No, it will never create. Suppose there is a land. You fill a land, construct building on this. What will it construct less per year? No, human efforts are needed. What is needed? So land is primary. That means each and everything has to be created on a land. But it is a passive. That means human effort is needed. Which effort? Without human effort, land will not grow crop on its own. Land will not construct building on its own. So land is not active factor. Land is a of production. Clear? This is the meaning of land. Characteristic features of land. Next comes all kinds of dash efforts. Such can be either physical effort or intellectual effort. Now, Shashikiran teaching to Arivupro students, physical effort or intellectual. Suppose I am working in a construction field, physical effort. And such effort should lead into production. Such effort should lead into, what is production? Creation of utility. So, whatever efforts we are putting, that means if Shashikiran is teaching students in the marathon class, at least after coming to class, you should understand. If you are not understanding, sitting silent and simply sleeping, that means it is not creating to a production. So, human effort should further lead to the, and for that productivity, Arivupro is paying me what? Monetary reward. See, all human efforts leading to the production for which monetary rewards are paid. That is the meaning of labor. Now, characteristic features of labor. Labor and laborer are inseparable. Shashikiran is a laborer. My teaching skill is a labor. We cannot separate this from each other. Shashikiran is different. His teaching skill is different. Yes, I know. But you cannot separate that from each other. Separate that from each other. And if I am teaching Arivupro students in marathon like this, I am not selling myself to Arivupro Academy. I am only selling my teaching skills. Laborer sells only is. And labor is perishable. Now I say I am only taking class till 1:15. After 1:15 I am not taking class. That means if I don't take that class after 1:15, that means labor hour is. I cannot say, yesterday I didn't take na, that I will take in the midnight. Will you come to the class? No. If I don't take class tomorrow, let's assume, hello, assumption. What is it? Sir, you only said na tomorrow no class. Assumption. Suppose tomorrow if I don't take a class, can I later come and say tomorrow's class I will take it day after tomorrow like this? No. If I don't work for that day, that labor hour is perished. What is it? And this is where exam questions have been asked. And human in nature. What is it? See, can't work 24/7. Let's say, for example, for you guys, I will take class from 8 o'clock to 4 o'clock. Again, normal batch, 4:15 to 8:45. I should go back in ambulance only. I can't go in my vehicle. So, human in nature, I have to take rest. Leisure time is important and differs in efficiency. See, where Akhilesh sir teaches, where Shashikiran teaches, where Nitin sir teaches, where Sai sir teaches. It's not one and the. Every individual person, that means every laborer has the way of labor in different manner. That means differs in efficiency, differs in, and we are less mobile. Shashikiran, can you come and teach in Kormangla? Yes. Shashikiran, can you come and teach in Whitefield? Get lost out of Bangalore, that is different word. Going there only 2 hours, coming back only 2 hours. No, I don't want to come. Next, labor has less bargaining power. That means no. For students now, along with economics, I thought something about finance. I also thought something about life, something about environment and all. You pay me extra. They will say, get lost. What we have agreed. We will set and pay that. That's it. You pay, let me say you taught them extra, you taught them less. Doesn't matter. You can't bargain. What is it? You can't. Less bargaining power. Predetermined wages, predetermined salary you are going to get. And labor supply is. Even though price goes up to the large extent, you can't remove everyone. You will only remove fewer people. Na? And same way, even if price drops down by a large extent, you will appoint everyone. Na? What is required, you will appoint. So it is. Next comes capital. What is capital? From accountant point of view, money invested to run the business is called as a capital by the owner. But in economist point of view, different. I said now, whole concept is from economist point of view. What is capital? All which should lead for further production. Two conditions are there. One, it should be man-made. It should not be free gift of nature. What are the free gifts of nature? Land, air, water, these all are free gifts of nature. That is not called as a capital. It should be dash. And such man-made goods should lead to further. Okay, I will construct a building. I will be self-occupied in the ground floor. First and second floor I have given for rent. That means only this first and second floor is leading to production. Ground floor is not leading to. That means ground floor is not capital. Only first and second floor is a. That means even self-consumed goods is not a capital. That should lead to further productivity. That should lead to. Clear. And types of capital. This is also important. From this most repeated question, circulating capital. Like raw materials, where it is used once in a production process. Only and only once in a. Like fuel, raw materials. See, it is another form of capital which performs its functions in the production only and only in case of a. And which is not available for further use or future use, like seeds, fuel, raw material. This is one of the favorite question to ICAI. Twice they have asked it till now. Only from this one point. Next, fixed capital, which is in one single location. You can't move from one place to. Like machine tools, which is fixed in one place, like water tank. All this. Next, real capital. What is it? Again, tangibles like building, plant, machinery, human capital, like skilled labor. Next, tangible and intangible capital. Intangible, goodwill. Or leave about, let's say, capital, copyrights, patents, trademarks, license. These all are intangible. Tangible, which can be seen, felt. Next, individual capital. Best example, your cell phone. Only belonging to you. Social capital, which belongs to everyone as a public at large. Bridge, roads, dams, street lights. This is the types of capital. Next comes capital formation. What is it? CMU, shortcut to remember. Creation, mobilization, utilization. This concept is also called as circular flow of money. What is it? Circular flow of money. That means how money gets circulated in the economy. Simple. Households or individuals will be getting salary when they work in any business organization. Will they spend every money what they earn? No, sir. Whenever we earn income, not disposable income, either we consume or either we save. That means both the portions are there. Some portion, little at least we will save. Na? Where will they keep that savings? Banks and financial institutions. Let's say left hand side, all them are households. They will save money. Now right hand side, banks and financial institutions, stock market, insurance market, banks. Money will come to them. And who will borrow loan from them? Business houses, governments, corporates. Now let's say Shashikiran, bench manufacturer. I am borrowing loan from bank. Again I will use in business. I will earn profit. Again I pay salary to my staff. Like that every business will pay salaries na, for their employees. That is households. Or let's say households are the owners of factors of production. End of the day, land belongs to an household only. Labor is also household only. That money, whatever it is circulating and converting into business money, na, that is also capital belonging to whom? Household. Business organization is also started by whom? Household. Factors of productions are the owners of factors. Let me say, factors of productions are owned by household. What is it? Owned by? They will get the money. Whatever money they get, again it will come to financial institution. From there again it comes to business and government. CMU, creation of savings, household. Mobilization of savings, banks and financial institution. Utilization of savings. Who is doing that utilization? Corporates. And so this process of CMU, like this money keeps on getting circulated. So household saving gets converted into business investment. What is it? Household getting converted into. So the process of CMU will make household savings to get converted into. That is what we call capital formation. Next comes last but not the least. What is it? Organization or organizer, owner. Organizer is a person who will bring other three factors of production into one common place. Without him, without organizer, without owner, can you take a land space for rent? Can you appoint laborers? Can you invest money to do business or go bank and take a loan? No. He is the one who will organize the resources or will bring everything together. So he is the one who initiates the business and resource. And environment keeps on changing, dynamic. Today you will like honey cake, tomorrow pastries, day after tomorrow I don't like cake at all, I like cupcakes. After that I don't want cake only, I want ice cream. Like this, people's preference, needs, economy will be dynamic in nature. It keeps on changing. So who should also change now? Business owner. I cannot do the same kind of business. If not, people will say Tata bye-bye like how they said for Nokia. Clear up? So he takes the advantages in the changes in the. So what he will do? What kind of advantage he will take? He will try to come with something, inventions, and it may work or may not work. So all uncertainties belongs to the owner only, whether profit or whether loss. So these are the characteristic features of organizer, and there are mainly 5 objectives. Simple, read only concept. And problems of an entrepreneur, again, read only concept. Clear? And from this, if you get the question, jackpot. Like 4 P's of marketing. What are the 4 P's of marketing? Product, place, price, promotion. Already I've learnt in your 11th and 12th. Same to same. Bachu questions will come. See, organization, organic objective. Without any shortcuts, we need to grow. Without cheating someone. Or we should also consider the nation's objective also. And economic objective, social, human objectives. But all 5 cannot be achieved together. That is also one of the problem. Sometimes we are in the wrong location. Wrong size of manufacturing plant. Problems related to selecting and organizing physical. And problem with finance, banks are not giving loan properly, and organization structure, top level, middle level, lower level is not organized properly, marketing mix is not proper, legal formalities, unnecessary rules, regulations are there, multiple certifications has to be taken, and industry relations are not good. Problems of entrepreneur. Clear? So this was all the chota topics of the theory of production. Very least important. What is it very? Hardly some 2 to 3 questions will come from that area. Clear? It may come or year after is what is important. This is where exam questions are most. Clear? Before that, flip back the page, have a look. Any doubt, let me know.
Buildings should come under fixed capital.
Hmm?
Buildings should come under fixed capital.
I didn't get you. Repeat it.
Building
Building.
come under
Fixed capital, yes.
For example, it was just machine and
Error. Typo error. Let's continue. Okay, next. Production function. What is it? See, in this half of the topic, I have already finished. Law of variable proportion, law of returns to scale. So, production function is a relationship between input and output. What is the relationship between? Clear in class. Almost this one single topic I would have taken for 2 hours. Like very first one, law of variable proportion. In detail, we have gone. Suppose if anyone has a conceptual doubt in this alarm, recorded backup. Make sure that you are watching it. Here we are going with revision part. Because it is the vast. Like I will connect the theory of cost there. I will be explaining both together once again. And that will be a full in detailed discussion. What is it?
in detail.
Clear. If I touch that, minimum 2 hours only needs for this one production function. Clear? Okay, we'll go with the revision part. See, production function is what? Relationship between what? Expressed in the form of mathematical equation. Same like demand function. So here also, quantity, that is output, is a functional relationship with land, labor, capital and. So input is called as land, labor, capital organization. By using this input, we are producing the output. That is number of units produced. We always try to produce maximum output with limited input. What is it? Maximum output by using? And such production function is of 2 types. Short run production function. Short run production function is called as law of. Long run production function. So straight away, let's go to short run production function. Law of variable proportion. If you remember SIR, SDR, SNR, same examples we will continue here. And there I explained you in terms of cost. AC curve will become minimum. AFC and AVC both are certain point. Same to same logic. See, when will stage 1 comes to an end, we also discussed with the table. TP, AP. What is AP formula? Next, MP2 formulas are there. Output continuous, output not. If continuous, TP n minus TP. Not continuous. Appa, this table is there now, but 2 questions will come. Calculation of TP, AP and. Wait, let me show that. Where is that? Like this. Minimum 2 to 3 marks. Free. Move. I say is like I want to donate some marks. Take it. If you say I don't want donation and all, you can forget the formula. Simple. This is but 2 questions. 2 to 3 marks will come. See, either AVC, AFC numericals will come. Or if not, this TP, AP, MP, but 2 questions will come. Clear? So this is another most repeated area. Easy. You can get the scores. Next, calculation of TP, AP and MP. Now we are taking an assumption. We are believing that there are only 3 factors of production. In class, I would have created one full big story for that. Why Shashikiran bench manufacturer, 100 bench, 1 lakh bench, 100 benches short term, 1 lakh benches long term. And to produce just 100 bench, will I change land? No. Will I change capital investments? No. I will only change labor. I will only change. Only I will appoint some 1 or 2 laborers to come and work for 1 month. I'm only changing labor, and whether it was short term, whether it was long term, Shashikiran was only the owner. So we ignored organization. What did we do? And we considered there are only 3 factors of production. Which are those? Land, labor and capital. And in that, labor is the only variable, land and capital is a. And see, technology remains. This is an assumption. Sir, today technology changes every single day. But this was given by our economist in 1776, 1821, 1920. That time technology was not changing, na? Was remaining constant. If technology changes, why should I appoint more laborers? With the help of technology only, I can produce 100 bench, na? Clear, na? So we are assuming that technology will be remaining. And no perfect substitutes for. Which are the fixed factor? Land and these two are fixed. So we are making it as a fixed only, boss. There is no alternative available. I don't get any other land space for lesser rent. I don't have wages, let me say, payable to the laborers for lesser. Elsewhere, I don't get a laborer for lesser wages. So they are also fixed. Now with that respect, we are going to the explanation. I will appoint first labor. Labor is the only variable factor. What is it? Labor is the? So I appointed first guy. He is producing 20 benches in a day. Second guy, both of them put together, 50. Third guy, all 3 put together. Fourth guy, all 4. Fifth guy, all 5. Sixth guy, all 6 put together. Seventh guy, still. That means stupid fellow not working, simply taking salary. Eighth, worst fellow, is reducing the productivity by disturbing the workers. This is the output. We produced, let me say, AP and MP also identified. Now what we felt, sir, if you observe, if you are appointing 3 laborers, which laborers? Your marginal productivity has gone to the maximum. That means first guy is contributing 20, second guy is contributing, fourth guy is contributing. That means highest contribution is coming from whom? And this is what we call point of inflection. When marginal productivity is at the maximum, the corresponding TP, what is it? Corresponding? This is called point of inflection. Then when will stage 1 end? When AP and MP both are equal. Tortoise shell, if you remember, topmost position. AP is equal to, that is when stage 1 comes to an end. Clear? And don't get confused with point of inflection. Point of inflection is where TP is. But this 40 is not called point of inflection. This 90. That means this corresponding TP is called point of inflection. And later, after point of inflection, every additional laborer, no doubt is contributing, but MP started to. That what does it represent? Now this logic is important. Till point of inflection, till TP will increase faster because MP is increasing. See, relationship between TP and when TP is increasing, MP is also. See, 20, 50, 90, 20, 30, 40, both are increasing. TP will increase faster. Why? MP is increasing. Later, no doubt, TP is rising till this 150 when it becomes maximum. But MP is, that is after point of inflection. See, before point of inflection, TP increases faster. After point of inflection, TP increases slower. Why? MP started to. Next, when TP is maximum, TP is, MP is. And most important, when MP becomes 0, optimum utilization of resources. Innova car example. Number of students coming inside the car, seating capacity in the car, same to same example. Now that will also define SIR, SDR and if you remember I said after your economics exam, now boys, never ending Goa trip planning. Still this time on a serious note they planned. 6 of the friends have planned to go for a Goa trip. Which trip? Now they also booked up a car, Innova car. Now in the car there are total 7 seats. How many seats? First seat goes to driver. They have appointed driver na. So it is a driver place and next 6 friends will come. 1, 2, 3, 4, 5, 6, all of them. Now usually total how many seats are there? Hey, 7. 7 seats are there. Clear? Oh, I wrote 8. 1 second, wait. We'll remove 1. Backside only 2. This is driver seat. Let's assume driver seat. Next, remaining 6 friends. Clear? Total how many seats? Total 7 seats. 7 seats is fixed. Number of passengers coming inside is a variable. Now you will feel, sir, let that 1 seat be empty, sir. Anyhow, we are going for long distance, na? We will keep luggages and all. But in reality, you can't leave that empty. You can accommodate 1 more person. So I will also take that last guy. So now how many are there inside the vehicle? This is, now when fixed factor and variable factor both are optimum utilization of resources, that is when MP will become 0. Clear? And same thing, AC will be minimum, AFC and AVC will be equal. Fixed factor, variable factor both are. That is when stage 2 comes to an end. When MP becomes 0, total productivity will be maximum. In the stage 2, fixed factor, variable factor are. And if only 3 or 4 people comes inside a car, but 7 seats are there, fixed factor is still more, variable factor is less. That is stage 1. See, another meaning. Green color underlined. See, green color highlighted. Fixed factor is more than 7 seats are there, 4 people are inside a car. Still variable factors can go up. In end of second stage, fixed factor will become equal to, suppose if 8th fellow enters inside a car, variable factors are more than, that will create a trouble, negativities. Now seating capacity is only 7, but 8 people are inside a car. So this will create dissatisfaction. What is it? You can't move properly, suffocating inside, you can't sit in a comfortable manner. So variable factor becoming more than fixed, that will returns to negativity. What is it? Clear? So this relationship is most important. Relationship between TP and MP. Clear? Now what happens in stage 1? TP increases, MP also until point of. That means TP increases at dash rate, faster rate, increasing rate, higher rate. After point of inflection, TP increases, but MP. So TP increases at decreasing rate or diminishing rate. Which rate? Decreasing rate or? Next, when TP is maximum, when MP is 0, it is called optimum utilization of resources. In last stage, TP decreases, MP will become. Clear? So this is the law of variable proportion. And in this, from the graph, they will ask a numerical questions or sometimes even a concept based. Which among the curve will never go below x-axis? TP and AP. Which will go below x-axis? Or they will ask question like this. AP curve will initially increase, later it decreases and becomes negative. False or true? False. AP will never go below the x-axis. AP will never become negative. This is how the question comes. Clear? So even from graph, they may create a theory question. Clear? Huh? By this law of variable proportion comes to n. So if you remember tortoise shell, rate of increase, rate of. Already we did. One area I asked you to be careful. Only and only when AC is decreasing. Be careful. Remaining 3, marginal will greater than average. That was rate of increase and rate of. Now one more is there, value concept. In value concept, diagonal opposites we should be careful. Now observe, same table. Now first let me explain rate of increase, rate of decrease. What is it? Rate of increase. Come back, turn back your pages. We discussed this in theory of cost now, just 1 hour before. Come to that graph, come to that graph. Go back to rate of increase and rate of decrease. Go back to rate of increase and rate of decrease. Go back there. Wait, let me also take that as a screenshot. Here, this one. Hey, 1 sec. Take a screenshot. Save to image. One sec. Add image. Insert from photos. Now observe. Only observe this AP and MP column. Which column? AP and MP column. Now observe 20, 25, 30. AP is increasing. 20, 30, 40. MP is also. Now you tell me, Which is increasing faster? 20, 30, 40. Is it faster or 20, 25, 30 is faster? MP is increasing faster than? Whenever AP is increasing. Whenever AP is? MP increases faster than AP. Logic satisfied. Next, when AP is maximum, AP is equal to? Logic satisfied. Next, 25, 20, 28, 25, 21, 17. AP decreasing? From 30s here. 20, 10, 0, minus 10. MP is also decreasing. Which is decreasing faster? Logic satisfied. When AP is decreasing, MP decreases faster than AP. Clear? Any doubt? Now, observe this. Right hand side. Now, I am not asking you which is increasing faster, which is decreasing faster. I am asking you in terms of numerical value. Which value? Numerical. That is what? Value concept. Now, you tell me, is 20 greater or this 20? Sir, both are equal. What is that greater? Stupidity it is? Okay. 25 greater or 30 greater? 30 greater or 40 greater? That means MP values are greater than AP values whenever AP is increasing. Satisfied? Next, when AP is maximum, AP is equal to MP value. Satisfied? Now comes the twist. 28 greater or 20? 25 greater or 10? 21 greater or 0? When AP is decreasing, dash values are greater than dash value. Changed. But in rate of increase, rate of decrease, MP was only decreasing faster than. That is in rate of increase and rate of. But in value concept, when AP decreases, AP value is greater than MP value. Clear? Now that means even in terms of AC, when AC is reducing, AC value will be greater than MC value. And when AC is increasing, MC value will be greater than AC value. What does it mean? When things are decreasing, when things are, whether AC decreasing or AP decreasing, average is greater than marginal. When things are increasing, what are the things are? Marginal is greater than average. That means diagonal opposites we should be careful. When things are decreasing, things are average greater than marginal. When it is increasing, marginal greater than average. This logic you should know in value concept. Which concept? In value concept, diagonal opposite careful. In rate of increase, rate of decrease, only when AC decreasing, careful. Clear? Understood? By this law of variable proportion comes to an next law of returns to scale. What is it? Simple concept. In here, Cobb-Douglas production function is where you will get most of the questions. See, production function under long run. What is it? Let's say I got 1 lakh benches to be produced for 1 year, more than a year. Now, definitely within my existing, let me say rental space, I can't produce 1 lakh benches. I have to go for a new space. I will change my land. I will also change my labor. Within my small number of 10-15 laborers, I can't produce 1 lakh bench. And also capital investment will also increase. Machineries. Now, assuming Shashikiran himself will be the owner, I will borrow loan from bank. I will only invest. Again, whether short term, whether long term, Shashikiran is only the owner. I will consider owner as constant. So we are ignoring organization. So land, labor and only 3 factors of production. How many factors? 3 factors. Now assume in this also I already have a bigger land. I just have to set up my manufacturing units in that. That means even land is fixed. Land is. Sir, wow, just now you said land is also, yes, pa, but in the theory, they have taken assumption. They have taken assumption as land is fixed. Only labor and capital varies. Dash varies. And every time, whenever I am investing on one capital, let's say one machinery, to handle this one machinery, I need 2 laborers. Handle one machinery, how many laborers? 2 laborers. So 1:2 ratio every single time. That means one capital will always have how many laborers? 2 laborers. So every single time, whenever I invest on one capital, how many laborers I will appoint? 2 laborers. That is the ratio in which we will change land and capital. This is important. That's it. Rest remaining technology will be same. No perfect substitutes for fixed factors. Now every time, whenever I am investing on one unit, that means it is 1 capital, 2 labor. Second unit is 2 capital, 4 labor. Third unit is 3 capital. Every time 1:2 ratio. What is it? 1 capital, 2 labor. 1 capital, 2 labor. This is the productivity. For me, MP is important. Decisions are always taken based on, even in law of variable proportion, MP maximum point of inflection, MP 0 optimum utilization of resources. Everywhere we decided MP. So now also we are deciding based on. See, first unit in a day 50 benches. Mono, both of them 1 and 2. Both units put together 3 units. All 4 put together. All 5. All 6. All 7. Clear? Now see, observe. 50, only 1 unit. Marginal we are identifying. 110 minus 50. 180 minus 110. 250 minus 180. 300 minus 250. 335 minus 300. 350 minus 335. Now observe. 50, 60, 70. MP is increasing. IRS. Next 70, 70. Constant. Next 50, 35, 15. That means when MP increases and TP also increases, this is called IRS. Next, when TP is increasing but MP remains constant, TP increases but MP decreases. That's it. This is the explanation of these 3 stages. Clear? Same to same, represented in the form of graph. MP increases IRS, MP remains linear. MP remains linear straight line curve CRS. MP starts decreasing. That is called. That's it. Same concept in the name of Cobb-Douglas production function. There are 2 mathematical economists. Which economist? 2 mathematical economists. Charles Cobb and Paul Douglas. What is it? Charles Cobb and? I have tried to explain law of returns to scale. What is it? Law of? In the form of mathematical equation. See, this equation is important. This is where exam questions will come. They will ask which is the equation of Cobb-Douglas production function. Even they considered land and capital as variable factor. Which factor? But now proportion varies. In earlier 1:2 ratio. Here 1:3 ratio. When is it? 1:2. See, land will be always 1/4. Labor will be always 3. Sorry, not land. Sorry, capital. Capital will be 1/4. Labor will be. See, Q is equals to K L to the power of A C to the power of B. Instead of writing this as B, we can also write it as. And once they have asked this question. Where is it? 1 second. Let me show the question itself. Question number 92. Cobb-Douglas production function is stated as Q L to the power of A, C to the power of 1 minus A. This 1 minus A is also called as B. And what proportion they will be using here? Here labor will be 3/4, capital will be 1/4. This is the proportion, that is 3:1 ratio. Which ratio? But this is important. Now A plus B value. What is it? A plus? See, in this for me only interested is A value and B value. If this A plus B value is greater than 1, IRS. A plus B value equal to 1, CRS. A plus B value lesser than 1. That's it. Clear? Next comes last concept, iso-quant, iso-cost. Same, indifference curve and budget line concept. Which concept? Budget line concept. Indifference curve. 2 goods, same satisfaction. Here, same concept, producer point of view. 2 factors of production. Out of 4 factors, any 2. What is it? Which will give me same level of output. Input is 2 factors of production. That will give me dash level of output. Same to same explanation. If you remember tea, biscuit, Dhoni uncle will give me 1 cup of tea by accepting biscuit. Same logic. Here, any 2 factors of production. It will be downward sloping dash to the origin. This is called iso-quant curve. Similar to indifference curve of consumer behavior. That is iso-quant. Iso-cost is similar to budget line concept of consumer. Budget line was also called as price line or income line. Which line? Here, it is from producer point of view, combination of 2 factors or any combinations of factors of production which will make me to spend dash amount of money. If you remember yesterday, 60 rupees I have, product A 10 rupee, product B 15 rupee, like that. Now, let's say I have working capital for a day 600 rupee. Now I will appoint labor and capital. Labor for a day is 100 rupee, capital for a day is. In this combination, I will be spending, and every single day I will be spending 600 rupee. That is called ISO cost. What is it? See, all those combination which makes a manufacturer to spend dash amount of money. That means every day I will be spending 600 rupee by adapting combination of labor and capital. What is it? Labor and? Clear? Similar to which concept? Of consumer. Their ordinal approach equilibrium. Budget line and indifference curve should be tangent. At the point of tangency, MRS is equal. Same to same concept. No difference. Their consumer point of view. Here, producer point of view. By this entire theory of production comes to an Khatam. Entire chapter 3 revision. Clear? Definitely at home, if you sit and if you want to do this revision, one whole day you will take. Minimum. That is for sure. Flip back your page. Have a look before taking a break. Any specific doubt in this entire chapter 3? See, important areas. Already you saw numerical questions. Numerical question comes from AFC and AVC. Accounting cost, economic cost, sunk cost. Which cost? That is where. And shed on point question is most repeated. What is it? Shed on point question. Wait, let me show that. Chapter 3, recent attempt paper, we will finish it off. See, a curve which shows all different combinations of input that can be produced with the same level of combination of input, same level of output, input, output. Same like indifference curve, na? But producer point of view. Next, total supply of land is perfectly from the point of view of an economy. Why? Because land supply cannot be changed. Land quantity remains fixed. It is unaffected due to change in the demand. Even if demand goes up, you can't produce land, na? Supply remains same. Market where firms buy the resources they need, like land, labor, factor market, na? Land, labor, capital organization. Bachu question. Next. Dash capital performs their function in performing only in single use. What does the term entrepreneur in an economist refers to? He is the person who combines all the factors of production and brings the productivity, taking risk, and which of the following is not a correct statement regarding? It is always recorded in books. No. Relates to sacrificed alternative? Yes. Represents the value of the foregone opportunity? Yes. It is useful concept for long-term cost calculation? Yes. Economic cost? Which is not. Option A. Relationship between input and output when all inputs are, what is it? When all inputs are changed, where your all inputs can be changed, long run. But in short term, you can't change everything. In short term, certain elements will be fixed. That means in short term, more elements are fixed. Wait, 1 second. That means less elements will be variable. See here, even I've given this flow chart. See, in short run, fixed factors will be more, but variable factors will be. But in long run, anything and everything can change. That means technically all are variable factor, but we took assumption. Shashikiran is only the owner. So ownership will not change. So we assume that is why we are saying fixed factor is less. But in reality, in long run, everything, what is it? All the elements are variable. Which is it? All the elements are variable. This one, differentiation of short term and long term. That is what the meaning over there is. Which was that question? Relationship between input and output when the firm changes in the same proportion. Which proportion? Returns to scale. Constant returns to scale. CRS. Returns to scale. Na? That comes only in the long run, not in the short run. Already we did this. Both the calculations. Point of inflection question. Which of the following is with regards to stage in SDR? What is it? SDR. Short run or long run? Short run. Second stage. Certain point question. Which question? Total product continues to decrease. Alert. Total product increases, but at a slower rate because MP starts to decrease after point of inflection. This is only not true. Next, both marginal product and average product of the variable factors are diminishing, but they are positive. Yes, both are decreasing, but both will be in. See, graph, the table question this is. Next, a rational producer will seek to produce within the range of the stage. Yes, every manufacturer opts to produce in the stage 2. By the end of stage 2, total product reaches maximum. Yes, this is wrong. See, conceptual question. Which of the following does not leads to internal economies of scale? Economies, diseconomies question I said, now read it. One question has also come. Here, supply of skilled labor is not a part. We don't supply. Internal means within the organization. We will use it now. Why do we supply to outside? Wrong. That's it, pa. Recent attempt question we have finished. So now your job is to sit and do all the MCQs from the past attempts. Paper. Clear? Chalo, now the time is 10:50. Consider 10:47, 10:45, 10:48, 10:50. Break will be till 11:10. What is it? 20 minutes break. We are going to start at 11:10 till 1:15 is the class. Next 2 hours, chapter 4 done. If time permits, we will enter the chapter 6. At least we will complete GDP concept. Which concept?
GDP.
Because GDP is the biggest one. After GDP, time will not take much. Within half an hour, full topics gets over. Clear, Ram? Take a break, come back. Till 11:10 is the break. Okay. So we had finished with the chapter 3. Now let us get started with the chapter 4. So chapter 4 has got 3 units. In that, unit 2 is completely filled with diagrams. So already I instructed you to do the graphs yesterday. Did you guys finish doing it? All the different scenarios which I had given in the material, all those were there. Okay, so only 2 units are pending in the chapter 4. Unit 1, the introduction to the meaning of market and the types of market. So what is market? Don't say it is a place where buyers and sellers will meet to exchange goods. That is a wrong statement. What is market? Arrangement or a situation where buyers and sellers contact. So market need not always be a physical place. What is it? Market need not always be a. Even it can be a virtual place, online platform. Settle down fast. Oh, break at 10:10 anmele. By 10:10 you should have been settled down. Settle down fast. Now everyone will be coming out. Okay. Market is what? Arrangement or a situation where buyers and sellers will contact, either direct contact or in order to exchange goods and services for a value or consideration. So market need not always be a physical place. It can also be a virtual place. Which place? Clear. Internet platforms, online markets, all this. Now, markets, characteristic features, same. Whatever meaning we said, along with it, one more point. Willingness and ability to buy and. In this unit, we are interested to understand market based on competition. We don't understand based on area or time or nature of transaction, regulated and volume of. These all are just a read-only concept. And what we understand the market is based on what? Market is based on competition. And market based on competition is mainly classified into 2 elements. How many elements?
2 elements.
So which are those 2 elements? Perfect and imperfect competition. Which competition? Under perfect, we only have one single type, pure. But under imperfect, there are actually 6 types. How many types are there? Monopoly, duopoly, oligopoly. Monopsony, diopsony, oligopsony. The word poly refers to seller, sine refers to mono, single. Dio means 2, oli means few. Single seller, 2 sellers, few sellers. Single buyer, 2 buyer, few buyers. In imperfect, as a part of your syllabus, we only speak about monopoly and oligopoly. Monopoly means single seller in the economy. Oligopoly means there are few sellers in the economy. Is that clear? And there is one more type of a market. If there is a single seller and single buyer. What is it? Single seller and? It is called bilateral monopoly. What is it called? So in short, now we have to understand about perfect, we have to understand about monopoly, we have to understand about. Next, there is one more market, combination of perfect and monopoly called as monopolistic competition. Which competition? Clear. So we are going to understand about perfect, monopoly, oligopoly and monopolistic competition. Clear. Now let us get started straight away with the perfect competition market. The market is completely myth, unrealistic. There is no country on this earth which is following perfect competition market. Why? This is just a theoretical concept. Why? Because there are large number of buyers and sellers. Okay, that is true. Every market has large number of buyer and large number of. Manufacturer is only and only. He don't have any authority in deciding price. Then who will decide the price? That is demand and in this economy, the biggest drawback, every single buyer or seller knows that everyone is going to produce homogeneous goods and Every manufacturer is producing identical goods. Now you tell me, is it realistic? Everyone will produce same goods and services? No. But in this economy, every manufacturer is producing same goods. Not just that, even price is also remaining constant, uniform throughout the economy. Wherever you buy in the economy, price also same, product also. And manufacturer is just a price, not a price. And in this market, and we have also solved this numerical, P is equals to AR is equals to, that means price, average revenue, marginal revenue, all the three are equal, and the graph will be horizontal, perfectly elastic. There also myth, here also myth. And this applies only in perfect competition. Which competition? Clear? So remember, in perfect competition market, manufacturer is only price. They produce which goods? And uniform pricing throughout the. That means in this economy, total demand is always equal to total. And since everyone are producing same goods, they are called perfect substitutes. Which substitutes? See, just now, before the break, one girl asked, sir, what is perfect substitute, close substitute? See, beautiful question. Now, perfect. I can give one more example here. Sir, rather than buying 10 rupees Bisleri bottle, I will go and buy the 10 rupee Kinley bottle. Perfect substitute. It doesn't matter. Whoever is selling at less price, I will buy from him. Now, Reliance, Motabai entered. Indifference is the water bottle brand name. If Bisleri is selling for 10 rupee, Indifference is selling for, which one will you buy now? See, it doesn't matter. End of the day, both will give me same level of. Whichever is lesser price, I'm going to buy. That is perfect substitute. Then what is close substitute? Tea, coffee. It will not give same level, similar satisfaction, almost similar. What is it? See, that means I have specific preference. Sir, I want coffee only. I don't want tea. If that is the case, you will never buy tea. You will buy only. But here it doesn't matter whether, let me say, Bisleri bottle or Independence bottle. See, got the difference? Exactly. Perfect and close. So don't get confused. Here it is with substitute. Perfect substitutes to each other. Is it clear? Yes. Now, P is equals to AR is equals to MR. That applies only in which market? Perfect competition market. And in this market, free entry and free exit of a firm into. See, a firm will enter when they are making supernormal profit, or also called as abnormal profit. And when they are making normal, they will exit, shutdown point, during the AR lesser than AC, loss. AR equal to AC, normal profit. AR greater than AC, supernormal. And in this market, buyers and sellers have full knowledge because you are just a price taker. As a manufacturer, you don't have any authority to decide the selling price. Moreover, everyone is selling same commodity. Price is also remaining same. Do you need advertisement for this? No. And here, advertisement cost is also zero. And not just advertisement, even no transportation cost also. Even though you incur transportation, you can't charge it to customer. You are a price taker, not a price. So, no advertisement cost, no transportation cost. Suppose, sir, if advertisement, transportation both are existing, that is called carrying cost. Which cost? Or selling cost. Which cost? Perfect mobility of factors of production. That means factors of production can move from one person hand to the another person without any restriction in this market. But in real life, that is not possible. It's not so easy. That is why I said this whole market scenario is myth. There is no country which is purely following perfect competition market. But elements of pure competition. What is it? If first 5 points are satisfied, that is called pure. Existence of large number of buyer, manufacturer, price taker, uniform pricing, homogeneous, free entry and free. Elements of pure is followed in agriculture sector, stock market. See, there are certain sectors which will follow pure, but no one is completely following perfect competition market. This is the meaning of perfect competition. Clear? This is base. Entire market is unrealistic. Now, firm equilibrium. Which equilibrium? See, industry equilibrium already we have done. Total demand should be equal to total. And price remains constant at the point of equilibrium. Already taken care after demand and supply. Also, chapter 4, unit 2. What is it? Graphical questions. Already taken care. Now, we are discussing about which equilibrium? Firm equilibrium. If you remember, in MC curve, only second part of the graph is important. First part is not. And MC should cut MR from below. What is it? MC should cut MR from? That is called equilibrium. If it is cutting from above, that is not called as So there are two conditions for firm equilibrium. How many conditions? Condition number 1, MC should be equal to MR. That is the first and foremost condition. See, MR curve will be horizontal. P is equals to AR is equals to MR. All the three are same. Now this is MR curve. This is MC curve. Initially at point X it is also equal. Later at point Y also it is. But we can't consider point X because till now we have not made a profit. Initially we have only incurred loss. Cost is greater than revenue. Only after this point X we will start making the, and until when this point Y. Once again when MC cuts MR from below. Here we will stop producing. This is maximum production level. Which level? Or maximum output level of extending the productivity or production efficiency. What is it called? So maximum production efficiency is when MC cuts MR from below. This is called equilibrium. So when MC cuts MR from below, this is where we will stop. We will not produce beyond this. If we produce beyond this, once again we will incur. Cost will be greater, revenue will be lesser. So simple concept. If MC is greater than MR, what is it? Cost is greater than revenue, output will decrease. Suppose here A and B, this is MR curve, this is MC curve. MR is greater, what is it? Than MC, output will increase. MC greater than MR, output will. Sir, what if MC, MR both are equal? These 2 points are there. Deciding factor is MC curve. Which curve? If MC cuts from above, output increase. MC cuts from below, output decrease. So even output condition is important. See, MR greater than MC, revenue greater than cost, output. Revenue lesser than cost, output. If MC, MR equal, deciding factor is MC curve. MC cutting from above, output increase. MC cutting from below, output. This is firm equilibrium. Which equilibrium? Next comes, in short run, there are 3 possibilities. Either firm can earn supernormal profit, either normal profit or loss. And especially normal profit condition is important. A firm to achieve equilibrium. Firm to achieve? In a normal profit condition, P equals AR equals MR equals AC equals MC. At the point of equilibrium, all the curves are equal. All the curves are equal. And in short run, the firm will be achieving 3 possibilities. Either supernormal or either. This is important. They may not ask you the graph or they will not ask you to identify the right graph and all. But logics from the graph they will ask. Clear?
Yes.
Understood? So during short run, how many possibilities are there in perfect competition market? Which are those? Supernormal, normal, and especially normal profit graph is important because of this condition. At the point of equilibrium, see, AC and AR is tangent. This is equilibrium. And at the point of equilibrium only both are tangent. At the equilibrium, MC and MR is also equal. That means in short, P equals AR equals MR equals AC equals MC. Now long run. See, now this logic is also important. Suppose if you are operating beyond 1 year, what is it? See, even though we can make supernormal profit, we will not. We will only and only earn. Why? If anyone does that now, others will also make supernormal profit. First of all, is there any kind of competition in this market? Everyone are producing same good. Manufacturer, price taker, and no selling price also. Selling cost, sorry, that advertisement and transportation cost. Now uniform pricing, there is no competition at all. Then what is that supernormal? Oh, if anyone does supernormal, others will also do that and it will attract competition. Bullshit. So this is illogical, totally illogical. And moreover, they say there is a free entry and free. Anyone can enter, anyone can exit. So total bullshit. That is why I said total unrealistic market. Myth. What is it? So they say we will earn only and only normal profit in long run. What profit? Same graph. Everywhere L as prefix. So what is the logic here? Now P is equals to LAR is equals to LMR is equals to LAC is equals to LMC. This is the logic of equilibrium in long run in perfect competition market. By this perfect competition market comes to an. That's it. Total unrealistic market. Which market? If the question comes, they will ask from this normal profit zone. They will ask long run in perfect competition market. Which kind of profits do they earn? Why don't they earn supernormal profit? Because it attracts competition. But total bullshit. There is no real life competition in the perfect competition market. Clear? This comes to the next one. Monopoly. What is it? Firm equal to industry. One single firm itself is called as a whole industry. Since you are the only seller and you will be the price maker. You will be the price single seller but large number of. And when you are the only price maker, you are the only person selling. Would you like to incur profits or incur loss? In that profit, normal or supernormal? Why? Because I'm greedy fellow, sir. Because I'm the only seller. Because I'm coming with unique product. Which product? Except me, no one else is coming with that product. I'm the only person who is selling that. So I am the price maker. I will enjoy which profit? There is no close. See, perfect substitutes perfect competition market. No close substitutes. That means there is no resemblance of the same type of product or similar type of product also. Let's assume Shashikiran is the only coffee manufacturer in India. Except Shashikiran, no one else is producing coffee. That means there is no concept of tea also. There is no concept of I'm the only person who is selling coffee. Only and only coffee is available. There is no tea also. That means no close. No concept of substitutes at all. Either same or either similar. Nothing. I'm the only person selling the goods and services. So full power is in front of me. So I'm a price maker and no supernormal. And there is also entry barrier. And this is the main core element of monopoly. Which element? Core element. Because we are not allowing anyone to start same business or even similar business. Either same or even. Now there are 4 types of entry barrier. Which are those? Number 1, legal entry barrier. Law of the nation itself will restrict. Best example, atomic energy generation in India. Except government, no one else, even private cannot able to do it, or foreigner can also come and not able to. Full law of the land itself is restricting. Second, natural entry barrier. Dash will restrict. In different places, no doubts are Bangalore is cool temperature and all. Bangalore kate damar. Now Bangalore itself, if you want the proof, just at 1 o'clock, 12 o'clock, when class we leave, just go to climate app. Open Chennai, Mumbai, Delhi, Bangalore climate. See, Bangalore climate will be hottest. Bangalore will be 35 degree. Chennai will be 34 degree. I keep teasing Chennai. Hot, hotter, hottest. Now I should say that to Bangalore now. Especially, see, we used to give this example. Climatic condition, Bangalore. Bangalore is always cool. We will be like a refrigerator. What? I literally, before coming to Bangalore, last month I was in Chennai. I was taking batch. When I visited Bangalore, after my class in the morning batch, when I was going out, I felt more hotter than Chennai in Bangalore. Literally, that is how it has become. So now, no more we can give example of Bangalore in summer. Earlier, there was a days. Even in summer, Bangalore's climates were 26, 29, 30 itself was highest peak. What I have seen when I was your age at I was a student. 30 itself is peak summer in Bangalore. But now minimum itself is 35. Why? All credit goes to our thumbs up fellows. Cut the trees. Do one underpass. Cut the tree. Construct one flyover. Cut the tree. Construct building. Lake. Who wants it? Build apartment. Later when rain comes, it will go and store there full. One lake will form again once again. This is the problem. Natural entry barrier. That means climatic conditions will act as a barrier. Let's take example Ooty. Can we grow apple in Ooty? Yes. In Bangalore? A cold climate, na? Next. Business. See, we will create our own groups, cartel. And only these cartel members can operate. Except cartel members, others cannot. Best example, OPEC nation, Organization of Petroleum Exporting Countries, OPEC, OPEC countries. Clear? Next. Investment factor. Even if government allows permission to start, investment becomes challenging. Example, Indian Railway, open for privatization, but no one is coming forward to buy. Why? Huge investment, losses, crores together. See, even if government gives permission, in some business, you need a huge investment, which you can't do it at all. Like how government has done from 78 years. British government has done from 200 years. Any private organization, sir, Ambani, Adani, can't they do? Let them ask them to take over railway and let's see. No. Profit motive. Which motive? But here it is, welfare motive. And they can't provide for such a cheaper price like how government is providing. So these are the 4 kinds of entry barrier. So no one else can enter except us. No one else is producing this. No close substitutes at all. Dash equal to dash. Now this is important. Price, that is what makes monopoly unique. We will charge different prices to different customers. What is it? Different prices to? for same type of goods and services. Same types of goods and that is called price discrimination. Simple. Let's say, assume I have a cloth shop. Which shop? Cloth shop. If my student comes to my shop, 10% discount. If my regular customer comes, 15% discount. If my relative comes, 20% premium. Extra, stupid fellows. Throughout life you have scolded me. So pay the penalty. My shop, my wish. If my girlfriend comes, free. I will give it for free. My shop, my wish. Personal price discrimination. What is that? Next, geographical price discrimination. Suppose, let's say, I have my cloth shop, one in Delhi, one in Bangalore. Except Shashikiran, no other cloth manufacturer. Let's assume white shirt. Which shirt? Only and only white shirt. I'm the manufacturer of white shirt, pure white shirt. Except Shashikiran, no one else is there because monopoly, na. I should take that example. Intentionally, I will sell at high price in Delhi, low price in Bangalore. My wish. I will discriminate based on location. Next, price discrimination according to. Now, let's say Charan will come to my cloth shop. Sir, I need white shirt. Why? Sir, tomorrow I'm going for interview in KPMG, sir. I should look professional, look good. Okay, 1,000 rupees one shirt. Next, let's say, for example, cab driver will come. White shirt. Why? Cab driving. 200 rupees. Different purpose, na? Usage is different. So, I am selling a different price. Next, price discrimination according to. See, best example, raincoat. You buy it during summer, you will get a cheaper price. Same raincoat in rainy season, higher price. See, intentionally we are charging different prices to different customers. There are 4 types of discrimination. First one, personal price discrimination. Second one, third one, according to use. Price discrimination according to, along with the degrees of price discrimination. There are 3 degrees. First degree is based on movie ticket example, ready to pay 500, we got it for 200. That means now even as a manufacturer, I will try to extract as much as possible from you. How much ever you are ready to pay, how much ever excess you are ready to pay, I will try to extract. Same like your local vegetable vendors. If your mom go, 1 kg tomato, if they say 60, your mom will bring it for 20 rupees. She's like, what, 60? Next what they are giving for 20 rupees? 20 rupees you give, if not I will go. Like, come madam, okay, take. Next, if your dad go, 60 will become 40. If you go, if you want, take at 60, if not, get lost. They will charge 60 only. See, my wish, I will charge the way I want. How much ever you are ready to pay extra, I know you are ready to pay extra, I will try to extract. That is first degree. Second degree, based on volume of transaction. Now, let's say, for example, Charan is getting married. Now, he wants to, let's say, for example, prepare some huge amount of sweets. Let's say, for example, he is going to buy some 1,000 liters of milk. How much? Definitely get at wholesale price. For home, just 1 liter of milk. You will get at wholesale price. No, based on volume of transaction. What is it? Clear? Next, third degree, based on different attributes. Based on attributes, we will divide them into separate sub-market. For example, male market, female market, Hindu, Muslim, Christian. Or let's say, for example, small age group, middle age group, large age group. It's up to me. I will divide the way I want, like aviation company, business class flyers, economic class flyers. Book, let me say distribution company, school books, college books, novel books, friction books. Like this, I will decide the way I want. I will divide in any attributes and I will make them as a sub-market. I will charge different price in the different sub-markets. That is third degree price discrimination. Which degree?
Third degree.
So remember how many degrees are there? How many types?
4 types.
What is the meaning of price discrimination? Charging different prices from different customers for same type of goods and services. That is called as price. Clear? Now this table, TR calculation, AR calculation, MR calculation. Simple. What is the AR formula? TR by Q. MR2 formula, output continuous means TRN minus TRN minus 1. Output not continuous, change in TR divided by change in quantity. What is TR? Outlay. Already we have done. Price into quantity. Clear? And this table. Now observe. You will find these values after solving by using formula. Observe only AR and MR column. See 20, 16, 12, 8, 4. 20, 18, 16, 14, 12. Every time marginal revenue will decrease double than average revenue. What is it? MR will decrease?
Double.
Keep this in mind. And this time they have asked a question. Jan 26 attempt they have asked a question. Marginal revenue will decrease double than average revenue. And when TR is maximum, MR will be. And observe price column and AR column. That is why I kept on saying, AR curve is also known as demand curve. And AR curve is also called as selling price. That's why AR will never become 0. Selling price can never become 0. and we represent the same table in the form of graph. See, observe, MR will become 0, MR will also become, but AR will never be negative. So AR curve is going to be flatter like this. MR curve will be steeper. But observe the TR, 20 it started, it became 60, again went back to 20. Started at 20 maximum and again went back to 20. That means inverted U. What is it? Or bell shape curve. Which shape curve? Now AR curve is also called as demand curve, na?
Yes, sir.
Middle portion is unitary elastic. Point method. Already we did yesterday. Point method. Middle portion is unitary. Upper portion relatively elastic. Lower portion relatively. One which touches y-axis perfectly elastic. One which touches x-axis perfectly inelastic. Clear? Now all this three relationship is important. TR, AR, MR. Initially when TR increases, MR will be decreasing, but still MR is positive. And AR will be E greater than. When TR is maximum, MR will become, E will be. This logic most of the times exam question is repeated. When E is equal to 1, E is, identify MR. I need not to identify, I know logic, MR is
0.
next. When TR is reducing, MR is no doubt decreasing, but now MR is,
Negative.
E will be. And welcome to the new formula of MR. Total two formulas we discussed till now. When output is continuous, what is the formula for MR? TRN minus TRN minus 1. When output is not continuous, divided by change in quantity. Now there is a third formula. The third formula will be AR E minus 1 divided by. That means when the information is given about selling price, AR is also called as. And elasticity. See now elasticity value is given either 1.4, 0, 1, 0.4. Like this they will give three alternatives. Okay, let's take some random example. Selling price is 20 rupee. How much is selling price? 20 rupee. Scenario 1, E is 1.4. Scenario 2, E is equal to 1. Scenario 3, E is equals to 0.4. Now see, without even solving, I can still say the MR values here. When E is equal to 1, what is it? MR is. I need not to identify. I can straight away say in this case MR is 0. And E is 1.4 greater than 1. That means MR will be in positive. It is decreasing, no doubt decreasing, but it will be in. When E is greater than 1, MR will be positive. Suppose E lesser than 1, no doubt decreasing, but MR will be in negative. See, common sense. That is what I am saying. Logic. When you have understood the concept, you will, without solving, you will say the answer. Clear? But still, we will solve it. Now, take out calculator. Now, scenario 1. In scenario 1, what is the formula? MR is AR. AR is how much? 20. E is 1.4 minus 1 divided by 1.4. 1.4 minus 1 is 0.4. 0.4 divided by 1.4 into 20. 5.714. See, positive answer. Next, scenario 2. We know that answer will be 0 now. Now 20, 1 minus 1 divided by 1. 1 minus 1 is 0. 0 divided with any numerical multiplied with any numerical, answer is 0. Next, scenario 3. 20, 0.4 minus 1 divided by 0.4. 0.4 minus 1 is minus 0.6. Minus 0.6 divided by 0.4 into 20 minus.
-30.
Answer is in negative. Clear? See, logic, that is what I'm saying. Conceptual knowledge is important. When you have a conceptual knowledge, even by looking into problem, you will say what will be the answer. Without solving only, you can judge half of the things there. Clear? Understood? So, relationship between TR, MR and AR, important. And with respect to the new formula, see, when E is middle one, E is equal to, MR will be, TR will be. Now, left side, E greater than 1, MR will be decreasing, but still, TR will be increasing. Initially like this, increasing, maximum decreasing. So next to right hand side, E lesser than 1, MR will be, TR will be. And this is one of the hot favorite question to ICAI. Clear? So we identified the third formula to calculate MR, marginal revenue. Now this logics are important. You are the only seller. You are the, except you, no one else is there in the market at all. Your intention is to run only short term. Intention is to run only. That means I know, boss, I will not do business beyond 1 year. My intention of running a business is only less than a year. You are the only seller. If people come and buy the product, supernormal profit. if people don't come and buy from you. That's it. Firm equilibrium also remains same. Two condition. MC equals to, and MC cuts MR from. See, in perfect competition market, if you remember, P is equals to AR is equals to MR. P is equals to AR is equals to, and AR and MR curve was horizontal. But now in imperfect competition market, AR is flatter, MR is steeper. MR will also become 0 and a negative, but AR curve is flatter. This you should know. And we know that MC curve cuts AC curve from below. This graph is wrong. Actually, this blue line, this is wrong. MC should cut AC from where? Below and minimum. This logic you should know. See, they will not ask you to draw the graph. But from the graph, theoretical questions are going to come. That logic you should know. So in monopoly short run, monopoly, what are possibilities? They will ask a question like this. In which of the market scenario, in short run, a firm can earn supernormal profit? And perfect, both. Even in perfect, supernormal profit, normal profit, as well as, see, this you should keep it in mind. Even in perfect competition market also, short run you can earn supernormal. And in even monopoly also you can earn supernormal. Now they will give options like this. Option A, supernormal profit can be earned in which of the type of market scenarios in short run? A will be perfect, B will be monopoly, C will be both A and B, D will be either A or B. Both A and B. Now they will ask one beautiful question. In long run, in which market you will earn normal profit? In which market you will earn? Option A, perfect. Option B, monopoly. Option C, both A and B. Option D, neither A or B. Perfect. Clear? Because in long run, we will earn only and only supernormal profit because you are the only seller, na? Except you, no one else is there. If they are buying from you in long run, you are only and only earning because you are a price. Clear? This brings to beautiful topic. This is where again confusion comes. Price. Full Rangole competition. Kinked demand curve. This topic, how many of them have not understood? How many of them have not understood? How many of them have not understood? Hey Shiva, did you bunk the class? Normal batch student, Chalo, fine, listen. Let me erase it and then only I have to write everything in detail now because minimum 20 minutes to it will definitely take to explain with the logic. Okay, chalo, that's fine. Let me explain it, not a problem. Wait, let me erase it off. Let this be there. This one alone I will explain. Already you know the meaning of price discrimination. What is it? Charging different prices from different customers for the same type of goods and clear. That means my intention is to always earn which profit? Or also called as abnormal. And this topic, this is most important. Essential conditions of price discrimination. From this exam questions will come. If you want to follow price discrimination, you should have this 4 condition. Number 1, you should be the only person who is having the, except you, no one else is there in the market to differentiate the prices. And you should be able to dash the market. Like north market, south market, east market, west market, male market, female market, rich market, poor market, whatever attributes, you should be able to separate the. And in that markets, separated market, there is different elasticity of demand, not same elasticity. Which elasticity? Relatively elastic, relatively inelastic, or relatively inelastic, perfectly elastic. Like this, any 2 different elasticities of demand should be there. And most important, no possibility of. Now all the way from Delhi, person will come to Bangalore, he will buy the shirt here at lesser price. He will go back to Delhi and sell at high price. That should not be possible. You are the only seller. You are the clear. These are the essential conditions. Now we have taken a numerical problem to understand. Suppose a single monopolist is selling the commodity at rupees in both the places, in market A and market B. In market A, elasticity is 2, market B, elasticity is. Let's identify MR. Let's identify. That is marginal revenue. After solving by using third formula, see, selling price is given, elasticity is given. Now MR of market A, what is it? MR of was 15 rupee. That means if you sell one more extra unit, let's say bench. If I sell one more extra bench in market A, I will earn how much? Now same, we calculated for market B. Now if I sell one more extra bench in market B, I will earn how much? Where it will be more money rather than A. That means 9 rupees more I will get. What I will get? 24 minus 15. 9 rupees more I will get. So what I will do? I will not like to sell more in market A. I will like to sell more in I will shift my supply from market A to. Now, because of that, in market A, supply becomes less, but demand is more, na? There was a demand. Now, this will lead to excess demand. What is it? Now, you tell me, when there is excess demand in the market, what will happen to price? Price increases. Next, we pumped more supply to market B, na? In market B, supply became more, but so much of demand is not there. This is excess supply. Excess. Now, price will. Now, see, price got differentiated, na? In one market, we are increasing price. In another market, we are. Now, observe, elasticity in market A is how much? 2. Elasticity in market B is how much? See, I'm not going with the word E greater than 1, E lesser than 1. More elastic, less elastic, I'm speaking now. More elastic in market B, less elastic in. That means I will write it as more elastic in which market? Market B. Less elastic in which market? See, this is the main conclusion. In whichever market there is lesser elasticity, we will increase price. In whichever market there is more elasticity, we will. Now, price got discriminated. Now, why do we do this discrimination? In order to earn which profit? Supernormal profit. Clear? Now, after discriminating, what is it? See, in market A, price has got increased. That means now MR value will also increase. Now, from 15, let's say after discrimination of price. What is it after? Now, MR in market A will become rupees 20. Now, after discrimination of price in market B, price got. Now, no doubt MR value will also decrease. Now, MR value of market B will also become 20. Sir, that means it doesn't matter where you sell. You will get rupees 20 only now. Yes, that means there is a limit to shift this supply from one market to. That limit is achieved when MR of both the market becomes equal. MR of both the market becomes. That means after discrimination. What is it? MR of both the markets will become, and it will no more be profitable to shift your supply from one market to, because MR of both the market is, but prices are not same. Prices are differentiated. This is what we call price discrimination. What do we call it as? Clear. So, price discrimination is where in one market we charge more price, another market we charge. Clear? Understood? Now, same to same thing represented in the form of graph. When we are representing in the form of graph, we will have a kinked demand curve. Which demand curve? And remember, whenever the question comes from kinked demand curve, importance should be given to oligopoly concept, not for monopoly. Which concept? Because the very first time the kinked demand curve was established in oligopoly, later it was established in monopoly. So, whenever monopoly concept, kinked demand curve, specifically mentioned as monopoly, then you have to go with this logic. If the word just kinked demand curve is mentioned, oligopoly you have to consider. Clear? So, now we are speaking about specifically in monopoly. Already we know the conclusion. Market where there is less elasticity, we will increase the price. In which market we had less elastic? Less elasticity means steeper demand curve. More elasticity means flatter demand curve. That is why it has become kinked in aggregate. When we are combining both the market, so in kinked one is coming in aggregate market, combining market A, combining market B together. So, lower portion will be more elastic, upper portion will be, Pakka, correct, lower portion more elastic, upper portion, clear, because opposite will be in oligopoly. That's why I'm confusing you now. Lower portion more elastic, upper portion, that is why it is convex. What is it? In monopoly kinked demand, what is the nature of kinked demand curve? Convex to origin. Which to origin? And see the logic. Market where there is less elasticity, more price is charged. Market where there is more elasticity, less price is charged. See, OP2 is lesser, OP1 is more. How can you observe the dotted line difference? This is equilibrium dotted line. MC cutting MR from below. Same reference point is taken. Price is more in market A, price is less in market B. Price got differentiated. One market more price, another market. But we have kinked demand curve. Which demand curve? And the reason for kinked demand curve is price. Clear. This is the concept of price discrimination, kinked demand curve of monopoly. And reason for kink is? Price discrimination. What is the nature of kinked demand curve? After discrimination, MR of both the market will become, in which market will you charge more price? Market where there is dash elastic. In which market less price? More elastic market. Full opposite logics. Less elastic means more price. More elastic means less price. But after discrimination, MR of both the market equal. There is a kink demand curve. Reason for kink is, and that is dash to origin. Convex means like this. Below portion is flatter, above portion is steeper. Clear? Understood? By this, monopoly comes to an. Any doubts in monopoly? Flip back the page, have a look. Any doubts? Let me know. This guy, see, Dev, sir, got girlfriend now. Same girlfriend is now wife. Upgraded. He is son of Mukesh Ambani in Chennai branch. He was full famous, Dev. And his father is a counselor. Pushpa movie got released at same time. So we gave full examples on Dev only. Full. Son of Mukesh Ambani. Next, son of counselor. And there is one more guy, Matesh. His name was Shalini Aunty. He was full famous in Chennai. Everyone forgot his real name. Everyone started calling him a Shalini Aunty. Then price and MR be simultaneously equal in both the market. No, prices will not be equal. MR will also not be equal. That is what? They both will differentiate. Rakesh. If price is same, MR will not be same. If MR is same, price will not be same. Tashildar. Oh, okay, not corporator. Tashildar. His father. Then let's continue. Next, oligopoly. Oli refers to what? Few. There are few sellers in an economy. Which sellers are there? Few sellers, but large number of buyers. Few sellers, large buyers. There is dash interdependency. That means whatever we do, other seller is also doing almost the same. One will say, I have salt in my toothpaste. Other one will say, I have chakke, lavanga, pudina, all pulao masala items I have. One will say, I have purple toothpaste, which will make your teeth whiter. That is more bullshit, that is. See, in natural, by the time of birth only, your teeth will never be crystal clear white and all. No, it will not be like that. It will be little dullish in color. But our people, after looking ads and all, it has to be like pala white. It will never happen. Next, price rigidity. Now, this is important in oligopoly. Like how price discrimination was important in monopoly, price rigidity is important in oligopoly. What do you mean by that? Suppose out of these few fellows, if anyone reduces price, others will also. But if anyone increases, others will. Because for everyone, customers are important. They will never compete in increasing. What is it? They will never. But they will decrease. That is called price rigidity. Now, this price rigidity is what brings that kink demand curve. What is it? But this time it is concave. What is it? And this model was, let me say, created by Paul Sweezy. So, popularly known as Sweezy's model. Which model? All price rigidity model. And this is where exam question will be coming. Sweezy's model. And this time it is concave. What is it? Upper portion relatively elastic, lower portion relatively. If any one reduces, everyone will reduce. But if any one increases, others will not increase. So this is the kink demand concept. Original kink demand concept, that is an oligopoly. That is also called as dash model. Species model. Clear? Now let's go back. See here. There is an existence of selling price. What is there? That means advertisement and transportation. See, we bring Virat Kohli, Sunny Leon, everyone as brand ambassadors and we'll make you people bakra very nicely. That is what we do in real market. Next, types of oligopoly. Important. One question in every attempt there will be from this area. There are 5 types. How many types? Pure oligopoly, differentiated. In pure oligopoly, everyone is selling same goods. Like for example, cement industry, iron and steel industry. In that I don't have lime flavor, pudina flavor, mint flavor and all. In cement, everything is same. White cement, normal cement. Next, differentiated oligopoly. That means heterogeneous. Like Colgate salt, chekke lavanga, pudina, Dabur red. Colgate, what is that? Activated charcoal. That means which are similar. What is it? Which are but not the same. Differentiated. That is differentiated oligopoly. Next, open oligopoly. Open oligopoly means, let's say, anyone can enter, anyone can start performing. No restriction at all. Entry of new firm is not restricted. Enclosed entry of new firm. In India, best example, aviation sector. Telecommunication, not that easy. Government have stopped giving permission. Clear? So you cannot enter. Next, collusive and. These are the two repeated question. In collusive and competitive. See, competitive is easy, full is easy. The question comes from collusive and partial. If you observe, what is collusive? See, every sellers, there are few sellers are there, they will come under one roof. Everyone will start selling at a common selling price. That is called collusive. What is competitive? Competitive means I am not ready to sell at common price and all. I want one kidney of customer. I will charge the way I want. Like Apple. You guys, if you want, you sell at common price. I am not selling at common price and all. Next, partial oligopoly. Out of these few people, now one stupid fellow is a dominated guy. Like Jio at the moment. If Jio changes price, others will also. If Jio doesn't changes, others will not change. That is called partial. There is an existence of him. Only when this leader changes, others will also change the price. In full oligopoly, whether price leader exists or doesn't exist, I don't follow anyone. I will change the price way I want. It's my wish. I am not following any price leader and all. That is full oligopoly. Clear? Next, syndicate and our Dev example comes now. Syndicate oligopoly. That means we'll create our own group, our own syndicate, our own gang. Our gang members will sell within ourselves, like Pushpa movie, all red sandal smugglers. They will sell through everyone through the syndicate only. That is called syndicate oligopoly. But organized, full match fixing, like CSK and RR. Full proper. You put this ball, I will hit 6. Next, I put this ball, you hit 4. So that means we will only decide. We will only organize everything. We will only fix the price. We will only fix the output. We will only fix the quota, everything. And we will organize ourselves and then we will operate. That is called as organized oligopoly. Clear up? Volibda season in the matte varagogor. Yako regastya. And Dev is also very happy this time. Chalo, fine. We'll continue. So how many types of oligopoly is there? First one, and differentiated oligopoly. Second one, open oligopoly and closed oligopoly. Third one, collusive and competitive. Partial and syndicate and king kid demand kar question you can expect, or one question for sure from the types of oligopoly. Clear? So this brings to the last but not the least, monopolistic competition market. Which market? Today, the market what we are witnessing in the real world, that is monopolistic competition. It is a cocktail of perfect and monopoly. We have common features of both. And manufacturer is a price maker. Manufacturer is a, but in perfect. See, the major difference between monopolistic and perfect is in perfect homogeneous goods, but here heterogeneous goods, different goods and as a manufacturer, you have full control. You can bring any number of changes, any kind of modifications, any number of times, like Fair and Lovely. You will be like Shashikiran, start applying 10 weeks, fairness meter, you will become like Aishwarya Rai. Next, you keep washing your face with Dettol, you will become Pada Pada Pada. I'm just giving example. Once upon a time, it was just an antiseptic liquid. Now from Dettol antiseptic liquid, that came up with Dettol hand wash, Dettol soap. Next, Dettol toothpaste will come, kills 99.99% germs. You will buy. Next, Lifebuy, Bunty, tera sabun slow hai kya? Bunty, tolidairu. See, we'll bring any kind of modifications, any kind of changes. It's up to our wish. And we will try to come with the same product, modified, enhanced, and we will try to sell it in the market. Because I'm not the only person who is selling in the market. I should compete with others. Because large number of buyer. Free entry and free exit is there. When do the firm enter? Supernormal profit and normal profit. When do they exit? Loss. And we have a product. Best example, Surf Excel and Ariel advertisement you observe. Surf Excel, other detergent. Ariel, other detergent. They always try to say, we are best, we are superior. Only we can provide you bright, shining, white color and all. Vanish. You put one scoop of Vanish with normal detergent, your money will also vanish. You keep buying us, your money will also vanish. Next, pour, rub, pour. All this, see, product differentiation, we will always say we are best, we are superior than any of the competitor, and because of this product differentiation, that will also build a brand loyalty. Hero, will you take bath da? Will you take bath? Will you use shampoo? Which shampoo? Dove. Now let's assume, wow, beautiful example. Nice example. Because in normal class, if anyone say double, I will open one European market report. I will show tuppified. They called it back, even from Australia, Europe, everywhere. They have tuppified the brand. But in India, openly we are selling. Hey, who wants, like, fertility and all is a big business today. No. Nice. Okay. Why deviating and all? Marathon class. Leave it. Now, Dove shampoo. Now we will go to a shop. We will ask for a Dove. What is that? Anti-hair fall shampoo. Huh? See, I identified. Anti-hair fall shampoo. Now we will go and ask for it. The shopkeeper will say, no, we have this chick, Clinic Plus, dog washing, vehicle washing and all substitutes. That is what today people are using. Chick, Clinic Plus and all. Ask how many of them are using that for vehicle washing, dog washing. Now we will not buy. Now you will go to other shop. You will go to and you will buy the same Dove shampoo. Accepted? Brand loyalty. What is it? Another best example, your mom. She will ask you to get sunflower cooking oil. By mistake, you got Sun Pure. Your mom is like, hey, come here, stupid fellow. What did I say? Sun? What have you got? Go, exchange it and come. See, that brand loyalty gets generated in which market? Another best example, Apple users. Full show off. 50% of them who has got the Apple product don't know how to use it. What is the actual features? In front of mirror, they will go and take one selfie. Full show off. Brand loyalty. What is it? See, the real persons who know what Apple actually provides a differentiation is through their ecosystem. The ecosystem is something unique. If you have a MacBook, if you have an iPad, then buying iPhone makes sense. Just only with iPhone, wow, sir, we have a ultimate camera. What? Hey, only camera, even DSLR is there. Even other phones. Vivo will come up with all that pinky filters and all. It will make your cheeks pink. And even if you have pimples, it will not show pimples at all. Full, you will be like brighter, whiter, active, shining color like Fair and Lovely. Ad will come, na? Even a monkey can become like an actress. That is how Vivo, Oppo cameras are. See, you can buy. But still, see, brand loyalty. Which loyalty? Gets established in which market? Monopolistic competition market. So these are the characteristic features of monopolistic competition market. Clear? Next comes in short run. What is it in? This is important. Either supernormal or loss. Where did we study this? Either supernormal or loss. Monopoly. See, in monopoly short run also we had either supernormal profit. If people come and buy, supernormal. If they don't buy, only two options. Same to same. Control C, Control V graph. Next comes. This is what important. In long run, we will only and only earn normal profit by maintaining dash stock. That means excess capacity left out. Which capacity? See, let's assume in a month I can produce 1000 bench. Intentionally, I'm only producing 800. I'm not producing 1000. Why? If any strong competitor enters the market, like Mukesh Ambani, Jio, then I will utilize that buffer stock. So my cost of production will go down from point A to point C. Least cost, LAC curve, minimum point. That is where MC is also cutting. My cost of production will become minimum. Then I can reduce my selling price. We know that a country like India, when I sell the price at, let me say, product for lesser price, demand will. When price decreases, demand will. So in order to reduce my selling price, when strong competitor enters the market, I will maintain which stock. See, it's up to you whether you want to just reduce the price until your cost or even beyond your cost and still make losses. See, in long run now, any strong competitor enters. My intention is not to be in the break even or profitable, survival. When Jio entered, did Vodafone close down? Did Airtel close down? No. Docomo said, I don't want to be like you people rubbish, I will go out. But did most of them close down? No, they reduced the prices like crazily, even though for a shorter time you may incur loss. But you want to decrease your price. See, sir, what if, sir, no competitor enters? Can I still use this and earn supernormal profit like this? Yes. But if any strong competitor comes, what you will do now? Automatically, you can't decrease your selling price. It will create a trouble and you can't increase the productivity to reduce the cost of production. So, you should maintain buffer stock. Which stock? This is between Q and Q1. This is buffer stock. We will utilize buffer stock. Why? If any strong competitor enters the market. What is it? Any strong competitor? Now we will utilize the buffer stock to reduce our cost of production as well as selling price. And this is what we call group equilibrium. Which equilibrium?
Group equilibrium.
Not just you, every firm in the market is following the same. They are maintaining their excess capacity. See, we still have a capacity left out, classroom capacity still. Why are we not taking full admission? Effectiveness. Let's do it. If required, what is it if? Then we will extend, we will take more admission. Clear? Like that, we will maintain buffer stock. If any emergency comes up, strong just assume tomorrow Reliance Ambani will come. I will provide free CA coachings. What is it free? Now, every academy in India is like, goodbye, Katam, Gaya, Tata, bye-bye. They have to say like this. So, to tackle that, there will be a buffer stock left out. In order to reduce the selling price, because cost of production goes down, then selling price can also go down. Clear? That is the logic of group equilibrium. Where will it happen? In long run, in monopolistic competition market. Clear? By this, monopolistic competition market also comes to an, especially this graph, this logic, this is important. In long run, group equilibrium concept is achievable in which market in long run? Monopolistic competition by maintaining which stock? Buffer. Clear? Not just you, everyone will do this. Clear? So now comes the unit 1. Come back to unit 1 here. Interconnections of topic. So unit 1, this table. See, this is where the exam questions will also come. See, they will ask you monopoly, oligopoly, monopolistic, perfect competition. What is their price elasticity? And they have asked multiple times from monopoly, highly inelastic. What is it? Monopolistic market. What is it? Monopolistic market is having higher elasticity or larger elasticity. Monopoly is highly. Even price go to exorbitant extent, except you, no one else is there, na? You have to buy from him only. No other option. See, in perfect competition market, P is equals to AR is equals to MR. This column is important. This is where exam questions will come. And sometimes they will ask difference between these two. What is the major difference between perfect and monopolistic? In terms of goods. In perfect, homogeneous. Here, but both the places, large number of buyer, large number of. And in perfect, price the taker. Here, price maker. Yeah. You will make the price. You have a control. But here only and only price taker. Na? Your industry will decide. You are just a price taker. Clear? This is the difference. Most of the questions will be asked. And sometimes they will ask single buyer. What is it? Monopsony. Single buyer, single seller. Bilateral. Like the small elements, they will come up with the question. Clear? And revenue concepts already done. TR, AR and MR. And also the graph concept. See, this one already we discussed. P is equals to AR is equals to MR. And we also identified the third formula for MR. We also discussed this. AR curve will be flatter. MR curve will be steeper. When TR is increasing, MR will be decreasing. MR is positive, E will be greater than 1. When TR is maximum, TR is, MR is 0, E will be equal to 1. When TR decreases, MR negative, E will be. Last topic of the entire behavioral principle. Already we have done. Behavioral principle 1 is shutdown point. When should the firm produce? When should the firm not? When a firm is able to recover back their variable cost, then you produce it. Good. When you can able to perform better, produce. When you are unable to perform, close down. At least temporary shutdown. Which shutdown? See, a competitive firm should shut down if their price, that is average revenue, is lesser than. At least it should be equal, not just lesser. Lesser or equal. That is the condition. Na? If you are unable to recover, temporary shutdown. Shutdown condition. Behavioral principle 2. Firm equilibrium. MC should be equal to MR. MC should cut MR from below. Positive sloping. Clear? That means where will be the maximum profitability for a firm? What is the maximum profit level of output? That means production efficiency. What is it called? It will be achieved until MC becomes equals MR and MC cuts MR from where? Below. That is where a firm earns the maximum profit of the extended output. That is called production efficiency. Which efficiency? Firm equilibrium concept. By this, entire microeconomics revision comes to an khatam. Clear? Play back your page. Have a look. Any specific doubt? Now, exam questions, RTP, MTP, you have to sit and do today. And chapter 4 will be little tricky. It will not be that easy. Chapter 4 will be usually tricky. And you need to go back. If you are getting confused, open the book Read the concept, look into that, and then mark answer. I know that chapter 4 will take little time. It's not that easy. Clear?
Yes, sir.
Let's go to macro.
Yes, sir.
Flip back. Any doubt in any of the micro? That usually, see, 1 second. These kind of examples, now whatever RTP questions, same to same, copy paste they will do. Whatever answer is specified there, go with the same answer. Here, I think monopolistic competition or oligopoly, something they've said. Even the types of oligopoly question they will give. For example, aluminium industry. There are questions like this: toilet soap industry, aluminium industry, talcum powder. See, whatever they have given in RTP, same answer you follow. See, sometimes I will say toilet soap industry. That means all this Harpic, Penoil, large number of buyer, large number of seller. In usually oligopoly, they will confuse you. For example, they will give perfect oligopoly, imperfect oligopoly. What is it? Sir, there was no type like that. That means everyone selling same goods. Perfect competition market, homogeneous. Imperfect, heterogeneous. Rather than giving pure and differentiated. What is it? They will use a word called as perfect and imperfect. See, you know the logic. In perfect market, everyone selling same commodity. In imperfect, not a same commodity. So rather than using a word pure oligopoly and not pure, say pure oligopoly means homogeneous goods. Next, differentiated oligopoly, heterogeneous. Instead of pure and differentiated, they will use a word called as perfect and. Logic is same. The word usage, they have asked one in exam question, they have done like that. And many of them got confused with that words. And your ICAI know how to screw up like this sometime. Wait. Let me show that question. Chapter 4. See, there was an actually error in this. Firm equilibrium. TR lesser than AVC they have given. It should be AR. What is it? AR lesser than AVC. This was the correct answer. There was a typo error. Instead of total, if they would have mentioned it as average, option C would be the answer. Here there was a grace marks given. See here I said aluminium is an example. See, oligopoly example they have given. What is it? Perfect. That means homogeneous good. Cement industry example I said everyone is producing same. Aluminium means everyone is producing same. Aluminium, that means pure oligopoly. Pure can also be given as a. And kink demand curve is found in which market? And don't mark monopoly. Initially it was introduced in oligopoly, also called as Swiss's model. See, this concept difference should be there. Clear? Now see, formulas they will ask. Which is the correct formula for marginal? Literally, even in chapter 4, they will give you such a silly questions. And see, this is like very easy question. Most of them even went wrong. A food chain introduces a new burger with a. Sir, unique means monopoly, unique product. Don't come to conclusion. First read. A unique sauce to differentiate itself from the. Although there are many similar. That means you are not a single seller. There are many sellers. In the market, customer previewed this product in the distinct. It is a different product. Unique sauce, but many sellers. That means not a same commodity. Many sellers. Different types of sellers are there. Which market? So don't come to straight away conclusion by reading just one line. Read the question proper. See, which type of firm has the market power to charge the price over and above there and earn positive profit? Monopoly, that means supernormal profit they have given there. The cross elasticity. Which elasticity? Chapter 2. Demand for monopoly. What is that? Monopolistic product and any other product is highly inelastic. By the way, cross elasticity will become 0 because in monopoly you are the only seller. No substitute. No complementary. When there is no substitute, no complementary, reaction should be almost 0 or lesser than 0. Very smaller reaction because you are the only seller. See, monopolist product. Which product? In monopoly, you are the single seller, except no one else is there. And what is the concept of cross elasticity? First of all, no substitute, no complementary. Answer should be, see, they are merging two concepts here. Chapter 2 and chapter 4. Common sense, when you know the logic. Next, in a monopoly market, which market? ATC means AC, when average cost is greater than average revenue. See, leave about monopoly, man. When AC greater than AR, loss. They are simply confusing you this word called as monopoly there. Next, which of the following is not true for a long run equilibrium under which market? In perfect competition, long run, what do they achieve? Only normal profit. Even though if there is a scope of supernormal, they will not. Free entry, free exit is there. It will attract competition. All this stupidity they said, na. All firms in industries are in equilibrium. They are asking which is? Yes. Every stupid fellow is only following normal profit, na. Next. All firms are earning supernormal. Not at all. Option B answer. See, going with logic. That is what? First understand the concept. When you know the concept, you will easily answer. Next. A market characterized by this actually small number of sellers. They are buying large quantity. What is it? They will confuse you with English words here. See, small number of large buyers. That means there are only small number of buyers. They are buying dash quantity. Small number means what? Oligopoly, na? That is sellers. But here they are asking about oligopsony. Clear? See, they will confuse you. That is what I said. It is little tricky, not difficult. What is it? Little. In chapter 4, they will confuse you a lot. They will give a tricky question. See, there are small number of buyers, but there are large volume buyers. Which buyers? Quantity number of units bought, that is large, but there are small number of buyers, but they are buying dash quantity. That is oligopsony. Clear? So this is the type of questions. Now make sure that you are doing all the questions. Tomorrow, any doubt in any of the MCQs, I am there. Clear?
Yes.
Let's go to the macro part.
Yes.
Online students still alive? Okay. We'll go to the national income. Which concept? Probably we'll finish with the GDP concepts today. Because GDP will take little time. If time permits, we'll go even beyond the GDP. Okay. Determination of. See, this whole chapter you can't ignore. 15 marks. How many marks? Whole chapter 6 will be for 15 marks. Usually 7 marks from unit 1, 8 marks from unit 2. Or 8 marks from unit 1, unit 2. Keynesian theory. Clear? And Keynesian theory is less of economics, more of mathematics class. That is how Keynesian theory. That tomorrow morning we will take. Clear up? Today we'll try to finish national income accounting. See here, major question comes from 3 areas. Only 3 areas. Nominal GDP, real GDP. By mistake if they ask. If not, most favorite question to ICAI, inflation calculation. Which one? And Nirmala aunty conversion now.
Yes.
MP, FC, FC, MP, that is where comes. Clear? Next, value added method, income method, expenditure method. These are the numerical problems they will ask. And in terms of concept, in terms of, they can mix match any concepts in between. And what is included, what is not included, personal income, disposable personal income, private income. While calculating national income, what are all the useful, what are all the significance, and one more area, common question. Regional accounts in India. If you remember, I kept on speaking about this in the class. There are 2 elements which you should remember the most. National income is calculated inside the country with the help of National Statistical Organization, NSO. NSO will also make them to help state governments. Which governments?
State.
They will assist the state governments to prepare the state income. Assisting. What is it? National Statistical Organization. But who will prepare state income? Directorate of State Incomes and Statistics. These are the guys. That difference. Regional income. Which income?
Regional.
There one question will come. Regional income, one question will come. From the theory part of national income at last, useful, significance, limitations, there one question will come. Remaining 4 to 5 numerical problems will come and conceptual based questions. Total 7 to 8. Total in this unit. Total entire chapter 6 put together 15 marks. You can't ignore this chapter at all. And out of 15, scoring 12 to 13 is easy. If you know the logic, 12 to 13 is easy. Let's get started without wasting time. Even before calling what is national income, straight away, we will see what all we will discuss in this chapter. 8 concepts, 3 methods. What is it?
8 concepts, 3 methods.
Which are the 8 concepts? GDP, GNP, NDP, NNP, personal income, disposable personal income, private income, per capita income. And there are 3 methods to calculate. Value added method, income method. Straight away we'll get started with GDP. G, first alphabet. G stands for gross. Same topic like accounts. Gross profit, net profit. Difference is indirect expense. There is only one indirect expense in national income, that is also called as, what is the full form of CCA? Capital consumption allowances. Write down capital consumption. It will come in NDP now. Again, I will speak about this in NDP. Capital consumption allowances. Capital consumption allowances. Capital consumption allowances, or they may also give it another word, fixed capital consumption. What is it? One more name, fixed capital consumption. This time they have given that word, fixed capital consumption, in the numericals. Fixed capital consumption. Done? Okay. Gross. What do you mean by that? From the gross, if you subtract depreciation, you will get as a net. That means gross and net difference is just a depreciation. So it is a gross domestic product. First word gross na, that means including depreciation. What is it?
Including depreciation.
Clear? Second word domestic, that means inside the political boundaries of the nation. And one more element you should remember whenever you see this word domestic. Foreign companies earning income where? In India. That is inside India. One second. I will take this, your notes. What do you mean by that? Let's assume this is India. Inside that, category A, category B. Category A, Indians producing goods and services in India. Foreign companies, multinational companies producing goods and services where? In India. Where is it?
In India.
This is both domestic. What is it? Both are domestic only. Clear? That this knowledge should be there. Whenever you see this word domestic, that also includes foreign companies earning in India. Where? In
India.
inside India. Clear up? Now that's it. Later everything else is easy. It is a dash value of only finished goods and GDP can be understood in two different ways, two dimensional. First one is based on expression, second one is based on, in the expression, nominal GDP and calculation factor constant, and we GDP market price is what we are representing here as market value of final goods and, see, simple. Now nominal GDP, real GDP. Let us take up an example. Assume Shashikiran started teaching in the year 2016. Which year? In 2016, Shashikiran was teaching 100 students. How many students? And I was collecting the fees of 2000 rupees per student. 2000 rupees. So how much is my income? 2 lakh. Clear? Wow, nice, sir. Now in 2026, 2000, still I am teaching 100 students only because my classroom capacity is only. Now fees, now I am charging 5,000. I am charging how much? How much? 5 lakh, sorry. Nice, sir. You are earning from 2 lakh rupees to what? Earning nice. Bullshit. Productivity is still same, na. These prices have gone up. That is why values looks bigger. GDP value goes bigger, but you are producing only and only how many students? You are only teaching to 100. Productivity didn't increase because of inflation. Price got increase. So I don't want this value. This is wrong. Shashikiran, your productivity has not at all increased. GDP didn't increase at all. Okay, sir. Let's assume you are teaching now 800 students. How many students? Sir, quantity has also gone up. Price has also gone up. Now, this is what we call nominal GDP. Which GDP? Nominal changes. What is it? Due to change in productivity as well as due to change in price. Now, 8 5s are? Sir, superb, sir. From 2 lakh rupee, you are earning 40 lakh rupee. Yes, but this includes inflation. It includes. Now, we should remove this inflation. How simple? You consider present year quantity, but base year price. Which year price? See, when you consider present year quantity, present year price, you will get nominal GDP. Which GDP? Nominal. But if you consider present year quantity, but base year price, which year price? Now, how much is that? This is real GDP. Which GDP? And remember, real GDP changes only due to change in productivity. See, 100 to 800. Price is still the same. Real GDP doesn't changes because of price. It only changes because of production. That is real GDP. But nominal will change because of or change in price. Most importantly, it changes because of price. Clear? This is the exam question. This is where they will ask. Be careful. And where inflation is included, where inflation is not included, which will give a correct value, misleading value. Clear? This is the differentiation between nominal GDP and. Now, how do we calculate, sir? This nominal and real GDP, like this, or like your simple example and all exam, they will never give it. They will pakka confuse you. So what we should consider? We should know one limitation. For every good, what is it for? We don't have this base year price. For example, COVID vaccine. Let's assume Shashikiran is a COVID vaccine manufacturer. From when? 2022. From when?
2020.
But base year is considered as 2000. Did we had COVID vaccine in 2016?
No.
I don't have base year price at all. For every commodity, I don't have base year price. So straight away, I will not be able to identify the. First we will identify and then we convert nominal to. So to convert that, we need deflator value. Which value? That is GDP deflator. What is GDP deflator? Measurement of inflation. What is it? And this is also called as price index. Another name of GDP deflator is formula nominal GDP divided by real GDP into 100. Without having this deflator value, we can't convert nominal to real or real to highly impossible. And second favorite question of ICAI, other than inflation, other than calculation of real GDP. What is it? Calculation of? I will show in the exam questions now. Now, real GDP, there is a shortcut to remember here because it will confuse you with nominal GDP calculation. What is it? Real GDP will be nominal GDP into 100 divided by price index. Into 100 divided by. So, remember the denominator. So, denominator is price index. What is the denominator? Clear? So, when we are calculating real GDP, what is the denominator? Price index. Now, reverse will be nominal GDP. If you are calculating nominal, what is it? If you are calculating, so it will be real GDP into price index divided by 100. So, you should always remember the denominator. In nominal, denominator is. In real, denominator is. And most favorite question to ICAI is this real GDP calculation. Wait, let me show. Chapter 6. See, this is inflation calculation. Again, here also inflation calculation. In most of the time, inflation calculations have only come. Chapter 6. Question number 26. Find the real GDP. If nominal GDP is 720, price index. What do you mean by price index? Deflator. Another name of deflator is price index. Now, what is the formula to calculate real GDP? Formula for real GDP. Nominal into 100 by. See, always remember denominator. Real GDP, denominator, price index. Nominal GDP, denominator, 100. So, real GDP is nominal. Now, have they given value of nominal? Yes. 720. And divided by price index. How much is price index? Here it is 100. Value? Clear? See, if not inflation, next expected question is real GDP. Or sometimes, like a surprise, they may ask you nominal also. So, remember formulas. What is that? Remember? Formulas are important. Clear? Now comes the most beautiful next inflation question. Which question? I hope you remember the concept of marginal formulas. Continuous, output is not continuous. When output is continuous, present minus previous. What is it? Same way, present deflator minus previous deflator. Which deflator? Present deflator minus inflation calculation. See, present deflator. What is it? Present minus previous deflator. Previous deflator divided by previous into 100. What is it? Into This into 100 is most important. You will forget that. Or else we can also remember in another manner. Sir, deflator of year 2 minus deflator of year 1 divided by deflator of year 1 into 100. What is it? Deflator of year 2 minus deflator of year 1 divided by deflator of year 1 into most favorite question of ICAI. In most of the attempts, I will show. Calculate. And this is the easy 3 marks. September 25 attempt. Again, I will show for Jan 26 also. What will be the inflation rate for year 22-23? What is it? 22. They have only given deflator. So 168.4 minus 154.25 divided by 154.25 into
9.17.
clear. And remember, whenever the deflator value, which value? Price index greater than 100. What is it? That means it is having nominal GDP greater than real GDP. Nominal GDP greater than? Suppose, listen to this carefully. When we are calculating deflator like this, see 100, 154, 168. Deflator kept on increasing na? But next see 168 to decreased. So inflation will not be there. Deflation. What will be there? Clear? And remember, base year. Which year? Deflator will be always and always. That means which is the base year? 2020. See, in the financial year, nominal GDP, in which financial year nominal GDP and real GDP is same? Base year. That is 100 divided by 100 into 100. Nominal by real. Nominal is also same value. Let's say 50,000 nominal. Real is also same 50,000 into 100. What will be the value? 100. Clear? So only in the base year. Only in the deflator value will be 100. And in that base year, nominal value, real value, both will be equal. Both will be 2020-21. In which financial year price level has deflation? When did this happen? 2023. Logic. If you know that 3 marks, easy. There is nothing difficult in this. Clear? Next. Calculated. They have only given deflator. You need not to identify deflator. Inflation calculation. For which year? Year. 144 minus 125 divided by 125 into 100. 15 point. Clear? Understood? Okay, now recent attempt. Jan 26 attempt we will go. No, this I have to explain still. GNP, wait. This is the much more easiest question. Value added method. This is from value added method. Income method question. Chapter 6 leakage question. Economic part, theory part. See, one more numerical question. Simple it is. I can explain here itself. Next, MPFC. Based on calculation. What is it based on? Now we are expressing expression. Based on expression. Okay, we'll come back to this. Calculate. Nominal into 100 by price index. Nominal 450 into 100 divided by price index. Easy question. Clear. They haven't given inflation in the present year. Okay, chalo leave it. Next, Jan 25 temp paper. Here also they have given real GDP calculation, not the inflation calculation. September 24 attempt paper. See here. Whenever you see this word ratio, ratio means formula. Formula is given in the form of statement. Nominal by real into 100. What is it? GDP deflator formula, that is. Now, calculate inflation question. If the GDP deflator of the country in the year 2020 is 140.75 and year 2021, see 21 is present, previous is 20. So you should know which is present year, which is previous year. One more inflation calculation. Answer 11.78. Next question to even more easy. See the question. GDP market price 6,700 crore. Depreciation is 530. What they are asking is NDP. Just observe the first alphabet. Only first alphabet. G has been converted into. By the way, what is difference between gross and net? Just only explained now. Gross means including depreciation. Net means excluding. This is very difficult question. 6,700 minus 530. 6,170. That's it. See, such a silly questions will come. That is why I'm saying don't ignore numerical from national income. Minimum 7 marks. How much? 7 marks only and only numericals from unit 1 plus unit 2 put together. Clear? Huh? Next, we'll go back to the topic. Okay, so this is GDP based on expression. What is it GDP based on? That is nominal GDP and real GDP. See, this difference is important. Come to the, in my theory paper, yeah. Real GDP, nominal GDP difference. See, simple. Nominal changes because of change in price as well as production. But real changes only because of nominal GDP is taken as output as per dash price, current year price. But real based on, and dash includes inflation. Dash does not include inflation. Nominal GDP can rise because of rise in physical output as well as rise in. But real only and only rises due to change in. It does not changes because of rise in. Next, which will give a misleading result. Better result. Another name of nominal GDP, GDP at current price. Another name of real GDP, GDP at. By this, GDP based on expression comes to an. Next comes based on calculation. Simple logic. Nirmala aunty and Modi uncle logic here. Now, first and foremost, we will be having GDP at market price. When we calculate, it is market outcome. Which outcome? Now, we should convert this MP into FC. What we should convert? MP into? Simple concept. Market price. When we are selling that in the market. When we are selling that in the Nirmala aunty is added because tax, indirect tax. Whenever we speak about Nirmala aunty, that is indirect tax. Which tax? But now, sir, end result is not market price. End result is factor. That means production. We are not selling in the market. So, Nirmala aunty, get out. We don't want you. Minus. But we need Modi uncle. Subsidy. Because whenever Modi uncle gives subsidy, my production cost decreases. And it is given on essential goods and services. So, this is first formula to remember. But whenever I ask you FC formula, which formula? There are 3 important components in FC formula. Compensation of employee. What is it? By the way, what is that? Wages or salary? What is it? Wages or salary? Wait 1 second. Here formula. 1 second. I will take it the side. What is it? Compensation of employee. What is that? Compensation of employee? Next comes operating surplus. What is it? Rent plus interest plus profit. What all does operating surplus includes? Such a silly question. January 2026 attempt paper. I said na, Jan attempt paper was such a silly paper. Scoring 80 plus was damn easy. Operating surplus includes. ಇದನ್ನೇ ಮಿಸ್ಟೇಕ್ ಮಾಡಿದೀವಿ ಸರ್ ನಾವು ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ. ಐ ನೋ ವೈ ಕಾನ್ಸೆಪ್ಚುಯಲ್ ನಾಲೆಜ್ ಮಿಸ್ಸಿಂಗ್. ಅದಕ್ಕೆ ಹೇಳೋದು ಪುಸ್ತಕ್ ಮೇ ನಹೀ ಮಸ್ತಕ್ ಮೇ ಲಿಖೋ. Operating surplus includes. What does it include? That means other than wages. Whatever 3 remaining factors of production incomes are there, that is called operating surplus. Clear? Understood? Hello, excuse me, audio important. Plus mixed income of self-employed. Now, by the way, what do you mean by mixed income of self-employed? See, in a developing nations or underdeveloped nations, including India, developing we will be having lot of mixed income. That means when capital and labor is given by same person. What is it? Is contributed by the same person. Let's say now Shashikiran, you will start my own classes. Let's say Shashikiran's economics classes. Now I will only invest money to set up the classroom, bench, all this TV, infrastructure, iPad, everything. I am the proprietor. I have only invested capital and I am only teaching students. When labor is also Shashikiran, capital introduced is also. Whatever profits I make, in that I can't divide between this is capital income, this is Even doctor, let's say after completing his education, he will set up one clinic nearby here, let me say residential area. Now, setting up of clinic, who has invested money? Who is giving treatment there? In that consultation fees, okay, in this 300 rupees, 100 rupees is for giving treatment, 200 rupees for setting up clinic. Can you divide like that? No. That is called mixed income of self. Now, what is the first alphabet here? When G is there, G includes. That's it. See, main three components are these elements. Whenever I ask FC formula, which formula? These are the three components compulsorily you should answer. Along with that, first alphabet is, that is why we are adding, because gross includes. Clear? So what is GDP FC formula? Compensation of employee, operating surplus, mixed income of self-employed plus depreciation. Clear? And if not, another formula for GDP FC, GDP MP plus but minus, because end answer is factor cost. We don't want to sell it in the market, just we are still in the factory. Production cost we are deciding. So Nirmala aunty minus subsidy plus. There is one more logic here. They will only give the adjusted figure called as NIT. What is it? Net indirect tax. For us, this symbol is important. Always Nirmala aunty symbol is important. Which symbol? Nirmala aunty symbol there. If it is minus Nirmala aunty, minus NIT. If it is plus Nirmala aunty, plus NIT. Clear? So remember, whenever we are converting market price into factor cost, which price? Market price into factor cost. We will take it down. We don't want this now. Whenever conversion is happening from market price to factor cost, remember we are not selling. End result is FC. FC means manufacturing unit. There Nirmala aunty not allowed. Who is allowed? Modi uncle. Clear? Next, reverse. Uno card. Reverse now. We have GDP FC. What do we have? But end result GDP MP needed. That means we are converting FC into. Now from the factory we are selling in the market. Now Nirmala aunty add, because sleeping partner. Nirmala aunty sleeping partner. Substitute Modi uncle. Clear? So remember here NIT is given. Let's assume Nirmala aunty symbol important. Clear? So simple logic. If you are selling in the market, if you are Nirmala aunty sleeping partner plus indirect tax. If you are adding indirect tax minus subsidy minus. Clear? See, these two logic you have to remember. Converting MP to FC and converting FC to. Simple difference is indirect tax and subsidy. And already I spoke about gross and net. What is the difference between gross and net? Let's assume GDP MP is there. We need NDP MP. What do we need? First alphabet. This G is getting converted into N. What is it? Suppose reverse. Uno card reverse now. Suppose NDP MP is there. We need to identify GDP MP. From the net, we are going to gross. That's it. So simple logic. G to N differences. Depreciation. FC to MP differences. Indirect tax and. So the whole national income is dependent on just three differences. Just three differences. What is it? Now let me explain GNP first. After explaining GNP, I will come to the whole national income. Now, if you remember, I gave an example. This is India. Inside India, Indians earning income inside India, and multinational companies are also earning where? Income in India. Where? Income? Same way, an Indian company might also gone outside and doing business in outside India. Na? These are Indian MNC. What is it? Indian MNCs. Let's assume an Indian company earning inside India 1 lakh crore. How much? Of goods and services they have produced. Value added. Next, multinational company, some 30,000 crore. How much? And Indian MNCs abroad, 37,000 crore. How much? Don't you think these foreigners will take back the money to their respective country, whatever they are earning? These are factor income payable to abroad. What is it? Payable to abroad. Same way, Indians who are earning outside India, they will bring that money inside India. Na? Factor income receivable from abroad. Factor income. How much we are receivable? How much we should pay? 37 plus 30 minus net effect. That is called NFIA. What is it called? Let me write it below here only. NFIA, called as net factor income from abroad. Clear? What is the formula for NFIA? NFIA formula will be factor income receivable from abroad minus factor income payable to abroad. In my example, 37,000 receivable minus 30,000 payable. So NFIA value is how much? Positive. 7,000. And remember, this need not be always positive. This can also be negative. Just make Uno card reverse. 30,000 receivable, 37,000 minus 7,000. Clear up? So simple logic. What is that simple logic? When we are identifying GNP, what is it? GDP plus NFIA. Now we are converting second alphabet. D is getting converted into N. What we should do? What we should do? Plus NFIA. So go alphabet by alphabet. Don't get confused. Clear up? And this NFIA can also become negative. Can also become. That means let's write it as note. If NFIA is positive, what is it? If NFIA is GNP will be greater than GDP. Suppose if NFIA is negative, what is it? NFIA is GNP will be lesser than GDP. Hey, wait. Okay. I got it. GNP will be lesser than. So simple logic. GDP plus NFIA. What is it? GDP is called GNP. And here also it will be MP. Here also it will be LHS and RHS. Both should be MP or both should be FC. Or you have to convert MP to FC, FC to. Clear? Now simple logic. Second alphabet. How do you convert domestic to national plus NFIA? Suppose reverse. Sir, from national to domestic minus NFIA it will become. Clear? So simple logic here. Look at the board, everyone. GDP MP. This is the first and foremost primary base. Now we will convert first alphabet G to N. How do we convert G to N? Minus. Sir, can I straight away convert second alphabet also? Yes, you can. It's up to you. Suppose GDP MP is there. Suppose straight away I'm converting second alphabet. I'm making it as GNP MP. What should I do? Clear? So either go alphabet by alphabet. First alphabet, next second alphabet, and then at last. So if you are converting gross into net, what is the difference? Depreciation. Next, if you are converting second alphabet, let's say domestic into national, what is the difference? Clear? So any way you do, it doesn't matter. You should know the logic. Gross to net, what is it? Minus depreciation. Okay, now we will go first alphabet by alphabet. First alphabet converted. Now we will convert second alphabet. By the way, what is the second alphabet? D. We will convert that into N. What do we convert that into? So from NDP, we will make it as NNP. What we should do? Plus NFIA. Now we will convert at last. MP should be converted to FC. Now it will be NNP FC. So market price. Now Nirmala aunty, we don't want you. Get out. We are going back to factory. That means minus indirect tax. Clear? So this is the third step, third conversion, MP to FC. So ultimately, what we need is NNPFC. What do we need? NNPFC is what we call national income. So whole national income is just a 3 difference. How many difference? Difference between gross to net, difference between domestic to national, difference between market price and factor cost. That's it. When you know when to add them, when to subtract them. Life simple. Any formula for it matter. Shivo, which formula? Any formula, there is how many difference? 3 difference. Clear? So, first difference, gross to net. Second difference, domestic to national. Third difference. Okay, let's convert here. Now, let us convert first alphabet. Now, how do we convert the first alphabet G to N? What do we do? Minus depreciation, so that it got converted with the first alphabet. Now we will go to the last alphabet, that is NNP. MP is there. What we need is NNP, FC. By the way, how do we convert this MP into FC? So ultimately what we need is NNP, FC. NNP, FC is what we call it as. Clear? Understood? Just a 3 difference. When you know 3 difference, whole national income, damar, katam. Finished, huh? So NFIA component should be there, positive and negative. Now everything I was explaining you from MP point. Only at last I converted them into. Okay, now let me take the same concept, FC part. Which part? Okay, sir, NDP, FC. What is it? NDP, FC. Now I said you, whenever we speak about FC formula, 3 major components are there in FC formula. Which are those? Compensation of employee plus operating surplus plus mixed income of self-employed. So what is the first alphabet? What do you mean by that? N, including depreciation or excluding? But don't write here as minus depreciation. Wrong. Leave it empty. Sir, empty classroom is there. Okay. Sir, classroom minus students is there. Wrong, na? So you don't call as classroom minus student. That means empty classroom. That means don't include anything. Enough. And if it is N, don't say minus depreciation. This is wrong. Clear? Understood. So that's it. For this, okay, let me make your little twister now. Little twister. Instead of second alphabet N. Sorry, second alphabet D. Second alphabet D. If it is N, what do you mean by N? National means plus. What do you mean by NNPFC? National income. That's it. NNPFC called as national. Only based on your alphabets, you have to convert things. Clear? Huh?
Yes, sir.
3 basic component. In that 3 basic component, we are playing around with the alphabet. First alphabet, second alphabet. We are just converting things. That is what I said. Just 3 difference. How many difference? 3. When you know when to add them, when to subtract them, whole national income is done. There is nothing. Suppose now GNPFC. What is it? GNP. Now you should only give me the answer. FC formula. 3 major components. Which are those? Compensation of plus operating surplus plus mixed income of self-employed. First alphabet is G. So what you should do? Plus depreciation you should add. And second alphabet is N. So what you should do? Plus NFIA. Clear? Understood? Got it? That's it. National income comes to an end. There is nothing big. Only theory we should read once. See, we understood with the concepts of MP and we also understood with the concepts of FC. See, MP formula. GDP, FC. What is it? GDP plus Nirmala Aunty minus subsidy, because MP, ultimately we are deriving market price. In market, Nirmala Aunty present, subsidy minus. Clear? And in factor cost, which cost? GDP MP minus Nirmala Aunty plus subsidy, because factory, na, in factory Nirmala Aunty is not allowed. Where Nirmala Aunty is allowed? Only in market. Clear? Understood? And there is one more small concept. Difference between base price, factor cost, market price. What is the difference between base price, factor cost, market price? See, in India, there are 2 types of taxes. One is direct. Second one is, now I will focus on this indirect now. Even in this indirect, there are 2 kinds. Production tax. Which tax? Second one is product tax. See, product tax example, GST and customs. What is it? GST and customs. And production tax, license fees. What is it? License fees, permissions. Clear up? Now, simple. We will divide this indirect tax into 2 elements. I was keep on speaking Nirmala Aunty, Nirmala Aunty. What I used to write? I used to only just write it as IDT. What I used to write it as? IDT. Now, instead of writing IDT, I will split that and I will write it as production tax and that is the difference between the base price, market price, factor cost. See, simple. First and foremost, we will produce goods and services in factory. For that, factor cost is included. Land, labor, capital, organization. First and foremost, we derive. Factor cost. And in order to produce, first you should take permission from government. So plus production tax. Which tax? And Modi uncle will say sometime, if you are coming up and setting up in rural area, any backward places and all, I will give you subsidy in the tax money what you are paying on the production. That means when you are coming to take license, rather than paying 5 lakh rupee, just to pay 3 lakh rupee, 2 lakh subsidy. Enjoy. Like this. Minus production. This will give us base price. Which price? Now what is base price formula? Factor cost plus production tax. Wait. Let me show. Even that question has been asked. And this time they had made a mistake there. That plus minus mistake they had made. Question number 76. What is it? Question number? Which of the following is true about the determination of factor cost plus production tax minus production subsidy? Instead of minus, they had given grace mark. Typo error. Don't expect every time it will be typo errors. Sometimes you will be wrong only. Conceptual knowledge will not be correct. Clear? In this case, it was a grace mark. Clear? Only one question, or sometimes it may happen or it may not happen. Don't expect that grace mark. See, one question in terms of like what is it? Shutdown point. The wrong thing was there. So grace mark. Here only the symbol, instead of plus, they should have given minus. Answer is D. Clear? So even these questions will come like this. Even small element matters. That is why logic. Only when you attend. But my suggestion, don't attend, leave it. If you are confident, sir, this is wrong. Pakka, this is wrong. I know this is grace mark. If you are so confident, then attend. But my question, if you're still doubtful, 0.1% doubtful also, better leave it. Sometimes 2 answers are given in the exam. And they have considered both. See, you can't take a risk. That is what I'm saying. Don't take risk. Leave it. I know 100, out of 100, you will attend 80. 80 is the target. Some 20 questions, anyhow, you are going to leave. That will be part of that. Suppose if you are confident, sir, I know more than 90 questions. Attend. Only if you are confident. Only if you know. Attend. Don't give the sentiments and all. Sir, there are students, full man bows. Sir, just assume, sir, I have attended 5 questions. In that 1 correct. 4 wrong. Nullified, na? That is what if. Same what if. All 5 wrong. Goodbye. Katam. Gaya. Tata. Minus 1.25 from the positive. See, technically speaking, if you mark correct answer, you will get only 1 mark. If you mark wrong, for attending that wrong, anyhow you lost that 1. Upon that, from positive 0 point. That means technically minus 1.25 for every wrong. That means now into 5. 6 mark damar. How much? 6 marks damar. I am speaking from economist sense, not from accountant sense. Whose sense? For making it wrong, anyhow you are not going to get that 1 mark. You are losing that 1 mark there only. And upon that, from the positive, 0.25 is also gone. Technically speaking, for making it wrong, minus 1.25. For making it correct, 1. But sir, Akhilesh sir is only good than you, sir. Better, we attended 5, 1 correct, 4 wrong. We didn't even get anything, 0. Opportunity cost, that's it. But don't make this stupidity. There are students, sir, what if, sir, the 20 questions I didn't know, sir. In the 20, sir, even if just 4 is correct, 16 is wrong. Nullified, na? Other what if? What if all 20 gone? Simple. Minus 5 from positive. What is it? Minus 5 from positive. Damar. So don't take this inky pinky ponky game. It will not work. Clear? That is why I suggest better don't. If you are so confident, sir, I know this is a typo error. Sir, I know this is pakka grace marks. If you are like 101%, not 100, 101, then take a risk. It's up to you. It's individual risk. But every question paper, does it has an error? No. In some papers, till now in past 5 attempts paper, only in 2 paper there was an error. That too only 1 question. Only out of 100, 1 question that had with respect to shutdown point, 1 question with respect to this base price. That's it. Remaining 99 questions was correct now. And sometimes 2 options are answered. That both of them have considered as answer. Whichever you have marked, if both is answer, Anyway, either B or either C, whichever you have marked, that they will give. But in case of grace, in case of, I can't assure. I will definitely not assure you. And this time, there is a 10 marks of grace marks. If anyone, did you see that notification? ICAI announced now. If you get 190 and above, and all subjects cleared, grace, passed. Aggregate in May 26 from onwards. From May 26 and onwards. Now official notification yet to come, wait. They will release. Only when official notification comes. What is it? Official? Then it is valid. Then it is still, there is a talks going on. There is a still discussions going on. They have to yet to come with notification. What is that? Only if official notification comes, then it is considered. But they have said from this attempt, we may consider like this. We may. Only the 10 marks is the grace. That too, you should have crossed 40 and above in every paper. And in aggregate, if you have lost a marks, then they may consider. They didn't say that they will. They still official notification yet to come. Only when official notification comes, considered. If not, not considered. So before writing your exam, ICAI has to come with notification. Still, they haven't come. So wait. So don't be happy. Don't aim for just to 200. Here, okay, come back. So we understood base price. So we only took care of the first part of the tax. That is production tax. Which tax? Next comes product tax, GST. What is it? Minus product subsidy. What is it? This is what we call market price. What is it? So kebab mein haddi is base price. Clear? So tax has been splitted into production and product. That is what the concept of factor cost versus, see, factor cost versus base price versus market price. Clear? Understood? So GDP almost done. Only that one topic is pending. What is included in GDP and what is excluded in GDP? Now simple. Inclusion list, no worries. Inclusion list is easy. Only final goods and services. Which goods? And only dash added. Now let's say to manufacture this water bottle, my land, labor, capital, organization put together 150 rupee. But I'm planning to sell this for 200. Output price 200. Input price 150. Output minus input value added. Only and only value added is considered. And only dash period production. This year production and net change in inventory. Closing stock minus. Because that is present year produced. Still yet to be sold but present year produced. And depreciation of which year? And production boundary and own consumption. That means self-consumed goods. Whatever is produced in India. What is it? That is production boundary. That is included in GDP. Exclusion. Transfer payments. Which payments? Incomes received but not earned. We are not leading to any production of goods and services. Just money has been received. Money has been received. Scholarship to student. Old age pension, unemployment benefits, where production is not happening. Money is getting transferred from one person to. So it is not leading to any value addition. Not leading to any or any final production of goods and services. So exclude. Next comes. Because these are not for a monetary rewards. Non-economic but leading to production. What is it? Your mom preparing food at home. Leading to production. Self-consumed na sir. But market value cannot be decided. Na, will you say? Breakfast 50 rupee, lunch 80 rupee, dinner 100 rupee. Will you define the market value? No. So since market value cannot be decided, we can't include non-economic activity, even though that is leading to production. Next, second-hand goods and services. Now car example, second-hand car. When car was produced, in that year only they have included, na?
Yes, sir.
Once again, why should you include? But there is one twister here. Any royalty, commissions, margins earned, any profits made from the second-hand goods sale. Suppose the car value is 2 lakh, but we sold it for 2.5 lakh. 50,000 profit generated this year, na? That is included. And once they have asked question on that, in income method it will come. Which method? Income method of national income calculation. Next, intermediary goods. That means not included. And all this illegal income, betting, gambling, narcotics, drugs, these are called economic bads. Which bads? Or evasion of tax, illegal, unreported transactions will never be included in the GDP because that is called as bad incomes. Which incomes? That should never be part of GDP calculation. Clear? Now, listen to this carefully. Tomorrow before coming to class, I'm not winding up. Wait, still 10 minutes is there. Already people, winding up, nice. We are dealing with Shashikiran. On time. It is Indian stretchable time with Shashikiran, not before that all. Tomorrow before coming to class. Theory part, last theory part. Limitations of national income calculation, GDP and welfare. What is it? GDP and significance of national income calculation. Only these 3 topics, read and come. Because very least importance, but one question will come sometime. I will explain, but read and come. What is it? Read and come, the theory portion. Clear up? Okay, now let us go to GNP. Already explained. GDP plus NFIA. What is it? GDP? This will be GNP. There is nothing difference. For the same GDP definition, sum total value added, final goods and services, domestic territory, including NFIA and factor cost. Already spoke about this. 3 components. For that, you should add depreciation and add NFIA because second alphabet is N, na? If second alphabet is N, we will add NFIA. What is the difference between national and domestic? Net factor income from abroad, and NFIA can be positive or even NFIA can be negative. Next comes NDP. What is the first alphabet? What does that N means? Excluding depreciation. That means from GDP just to subtract depreciation, you will get NDP. And NDP calculation will have CCA. What is CCA? Or else also called as fixed capital consumption. In FC formula, only the 3 components. That's it. Next comes NNP, net national. First alphabet N, that means excluding depreciation. Second alphabet N, that means including. And convert MP to FC, that is what we call. So national income is a dash income. Earned by whom? Of a country during the accounting year. For that, if we add NFIA, it will become NNP. So simple. First we will identify NDPFC by normal residents, na? For that, when we are adding net factor income from abroad, see the definition. Even the definition is ambiguous. Definition is also not proper. In limitations of national income, we speak about that. Inappropriate definition. What is it? Even definition is not proper. See, first we will identify NDPFC. What we are producing inside India. Goods and services. And for that, we are considering NFIA. See, factor income accruing to whom? Of a country. Then for that, what are we adding? Sum of domestic factor income. What is it? Sum of? And that means NDPFC plus NFIA is what? National income. That is the definition. See, national income is the value of a dash income. Where? Plus NDPFC plus NFIA. That is national income. So in short, NNP. How do you identify? First NDPFC we will identify. For that we will add. That is what we are calling NNPFC, national income. Come to the first page. I didn't explain what is national income meaning, na? This is the reason. Because definition is ambiguous. Definition is? See here, NDPFC plus NFIA. It is a net value. First alphabet N. So net value. Which value? Of all economic goods and services. That means final goods and produced where? For that, what are we adding? That is NFIA. In short, money value of all final goods and services produced within the domestic territory as well as by whom? NFIA component. So everywhere NDPFC plus NFIA is called national. Ambiguous definition. Clear? That's why I didn't even start straight away with national income meaning. You will get confused. Clear? So we did already 4 components. How many components?
4 components.
Which are those 4? GDP, GNP, NDP. In this, most important is GDP, especially inflation calculation and MPFC conversion and real GDP and nominal GDP. Clear? And these 4 will get over in just 5 minutes. It will not even take much time. Personal. It is income earned by the household. In this income earned by whom?
Household.
In this, numerical problem can be asked. In personal income, what is it? Simple concept. Whatever income comes to the hands of the household, hands to the
Household.
including non-profit institutions serving household. We spoke about transfer payment if you remember. What is transfer payment? Incomes received but not. That was added because that is your income. You are receiving in your hand. Same way when you are working, there is some deductions called as provident fund. PF calculations. That means you will not receive this money, but you have to get this money, na? But immediately you are not receiving. When you will receive? After leaving the job. Incomes earned but not,
Received.
that should be subtracted. And both this adjustment should be done from national income, that is NNPFC. First identify NNPFC. For that add all your transfer payments. Which payments? Because that is your income. See, simple logic here. Household, whatever money they will receive in hands, they will
Received.
add it. Whatever you are not receiving, subtract. There is one numerical problem. Come to this straight away. Let me explain it. Below that, see, there is one more component which you should understand. Interest on national debt. What is it? If you remember, government will borrow funds from general public. For that, they will pay interest. They will pay. See, it is just a general public money. By giving some certificate, tax benefit, they will borrow. On that, they are giving interest. So, that is an income to household. What is it? Current transfers from government. That is transfer payment. From whom? From government. Same way, you can also receive from rest of the world. Current transfers from outside, from any other NGO or remittance, foreign remittance received. That is income to household. See, whatever as a household you are receiving, add it. Whatever you are not receiving, if government is receiving, subtract. Income from property and enterprise accruing to. Is it your income?
No, sir.
Whose income? Minus. Whatever you will get, add. Whatever you are not getting, subtract. Entire adjustment should be done from where? National income. So, first primary factor is national income. From the national income, we are making all this adjustment. Simple. Whatever money comes to your hand, your means. Even NGO giving any benefits to household should be added. Clear? And this is where exam component. This is what they will ask. Personal income also considers serving to whom? This will be question. Clear? So this is personal income. Next comes disposable personal income. Simple concept. Nirmala aunty will come into picture now. Whatever income you earn, from that direct tax paid. Which tax paid? After the payment of direct tax, whatever money left in your hand, disposable income. There are two formulas here. How many formula? See, which are those two formula? Formula number one, YD. YD stands for disposable. Your personal income minus direct tax. What is it? This is also called disposable income. To calculate disposable income, after getting that money in your hand, what you will do? Either you will consume or either you will save. Both are formulas. What is it? Both are clear. That is disposable personal income. Anyone having doubt with personal and disposable in terms of calculation, in terms of formula? And there will be one more question. Why is transfer payment not included in national income? Why is transfer payment not included in? Because it is not leading to production. That is why we are excluding that and adding that in personal income. Clear? Huh? Next comes private income. Which income? It is an income earned by which sector? From dash sources. When I say all, inside as well as, it is an income earned by which sector? That's it. Last but not the least, per capita income. Which income? Average income of the population. Which income? In simple concept, total income of the nation, that is national income divided by population. How much each person gets, and that means government will never come and give that money to you. Just as a reference, we are saying total income divided by population. That means if at all income starts distributing to everyone, how much each person gets? How much? That is called as per capita. And remember, this differentiation is important. In our country, standard of living is measured by using per capita income. Dash measures standard of living in the country. Economic well-being is measured by real GDP. Real GDP measures dash economic well-being. What does per capita income represents? Clear? And by using this economic well-being, like how we are calculating per capita income, total income divided by population, also called as average income of a, we can calculate real GDP per capita. What is it? That means what is the real GDP? Value of goods and services produced in your country divided by total population. How much each person is contributing to productivity of the country. How much each person is contributing to? That is called real GDP per capita income. Clear? This is out of your syllabus. I'm just explaining for your understanding. But this is in your syllabus. What measures the standard of living in the country? Dash measures economic well-being. What is called as average income of population? Clear? by this 8 concepts of national income comes to an. Tomorrow we have just 3 methods with that Keynesian theory, and tomorrow I will be discussing with chapter 6, chapter 7 and chapter 8 if time permits. If time, at least unit 1, theories of money supply, money demand, theories of money demand. If you remember, which all theory? QTM, Cambridge theory, Keynesian theory, Friedman's restatement theory, behavior towards risk, Tobin theory, all those. Till that you have to revise and come. Clear? Chalo, bye bye. We'll meet you guys tomorrow, same time, morning, 8:45 to 1:15. Clear? Our India's GDP is greater than Japan's GDP, and telling that it is one of our achievement and growing. Yeah, when we are comparing, we should also compare everything, not just with GDP, standard of living, per capita income, and life expectancy, medical facility. Everything should be compared, Harika. Now that is total bullshit in our country. Only with production, that is wrong. Sir, COE includes prerequisites given by the employer as well as right, and what is the prerequisites will be added. That don't consider, Rakesh. That will lead to confusion now. Rakesh, clear? Don't consider that. It will lead to confusion now. It is not a part of your syllabus. How is my new girlfriend? She has sent divorce letter now. Bye. Dev, stupid fellow. So in the previous class, we were discussing about the concepts of national income. So we finished with the main 8 concepts of national income. So today's class, we are going to discuss about 3 methods of calculating national income. We'll go with the Keynesian theory, and we shall also get started with the chapter 7. So almost we will be finishing with the 6, 7 and also 8 unit 1 if time permits. Clear? Okay. So there are 3 methods to calculate national income. How many methods are there?
3 methods.
Which are those 3 methods? Value added method, income method and expenditure method. Clear? Now listen. So this measurements of national income, there is one small theoretical topic that you need to understand. That is SNA, System of National Accounts. What is it? See, this was developed by United Nations. Who developed it? United Nations. Clear. So they have created an accounting framework. That means how a nation has to come up with the national income accounting calculation, and it should be like, for example, calculating the macroeconomic statistics. Which statistics?
Macroeconomics.
Analyzing them as well as evaluating the performance of an economy. See, this can be an exam question. So at least remember, the system of regional accounts is different topic. System of national accounts is a different concept. So system of national accounts is developed by whom? For the purpose of creating dash of macroeconomic statistics and performance of an economy. Now when we speak about measurements of national income, there are 3 measurements. First one, product method, or also called value added method. There is one more name for it. What is it? Industry origin method. Which method? Industry origin method. So value added method, income method and expenditure method. Now before that, we will go and understand with the concept of circular flow of income. Which is the concept?
Circular flow.
So what exactly does circular flow refers to? We discussed about circular flow of money yesterday. CMU, households will create savings, that money will go to bank will start giving loans and advances to the business people. So creation, mobilization and utilization. So CMU, that was circular flow of money. But now what we are understanding is circular flow of income. See, first and foremost, we need to produce goods and services. Do you agree?
Yes.
In order to produce, we need to create value. That means production is not always converting raw material to a finished good. What is production? Process of adding utility. Process of adding.
Utility.
Now to create that utility, that means in the means of production, we will add value. What is it? We will add. That is why we call this as value added method. When we are producing goods and services. What is it? Producing? We add dash to the product, value to the product. So in order to produce these goods, we need inputs. Input is converted into output with the help of human effort. So what is this input? Factors of production. What is it? Land, labor, capital and organization. Clear. So remember, land, labor, capital and organization is not available for free. What does land expects in return? Labor, capital, organization, profits. So land expects rent, labor expects, capital expects, organization expects. Clear. That means whenever we are producing these goods, we are using factors of production. For that, we need to pay money. So that income earned by the factors of production is what we call income method. Which method? Clear. So remember, value is added in the means of production. To produce, we have factors of production. They are paid factors of production. End of the day, this factors of production belongs to whom? Households. Household is the one who is owning the land. Household is the one who is working. He is only getting the wages. Household's money, that means whatever savings was kept in the bank, that is given as a loan. Even business organization is started by a household. So same factors of productions are owned by household. So they earn the income. When you get income, will you sit silent with that money? No. I will spend. When I'm spending, that is what we call expenditure method. That means we are disposing for either consumption or either investment. Either I consume. See, in disposable income, either I will consume or either I will save. That savings is nothing but going again for investment purposes. So either we are going to consume or either we are going to invest. So in short, again we are going to spend money from the incomes earned. When you are spending, that means again demand created, na? Production happens. Because of production, income generates. Income generates, expenditure happens. Expenditure, again production. That means this is a loop. First, production takes places. Second one, distribution takes places. Third one, disposition. So PDD. What is the shortcut? Production, distribution, disposition. What is it? Production, distribution, disposition. This is the circular flow of income. Production, distribution, disposition. So production phase, that is firm is producing goods and services with the help of factor services. In the second one, income phase. In the income distribution phase, factors of productions are paid factors. Which factors? They are the paid factors of production. And in the expenditure phase, we are spending money on what? Buying goods and whatever income that we earn, out of that income we are spending. So that is a disposition. What is it? Production, distribution and disposition. You can take where it is, like I can't find anything.
It's not charger connected to
No.
there's the Arivupro 151. This is the charger that I
TV got disconnected. How to get it down. Connection. We wear the school uniform anywhere else. Then it is not, that uniform is not applicable for all the purpose, only for using one purpose.
Hello. Yeah.
Online student, there is some technical issue. 2 minutes. They will sort it out. Is it back? Okay. Okay. So we spoke about the circular flow of income. So what was that circular flow of income? Production, distribution, and disposition. So production takes places in the process of value addition. See, in the production phase, firm produces goods and with the help of factor services. In the income or the distribution phase, flow of factor income. What is it? Flow of? Will be in the form of rent, wages, interest, and profit from the firms to the household is going to occur. And in the expenditure or the income received by the different factors of productions are spent on dash consumption of goods and services, or if not, you will invest them. Now the expenditure leads to further production. That means again step 1. So this process continues. First comes with production, next comes with distribution, third goes with clear. So this is the flow, and I will come back to this particular table later, because see, we need a different data for different methods. It is not the same data. One single information will be given, we can calculate all the 3 methods. No, that's wrong. We need a different set of data. Which data? See here, each of these different ways of looking national income suggest a different methods of calculating, and that requires a. So what is the different set of data? Let us understand. Very first one is value added method. Which method? One of the most favorite question to ICAI. One small numerical they will give, and that is most easiest problem. See, every time whenever we are calculating national income, usually step 1 will be GDP MP. What is step 1? Yesterday we thought about that shortcut. If you remember, in that shortcut, what is the very first step? We convert this GDP MP to finally NNP, FC. So there are only 3 differences. We should know this 3 difference. Already we have experted that in the previous class. Now go ahead, let us understand value added method. Which method? See, in the value added method, the very first element what we speak is gross value added. Which value added? Gross value added at market price. This is also called as GDP-MP. What is it called? Now from the gross, suppose if I subtract depreciation, what do I get? Net. Now net value added at, that means we are just subtracting depreciation, we are getting NDP. Keep this. This should be the logic in your mind when I'm explaining this concept. Clear? Now, let us say, how do we identify GDP MP in value added method? See, simple formula here. Value of output minus value of input. What is it? Value of input. So, how do we identify the value of output? There are 2 elements. Sales plus change in stock. What is it? Sales plus change in stock. Clear? So these are the 2 elements which will speak about value of output. What is it? Value of. So how do we identify change in stock? Closing stock minus opening stock. Clear? And minus value of input. Value of input is also called as intermediate consumption. Which consumption? Intermediate consumption. Clear? So remember GDP MP. Value of output minus value of input. So value of output, sales plus change in stock. Value of input, intermediate consumption. Now this is the another favorite area to ICI. Just you have to remember this formula. How do we identify GDP MP? Value of output minus. If you remember water bottle example yesterday. To produce this water bottle, I will incur 150 rupees as a cost, but I'm planning to sell this at 200 rupee. 200 value of output, 150 value of input. 200 minus 150. That is value added. What is it? Value added. I just need a value added by the production process. When I say production process, in our country, the production is classified into three sectors: primary, secondary. That means the entire economy is divided into three sectors: primary sector, secondary sector, and now every sector is further divided into subsectors. See, there are multiple subsectors. For a time being, I've just taken two. Everywhere I've just taken what? But there are multiple. Now let's say every sector is further classified into what? Subsector. Again, every subsector is further classified into units. There are multiple units. Now let's take example. Shashikiran is a bench manufacturer. Manufacturer means secondary. In that, let's say, sir, furniture manufacturer, subsector 2. In furniture, sir, plastic furniture, wooden furniture, steel furniture, unit 1, unit 2, unit 3. Like this, it gets bifurcated. For me, most important is only value added. Which added? Now, I will come from the bottom of the pyramid now. A value added by all the units. Value added by? We will get to know value added by one individual subsector. Like this, value added by all the subsectors. We will get to know value added by one individual. Value added by all the three sectors in the economy. Will get to know gross value added in the economy. Which value added? That gross value added is nothing but GDP, MP. Clear? This is explanation of value added method. But how do we identify that GDP, MP, value of output minus value of output minus? Calculate this problem. See, such easy problems will come in the exam on this. Wait. Chapter 6. Yep. Question number 27. What is it? Calculate gross value added at market price. By the way, which concept is this? Gross value added. Value added method or product method. See what all information is given. Sales information is there. Opening stock information is there. Closing stock information is there. Intermediate consumption information is there. By the way, how do we identify the GDP, MP? Now value of output minus value of output is identified by using sales and change in stock. Sales value was given, opening stock value was given, closing stock value was given, intermediate was given. 1, 2, 3, 4. All information is given now. You can easily identify the value of gross value added. Now identify here. Take out calculator. So what is the sales value? 750. And closing stock is how much? 200. Opening stock is how much? 300. So 200 minus 300 is minus 100. Minus 100 in 750 is 650. So value of output is 650. Value of intermediate consumption. So 650 minus 250. Very difficult question this was. What is it? Very difficult. This is how usually such a silly questions will come. And that is what? Logic. If you know the concept, if you know the logic, you will crack it. So how do we identify value of output? Sales plus change in stock. What is change in stock? Minus opening stock. And instead of value of input, they will give it as intermediate. And in short, we get to know gross domestic product at market price. That is also called as gross value. From that, if you subtract depreciation, what do you get? Net value added. This net value added is nothing but what? NDP, MP. How do we identify NDP, MP? Simple, minus. Now, in the value added method, in the second step itself, they have converted Nirmala and T to factor cost. Clear? That means MP to FC conversion they have made. That means NDP, MP has been made as NDP, FC. What is it? Now, how do you convert market price to factor cost? Minus Nirmala and T plus a subsidy. And yesterday, national income definition. What was the definition? Net domestic product at factor cost plus NFIA. That itself was a definition. Definition was a formula extended in the form of theory. So we got NDPFC. NNPFC is what called as national income. What is it? NNP? But here, second alphabet is D. Here, the second alphabet is N. So what should you do now? That's it. See, they have taken NFIA at last. First step is creating GDP, MP. Next, minus depreciation, that will get NDP. Gross value added, net value added. Next, they have converted MP into FC. That means net value added at factor cost. What is it? Even in the definition, they will speak about net value added at factor cost. They are not speaking about the gross domestic product at market price. First and foremost, they are speaking about what? Net value added at. How did we get this net value added at factor cost? First, gross value added at dash price, market price, converted that into net value added at market price, MP to FC conversion. So in short, see, logic is simple here. Wherever we go, it doesn't matter. We will start from where? Ultimately, what we should get? That is national income. See, in between, let them convert MP to FC in step 2 or step 3. How does it matter? For me, starting point is, ending point is, and we know how to convert that. Only 3 differences are there. So simple logic, how to identify GDP MP we should know. What is it? How to? GDP MP we should know. See, this is the first way of asking problem. Even I have shown you in the exam question. They will give value of output and they will ask you to identify value of input. Missing figure. They will only give GDP value. They will only give output value. They will ask you to identify input, missing figures. Or else they will only give output and input. They will ask you to identify GDP MP. This is the first way of asking question. Now second way of asking question. Now look at the board. At last, usually in my material, at last, I will give such kind of numerical problems here. Problem number 4. This was inter-level problem. Which problem? And the same inter-level problem this time in Jan 26 attempt they have asked. One big table they will give and continuation 2 problems. See, I have shown you yesterday. MP to FC conversion, that problem. Not this. Wait. This is the one. See, earlier only in CA Inter they used to give like this big data and they used to ask 2 questions like this. Now even they started asking. They will give some big informations like this. And simple 2 questions they will give below. And you should know which informations to pick, which information not to pick. If you don't know which not to pick, you will take everything like Oreo. Lick it, dick it, eat it. Then CA means come again. So you should know what to take and what not to take. Clear? They will give one big information. Now what is that big information? Now observe. From the following data, calculate what? Gross national product at market price. What is it? GNP. Second alphabet is N means plus NFIA, national, not domestic, national, and a dash price. And using dash method. Now simple. See, primary sector, secondary sector. Value of output minus value of input. See, value of output of primary sector. How much? I have written in red color. Only value of outputs. Value of? Okay, 500 is the output value of primary. Next, value of output of tertiary. How much? Value of output of secondary. How much? We got output. Now, output minus input. Now, see here. Intermediate consumption of which sector? 400. So, 900 minus 400. This is value added by secondary sector. Next, intermediate consumption by tertiary sector. How much? So, 700 minus 300. Intermediate consumption of primary sector. 500 minus 250. Now simple. We got output, we got input. Subtracting it, we will get to know value added. Which added? By all the 3 sector. Primary, secondary and tertiary. Now adding all the 3 sector together. Gross value added at market price. Also called as 250, 500, 400. Put together is 1000, 150. In the numerical only, they have only given NFIA. How much is NFIA? Simple. GDP MP plus NFIA, but NFIA value is negative 1150 minus 20 11. That's it. This is another way of asking question. Simple questions it is. Clear? Since they are asking GNP MP, not GDP. If it was only GDP, then just add this 3 element. Only this 3 element. 1, 2, 3. That's it. GDP MP 1150 answer. So like this, they will give a table. They will ask you to identify GDP MP and GNP MP. 2 marks. So you should know logic. End of the day, they may ask any number of questions. When you know logic, when you have understood concept, you will crack it. Clear?
Yes.
Understood? Now let us get started. Next, observe. End of the day, we have to convert dash into dash. NNP, FC. That's it. This is value added method. Which method? Value added method comes to an end, and few things to be included, few things to be excluded. Here common sense. Already in GDP exclusion only I spoke. Second hand goods should not be included. See, sale of second-hand goods should not be included, but any royalty, commissions, margin should be. Even own account consumption should be taken care. We only produce, we only consume. Which asset? Fixed asset, other assets, self assets, and imputed rent of owner occupied. Let's say I have constructed my own building. In that ground floor, I am self-occupied. First and second floor I have given for rent. This ground floor, my own self-consumption, na? Shashikiran, rather than using for yourself, if you could have given this to someone for rent, someone for how much money you would have earned rental income in a year? Let's say 10,000 rupees per month into a year, 1,20,000. That means that 1,20,000 you are only self-consuming. What is it? That is called imputed rent. Which rent? Of owner occupied property. That means even that is self-consumption. Which consumption? Clear. Next comes income method. Most easiest. What is that most? Yesterday we discussed about FC formula. Which formula? What are all the components of the FC formula? Compensation of operating, mixed income of. If we only and only consider three elements, see, I am not going with depreciation, I am not going with NFIA. Let's assume that we will ignore these two. If I ignore these two, if I only consider these three elements, what is the outcome? Superb. NDP, FC. NDP, FC. What is that? Compensation of employee plus operating plus mixed income of self-employed. Clear? This is clearly NDP. But what is national income? NNP. Now simple concept. This middle portion D has to be made as N. So how do I do that? The second portion is N. So what should I do? Plus. That's it. We got national income. This is income method. First we are going to calculate what? First we are going to calculate NDPFC. What do we calculate? For after calculating NDPFC, we will add what? Completed. That is income method of calculating national income. In one single step itself, straight away we will get NNPFC. But in value added method, first step is GDPMP. What is it? And next we will convert that into NNPFC. But in income method, straight away opening statement itself, NNPFC, because FC formula is considered. By the way, what are the elements of FC formula? Three components. Compensation of operating, mixed income of. If we only consider these three elements, that is called as dash. Now second alphabet D has to be converted into N. How do you do that? Clear? How many of them did not understand this in your first attempt? Please raise your hands. Silly component. What is that? Silly component. Clear? So understand shortcuts. In GDP MP, that comes as a first step in which method? Value added method. But in income method, straight away first step itself is clear. There is nothing in this income method. Now what to include? What to exclude? Only income earned by the primary factors of production, land, labor, capital, and labor income, non-labor income, both. Labor income means I'm putting an effort and then I'm earning wages, salary, royalty, commission, employer contribution. Which contribution? ESI, PF. In your salary, PF deduction will happen. Your employee contribution will be subtracted in personal income. If you remember, national income plus transfer payment minus incomes earned but not received. That is employee. What is it? But here what we are giving is employer. What is it? Your boss, whatever that 6% he will contribute along with your 6% deduction, your employer contribution gets added in labor income. And what is non-labor income? Sir, I've invested on some company. They are giving dividends. They are giving non-labor income or still yet to give dividends, sir. Undistributed profits of corporate before tax. Next comes which income? Capital and labor is given by same person. Shashikiran starting his own academy. There I have only invested funds. I am only teaching. In that fees collected, I can't divide between this is for teaching income. This is for setting up of class. Doctor example. Doctor will only set up the clinic after MBBS. He will only give consultation. In that, let me say consultation fees. He can't say, okay, in this 100 rupee for giving treatment, 200 rupee for setting up of clinic. Can he say like that? That is mixed income of self-employed. So these are the inclusion. What is exclusion? Transfer payments, because it is not leading to production. Income from illegal excluded. Last but not the least, expenditure method, most easiest, and continuation is there in Keynesian. C plus I plus G plus X minus M. That's it. This is first step, GDP MP. What is it? GDP. Same to same. Like our value added method, step number 1. What is the step number 1? GDP MP. How do we get GDP MP? C plus I plus G plus X minus M. In this C, household consumption. Whatever spendings made by household to buy goods and next, business investment, government expenditure. If you remember, fiscal policy, chapter 5. Every nation has a fiscal as well as monetary. Fiscal policy has two important tools. One is government expenditure. Second one is, now we are speaking about that government expenditure. And X minus M, exports minus imports. Exports minus, clear. When this value is positive, that means net export. If value is negative, net imports. Negative value means we should only pay more money than receiving money. Clear. In this, C and G, what is it? Is called as final consumption expenditure. One from the household, C. Second one from the government, G. In household, you should be remembering only one point. That is important. If any household invests money on constructing building or any buys any property, that is not called as consumption. That is called investment. What is it called? That gets excluded. See, land and residential building purchased or constructed by, that will not come under C. It will come under I. See here, expenditures on construction by both business as well as households. And same way, if you are buying jewelry, any artwork, even that will come under investment. It will not come under consumption. It will not come under. See, this they may ask a theoretical question. They may not ask in the numerical problem. They will ask in the theoretical question. Clear. Next comes I. Here. Gross domestic capital formation. See, first component is what? Final consumption expenditure in the two elements, C and G. What is it? One is private final consumption. Second one is government final consumption. Next, gross domestic capital formation is I. Next comes net exports. As I said, X minus M, if it is positive, net exports. Negative, net imports. Exports minus imports. Clear? Adding up of all that component. Final consumption, expenditure, C plus G. This is I. When all you add this four components, what you get is, what is national income? Conversion of GDP MP to NNPFC, you guys are already expert fellows. So step number 1 is only and only identification of what? GDP MP. See, in value added method, expenditure method, step number 1 is calculating GDP. Only in income method, straight away, step number 1 is NNPFC. Clear? That's it. These are the expenditure method. Let's go to numerical. One numerical problem we will solve from the expenditure method. You will only understand. One sec. Problem number 2. Calculate GDP MP. What does it calculate? You only do it. Calculate GDP MP from this. Most easy. And later, identify, go till NNPFC. See, first calculate GDP MP. From GDP MP, go to NNPFC also. Calculate GDP MP. From there, also identify NNPFC. Done. Answer. GDP MP. GDP MP. 5,000. See, CIG X minus M. We just have to add that component. 5,000. And NNPFC. Anyone unable to solve it? Anyone found it difficult? Yes, no respond. No, able to do it. So we completed with the 3 methods of calculating national income. So now after this, all chota mota things. Only the theory portion. Which portion? See there, system of regional accounts in India. Like how we are calculating national income, we will also calculate state income. Which income? And we'll go inside the state and we'll also calculate district level income. Which level income? And both the state income and district level income is calculated by the State Directorate of Economics and Statistics. Who will calculate that? Of Directorate and Statistics. That means we'll calculate net state domestic product. That means state GDP and per capita income of the state. Again, state GDP divided by population of the state. That will give us a per capita state income. Here, net state domestic product. Both of these are calculated by whom? State Directorate of Economics and who will assist them to prepare? Central Statistical Organization. See this word, assist, prepared. This is where exam question comes. So be prepared. These 2 most repeated questions in the exam. Clear? And there are certain central government transactions or central government administrative services which cuts the state border, like railway, which travels from one state to another state. Telecommunication services, government administrative services. Now you cannot allocate the funds only and only to one single state. Now you have to divide this between the 2 states. Such transactions are called supra-regional sector. Which sector? And they will be divided based on relevant indicators. Which indicators? And this is the most repeated. 1, 2, 3. These 3 are the most repeated questions under system of regional accounts in India. Clear? Next, GDP and welfare. See, what we call gross domestic product and real GDP was called as economic well-being in the country, but in reality they are not. Why? There are certain parameters which we don't consider while calculating national income at all or while calculating GDP. For example, income distribution and GDP per capita. Let's assume for a time being, I'm taking one fictitious example. If per capita income of India is 30,000 rupees per month, 30,000 rupees. In village, if you get 30,000 rupees month, you will live like a king there, like highly sufficient money. But in city like Bangalore and all, sir, 30,000 not even enough for 2 weeks. With same per capita income, different standard of living in different places. Technological advancements. Because technology is going up, your production capacity is increasing. It is not contribution made by the laborers. Because of managerial innovation. What is it? Managerial and technological upgradation. And there are some illegal transactions which is not included. Now, why? Because they are illegal in nature. Evasion of tax or economic bad. Suppose in your country day by day, if all this illegal betting, gambling, auction sales, if these kinds are increasing, good to economy. But did you include any of this in GDP? Then how do you call it as economic welfare when these kind of crime things, these kind of illegal things are inside the nation increasing day by day? Not good to economy at all. Next, non-market and non-economic contribution. See, non-market, that means your mom preparing breakfast at home, no doubt leading to production, but can you identify market value? But no doubt self-consumed, right? Self-produced and self. But still we don't include this. Why? Because market value cannot be decided. And next, non-economic contribution. People will do a NGO activities, non-economic activity, no doubt leads to production. Again, market value cannot be decided. But even in life, that non-economic activity is important. Helping your mom at kitchen, helping your brother or sister in their studies. Or let's say, sir, I will go with some NGO. I will clean some villages. I will clean some lake. We will do some particular social service activity. That is also good. Now, did you anywhere include this in your GDP? No. We are leaving out. And leisure time, they say that if at all we give holiday, leisure time, we are losing out potentiality to produce more. In China and Japan, not 12 hours is the working hour in a day. In India, it is only. In that 8 also stupidity, we work proper for 5 hours, 3 hours time pass. We say that even if we can able to produce how many hours? Our GDP will go up. Boss, leisure time is also important. You cannot make him like machine. Work like a machine. Leisure is needed. Next, economic traffic congestion, crime rate, pollution, if these things are increasing day by day in your country more and more, is it good to economy? Voluntary work services rendered without, that is non-economic contribution. See, all these elements like this, still more factors are there, one by one examples. These are never included in GDP. So I can't call GDP and welfare as one and the both are inadequate measure. What is it? See, same limitations and whatever we discussed, same pointer. See, inadequate measurement of welfare, production hidden from government authorities because it is illegal, non-market production, non-economic, leisure time, economic bad, voluntary services rendered without. And this, most of the repeated question. What are all the conceptual difficulties of national income? See, by the way, what is the definition we speak for national income? That is lack of agreeable definition. That is inadequate. Definition itself is not correct. And no difference, proper difference is created between final goods and, suppose you will go and buy milk at your home for your home as a customer. That is final good. Suppose if a milk shop owner or let me say sweet shop owner goes and buys intermediate good. So which is the proper final good, which is the proper intermediate good? That differentiation is not there, and there is a problem with transfer payment is never included in national income, but government is paying lot of compensations, transfer payment like this, right? Then where are we calculating that? Service of. We said that only produced of this year goods we will consider in national income. Let's say car is manufactured in 2020. Car met with accident in 2026. Spare part manufactured in 2025. Whatever car, it has met with an accident. Let's say that front bumper has been damaged. Now you are replacing that bumper. That bumper is manufactured in 2020. Car was manufactured in 2020. Service is given in 2000. Now what to include, what not to include? Because you say only present year production. Which year production? Service of durable goods is another problem, and valuing the new goods at the constant price. COVID vaccine example. Every time we don't have a base year price, and valuation of government services like policeman service, soldier services. We can't quantify the quality of work done by them, and then we are paying. We are only just paying fixed salary. Which salary? Like whatever data we get, that is not reliable data. Our own people, see, you guys only, best example, while joining college, they will have something called as income certificate of your parents. In reality, that will be 10 lakh rupee, but in income certificate shown as 2 lakh. Reality. How do you believe on the data now? Next, presence of non-monetized sector, non-economic activities are there, self-consumptions are there. How many of them will come and disclose, yes, are you only produced, are you only consumed it, self-consumed value? You can't. And illiteracy and ignorance, occupational classification between primary, secondary, tertiary is not classified properly. Next, fixed cost, CCA calculation. How do you identify this is the exact depreciation in economics? In accounts, you have straight line method, written down value method and all. In economics, which method? Nothing mentioned. Na? Then how do you identify this is the exact depreciation for this present year? These are the challenges in calculating national. Okay, sir, you're tuppifying so much. Is there anything useful from this? Yes. Why? International comparison. How we are performing. How our neighbor Beggarstan is performing. We only compare with those countries who are not even fit for comparison. Little right you compare, you are an anti-Indian. You are an anti-Indian. If you compare with China, anti-Indian. Pakistan, Nepal, Bhutan, yeah, India is performing well. 4th largest economy in the world. Wow, nice. With respect to GDP alone. What is it?
GDP.
Not with respect to per capita income, standard of living, or in terms of income earning capability, or in terms of medical facility, in terms of job security, nothing. Only we compare with production. Why? GDP and welfare is totally inadequate measurement. See, that is what, when we are comparing, we should compare with everything. Comparing with one simple parameter and saying, wow, we are growing, we are better. What bullshit. So when you are comparing with your sibling, compare everything with them. Only why? Only with marks. See, yes, sir, in my home, especially it happens. See, already people have experience, personal experience. Same with countries. And we will get to know what is the level of our year by year, is it growing or not, and how are we distributing the income in our country? Simple. Rich is becoming more richer, and poor is becoming much more poor. See, Adani, Ambani, everyone is becoming much more big billionaires, multi-millionaires and all. By mistake, if new billionaire comes, Nirmala aunty, next day 250 crore tax notice. Physics wala. Example. Next, inequality in distribution of income and wealth, we will get to know. Then what government will do? Government will come with the policy to eradicate that inequality. Okay, we'll believe. Next, we'll come up with economic welfare. So government plans, programs can be made in a correct manner, and this brings a national income statistics in our country, how much population is there, where they are living, what is their income earning capacity, how much they are demanding, all the statistics will get to know, and we start getting international, and also it will help us to create policies for growth and control the and to forecast our economic performance for next 5 years, what we should become, what all exploitation we should do our people, how to make our people bakra, all this government will decide. That is what in reality is happening. See, HSRP number plate, they said mandatory. Many people got it done. Now they are saying it is not mandatory. In Karnataka, it is a failure project. You go back to IND only. See, they will bring new rule. People won't follow everything. After 2 years, they will declare not required. Then why the hell did we follow this from 2 years then? That is what. Planning for economic growth and development, economic forecasting, next 5 years down the line, how to make our people, let me say, suffer, how to make our people's life more miserable. All this will do proper forecasting. See, these are the usefulness and significance of national income. I was just doing comedy, don't take that serious. In exam, don't write in opposite manner income. Clear, huh? So these are the useful and significance of national income. By this, chapter 6, unit 1 comes to an. So next comes your most favorite topic, Keynesian theory. Which theory? Interesting topic here. More of mathematics, less of economics. More and more of maths only here. Mathematics. Okay, let us get started. Okay, see, extension of expenditure method. Which method? So what did we study there in expenditure method? C plus G plus X minus. Now same thing. We will call this as aggregate demand. Which demand? 1 second, man. Stylus is not working. Ram, I will show it. Wait. Okay. Now, C plus I plus G plus X minus M. What we called it as what? GDP? MP, na? So, same in Keynesian theory, we will call it as AD side. Which side? Aggregate demand component. Which demand component? See, if at all we only and only consider C and I, this is two sector model. If at all we consider C, I and G, this is called as. If we consider C, I, G, X minus M, all the components, 4 sector model. Clear? So, 2 sector, 3 sector. With that, one more important topic, investment multiplier. So, total 4 concepts are there in this unit. 2 sector model, investment multiplier, 3 sector model, and so before moving ahead with this unit, there is one basic assumption. Without this assumption, you can't understand this unit at all. See, till 1930, till when? We used to follow classical economist theory. Which theory? Classical. So what did this classical economist said? Economy will always achieve full employment equilibrium. Which employment equilibrium? That means at this point of equilibrium, we will be having full employment. That means whoever is ready to work, capable to work in the country, everyone are employed. Unemployment problem is almost to zero. What is it? Unemployment problem is? And we are producing at full employment level. And we are considering x-axis now. X-axis not only represents quantity, it also represents income. What does it represent? Clear. Full employment level of output, full employment level of income earning. That is what national income. Which income? At the full employment. And full employment is always achieved. What is it? At the point of equilibrium. That means no intervention of government is required. Economy will self-adjust. Economy will without any government involvement. And we always have dash employment. Full employment level of national income at the point of. But after Great Depression of America, 1929, this condition was unable to be fulfilled. And there was no solution found by this classical economist. Next in 1936, which year? John Maynard Keynes. He was the person who came up with this concept called as counter-cyclical fiscal policy. Which policy? That means he said, see boss, classical economists, like how you are saying, Allah, economy will always achieve full employment equilibrium. That may happen, or either it can be lesser than full employment equilibrium like this, and the economy will still find unemployment problem. Which problem? Or economy, we can go beyond full employment equilibrium and we can't even produce beyond the particular level and we may have to increase price, which goes up with the inflation. So either full employment or may not be the full employment. Anything is possible. But what you guys said, always and always it will achieve full employment. It will not happen. And depression occurred because of less than full employment. Less than. Why? People were not spending sufficient money. People were spending lesser money because of the demand went down. Demand than what was required to achieve equilibrium. This portion is unemployment. This is what happened in Great Depression. So simple concept. Keynes said economy may achieve full employment equilibrium or may not achieve. There is no rule that every time it will achieve a full employment. Either it can be less than full employment or even it can be clear. This is the basic concept. Without knowing this, you will not understand 2-sector, 3-sector and 4-sector model. Clear? Now let us get started with the 2-sector model. Which sector model? Now simple concept. We should achieve equilibrium. That means AD should be equal to. Now AD component is important for us. The whole Keynesian theory will focus on AD side. Which side? C plus I plus G plus X minus. This is AD component. Which component? Now in the 2-sector model. Which sector model? Only and only C and I is present. Which is present?
C and I.
And remember, this AD component is an expenditure side. Which side? And AS component is an income side. That means when you are earning income, what you will do with that money? Either you will consume or either you will save. Clear? Now C and C gets cancelled. That means what is left out? That means whatever savings you create, that is what you invest. So I is equal to. Yes. So this is the 2-sector model equilibrium, and national income equation will be Y is equals to C plus I. Y is equals to. That means instead of writing C plus S, because S is equals to I, rather than writing as S, we will write it as C plus I. That's it. Clear? See, Y is a income side. Y is which side? See, this is AS component. C plus I is a AD component. See, equilibrium only we are representing still. Clear? So what is national income equation in 2-sector model? C plus I. Now C has a equation. What has a equation? So before that, let me explain one more element for your better understanding. See, let's take up an example. This example plays an important role. Assuming I am earning an income of 15,000 rupees. How much?
15,000.
In that, every single month I have to spend money now. Let's say I am living in a rented home. Every single month I should pay the rent of 6,000. And my lifestyle expenses, what is it? Is another, let's say 7,000 rupees. What is my total consumption? 13,000. So in this rent is an autonomous part. That means whether you earn 15, whether you earn 10,000, whether you earn 20,000, every month how much rent I should pay. But my lifestyle expenses is induced. Now this depends upon income. My A doesn't depend upon income, but B is dependent on. That means if my salary from 15,000, let's say if it get increase it to 20,000, you tell me, will I still spend only 7,000 on shopping, spending, food, going outside? No. Definitely I will increase. Now let's say, sir, I am doing that 10,000 rupees. And rent paid is how much? Now my total consumption is how much? Out of 20,000. So remaining 4,000 is savings. So this is savings column. And in the earlier, my savings was how much? 2,000. Now my 2,000 savings has increased to. My 13,000 spending has gone up to. And why did this happen? Because of increase in income. So how much did income change? 5,000. How much did consumption change? How much did savings change? Clear? See, this example will play a major role now. See, A component. A component is nothing but that rent paid. This rent paid is nowhere dependent on income. Whether you earn 5,000, 10,000, 20,000, 50,000. Every single month, how much rent you should pay? That is autonomous. This B is induced. B is? Now, this induced is dependent on income. Clear? Okay. Now, what is the formula for income? Hey, income formula, man. C stands for consumption. S stands for. Now simple. Now we will write equation, not formula. See, formula is easy. See, what is that formula? We know that income is equals to consumption plus. If I have to identify consumption, income minus savings. If I have to identify savings, income minus consumption. Do you agree?
Yes, sir.
See, this is the simple formula, but now I am speaking about equation. What am I speaking about? C is equals to A plus B of Y. C is equals to, in that A stands for autonomous, rent example, B stands for lifestyle example, and even this B, whatever we are calling B na, this B is also called as slope of consumption curve. What is it? Slope of consumption curve, or it is also named as MPC. What is another name? Marginal propensity to consume. And what will be the formula for marginal propensity to consume? Change in consumption by change in income. And value of MPC will be always between 0 and 1. Between? Clear? Now, same to same. We have one more formula, that is APC. Average propensity to consume. Total consumption. What is it? Divided by total income. Total consumption by, that means in short, it is C by Y. What is it? That is the formula. Again, same to same. APC value will also be between dash 0 and 1. So this is the logic which you should remember. Clear? Next. Savings is complete opposite of consumption. So savings function will be minus A. What is it? Plus 1 minus B of Y. Anyone having doubt in this equations? Clear? Again, 1 minus B. Whatever this 1 minus B is there, Allah, this is called as induced portion, or also called as MPS. What is it? This is called MP. Yes. Clear? Or else this is also called as slope of savings line. What is it? Slope of savings line. Now MPS. What is it? Change in savings divided by change in income. Even the values will be always between 0 and most important, remember, MPC plus MPS put together value should be equal to 1. Same way, APC plus APS value put together should be equal to. Now what is APS formula? Superb. Total savings divided by total income. Clear? That is nothing but S by Y. And remember, this is the logic. If you don't remember this logic, you will not be able to solve the numerical problems. And most of the areas, problems are coming from APC, APS. From where? APC and in exam question, I can show that. APC calculation, APS calculation. Rare of the rarest chances, MPC and MPC, MPS component will come in investment multiplier calculation. Where? There they will club with investment multiplier. Clear? This is two sector model. Which model? Okay, wait, let me show the numericals. Solve the numericals better. Chapter 6, 1 second. See here, question number 54. What will be the total income if the value of the average propensity? They have only given APC value. That means missing figure calculation. What calculation? And total consumption is given. How much is total consumption? What is the formula of APS? Total consumption by total income. APC value they have only given. Consumption value they have given. We need to identify the income. Why? Simple. It will be 0.45 is equals to 900 divided by X. X will come to LHS. 0.45 will come to RHS denominator. 900 by 0.45. Clear? See, you should remember the formula. That's it. Nothing big over there. Wait. One more question is here. Economic parameters, real income calculation. See here. Question number 30th. When you see that word ratio, what do you mean by that? Formula. Formula is given in the form of statement. Total consumption to total income. C by Y. What is C by Y? Either they will ask numerical problem or the formula itself will be asked in the form of a statement. Chapter 6. Chapter 6. Chapter 6. Inflation. Yesterday we calculated that. MPC plus MPS put together should be equal to. Say which of the following is true with respect to the relation of marginal propensity to consume, marginal propensity to, as per the Keynesian theory of deciding national MPC plus MPS put together 1. Yeah. See, either question comes from the formula or question comes from the see, national income equation, two sector model. What is two sector model? C plus I, take it y is equals to C. In the place of C, what is it? 10 plus 0.5y plus 200. That's it. 0.5y will come to LHS. So y will going to become 1y. That is 1y. 1y minus 0.5 will be 0.5y is equals to 10 plus 200. How much is 10 plus 200? 210. So y is equals to 210 divided by 0.5. Answer. Clear? See, like this silly questions will come. All simple questions will be there. Two sector model is the most easiest. At most easiest. This is investment multiplier question. Next, I will speak about this. Chapter 6, chapter 6, chapter 6. One second. Let me show the recent questions. Leakages. No. This is chapter 3 question. Recently, see, in the recent attempt also, they have asked from value added method question. Value added. Sales, opening stock, closing stock, GST means indirect tax, intermediate consumption, multiplier, 4 sector model multiplier question it is. Calculated. See, already we know S is equals to I. What is it? We identified the equilibrium question. S is equals to S value is given, I value is given. So simple problem. Wait, let me erase this and let me write that for you. See, what is the information? Savings is minus 20 plus 0.5i. I is how much? 100. We know the logic. What is the logic? S is equals to I. Now, in the place of S, we will write it as what? Minus 20 plus 0.5i is equals to 100. So, minus 20 will go to RHS. So, it will become 0.5i is equals to 100 plus 20. So, y is equals to 120 divided by 0.5. So answer will be 240. So income is 240. But see the question, what is that they are asking in the question? Consumption. What is the formula for consumption? Income minus savings. So income just now identified 240, savings I is equals to S, that is 100. So answer is, so consumption is 140. That's it. But most of them in a hurry, they went and marked answer 240. 240 was income, but the question they are asking is, so read the question proper first. Clear? Understood? See, this is how such a easy questions are going to come from the two sector model. And see there, they are asking, this is most easiest, common sense, income, national. That means AS component, na? AD is expenditure, AS is income. What is that income formula there? C plus. See there? National income of the economy, which is either consumed or either same to same formula. We said disposable income. Disposable income is also C plus. Instead of S, we can also write it as I. Same. See, you know the logic. They will play around with the logics. That's it. Nothing much they can ask in foundation level. See, national income. Income means Y. AS component. Which component? Aggregate supply. Nothing big it was. Clear? So this is two sector model. Which model? Clear? See, in two sector model, there is one more area where actually you guys will go wrong. That will be in terms of this logic. In the table, straight away, observe. Okay, wait, do one thing. Calculate this. Calculate this. 1 second. Calculate. You guys only calculated. See, observe. Income is 0. I am not even earning any income. Consumption is how much? That means autonomous, na? Even though I am not earning income, still I should spend. That means savings will become minus 50. How much it will be? That means from my past savings, I should take out the money. Next, income is 100, but consumption is So minus 25. Year 0. Year 300, 275, 25, 400, 350, 4 and 500, 420, 425. Now what is the formula of APC? Total consumption by total income. Consumption 50, income 0. 50 divided by 0. Math error. Now this will be exam question. Whenever income is 0, whenever, what will be the average propensity to consume? Infinite. And they have asked once. When income of a consumer is nil, income of a consumer in propensity to consume will be dash. Option A increasing, option B decreasing, option C 0, option D it cannot be determined. Cannot be determined. That is infinite. Even such silly questions they will ask. They will simply confuse you with the logic. That's it. Nothing. Next, observe. Income is 100. Consumption is. So C by Y. Consumption 125. Income 100. Answer. How? How? Clear. Next, 200 by 200. 1. 275 by 300. 0.91. 6. Next, 350 by 400. 0.875. Next, 425 by 500. 0. Now observe, whenever income is increasing, 0, 100, 200, 300, 400, what is happening to average propensity to consume? Decreases. Whenever income increases, APC decreases. But twister comes in MPC. Calculate MPC. First one you can't identify, undefined. Now changes in consumption, 50 and 125, changes. 0 and 100, differences. 75 by 100. Calculate for other values also. Did you get the same answer? Whether income increases or decreases, it doesn't matter. MPC remains. Once they have asked this question, when income increases, MPC will be dash. Option A increase, option B decrease, option C constant, option B all the above. Most of them wrote, you know what? Income increase means MPC decreases. Shashikiran said negative relation. Hello, that is APC. What is that? The question was from MPC. Constant. APC, MPC. Be careful. Whenever income is 0, whenever APC will be infinite. Whenever income goes up, APC will be decreasing. And connection to this APC, there is one more question they can ask from income elasticity of demand. Which elasticity? Income elasticity. When income of a consumer increases, income of a consumer, proportion of consumption will be dash. Proportion of consumption. They're asking what? Proportion of consumption. That is mean, look at the board. I know most of them are getting confused here. Now let's say income. This is income column. This is consumption column. This is savings column. Let's say income is 15,000. Income is, we are spending 12,000. Let's say we are saving. Next, income goes to 20,000. No doubt my consumption will increase. Let's say it will increase us to 15,000. How much? And savings will become. Let's say my income goes to 30,000. Now my consumption, let's say, goes to 20,000. Clear? Or why 20 straight away? It has become more. Okay, let's say 18,000. How much? 18,000. Now savings will become 12,000. Sir, now my income goes to like 50,000. Okay, what is it? 50,000. Sir, my consumption is 22,000. Savings will be 28,000. Sir, my income goes to 70,000. Now let's say my consumption is 30,000. My savings is 40,000. Now, no doubt, whenever income goes up, consumption is also increasing, savings is also. But proportion means percentage. What does it? Proportion means? Now take out calculator. 12 by 15 into 100. That means 80%. So remaining 20% is savings. Next, 15 by 20 into 100. That means, see, earlier I was spending 80% of my money. Now I am spending 75%. Next, 18 by 30 into 100. 0.6. Next year, 0.4. Next, 22 by 50. 0. Year 0.6. Next, 30 by 70. 0.42. Okay, wait. We will do one thing. We will reduce it much more here because again it will feels like increasing. So again, it leads to confusion for you. So let's say you are spending some 28,000. How much? 28,000, and here it is 42,000. Now 28 by 70. 0. Let it be 0.4, not a problem. What? Make it 27. Make it what? 27. Better. 0.38. That means, observe, no doubt your consumption is also going up, but percentage of spending is coming down. This is what APC concept. Which concept? Average propensity to consume. Propensity. What is it? Even they can connect this with income elasticity also. When income of a consumer increases, proportion of consumption, what is it? Decreases. If they just as consumption, if income increases, consumption of a consumer will also increases. But proportion of consumption, 80%, 75%, 60%, 40%, 38%. Clear? So read question carefully first. Don't be in a hurry to answer. First understand question. What is that they are asking? Most of them will not read. Most of them will not understand questions. Straight away you will be emotionally answering it. That is where you will end up losing the marks. Clear? See, like this they can interconnect. Proportion of consumption, that means average propensity to consume. Same concept. We studied in 2 units. Income elasticity also we have studied the same. And Keynesian theory also we have studied but still students end up doing mistake. Clear? Understood? Now, these formulas are important. Whatever we have discussed, same to same I have given in the formula. But this one, ICU batch students, kindly write this down. I will explain. When I come to investment multiplier, these formulas will play the major role in investment multiplier concept. See, there is a new formula to identify change in income, change in consumption, change in savings. See, what is income formula? C plus. Yes. Can I say change in income will be change in consumption plus change in savings by referring to this formula? Very much. Consumption was income minus savings. So change in consumption is change in income minus change in savings. Savings will be income minus consumption. So change in savings can also be change in income minus change in. Or else change in consumption can also be written as change in income into MPC. Change in income into. Change in savings can be change in income into MP. Yes. Change in income into MP. Yes. And this connection is there with multiplier. K stands for multiplier. K is a multiplier value. Done? See, in a normal class, we go in detail, word by word here. We will explain every single element. We will be having one numerical problem. Okay, let's continue. Okay, already explained about this. See, same to same graph. See, 45-degree line is an income line. Which line? This was only C. Now, 2-sector model is C plus. Where C plus I and this 45-degree line intersects, that is the level of equilibrium. What is it? Level of? Clear? Now, this note, I explained now, initially, see, in Keynesian model, neither will say that we will always and always achieve full employment. See, Keynesian equilibrium with equality of planned aggregate expenditure, that is AD and output level, need not take place at. It may happen at full employment or even less than full employment or greater than. When it happened less than full employment, that is what happened during the Great Depression. And why did this happen? Because of insufficient spendings by the people. So this topic, this pointers, this was the main twister in the entire concept. They connected with Great Depression. What is it connected with? Clear? Now, solve this problem. First problem, very easy problem it is. See, 2-sector model. Income is given. This is Y. Autonomous is given. C, A. Investment is given. I. B has to be identified. That B is nothing but MPC. They're asking us to calculate what? MPC. Solve it. See, easy question it is. Y is equals to C plus I. In the place of C, what you should write? A plus B of Y. A value they have only given, na? Only B value you should identify. Now, what will be the equation? See, let me write the equation. You identify it. They have only given y. How much is y? 2500 is equals to a. How much? 300 plus b of 2500 plus I. That is 100. See, this is pure mathematics. Less, they said, less of economics, more of mathematics. Now, b value is nothing but MPC. And we know MPC plus MPS put together should be equal to 1. Opposite of that. That means 1 minus MPC. What is it? That will be MP. Yes. Clear? Understood?
Yes.
Able to do it? Inflationary gap and deflationary. See, simple concept it is. Already we have done in chapter 5 also. Inflation, that means demand is more, supply will be lesser. What is it? AD will be greater than. Now straight away let me go to the example. See, understand the graph. This Q star, which star? Is the full employment. Let's say in an economy, there are 1000 people. How many people?
1000 people.
Who can be employed. I have appointed all the 1000 of them. Let's say I am a laptop manufacturer. I can produce 50,000 laptops. How much? With the help of all the 1000 employee. But in an economy, demand is 60,000. Demand is?
60,000.
I can't produce beyond 50,000 because already full employment. I don't have an option of, let me say, appointing another extra people. Already we are at full employment. Equilibrium was supposed to be at this point F. But demand is greater than point F. Demand is at point G. Supply is at point F. So this gap is inflationary gap. Now what do? We can't produce. What maximum will do? Will increase the price. One who has the ability to buy at a greater price, only he will come and buy. And because of this, now my income goes up from this Q level to M, because x-axis represents what? Output as well as. Let's go back. Nominal GDP, real GDP. Same way. Nominal output, nominal income is increasing, but real output, real income remains same. Because of increase in price, because of we will earn more income. Clear? So now new equilibrium point E will get achieved. That means we can only produce 50,000. We can't produce beyond 50,000 because I have appointed already every single person. Full employment is there. I can't even produce beyond this. But demand is how much? We can only produce how much?
50,000.
Now let's say we have a classroom. Seating capacity is only 100 students. But more than 100 students wants to take admission. Now what Arivu will do? Okay, we will increase the fees. One who has the ability to pay more fees, only they will come and join. Now let's say we used to only teach 100 students. How many students?
100.
And fees was 2,000 rupees. How much? 2 lakh. Now we will say same 100 students. Instead of 2,000, now we will make the fees. We will earn. That means productivity is still same, na? Productivity did increase, but income, this is nominal. But real output is still the same. Real income is still the same. But nominal is increasing. See, this dotted line is nominal. Nominal output, nominal income is increasing. Why? Because of increase in price. Why did the price increase? Because of inflationary gap. Which gap? Demand was more than supply. Clear? Next, reverse. Deflationary gap. Now, this is what happened in Great Depression. We can produce 50,000 laptops by taking all 1,000 employees. But people are having insufficient spending. That means they're not spending enough money. So demand has come down to just 40,000. But I can produce.
50,000.
But demand is only.
40,000.
You should tell me how much should I produce now?
40,000.
Already I produced 50,000. In that only closing stock 10 is remaining. And next year how much extra I should produce? Only 30, na? Last closing stock 10. This year I should produce 30. Should I produce 50 or 30 now?
30.
Do I need more employees? Get out. Now my income will also go down. Output will also go down. Why? Because of insufficient spendings. People were not spending properly. Because of insufficient spending, now new equilibrium is achieved less than full employment. Less than. This is what happened in Great Depression. Demand is lesser, supply is more. AS is greater than AD. Because of insufficient spending. Because of clear, understood. And this connection will come in chapter 7, chapter 8. Inflationary gap and deflationary gap. By this two sector model comes to an. Now comes investment multiplier. Simple concept. Remember this formula. 1 by MPS. What is it? MPS can also be written as 1 minus B. In short, reciprocal of MPS. What is it? See, logic is what? We want people to spend more money, not to save money. We want people to. When people spend more money, whatever investments I will make, that will multiply more number of times and that will generate income. That will generate. Let's take one example. This is MPC column. This is MPS column. This is multiplier column. Now let's say people are spending only 20%, but they are saving 80%. Next, people will spend 40%. People will spend, sorry, 40 saving 60. Next 50% they will spend, 50% they will save. So next 60% they will send, 40% save. 70% they will spend, 80% they will save. 80% they will spend, and wait. Here we made a mistake. 30%. Here 20% they will save. Next 90% they will spend, 10% they will save. Sir, complete spending, zero savings. Now what is the formula for multiplier? What is the MPS value? Take out calculator. 1 divided by 0.8. 1.25 times. That means my money will get multiplied by how many times? That means people are not spending more. People are only spending 20%. They are saving more. Next, people started spending how much? Saving how much? 1 divided by 0.6. 1.6 times. Now money gets multiplied 1.6. Next, 2.5 times. Next, 1 by 3. 3.33 times. Next, now observe, when people spend more money, when people are spending just 50%, 2 times my money got increased. That means whatever investments I will make into business. Next, when people spend another 10% extra, this became 2.5. Next, another 10% extra. Suppose if they are spending 70, if I can bring Virat Kohli, Sunny Leon, Katrina Kaif and all, if I can make you Bakra and full advertisement, if I can make you to spend 80%, from 3.3, my money will multiply. Another little more, I will bring food bloggers and I will say, food is amazing, ultimate, extraordinary, Brahmandamay, Apdi, Ipdi and all we will speak. Full, and next day full hypo in front of bottle will make you to spend another 10%. Now, how much money will multiply? That means I want people to spend more. When they spend more, multiplier will increase. If they save more, multiplier will. That means positive relation with which concept? MPC. With MPC, we have a positive relation, but with MPS, we have a. So you tell me, should people spend more money or save more money? That is what? Direct connection with MPC. I want people to spend more. That means simple concept here. What is the formula of multiplier? Where people are ready to consume more. Where people are ready to? There we are ready to invest more. When we invest more, our income will increase. Our income will increase. This is the formula of multiplier. Or else simple formula to understand. Reciprocal of MPS. What is it? 1 divided by MPS. MPS can also be written as what? 1 divided by 1 minus MP. These are the formulas. And by using this, see, this is the main formula. By using this formula, can I identify change in income? Very much yes. Change in income will be multiplier into change in investment. That is what I made you to write it here. Observe. Can you see here? Multiplier into change in investment. That's it. This is multiplier concept. So when people spend more money, my investments will multiply more number of times. When I invested money into the business, change in investment will lead to change in income. By how many times? By, that is what is called multiplier. Number of times my income is going to increase. What is that? Number of times my, due to change in investment. Due to change in what? That is called multiplier effect. Which effect? See, simple. How many times my income will increase as a result of change in? And that is mainly dependent on MPC. Mainly dependent on, if people spend more, my money will multiply more. Clear? Positive relation. Which relation? Positive relation with respect to MPC and multiplier. Negative relation with MPC and multiplier. And come to this example. In this example, what is the maximum value of the multiplier? Infinite. When? When MPC is equals to 1, that means complete money is spent. Complete money is clear. Maximum value of multiplier will be infinite when MPC becomes. If MPS becomes 1,
There is no
undefined, na? We can't even define it. Like 0, it is almost like, see, if MPS is 1, 1 divided by 1, 1. That means multiplier is not happening. I invested 100 crore, I only got 100 crore only. There is no increase at all. That means I want people to spend more. Minimum value of multiplier 1. Maximum value of multiplier infinite. Clear? In short, reciprocal of MPS. What you should remember? Reciprocal of MPS. Marginal propensity to save. And there is a direct connection between dash and dash. MPC and multiplier. What is it? MPC and? Simple logic. We want people to spend more money. We want people to. Now, opposite to that, there is one more concept, leakage. That means whatever Shashikiran you are saying now, when people spend money, multiplier will go up. That will not happen endlessly. That entire propaganda of multiplier will slow down. When there is a concept of, see, understand what is leakage. Simple concept. When you are not spending money on present year produced goods and services. When you are not spending money on, let's say, sir, I am buying from closing stock or I am importing the goods. If this is the case, leakages will happen. Now just assume in the country, if everyone wants to buy only second-hand car, no one wants to buy new car, then what will a new car manufacturer will do? He has to remove everyone from the employment. He should close down his business, na? So if everyone decides to buy only existing good, then new production will not take place. New money will not come into the picture. So we don't want existing goods only to be sold in the economy. We want new production to happen. What to happen? That is when multiplier will get boosted. Or if you simply keep idle cash in your hand, will it put extra 100 rupee note, will put one more 10 rupee note as a grandson? No, it will not. And if you just pay money to Nirmala aunty, tax payment, your disposable income goes down. When your disposable income goes down, purchasing power will also. You will not buy more goods and services. So these are the, let me say, reasons for leakages. When you pay more tax, when you keep idle cash, when you buy goods from existing, that means closing stock. And even if you import, if you buy stocks and bonds already existing, now one person is selling, other person is undistributed profits of. Sir, I have invested on company has earned profit. Stupid fellow yet to declare dividends. If they declare dividends, you will get money. If they don't declare dividends, where will you get money? Next, debt repayment. Rather than buying goods, you are repaying your loan. That means you are not buying goods now. When you don't spend on present year produced goods, and this is important, when economy is already at, like our classical economists, they said now economy will achieve full employment equilibrium. Now, if you pump more money into system, already equilibrium, boss, 1,000 people are there, they are producing 50,000 laptops. Even people are demanding 50,000 laptops. Everything was going cool, but you invested more money supply. Now demand will decrease. Yaro intelligent fellow. When money supply goes up, demand will. When demand increases, now you tell me, can you produce beyond 50,000 laptop?
No, sir.
Inflationary gap, only price will.
Price will increase.
That means inflation will increase. When economy is already at full employment, economy is, if you pump new money into the system now, that will create inflation. That means only prices will go up. You will not make more profit. Prices will. That will eat in the name of inflation. So when economy is already at full employment, if you pump in additional investment, that will only create that is leakage. Income is not increasing. Only prices are increasing. Clear? These are the effect of leakage. When leakage becomes stronger, multiplier will decrease. So we don't want leakages to become stronger. We don't want what we want to become stronger. MPC. What is it? If MPC goes up, multiplier will go up. Clear? Understood? Say, when you are answering a lot, think, logic. Don't give emotional answers. ICAI knows whenever you come with emotion, you will always fail. So remember, when income increases, demand increases. But intelligent fellow, someone with confidence said, income increases, demand decreases. See, Andrena? Come again. Lay chartered accountant kono. Yenada? Chartered accountant. Ella jana opkombudtira solvagi. Next. See here. This is how numerical problems are going to come. Okay, wait. Let me take from the exam question only. If national income increases by how much? 500 crore to 2500 crore. Change in income how much? 2000 crore. Due to an increase in investment by 200 crore. So change in income is how much? Change in income is 200. Sorry, this is change in investment. Sorry, change in investment is 200. Change in income is, what is the formula of multiplier? Change in income divided by change in investment. Both information is given. And they're asking us to calculate what? MPC. See, first formula. Change in income by change in investment. Multiplier how many times? 2000 by 200. That means multiplier happened 10 times. They're asking us what? MPC. Now there is one more formula. 1 divided by MPS. MPS can also be written as, now just now we identified K. K is 10 times. So 10, 1 divided by 1 minus MPC. Can I write this as B? MPC can also be written as B. So same to same. Now this value will come to LHS. 10 will go to RHS denominator. Now 1 minus MPC is 1 divided by 10. That is 0.1. So 1 minus MPC is 0.1 goes to LHS minus MPC comes to RHS. So MPC is how much? That's it. This is how exam questions will be asked. Clear? This is the first way of asking question. Now, next way of asking question. Now solve this. You only solve this. I am not going to help. Problem number 11 and problem number 12. Both you do it. You only do it. Both you do it. Problem 11 and problem 12. In an economy, investment increased by 600 crore, marginal propensity to consume 0.6, total increase in income and consumption expenditure. That means change in income, change in consumption they are asking. What is formula for change in income? You wrote, I made you to write there. New formulas are there. Turn back pages. Turn back. All intelligent fellows of the class, turn back. K, multiplier into change in investment. New formula. I said now from this new formula problems will come. See, K into change in investment. That means now we should identify K value. Which value? K value first. Now what they have given? Increase in investment. That is change in investment is given. Clear? Marginal propensity to consume is there. This is B value. MPC. MPC plus MPS put together is, we know that. That means MPS will be 0.4. We know one more formula is there for multiplier. 1 by MP. Yes. That means 1 divided by 0.4. 2.5 times. We got K value. There is change in investment. So 2.5 into 600. We already got change in income. How much? 1000. Next they are asking consumption expenditure. That is change in consumption. Formula for change in consumption. Change in income into MPC. They have only given MPC, na? Just now we identified change in income, na? 1500 into 0.6. Use your brain. You have to use your brain. Next, solve this. 12th problem. See, 12th problem is also most easy. But you people will struggle here. See, change in investment, how much? Consumption equation is given. What is consumption equation? A plus B of Y. That means this 0.6 is B. What is that B also called as? MPC is 0.6. That means opposite is MPS. 0.4 is MP. That's it. Sir, in this they didn't give MPC only. What they should give? B is also called MPC, na? Identify. What are they asking us to calculate? How much increase will take place in the... That means change in income they are asking. What is the formula for change in income? Change in income. K into change in investment. Multiplier into change in investment. Multiplier identification is easy. MPC given. Opposite of that is MPS. 1 by MPS. Now 1 by 0.4. 2.5 times. So we got multiplier. Clear up. 2.5 times. Now next what you should identify now? Change in income. Investment is already given. 100 into 2.5. 250. That's it. We got answer. See, hardly it takes 30 seconds. When you know the logic, 30 seconds you will finish the problem. Only when you know when you don't know the concept, then you will be keep on striking, doing again, striking, doing again. So that is why practice makes man perfect. What is it? Practice makes. Got it? That is why I asked you to solve more and more questions. By this, investment multiplier also comes to an Khatam. Clear? Next, 3-sector model. Which sector model? See, in 3-sector model, now G will come into a picture. Which will come into a picture? Government. That is government expenditure. Now, first understand the equilibrium. Wait. AD should be equal to what? AS. What is AD component? Expenditure. AS component? Income. Now AD, it will be C plus I plus G. AS will be C plus S plus T. Now observe, whatever government collects in the name of tax, that is what they will be spending. Do you agree?
Yes, sir.
And the C and C gets cancelled. So ultimately this is going to be I plus G is equals to S plus T. We know that G is also equal to, this is balanced budget. What is it? Clear? Understood. Now whenever government comes into picture, three more elements will come into a picture. See, whenever we have government expenditure or government, wait, let's say government. Three elements. One is government expenditure, second one is tax, third one is transfer payment. Which payment? See, government expenditure is a AD component, tax is a AS component, transfer payment comes in disposable income, YD. Where does it come? YD. It will not come in the AD or AS. Clear? Now equation, national income equation will be much more simple. What is it? Y is equals to C plus I plus G. In the place of C, A plus B of YD. It is not just Y now because government is there, tax is there. Now what will be YD formula? YD formula is even more simple. Income minus tax. If there is a transfer payment, then only plus a TR. If transfer payment is not given, only this two component. That's it. Only and only two. Only if transfer payment is there, all the three. That's it. This is three sector model. Nothing big. In this, they will give one twister. What is the twister? They will not give the value of tax. Instead of giving this value of tax, they will give equation. What they will give? Equation. Wait, let me show that problem only. Observe. Capital T is equals to T dash plus small t. Why? T dash plus. That means autonomous part is T dash, induced part is small t. Induced part is clear. That means now there is a equation. Instead of writing income minus tax, what is it? Income minus? You should write this equation. And Bodmer's rule, whenever you are writing induced, decimal inside the bracket, positive will become negative. This is where you will go wrong. When you are writing the equation, instead of writing it as negative, you will still take it as positive. When you are writing induced portion inside brackets, positive will become negative. Clear? Now, try to solve this. See, there is almost new equation. See, whenever we derive, see, derivation will not come in the exam. See, this is derivation. See, C plus I plus G, three sector, in the place of C. What is it in the place of? We should write it as A plus B of Y minus T. See, T is written as equation. See, middle portion, instead of plus, we have to write it as minus. Now, when we cross substitute this, this is what the end answer. Now, observe the yellow shaded region. This is multiplier formula. Which formula? In general, normal formula of multiplier. What was the normal formula? 1 divided by 1 minus B. That means 1 by MPS. MPS can be written as 1 minus. When tax is given as a equation. What is it? 1 divided by 1 minus B of 1 minus T. 1 divided by 1 minus B of. See, actually there are three multiplier formulas. How many multiplier? Wait, let me take it from my normal material, which I will explain in the class. I have written it somewhere here. There are actually three multiplier formulas. See, one is a normal formula. Normal circumstance. What is it? Reciprocal of MPS. That is 1 divided by 1 minus B. Or it can also be called as change in income by change in. Now, when tax is given as an equation, see, three sector model. When tax is given as an equation or a function, 1 divided by 1 minus B of 1 minus T. Now, in four sector model, when import is given as function, like how tax is given as function, in four sector model, we have X minus M. In that, M will be given as an equation. That is called foreign trade multiplier. Which trade multiplier? And this time, Jan 26 attempt, the question has come from this foreign trade multiplier. Total, how many scenarios of multipliers are there? You need to remember the formula for all the three scenarios. And it is not about remembering, knowing logic. When you know logic, you will write the formula easily. Copy this down. This one is important. Copy this down. I will explain. When again I come to 4-sector model, I will show that multiplier formula. Write this. That is why we say in marathon class, revise and come. Second round of revision will be done by Shashikiran, not the first round of revision. Able to understand? And people who have a conceptual knowledge missing in this, sit, watch the video recording. Do not miss out. And usually easy problems will come from this area. It looks like very big things here, but concepts are very easy. Done? Also write this. 4-sector model multiplier is also called as foreign trade multiplier. This is my normal class notes, what I'm showing. I will write this each and everything in the class. I will make students to write down, solve problems, minimum 2 to 3 problems on every single formula, every scenario. Charan, did you solve this problem in Jan attempt? Done? See, in exam, they will either ask national income question from 3-sector or multiplier, anyone. They will not give both. If at all they are giving both, again, 2 continuation marks. That continuation questions will be there. Clear? Understood? Okay, let me show exam question. You do that. 3-sector model question. So this was 2-sector model question. And see here, what is the maximum value of investment multiplier? Infinite. When it will be infinite? When MPC is equal to 1. See, logic question. Circular flow of income question. PDD. Production, distribution, disposition. This already we did in the class now. Slope of consumption curve. Slope means B. What is that? B is also called as? See, concept related. APS question already we have done. Not in this attempt. Maybe May 25 attempt. Solve this. See, this is how 3-sector question will come. It is much more easier. In a 3-sector model, what is it? C is equals to 8 plus 0.6y YD. What is it? YD means income minus tax. Clear. Next, G is equals to T. That means balanced budget. How much? 10. So they have given the concept of C. They have given I is 60, G and T is 10. So in short, what will be the equation? Equation Y is equals to C plus I plus G. In the place of C, what you should write? 8 plus 0.6y minus tax. How much is tax? See, now listen, this is what I'm saying. Sometimes they will not give this value of 10 like this. Instead of giving 10, they will give equation. They will give the tax equation may also come. Be careful. That is why I also explained the tax equation. If that comes, multiplier formula will be different. 1 divided by 1 minus b of 1 minus t. Clear up? Their tax equation also changes. Now here simple. They have straight away given 10. So no worries, no confusion. Next, plus I. How much is I value? How much is I value, man? 60. Clear up? So 60 plus G, that is 10. Now solve it. Solve this equation. Now this 0.6 has to get multiplied with these two. So y is equals to 8 plus 0.6y minus 60% of 10 is 6. plus I will add this 2 together, 70. Now 0.6 will come to LHS side. So if it comes, y means one single y, 1 minus 0.6, 0.4y. So 70 plus 8 plus 78 minus 6. What is 78 minus 6? 72. So y is equals to 72 divided by 0.4. 1. So answer y is equals to 180. Option C. See, such kind of questions will come. By chance, if they ask tax as a equation, you should know how to solve it. Clear? So this was 3-sector model. Clear. Next, 4-sector model. Which model? See, 4-sector equation is also very simple. Now, exports and imports gets added. What gets added? Now, what is it? AD should be equal to AS. Now, AD component is what? Expenditure, or also called as injection. What is it? Will pump money into the system. AS component is or leakages. Now, what will be there under AD side? C plus I plus G plus X minus M. Now, go back. Turn back the concepts to leakage. Go back to the concept of leakage. In closing stock, I highlighted one more element there. If you remember, in closing stocks, past year goods, even if you import the goods, that is also called as leakage. What is it called? Wait, let me come back. Let me only come back to the topic. See here, existing stock. What is it? If you are importing the goods, even that import is called as what? Leakage. So that means this M should actually go to the RHS side. That means that is why minus M will be taken to RHS. Later it will become positive M. It will become what? Clear. As of now, we will be in the LHS, AD component only. Now, what is AS component? This will be C plus S plus T. What is it? C. C and C gets cancelled. Now, this minus M will come to the RHS. Why will it come to RHS? Because import is a leakage. It will be I plus G plus X is equals to S plus T plus M. This is 4-sector model equation or national income equilibrium. Now, equation will be C plus I plus G plus X minus M in the place of C. What is it in the place of? What do we write? A plus B of YD, not just Y. It will be Y plus I plus G plus X minus M. But twister. Now observe. In the place of M. What is it in the place of? They will give equation. What will be that equation? M dash plus small m y. What is it? M dash? Clear? They will give it in the form of equation. Now, when the equation comes, multiplier formula changes. Multiplier formula? What will be the new multiplier formula? 1 divided by 1 minus b plus m. This small m is induced portion. What is it? Induced portion of income, import equation. Which equation? Import equation. Now observe. In the recent attempt, they have given that induced portion of import equation and they have asked foreign trade multiplier. Which trade multiplier? See, if the marginal propensity to consume MPC, what is this? 0.6, that is value of B, and marginal propensity to import is 0.4. That means small m. What is this? Small m, 0.04. What will be the value of the foreign trade multiplier? Formula for foreign trade multiplier, 1 divided by 1 minus b plus m. So simple logic here. There is nothing a rocket science. 1 divided by 1 minus b. B value is 0. Plus small m, 0.04. Simple. 1 minus 0.6 is 0.4. 0.4 plus 0.04 is 0.44. So 1 divided by 0.44. How many times? How many of them did this problem in exam? Last attempt. How many of you have solved this problem in exam? Last attempt. Such a silly question. Conceptual knowledge. What is it? First understand the question. What is it? Understand the question. Sir, when you are doing everything looks easy, sir. When we go and sit only, all trouble will come. Why concept? What is it? Pustak mein nahi, mastak mein likho. That is why we say. I see, that is what I'm saying. Why did I ask you to sit and do MCQs? Come, ask doubts. I will be here only na. Till 9 o'clock I will be around in the break time. See, already 5-6 students every day. Whenever they see me around, ask sir, doubt. They're coming, they're clarifying. See, that is what more you do the MCQs, you will get the more grip on the subject. That is, so why am I opening the exam papers and showing? Silly, to be frank, silly questions. There will be no difficult question in economics, just tricky questions. What is it? Just not even difficult, only tricky. That is why I'm simultaneously saying, see, this is what question has come, this is what question has come, this is what question has come. Clear? Understood? Keynesian theory comes to an, see, in 4-sector model, if they ask national income equation, that will be much more easy. That is C plus I plus G plus X minus. It is less of economics, more of mathematical questions. Clear? Okay, for your example, I will solve all the questions of past 5 attempts paper of chapter 6. Let's do it. Okay, now have a look here. We will come here. From the first question, we will go cross check. Okay, chapter 4 it is, chapter 6, where all chapter 6 is there, we will do it. Chapter 2. Okay, this already we did in the class. S is equals to I. Next, this also we did in the class. Income is nothing but national income. Next, which of the following factors of production is not included? What is it? In the calculation of national income. Transfer payments. Where does transfer payment comes? Personal income, na? Pension on retired workers is a transfer payment. That will not come. Next, just now I did this. Next, net factor income from abroad. NFIA is dash. Negative. If NFIA is negative, what does it mean? That means GDP will be greater than GNP. That means GNP will be smaller than GDP. Solve this. You only solve this. Value added method, sales, change in stock minus intermediate consumption. Opening stock is 100, closing stock is 90. So 90 minus 100 it will be. What is it? 90 minus 10. Got it? Next. Which of the following is not included in the calculation of national income by using which method? Compensation of employees, wages and salary, mixed income, yes, rent, yes, interest paid on. No, we never discussed any of that. Option C. Which of the following is an example of leakages? What is that? Example. Okay, not an example, sorry. Which of the following is not an example of? From the dash stream, income stream, progressive tax, yes, when you pay more tax to Nirmala aunty, leakage. High level of liquid cash, that means if you simply hold liquid cash in hand, leakage. Demand for, yes, distributing profits of corporate, that is your income. How come leakage? No. Option C. Next, in national income, which of the following is considered as an? That means bad elements which will not be part of calculating national income or GDP. Voluntary services rendered. Yes, voluntary services means you are doing out of your own will. That is excluded. But here they are asking which is considered as voluntary service is not economic bad. Compensation of fixed capital. That means depreciation. Depreciation is not economic bad. Rent of cell phone. Imputed rent. That is not economic bad. Traffic congestion is economic bad, na? If day by day traffic is increasing in your country, is it good to economy? No, that is called as economic bad, which is never considered in calculation of GDP. Solve this. You only solve it. They are asking what? GDP, MP. Now observe there. What have they given? Operating surplus. What is it? Mixed income of self-employed, operating surplus, compensation of employee. Where did we find these formulas? FC formula. Which formula? And what is that they are asking first and foremost? GDP, MP. And also they are asking GDP. First identify FC only. Simple na, because those three elements plus depreciation. What is it? Plus. If you add 1, 2, 3, 4, you will get GDP FC. How much?
5,300.
Now how do you convert FC to MP? End market. That means Nirmala aunty present plus Nirmala aunty minus net indirect tax is given. NIT is given. Nirmala aunty symbol important. Nirmala aunty plus or minus So add 400 to the 5,300. How much? You tell me what was difficult in this. Only logic. Idanadru madidana Veda? In exam I am asking for them. Next, calculate real GDP. What is real GDP formula? Nominal into 100 by price index. See, real GDP divided by price index. Nominal GDP divided by 100. Shortcut to remember. Do it. It will be 450 into 100 by 120. That's it. Next, what does operating surplus includes? Rent, interest, profit. That's it. Man, such a silly questions, past attempt. Seriously saying, na 80 above, ಆರಾಮಾಗಿ ತೆಗಿಬೋದಿತ್ತು. 80 above scoring paper it was. Chalo, fine. Flip back your page. Now you do it. Remaining 4 attempts paper, you do it. Did you get the question papers?
Yes, sir.
Yesterday I said, na, you guys have to do it. All this chapter-wise bifurcation, ICU batch students. So my class, whoever attended my regular class, they already have this question paper with the chapter-wise bifurcation, with the answer marked and even answer key given everywhere with exam paper. Others, you have to solve it, sit and solve it. You can download it from ICAI material also, ICAI website also. You can download past exam papers. Do it. Sit and you have to do it. Clear? By this, national income comes to an clear. Now the time is 10:40, 10:40. We'll start back exactly at 11 o'clock, 1 minute. 11 o'clock? Take a break, come back. We'll start at 11 o'clock, 1 minute. We'll finish chapter 7. First, we'll go with budget. After finishing budget, we'll go to the unit 1, 2 and 4. Okay, so we are done with the chapter 6. Now we shall get started with the chapter 7. So first we'll finish with the budget. Then we will go with the unit 1, unit 2 as well as unit 4. Clear. So in the case of budget, only the first half of the chapter is most important here. Second half, especially from the expenditure, like Department of Expenditure, there, it is just a read-only concept. It will not take much time, maximum 20-25 minutes it will take to finish this. Okay, budget, it is an anticipation of income and anticipation of expenditure for the upcoming financial year. Which financial year? That means like financial year starts on 1st of April. Next upcoming financial year is 2027. What is it, 2027 and 28, for which budget will be presented on 1st of February, 1st of 2027. But the preparation for this budget will start 6 months in prior from presentation. That means from the month of August and September 2026. August and September. Now, who is responsible? Division of budget. What is it? Division of? They come under Ministry of Finance. So they will be sending budget circular to all the central government as well as the state government, administrative bodies, different ministries. They will say them, boss, give me your anticipated incomes and anticipated expenditure. So budget will act like a financial blueprint of the nation. And as I said, when is budget presented? 1st of February. Only during the election year, budget is presented twice. One as planned on 1st of February, second one after the new government comes to the power. Now the new actual budget is going to be presented. Only during the election year, budget will be presented how many times? If not only and only once. And this process of budget preparation has 3 steps. 1, preparation of budget. As I said, 6 months in prior it starts. Collection of data, preparation of everything, statement of budget, and next presentation and getting approved from the parliament. Presentation and enactment of a. Last but not the least, execution. It has to get executed from 1st of April to 31st of March. So as presentation of budget, first budget division will send a circular to all the ministers, states and union territories and autonomous body. They will collect information. They will collect and they will also conduct pre-budget consultation. That means they will meet various stakeholders, all the chief ministers of the state and industry people, agriculturists, social welfare, labor organization, Niti Ayog, economists. They will take their suggestions, if any. And then finally they will prepare the budget, and budget is mainly comprising of two elements. One, administrative process. Second one, legislative process. In administrative, they will speak about documents of budget, what all is there, and legislative process, getting it passed from the parliament. Now comes presentation. When budget is presented, mainly two informations will be provided about two important years. Number one, let's assume 1st of February 2027 budget gets announced. This will be for the upcoming financial year, that is 1st of April 2027 to 31st of March 2028. So this is for upcoming financial year. Which financial year? And this is going to be anticipation. What is it? What all that we are going to, let me say, incur as an expenses. Clear? And again, when we are presenting it on 1st of February, still 2 months is pending, na? February and March, for the ongoing financial year. What is it? That means which started on 1st of April 2026, which is going to end on 31st of March 2026. For this ongoing financial year, if there is any kind of revision, and also changes in their expectation, that means anticipation only. So information will be given on 2 years. How many years? 2 years. Sir, previous year, suppose, let's say for example, when we are announcing this budget, now this is still ongoing, yet to get completed, and this is for next upcoming. Already we have finished now previous year. Which year? What is that previous year? 2025 to 2026. We will give a report card. Which card? This is called as actual value. Which value? See, actual value will only come to the previous year. For the upcoming financial year, anticipation. Ongoing financial year, any kind of revisions or expected anticipations. What is it? Expected? Clear? In short, this actual value is for the previous year. Information will be only for the 2 years. How many years? 2 years. Main we need is next year's anticipation. This is the main focus. And revisions in the ongoing. That will be the part. Clear? See, same to same. Budgeted estimates of receipt and expenditure for the current year, what we are, and ensuring financial year, next coming year, and revised estimates. Which estimates? For which year? And only actual values of year preceding current year. See, legal language. Year preceding current. That means previous, na? In law and all, we never come and hit you straight away. We will indirectly come and hit you. That is what? Year preceding current year. What is it? And when is budget announced? And budget is called as a policy document that is proposing the policies and programs of the government. Now, budget speech will be done by the finance minister, Nirmala Aunty. It is comprising into how many parts? 1, macroeconomic statistics. That means what is the present income of the country, GDP, what is our poverty, what all eradication we are planning to do, what all exploitation we will do in the country. In short, all that information. And where you will get money from. Tax. We are going to suck from our people, like any new tax coming in, any modifications of the existing tax, or that is part B. Next, this is most important, mark it important. This is where exam questions are going to be asked. Budget document. Which document? So mainly there are 4 documents in budget. Out of that 4, first 3 is extremely important. First 3 is extremely important. First one, AFS, Annual Financial Statement. That consists of another 3 more. Consolidated, contingent, and public account. Here including article numbers is important. Which number? Sometimes GK question will also come from this budget chapter. Be careful. Next, demand for grants. That means which department, which particular ministry is asking how much for money for next financial year to implement any project. And next comes finance. What is a new tax that is introduced? Any modifications in existing tax? How government will get money from? That is finance bill. And statement as per FRBM Act. Which act? Fiscal Responsibility and Budgetary Management Act, and other 9 supporting documents will be there. In this, most important is AFS. What is most important? Article 112 of the Constitution. Even article number is important. Sometimes from the article number is only the question is going to be asked. Wait, let me show that questions. Chapter 7. Question number 90. Article 112. See, when you see that article number, you can straight away answer. Article 112 speaks about annual financial statement. So straight away from articles also questions are going to come. Be careful. Clear? So annual financial statement has three components. Which are those three? Consolidated, contingent, public account. So what is consolidated? Most important account of the government is consolidated. Even single rupee has to be withdrawn or single rupee has to be deposited. Parliament approval is needed. Which approval? So it is the most important of all the government funds. All the government expenditures are met through consolidated. Government revenues will come into the consolidated. Second one, which fund? 500 crore rupees will be always at the control of the president for any emergency. See, contingencies. What is it? Contingencies. That is uncertainties like tsunami, earthquake, COVID, any kind of emergency comes up. Now, we will use this 500 crore or up to 500. Up to. Immediate approval of parliament not required. Subsequently. What is it? Subsequent approval of parliament is needed, and whatever money we have used out of this 500, we should give it back from which fund? Consolidated fund. That is called contingent fund. Which fund is that? Contingent fund. One second. Yeah, where did this go? Next comes second one. Contingent fund. Done. Next, third one is, as the name itself says, public money. Whose money is this? It is not government's money. Government money is something which parliament approval is taken. But public money, we don't need approval because government is just acting as a banker. Government is holding your money at one right point of time. When maturity appears, we have to give back to the rightful public. So this is not a government's money. It is general public money. Article 266 subsection 1. Clear? So these are the three components of AFS. What are the three components? Consolidated, contingent, public account. So this is the very first document of the budget. So how many documents are there? 4. In that, how many important? First one, that has 3 more elements. Now, all this benefits given to the President of India, judges of Supreme Court or high-ranking officials of Indian, even those expenses will come under consolidated. Parliament cannot vote or change this bill, or they cannot change the money on this emoluments. Even this will be part of consolidated. Part of. Clear? Now, second one, demand for grants. What is it? So what is the demand for grants? Which particular, let me say, ministry or which state government or which particular concerned government body is asking for how much of money in the next upcoming financial year? That list is given in the demand for grants. Now this has to be discussed in the parliament, and later after approval, they will give the funds. And when the approval comes, that is called appropriation bill. Which bill? That is like an approval letter for this demand for grant. See, they may give the same money or lesser than that or even greater than that. After voting up of the house, after discussion, then only appropriation bill comes. Next comes, which bill? What is the new tax that we are coming up with? Modification of existing tax, or are we continuing the limit of the tax beyond the period approved by the parliament? Everything, vitamin M related, where it comes? Finance bill. Next comes the 2 small concepts. This will be an exam question. Be careful. Gulaitin. See, I said, this demand for grants has to be discussed. Parliament approval is taken. Then only appropriation bill will come. But sometimes, when the time period prescribed for discussion is over, Speaker of the Parliament will put everything together and they will take approval. That is called Gumpal Govinda concept. In Kannada, we say like that, when Speaker of the Parliament puts all the outstanding bill, whether discussed or whether not discussed, and once at a time if they take approval, that procedure is called Gulatin. And suppose, sir, will they agree every time for whatever funds is asked? No, some discussions they will do. Suppose Women and Welfare Association is asking 1,000 crore. Now Highway Authority will ask, hello boss, for me, even national highway construction, you said no funds. You have so much of funds. No, we don't agree. Like this, some disputes will come, some kind of voices will be raised. If they cut the money, suppose they were asking 1,000 crore, now we are only giving 700. Why did you cut that 300? That procedure is called cut motions. What is it? Reducing the sum sorted, reducing the, or to voice any kind of grievances. Voice any kind of, that is called cut motions. Clear? So these are the technical terms. So this is where exam questions will be asked. Clear? And now budget is mainly classified into 2 kinds. How many kinds? Now, next most important area, this one, all deficit calculation. Which calculation? Here only keywords are there. Remember keywords and life becomes simple. Numerical problems will also come from this area. See, when we speak about budget, mainly 2. Revenue budget, See, when I say revenue budget, repeated expenses are there. That means it will come again and again, either income or either expense. Under revenue budget, we have revenue receipt, revenue. Under capital budget, again, capital receipt. Clear? Now, suppose, what is it? If I ignore capital, if I only and only consider revenue budget, if I only and only consider, that means my regular expenses, day-to-day expenses, all those, and day-to-day incomes, biggest source of income to government is tax, revenue receipt. What is it? Clear? Tax receipt, non-tax receipt, both the elements are there. And like our leading indicator, lagging indicator, coincidental, meaning example, for all this four important. They will ask you the question, what is revenue receipt? Those receipts which will never create any liability nor reduces the assets of the government. That is called revenue receipt. Like this, meaning, example, all four important. They can ask you the question from the meaning or they can ask you the question from the example. Clear? So revenue budget is classified into how many types?
Two types.
Revenue receipt. Suppose if revenue expenditure is greater than revenue receipt. What is it? Revenue expenditure is greater than? This is called revenue deficit. What is it? Only and only we are considering revenue budget. And revenue deficit should not be a part more and more in the total deficits. Why? For normal functioning of your day-to-day government activity only, you don't have money. This is a very bad sign in the country. Very. So revenue deficit should not be more. Revenue deficit should not be clear. Now, let me wait 1 second. I will go to my main material where I will write and explain to the student that, here. So, revenue budget, capital budget. So, when we speak about receipts, revenue receipts we have and capital receipts. Both put together is what we call total receipts. What do we call?
Total.
Revenue expenditure plus capital expenditure. Both put together is what we call? Now, 1 second. Now, when we speak about total receipts, we should consider both revenue plus capital receipt. Total expenditure, revenue expenditure plus. Next comes types of budget. Balanced, imbalanced. In balanced, simple logic. Total receipt is equal to total. Life is no confusion. Life is very simple here. But confusion comes when there is a surplus. That means we have more money in hands than what we are spending. Receipts is greater than expenditure. What is it? Receipt is greater than. Next comes which deficit? Sorry, deficit budget. One is surplus budget. Second one is a deficit, means shortage. Expenses are more than revenues. See, revenues are lesser. Expenses are greater. Total, there are 4 kinds of deficit. How many kinds of deficit? In that revenue deficit, already I explained. When only and only if we consider revenue budget. If revenue expenditure is greater than revenue, that is called as which deficit? Revenue deficit. Now, in exam, question will be either asked from the fiscal or from the primary. If it is numerical, if it is very rare of the rarest chances budgetary. But logic, any one, see, out of this 3, in every attempt, any one question will be there. Either from budget, either from fiscal, or either from primary. First understand, what is budgetary deficit? I am considering full overall budget. If the total expenses are greater than total receipts. Total greater than total, that is called budgetary deficit. Now, in this budgetary deficit, see, already we got to know there is some shortage. We have already borrowing some loan. Some of them have agreed. Including borrowings will be there. What is it? Budgetary deficit is including borrowings. What is it? But fiscal deficit is excluding borrowing. What is it? Let's say, for example, sir, my total receipt, what is it? Is say 10,000 crore. My total expenditure is 12,000 crore. This is budgetary deficit of 2,000 crore. In this 10,000, already let's assume that we are borrowing some 3,000 crore. How much? I should remove that now. I should remove that. That means here it will be 12. Here instead of 7, instead of 10, I should consider only whatever gap is there, 5,000. This is called as fiscal deficit. Which deficit? Remember, budgetary deficit includes borrowings. Fiscal deficit, when you see this word excluding borrowing, excluding from the budgetary, that is called fiscal. Even in numerical problems, they will give this excluding borrowing. Whenever you see in the statement excluding, that is called which deficit? Wait, let me show that question only. Can you see the question number 67? Dash defines excess of total expenditure over the total receipts, and it is a difference between all the receipts and all the both revenue account as well as. Did you find any word called as excluding borrowings? Which deficit is this? Clear, huh? Next. I will show that question. Wait. Excluding borrowings. They have also mentioned it. In one of the attempt they have asked. Chapter 7. Question number 41. Excess of government total expenses over the total receipts. If you see this word excluding borrowing, what is the answer? By chance, if this word excluding borrowings is missing, now what is the answer? Clear? Now, from the fiscal deficit, from which deficit? If you subtract interest liability, that means from old loans, we have borrowed interest now. Sorry, we have borrowed now. For that, we should pay interest, right? If I also remove that interest liability from fiscal, interest liability from what I get is a. This is where numerical questions will be asked. Chapter 7. Question number 62. First, tell me, what is the formula for identifying primary deficit? Fiscal deficit minus interest liability. For fiscal, if you add interest, what you will get? For interest, if you add primary plus interest, primary deficit plus interest liability will become. See here, if the primary deficit is 20,500 and net interest liability is 3,500, calculate. Simple, we should add these two. Clear? And such kind of silly questions will come. There is one more tabular question, wait. Chapter 7, yeah. If the government revenue receipts is how much? 10,000. Capital receipts excluding is how much? That means we are not borrowing, yet to borrow. So 10,000 plus 2,000. Total receipt is how much? 12,000 crore. And revenue expenditure is how much? Capital expenditure is how much? So 12 plus 5 is how much? 17,000. 10 plus 2 is how much? 12,000 is receipts. 17,000 is expenditure. What is the difference? That is fiscal. And they have clearly given, na? This is how easy the questions will be. For that logic, just logic. You know the concept, you know the logic, you will crack it. Clear? So simple concepts here. Total 4 different types of deficits will be there. How many types of deficits will be there? First one, total expenses over the total receipts. That is budgetary. In this, if at all we remove the borrowings, if we remove the, what do we get? And from that, if we remove interest, primary deficit. Clear? Understood? So out of this 4, these are the 3 repeated questions. In any one attempt, out of this 3, 1 question for sure is going to be there. Either budgetary or either fiscal or either primary. Clear? Understood? Either they may ask concept or either they may give numerical. And this is repeated. And this is the main budget. Both. Total receipt means capital receipt plus revenue receipt. Expenditure means plus capital expenditure. If we only and only consider revenue budget, then we have to calculate. Suppose if we have revenue deficit, very bad state of the country. What is it? Very? That means to run your normal government expenses also, you do not have the money. Clear? So this is the portion done, taken care. Next, outcome budget. I said na, actual values. Which values? That means previous year, whatever we have spent, whatever we have received, we are giving a report card, like marks card. After writing exam, you will get your marks now, like that. This is the progress card. Which card? For what all project, how much money we have spent, whether we spent for the purpose, what it was allocated, how much did the result we achieve. That is called outcome budget. Next comes sources of revenue. See, under Department of Revenue, under what? Department of Revenue, we have CBDC, CBIC. One controls direct tax, other controls the, and this Department of Revenue comes under Ministry of Finance. Now, when we speak about revenue source, now revenue receipt is there, capital receipt is there. When I speak about revenue receipt, tax revenue, non-tax revenue. What is it? Tax revenue? When we speak about capital receipt, debt capital receipt, non-debt capital receipt. What is it? Debt capital and debt means we are borrowing money either inside or outside. Non-debt means without even borrowing we are getting funds from how you have only given to loan to state government, union territory, recover that. Or you have given loans to some nearby countries like Sri Lanka, Nepal, recover that. Or else you are selling your assets of government. OLX may bech do. Because it is not usable, so we are selling it. We are divesting even PSU stake. Which stake? PSU, public sector undertaking. Government is the highest equity shareholder, na? We are selling our equity share. See, three options for non-debt capital receipt. Which capital? There are three things. Number one, you are recovering your loans and advances, what you had given to others. Second one, you are selling government assets. Or else, your stakes in PSUs you are selling. These are the non-debt capital receipt. So, question comes like this. Which among the following is a non-debt capital receipt? Which among the following is a? There are only non-debt capital receipts are three things. Number one, recoveries of loans and advances, sale of government assets, divestment of PSU stakes, divestment of. These are the three non-debt capital. Debt means either inside the country, outside the country, short-term debt or long-term debt. See, in receipts, revenue means tax or non-tax. Capital means debt or non-debt. This classification is also important. So this, until this, whatever we studied, questions are going to come. Year after, only read only concept. Weightage is less. It doesn't mean that question doesn't come. It may come. What is it? But weightages is very low. And in this, one important topic is there. That is called as public debt management. This is called as Kere Neerannu Kerege Chelli concept. What is that? Simple. We will take first loan from the public, from our own country. To repay that first loan, we will take the second loan. What do we take? To repay second loan with interest, we will take third loan. To repay third loan with interest, we take. To repay fourth loan with interest, we take. That's it. This is the concept of refinancing the debt. What is it called? This logic you should know. See, again, we have a Department of Expenditure that comes under, again, Ministry of Finance only. What is their job? To control this debt. Unnecessary subsidy, unnecessary expenditure has to go down to reduce deficit. But all our thumbs up fellows will never listen. See, you want me 2000 rupees free. Employment, not there. Unemployment benefit. Take it. Next, public transport you want? Free. 200 unit electricity you want? Free. Where will the expenditure go down? Deficit is only increasing year by year. So all this trouble, not just for present, even for future. Now, when we speak about debt, any loan taken inside the country, any loan taken, who is responsible? RBI. Any loan taken outside the country, external debt, who is responsible? Department of Economic Affairs. Even they come under Ministry of. Clear? FRBM Act, I said now, fourth document of budget. First three is most important. Fourth document as per FRBM Act, this objective once they have asked question. So, very least chances of getting question after expenditure. What is that after? You may get only one question. If you are lucky enough, you will not get the question. If you are not lucky enough, they may ask that one question. But expectations are very low. Expectations are until the sources of revenue, that is where most of the exam questions will come from budget unit. Clear? Budget comes to an end. Clear? So in this, deficit calculation important. Primary deficit, budgetary deficit, fiscal and capital receipt meaning example, revenue receipt meaning example, capital expenditure meaning, revenue expenditure meaning, and consolidated fund, contingent fund, public account, Gulaitin, cut motions, all that concepts, chota concepts are there, na? That is where exam question comes. And article numbers. What is it? Article 112, 236 subsection 1, all this like public debt, article number is there. Annual financial statement, article number is there. All these article numbers are important. All this small area. And budget is presented twice only in which year? Election year. And usually budget is presented on 1st of April. And budget includes information about 2 years. Next upcoming anticipation and ongoing year's revision or any kind of estimates. And previous year's actual value. Actual value will never be given to present year or the upcoming year. See, like this concept base, they will confuse you. When you know the concept, you will crack it. Clear? By this, budget comes to. So we'll go to chapter 7, unit 1. One of the most interesting chapter. Just two topics are there. Only two topics there. Nothing big there. Come to unit 1. See, unit 1, unit 2 and unit 4 as a interconnection. Unit 1, unit 2 and unit as a interconnection. That is why I first finished unit 3. Budget is totally out of that connection. Okay, now first understand the why we need to study this chapter. Simple. If you remember when I explained Keynesian theory, before 1930 classical economist, after 1930 neoclassical, what did classical economists said? Economy will always achieve full employment, but after Great Depression, Keynes came up, he said, no boss, it may happen or that is neoclassical. Now, why government should intervene? Why government should perform? See, our classical economists said, nah, government intervention is not at all needed. But no boss, we need it because economic variables caused because of inflation and deflation will not self-adjust. With government intervention, we need to regulate them. With government intervention, we should. So now let's take one more example. Assuming Mr. Shah Rukh Khan, rich individual, 50 crore per movie. He will earn, very rich guy. Now let's say Shashikiran, poor farmer. Who is Shashikiran? Poor farmer. Let's say I need to undergo operation. 1 lakh rupees the cost of operation. My yearly income is 2 lakh. Yearly income is?
2 lakh.
Will Shah Rukh Khan identify Shashikiran, power Shashikiran, come da, I will help you. Will he come and do? No. That means government should interfere. Government should collect rich from people like Shah Rukh Khan. Taxes they should collect it. And they should give benefits to poor people in the form of welfare, subsidy, highly subsidized price, medical facilities like this. That means government should intervene, collect taxes from rich, give benefit to. Government intervention is needed in order to bring stability. In order to bring what? That is the main topic of this entire chapter 7. Why government has to involve? See, business cycle will create fluctuations to control fluctuation. And in the country to bring all equitable distribution of income and wealth. Biggest assumption that is. Clear? Huh? And also to grow the economy. All this price stability, economic stability, exchange rate stability, like both fiscal policy, monetary policy. Fiscal policy, we speak chapter 7. Monetary policy, chapter 8. This is the background of the chapter. Now see there. All that I said now, Shah Rukh Khan, rich individual, blah, 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 same example. And see, government, without government, economic variables will not get automatically adjusted. That means economy has to get adjusted with government intervention. Like what? Eradication of? Not eradication of population, poverty. Controlling your population growth rate, inflation, resources. All these are done only by government intervention. Clear? And roles of government in economic system. Capitalistic economy, socialistic economy, mixed economy, any country for it matter, basic problems will be there. That basic problem comes because of scarcity of resources. Same. Chapter 1, Unit 2. Basic problems of economy and types of economy. Once again explained. Now comes from the words of, who is Adam Smith? Father of economics. Now Adam Smith said, see boss, even I am a follower of a free market economy. But there are 3 areas exclusively government has to interfere. Which are those 3 areas? Maintenance and justice of rule of law, highly beneficial public institutions and public. In these 3 areas, resource allocation role should be done by whom? Except in everywhere else, we will follow. That means private people will dominate. That is what Adam Smith said. And we said, especially after 1930, Great Depression, role of government is gaining more and more importance. Why? Because only if government intervenes, control can be made. If government is not there, control cannot be made in the economic fluctuation. Even today, few nations have more control in their nation, few nations doesn't even have a control. Afghanistan, government only ran away when Taliban invaded. Bangladesh, PM only ran away from the country when problem happened. And few countries have high control, like North Korea, full. China, to some extent, full. India, in the name of control, all stupidity. Like this, few countries are still expected to have control. Few nations have more control. Few nations have less control. Next comes, this is the main unit 1 from the words of Richard Musgrave. 3-branch taxonomy. This is what unit 1 is. What are the 3 branches of taxonomy? Allocation, redistribution. What is that? Resource allocation. See boss, if at all we allow resources to the hands of private people, stupid fellows, profit motive, either they will overproduce or either they will not sufficiently produce. So government has to interfere. Government should take that control. Government has to do the resource allocation. Next up, redistribution of income and See, in any country, if income elements are not distributed in equal manner, then demand will not get created in the economy in a proper way. Only when everyone gets income, demand will, production will, employment will, overall economic activity will. If rich is only getting more money and money, if poor is not getting the proper money, where will the demand for essential goods and services will go up? So we should redistribute income. What we should do? Don't remember Rahul Gandhi here. We will take money from rich people, we will go confiscate their assets and we will give it to the poor people who don't have. He said no, election manifesto, stupidity. One side we put potato, other side we get gold. Nice, very nice. And sometimes I wonder, Rahul Gandhi, even in dream if he becomes prime minister, we should leave country. Now redistribution, we collect more money from rich in the name of tax and we give benefits to the poor. Next comes macroeconomic stability. Which stability? Price stability. All of a sudden prices should not fluctuate too much. Today tomato 20 rupee, tomorrow 50, day after tomorrow 80 rupee. Your mom will say temporary ban of tomato at home. Why? So all of a sudden prices should not go up, prices should not come down. Economics should also be in a stable manner. It should not highly fluctuate. Exchange rate stability, employment stability. Like this we should bring macroeconomic stability. Which stability? So these are the three branch taxonomies: allocation of resources in a fair manner, redistribution of income from the hands of rich to the poor, stabilizing the entire economic performance, roles of government, in the words of whom? Richard Musgrave, in the name of three branch taxonomy, introduced by him in a book called as Theory of Public Finance, established in, see, first one, allocation. See, perfect allocation is only happening or it is possible in perfect competition market. But in reality, none of the markets are. We have imperfect and to some extent existence of monopoly. So, these private guys, they will not allocate resource in a proper manner. Usually for private goods, there will be sufficient allocation. Public goods, insufficient allocation. Why? Because public goods works based on budget. Private goods works based on market forces, demand and. So this is why problem comes into picture. So what exactly is the problem? This private guy, they will either underproduce or either they will. And there is also a problem of externality. They will pollute in the name of productivity. So all these troubles are created. So resource allocation role has to be taken by whom? Government. Government has to interfere. Government has to come with their fiscal policy. See, government expenditures and tax. And government has to decide who will be taxed and what will be taxed. In India, simple, not who and what, everyone and everything. And how and what public revenue will be spent. Infrastructure, under the table discussion. All this. See, some examples they have given. And remember, in this unit, wherever this government examples are there, this is where exam question comes. Like, see, for example, they have asked this question: electricity and public transport system for equitable distribution of income and wealth. No allocation. What is it? See, government will interfere, government will do the resource allocation. See, government may directly provide the economic goods like electricity and public transport, and government may influence private allocation through incentives and like any kind of tax concession, any disincentives if they don't listen to your words, and through Competition Act, and let me say giving license, controlling minimum wages, and setting the legal and administrative framework. See, wherever such examples are there, in all the three, Unit 1, Unit 2, put together in every place, this is where exam question comes the most. So you need to read this without ignoring. You have to go through this. Any nook and corner, they will come up with the question. Next is, as I said, take from rich and give it to the poor. How do they give it? Same example. We collect progressive tax. From that money, we will come with the public welfare benefit. Which welfare benefit? And we also have something called as employment reservation, and also regulations and manufacturing of certain products in the country with respect to health and well-being. Smoking of cigarette is banned in public place. Have you ever seen anyone smoking outside in the bakery? And no, prohibited. No one does. Special schemes for the backward regions of the society, and especially we are following democratic welfare state, for the people, of the people, by the people. Now changed it. First by the people during election, 2000 rupees per vote. After that, for them, until next election, don't come to me. By mistake, if you come to me, kill the people. Reporters, if any questions are asked, take them, abscond them, kill them. Next, fear comes. This is the problem with our country. Next comes stabilization, macroeconomic stability. Which stability? Where and all we are planning to bring stability, say employment stability, capital utilization stability, overall output and income, general price level, all of a sudden prices should not go up, prices should not come down, balance in international rate of economic growth, all of this. See, because of inflation, deflation, business cycle will cause a lot of instability, and to some extent we have a problem of, and this time they have asked question from stagflation. When unemployment and inflation both will exist side by side, unemployment and inflation both will exist. Wait, let me show that. That was this time only stagflation question. Chapter 7, chapter 7, chapter 7. When you're doing, you will get that stagflation. This time only they have asked. Chapter 7. Where are you, man? Unable to find. Wait. Can you, when you are doing it, you will definitely get. This time only they have asked stagflation. What is it? So what is stagflation? When inflation as well as unemployment both is existing side by side. That is called as stagflation problem. And there is contagion effect. Which effect? Say simple. If one country gets affected, it easily gets transmitted to the another country. Like COVID started in started in China, affected the entire globe. Great Depression of America started in US, affected the entire globe. Global financial crisis of 2008, Lehman Brothers crisis, 2008, it started in US, affected the entire globe. So that is called contagion effect. Increased international dependency will make, if one country enters into problem, other country will also face that problem. And how do we tackle this? By the use of entire concept is mainly based on this one logic, man. Wait, let me take that logic. Where is that? Here, this one. Whole chapter 7 is based on this. Now, whenever there is an inflation problem in the country, which problem? More money is there in the hands of people. Now, government should stop spending. Now, government will spend less money, but Nirmala aunty will collect more tax. Now, we will follow which budget? Surplus budget. That means we don't spend more money, na. Money is left in the hands, but we are collecting more money, na. This is how we will follow. And these two, whenever we speak about government expenditure and tax, it is called as contractionary fiscal policy. Which fiscal policy? And when will you follow contractionary fiscal policy? During inflation. Full opposite. When economy is not performing well, deflation. Now government should spend more money. Government will reduce the tax. When government reduces the tax, disposable income increases. So this is called expansionary fiscal policy. That's it. Unit 1 comes to. And there is nothing much. See, on the expenditure side, government will inject money. Tax reduces the disposable income. During the recession, government expenditure should increase. Tax rate should decrease. We follow which fiscal policy? Expansionary. During inflation, contractionary. And during the inflation, there is a surplus budget. During the deflation, there is a deficit budget. That's it. Next brings to the market failure and government intervention to. Full entire chapter 7 is storytelling. Full on story about government. Next comes market failure and government intervention to correct. First understand why markets will fail. Because resources are not allocated properly. This private people is profit motive. Stupid fellow, they will overproduce or they will not sufficiently produce. Because of that, failure is going to occur. And there are two kinds of failure. Complete failure and partial. In complete failure, total market itself is missing. In partial failure, either they produce wrong quantity or either they sell at wrong price. And there are mainly 4 reasons. How many reasons?
4 reasons.
Now, first one, market power or monopoly power. Second one, third one, fourth one. These two, na, favorite question to ICAI. These two area, most favorite. Repeated questions there. Public goods and incomplete information. So what is monopoly power? Monopoly is existing. Intentionally, he will sell higher price by producing lesser quantity. If that happens, markets are going to fail. Next, externality. If you remember, bench manufacturing, Shashikiran discharging the chemicals straight away into the river water. Now this externality is best example, pollution. What is it? In the name of production, pollution is there. Now this pollution or externality can occur in consumption or in the, either it can bring disadvantage or either it can bring Advantage, yes, even it can also bring advantage. But here the logic is parties to the contract will not get affected. Always and always. Third party, the outsider will always get the benefit or outsider will always get the disadvantage. Either advantage, disadvantage. Always to whom? Third party. Now let us straight away go to example. See, externality is mainly classified into positive externality and positive production or positive, negative production or negative. Let's take one example for all the four. Positive production externality. What is it? Let's say, for example, I will take some 5-6 students in my market research firm. I will train you people how to do research, everything. I will train you. After 3 months of training, I will say, I will only take you as employee 30,000 salary. You will say, Shashikiran, your competitor is offering 50,000. How much? Bye bye, Shashikiran. Who trained you, Shashikiran? Who is getting benefit now? My competitor. He is getting the benefit of your work. Next, positive consumption. Early morning, you went to gym class, yoga class. You are health cautious. You are eating clean food. Assumption. What is it? Assumption. Clean food without junk, without affecting your health. Because of that, your focus is increasing. Your work performances. Because you are going to gym, because you are going to yoga class. A contract is between you and your yoga instructor, you and your gym instructor. But benefit is coming to your boss. Work productivity is positive consumption. Next, negative production. Bench example. Already given. Next, negative consumption. Smoking, cigarette, alcohols. Because you smoke, person who stands next to you will get affected. Third person gets affected. Passive smoking. Clear? Examples. And sir, how to tackle? Already we have discussed this. We have to bring the social cost. Which cost? What we are producing and selling is only just a private cost. We should add external cost to that. Now Nirmala aunty will add in the form of tax. So social cost is real cost to the society. We should consider both private cost of production plus external. But in reality, all the stupid fellows will not do it. So for us, the biggest concern is with dash externality. We should reduce negative externality and we should promote positive externality. Next comes favorite area of ICAI, public goods. Which goods? See, difference between public and private goods. That is important. See, public means one which everyone enjoys in common. One which everyone enjoys in. Also called as collective consumption goods or social goods. This concept was introduced by Paul A. Samuelson. Who introduced it? And once they have asked a question, collective consumption good theory was given by whom? Paul A. Samuelson. And what is it? When one which everyone enjoys in common. See, simple difference. Both public goods, private goods, both will provide utility. But in public good, you will not pay. What is it? You will not. It is collective in nature. Everyone will use it together. But private good, you should pay. You must purchase. Because you purchased, it belongs to you now. You can exercise private property rights. Which rights? Only and only you can use it. Others cannot use it. Now, in public good, they are non-rival. You can't stop someone from using the benefit. Suppose if you are walking on the road, will you say, hey, don't come, I am walking, come later? No, everyone can use it together. And you cannot exclude someone because they didn't pay. Hey, did you pay for this road construction? No, my dad paid tax. Let your dad use. Why are you using it last? You can't say like that. You can't stop someone. You can't exclude someone. But in private goods, we can do both. You can stop someone if they are not ready to pay. If they haven't paid, you can also exclude them from using the benefit. So, private goods are rival, private goods are. Public goods are non-rival, public goods are non-excludable. And the biggest trouble with respect to private goods is we are not ready to contribute at all, but we want to use it for free. Same like your friend's birthday party. He will pay, we will enjoy benefit. Let someone else pay, we are going to enjoy the benefit. That is the problem with which good? But in public good, additional resource cost is 0. That means if already 10 people are using, if the 11th person will come and use it, government will not incur any extra expenses. But in private, there is an additional resource cost. If any new person comes and joins to academy, for him also Shashikiran should clarify it out. For him also material should be given. For him also test should be conducted. Additional cost, na? In private good, there is an additional resource cost involved. But public good, and public good, free rider. Private good, no problem of free rider. So this is the difference between public goods and private goods. And from this characteristics only you will get the question. And the biggest problem with public goods, why it will fail? Because of No one is willing to contribute. When you are not willing to contribute, how come government will get to know what is the actual demand? We can't even identify the demand for the public good. Market exchange will not at all work, but private good market exchange will work. Because of this nature, government can also not sufficiently come up with the public good, since you guys are not expressing your willingness to pay. Expressing your, that is the trouble. Now, if that is the case, now profit maximizing firm. Which firms? That means private firms will never come with public facility. They will never come up with. Next comes another important area, most repeated questions in the exam, incomplete information. Which information? First understand what do you mean by complete information. What does complete information refers to? Both buyer and seller has a knowledge about what the transaction they are entering. Let's say, now, what's your name? I forgot. Praveen. Now, let's say Praveen is a second-hand car dealer. Now, Shashikiran wants to buy one car. Praveen will say, sir, you just press this button, sir. Car will go like rocket. I will believe his words and I will buy. What he said was correct. Car will not go like rocket. My bank balance will go like rocket by repairing that car. Some hidden defects are there. He didn't disclose. One person knows full information. Other person doesn't know the incomplete information. Now markets are going to fail. Markets are going to. And reasons for market failure. Because what you are asking information, it is highly. Sir, my dad is asking, sir, if we invest in mutual fund next year at the same time, how much returns I will get? How will I know? Not only me, no one can tell it, because it depends upon market performance. Because the information what you are asking is highly complex. So we are unable to get the information. Next, sometimes you are unable to find the information quickly, cheaply and sufficient informations, and consumers will misunderstand its true cost or true benefit because customers are ignorant. They are not aware of many matters in the. Because of these all elements, we will end up giving wrong information to buyer and they will make a wrong choice. They will make a, that is incomplete information. Especially this types of incomplete information, most questions will come. They will ask, they will give one scenario. Like Mr. X has a comprehensive car insurance. And because of this insurance, he is driving the car reckless. He is driving the car. And he meets with an accident multiple times because insurance company will pay for the damages. So he does it multiple number of times. This is called moral hazard. Morally wrong. What is it? Morally wrong. Because insurance is there, he is driving reckless. Same to same question has come in exam. That is what exam question only I was saying you as an story now. 1 second. Where is that? See there, question number 67. Alex has a comprehensive car insurance which covers the cost of the repair if the car is damaged in the accident. As a result, he drives the car more recklessness, and knowing that insurance will cover any kind of damage. Over the time, he gets into more and more accidents and files more and more insurance due to his careless driving. Now this scenario is illustrated as what? Morally wrong. What is it? Morally wrong. Clear? Next comes adverse selection. By the way, why did you select the wrong thing? Because of imbalance in information. What is this imbalance in information? Asymmetric. One person has full knowledge, other person doesn't have a. So that is asymmetric, and this is also called as which problem? Nimbe handina tondare. Lemon's problem. That means market is filled with defected vehicles, defected items. End of the day, whatever you go and select, that is a defected one. That is called asymmetric. That means which information? Imbalance in information. Because of this imbalance, you will end up making dash choice. Wrong choice. Adverse selection. So, asymmetric, adverse, moral hazard. Repeated question in exam. Or else, if not, they will ask reasons for incomplete information. So, these are the 4 reasons for market failure. How many reasons? Number 1, monopoly power or market power. Externalities, public goods, incomplete. Whenever market fails, government should intervene. Who should intervene? In order to correct that market failure. In this last element already we have spoken. Equitable distribution of income and collect money from rich people, give benefit to the our Nirmala Aunty schemes. All this. We should discuss this 4. Minimizing monopoly power. And these 2 are most important. This is where most question comes in government intervention and bigger. These 2. And next, see here, correcting externalities. All negative externalities should be controlled. Positive externalities should be encouraged. Next comes merit and demerit goods, socially desirable, socially undesirable, all this alcohol, cigarettes, that has to be banned. Here, whatever examples will come, Allah, especially government rules. What government may do this, government can do this, government could do this. Whatever examples we will speak here, Allah, everything, that is where exam question comes. I will show that later. Now, for example, right to children's education between the age group of 6 to 14, merit goods. White good labeling, all this, it will come. Next, correcting externalities, what is the new rule, cap and trade system, everything, whatever we discuss here, especially these two, most important. And these three chota things, nothing much. Only this is the where exam questions, most of things will come. Clear? And in case of market failure, where public goods, private goods, incomplete information, there most question comes. In case of government intervention, these two areas are where most question comes. So you can't ignore this. Clear? Let us get started. Minimizing monopoly power or market power. Which power? Monopoly power or? So how government will do? They will come with rules and regulation. First one, competition based regulation. In India, we have something called as, under the Competition Act, we will not allow someone to take unfair advantage, unfair competitions and all. We will regulate all unnecessary merger acquisitions and all. We don't allow. Like this, based on Competition Act. Which act? We will control. And other regulation, like slowly we will liberalize the market, we will reduce rules and regulation, we will control on mergers, controls on acquisition. Government will decide what should be the maximum price and how price has to be decided, how much profits you should get, and will give more powers to whom? If any complaint comes from consumer association, we'll take it very strict and we will do dash investigation. Yeah, just some 7-8 years it will take. Simple. That's it. Next, restrictions on monopsony means what? Single buyer. You can't just sell it to only one person. You have to also sell it to others. And reducing import controls. Now you can also import foreign goods coming inside. Competition will increase. If you don't listen any of this, I have Brahmastra. Take control full into government. No private can operate. Like this, government will intervene to correct monopoly power. Which power? And see, sometimes government will only preserve a natural monopoly. Which monopoly? See, for example, electricity distribution, drinking water, sanitation, public health, all this. Why? If it is left to government, they will be doing for welfare motive. If it is given to private, profit motive. And if government comes in, government will produce at economies of scale. That means lowest cost of production, and they pass that benefit even to the public. So, government will only tries to maintain dash monopoly in terms of electricity, gas and water supply to make the market cost as low as possible. That is why natural monopoly. From this also questions will come. Be careful. Why government will protect natural monopoly? Next, government intervention to correct. Best example of externality, pollution. Clear? Bench manufacturing, Shashikiran, stupidity, all that desirable goods, undesirable, alcohol, cigarettes. For us, biggest trouble always comes from which externality? Negative externality should be reduced and positive externality should be promoted. So what government does for that? There are two ways of government controlling. Mark both as important, especially second one, market-based policy, to extremely important. About this topic, externality and merit goods, demerit goods. This is where most every example, every single line from any nook and corner questions can be picked. Now only I'm saying. Anywhere questions can be picked in these two elements. Now direct control. What is a direct control? Government straight away comes and government will prohibit. Government will. You can't do that, you can't do this. Like in public place you can't smoke. Prohibition of smoking is public. Sorry, in public place. Smoking is prohibited. What is that? Have you ever seen anyone smoking in front of bakeries and all? No, in India it is prohibited. Next, government may pass. What is it, government? A laws relating to control negative action, like how we will come up with the act, Environment Protection Act. What is the role of this? To protect environment when under the table money doesn't comes. See, we'll close Big Boss. Why? Violation of Environment Protection Act. Oh, really? Outside Bangalore, there are many resorts which belongs to all these politicians. Straight away dumping drainage water into river water. Oh, their environment is fully protected. Highly protected. And same water is a drinking water coming to Bangalore. Full protein, vitamin, minerals rich water. Hygiene water. See? Environment Protection Act. Next, government may come up with fixing the emission standard. We will only say how much to pollute. Beyond that, if you pollute, penalty. Criminal liability. How much we say? Only to that extent you should pollute. Next, government can. What is it, government? Come up with which fee? See, end of the day, boss, I need money. Shut and pay the tax. That's it. Then you pollute whatever you want. I will say how much you should pollute. And government will form a special body. Which body? Who are the special body? Like, for example, Pollution Control Board of India. What are they doing? Creating more pollution. State Pollution Control Board. What are they doing? Sleeping nicely. I have never seen these people working. And we have something called as Ministry of Environment. And what are you doing? Cutting down the forest more and more for development purpose. See, these are the examples. How to control negative externality. Asking them to install pollution abatement mechanism so we get to know how much pollution you guys are doing. Based on that, we will collect a tax. If you don't pay proper tax, then under the table at least you should give. Next comes market-based. Which based? This is much more interesting. Pollution tax and cap and trade system. This cap and trade system, IPL example, if you remember in the class. Every dot balls will plant 100 trees. Cap and trade system, that is. That means carbon credits. Carbon credit scheme. Next, pollution tax. Now AC Pigu. Who introduced this? See, AC Pigu said, see boss, government, you understand. If you call all your polluters, now stupid fellows, ask them not to pollute. Ask them. In front of you, they will say yes like this. But behind, they will definitely do it. So, do one thing. Straight away, levy tax. Call Nirmala auntie. She is the correct person for all the stupid fellows. For getting license also, more money. After producing every single unit they sell, again more money as tax. So, product tax, production tax. Both you levy. Now, only option for them. If he doesn't want to pay more tax, they should produce less. When they produce less, pollution will be reduced. If they are producing more, they should pay more and more tax. That is what? Piguvian tax model. Which model? Making the polluters pay. See, the tax is placed on an externality itself rather than on the output. Every single unit, the polluter must choose either to pay more and more or reduce the pollution through any other means of. You come with any innovation, green energy, sustainable energies, you do, but pollution happens. Now we'll put more tax. But the tax also has a trouble. What is the trouble? How do you identify right level of tax? This production cost plus tax exactly equal to social cost. What is the right level of tax? And suppose if the product is inelastic demand, which demand? Like alcohol, cigarettes and all, they don't mind. Even if price goes up because of tax, people instead of buying 5 beer bottle, they will come and buy 4. And manufacturer, without even losing customer, whatever tax he paid, he will dump that on customer. And if you keep on putting tax like this, foreign companies will say tata bye bye to your country. They will go to some other country where taxes are. If that happens, in your country, employment opportunity, goodbye, katam gaya, tata. Again, GDP will fall. All these problems are there. And also, whenever you levy more and more taxes, taxes will no doubt bring revenue to you, but it will discourage people to produce. Discourage people to. But every good, you cannot call it as a demerit. Sometimes it is also good for economy. No doubt it will create pollution, but you can't harm. You cannot create a negative effect on them. These are the disadvantages. What is it? Identifying right level of tax is the biggest complex problem. Upon that, if you keep on increasing tax, that will discourage people to produce and save. Foreign companies will say tata bye bye. If the demand for the good is no use of putting tax. Next, to tackle that, we came up with a simple logic. See, if you levy taxes, administration cost will also go up. For the direct tax department, indirect tax department, all these fellows should be there. You need to bring them. All these hangamas are there. So do one thing. Give them a license and say these licenses are tradable license. Which license? Now intentionally give lesser license. Suppose, let's say for example, we all are iron and steel manufacturers. Now we will go and ask permission to government. Hello boss, I need 1000 license. They will give only 700. Someone will come and ask 5000 license. They will only give 3000. Someone will come and ask like Tata, I need 10,000 license. They will intentionally give 6000 license. They will intentionally create shortage, and after issuing license, they will say, boss, this is tradable license. Which license? Either you can use it or you can sell it to someone. That means now opportunity cost gets created. If you produce by using this license, you lost an opportunity for selling this license to someone and earning profit. So now administrative cost is also lower for government. Any intelligent fellow, let's assume Praveen, he got some 3000 license. When he asked 5000, he got only. In that only 1000 license he will use. Another 2000 license, let's say he's selling to Shashikiran at very high price. Very already earned profits. And whatever 1000 units he produces, intentionally in the market he will sell at lesser price. Even competition gets affected. Now, person who bought the license at high prices, can he produce his commodity at lesser cost?
No.
Even he can sell its products at lower cost in the market or higher cost. When he's selling at high price, competition gets affected. And moreover, my production cost gets affected. Now, government said, simple, issue tradable license. Which license?
Tradable.
Administration cost is also lower. And even different pollution is possible in different level. That means you are not coming with solution. You are just giving an incentive not to pollute. What is it? That is cap and trade system. Even this has got certain advantages and this has got certain. So this is how they will tackle negative externality. Which externality? Clear. Now positive externality. See, simple way. Whenever it brings benefit, now we should encourage its production and consumption. What we should do? Encourage its. Sir, what is cap and trade system? Understood. Oh, okay. Now 5 minutes back the person has texted. Now he said he understood. Okay, fine. Now positive externality. That means which brings benefit. Which brings production and consumption should be encouraged. If it is left to market that will not happen. Why? Because people will not understand its good effects and they will consume low. They will consume. So how to encourage it? So government straight away come give subsidy. Give. For whom? Either producer or either consumer. You decide whom you want to give. Best way is always giving it to them. Because production cost goes down. When cost of production goes down, selling price will also decrease. So people will come forward to buy. So this is the simplest way. Giving subsidy to whom? Producer. That encourages the production and consumption. And sometimes government will only straight away come to the market. They will only produce the positive goods and they will only sell. Or they will join hands with the private. Government along with private, they will join hands and they will provide. So that we are encouraging the production and consumption of which externality? Positive externality. So next one. Government intervention in case of merit and demerit goods, both we will speak, and also public goods. See, public goods I said, problem is free rider. How to tackle free rider? Giving excludable public good. I will speak about this once again. Before this, flip back page, have a look. Any doubts in any of this? Let me know. This entire chapter is full story only. Even chapter 8 is also full story. They're about monetary policies. So tomorrow same time, morning 8:45 to 1:15. ಫಾಸ್ಟ್ ಆಗ್ತಿದ್ಯಾ? ಇಲ್ಲಿ ನಾನು ಸ್ಲೋ ಮಾಡಿದ್ರೆ ಮಲ್ಕೊಬಿಡ್ತೀರಾ? ಆಗ್ಲಿ ನಿದ್ದೆ ಈ ಸ್ಪೀಡಲ್ಲಿ ಮಾಡಿದ್ರು ನಿದ್ದೆ ಬರ್ತಿದ್ಯಾ ನಿನಗೆ? ಅವನಿಗೊಂದು ಟ್ರೀಟ್ಮೆಂಟ್ ಕೊಡೋಣ ಬೇಕಾರೆ. ಎತ್ಕೊಬರ ವಾಟರ್ ಬಾಟ್ಲ್ ಒಂದು 2 ಲೀಟರ್ದು. ತುಮಕೂರಲ್ಲಿ ಮಾಡಿದ್ನ ಒಂದ್ಸಲಿ ಯಾರಿಗೋ. ಇಲ್ಲಿ ಶಿವ ಅಂತ ಬರ್ತಾನೊಬ್ಬ ಸಂಜೆ ಬ್ಯಾಚ್ ಅಲ್ಲಿ. ಅವನು ಯಾವಾಗೂ ತುಕುಡಿಸ್ತಿರ್ತಾನೆ. ಅದಕ್ಕೆ ಅವ್ನು ಬಂತಿದ್ದಂಗೆ ಕ್ಲಾಸಿಗೆ ಅರ್ಧ ಲೀಟರ್ ವಾಟರ್ ಬಾಟ್ಲ್ ಕೊಟ್ಟು ಫುಲ್ ಬಾಟ್ಲ್ ನೀರು ಕುಡಿ ಅಂತೀನಿ. Mother nature will not allow him to sleep. Done? We'll continue. Let's continue. Okay, next, government intervention in case of which goods? First understand, what is merit goods? What is? Socially. Is AC turned off? ಇಲ್ಲೇ ಇರುತ್ತೆ ರಿಮೋಟ್, ಬಂದು ಆಮೇಲೆ ಎತ್ಕೊಂಡು ಆನ್ ಮಾಡ್ಕೊಡ್ರು. ಆಗ್ಲೇ ನೋಡ್ಕೋಬೇಕು ತಾನೆ ಇದನ್ನ. ಬೆಳಗಿಂದ ಆನ್ ಆಗಿತ್ತು. You can't even sit if from morning it was not turned on. During break it was turned off. Okay, chalo fine. Okay, come back. Government intervention in case of which good? By the way, what is merit good? Socially desirable. That means which brings benefit, but that is not available for free. And it is also rivalrous, and it is also, best example, hospital services, school, colleges. Now, Arivupro Academy. Can you come sit free of cost and learn? Hello, boss, paisa. They will ask. That means if you are not willing to pay, you will be stopped from getting the access. That means which brings benefit to public at large, but you should pay and get the benefit. You should pay and get the. That is called as socially desirable or merit goods. See, merit goods are rival, merit goods are. But these are limited in supply. That means this will not be in abundance. We will say now, limited seeds only. What is it? Limited in supply. And if you are not ready to pay, If you're not willing to pay, you can be rejected. And this involves dash externality, positive externality, and also positive. If any new person comes, for him also additional cost gets involved. Let's say hospital. Now there are 10 ICU patients. If 11th ICU patient comes, will hospital incur cost? Yes. Extra bed, nurse, doctor, or will they come and say, hey, little you go aside, I will also sleep next to you like this. They will also give treatment to me. No, nah. There is a marginal cost involved for supplying that extra units. Now, substantially positive externality. What is it? Substantially are involved in the consumption of this merit goods. But if it is left to the market, they will be underproduced and like education, healthcare, welfare, hospital, like housing, fire protection, waste management, public library. About this entire topic example is important. And most repeated question from this free and compulsory education, and government will set the goods and services, set the standards, how much to issue, all this merit goods. Which goods? See, government, how do they control? Through regulation. They will come with rules and regulation like you should compulsory wear seat belt while driving the car. You should compulsory wear helmet while riding the vehicle, two-wheeler, and compulsory you should have insurance when you have a vehicle riding in the road. If you go and bang someone, what to do? From your insurance money only we'll give compensation to them, and we will provide subsidies whenever positive externalities are there, especially LPG cylinder. We'll give subsidy to producer, so straight away we'll get at lesser price, and direct government will only interfere along with the market provision with the private people. See, these are the examples how government has tackled to encourage the consumption of the merit goods. Here, regulation determines how private activity must be. That means, no doubt, schools and college, you decide whom to take as admission. 90%, 95%, 98%. Now, ಹೆಣ್ಣು ಮಕ್ಕಳೇ ಮೇಲುಗೈ. Okay, make them 98% cut off. But what has to be taught in your first syllabus, second semester, third semester in the syllabus? Who will decide that? Government, na? What should be the books in which you should teach? What all syllabus? When did, let me say, Mughal come to India? They will only decide. They will ask you to read. And they will speak about all this mathematics. We have now, what is that? Integrals, calculuses. We know that nowhere in life we are going to use it. We still learn. Even in economics, there are certain topics. Nowhere in life you will use it. But still you will learn that. Next term, government can prohibit some type of goods and services or set the standards or issue the mandates. Like for example, see, compulsory insurance you have to avail, and if you have some contagious disease, compulsory you should take vaccination, using of helmet, seat belt, free and compulsory education to the children between the age group of 6 to 14. All these are the examples of merit goods, encouraging the merit goods. From these examples, questions will come in exam. Clear? Next, how do we discourage the consumption of what is demerit goods? Socially undesirable, like cigarette, alcohol. Customers will not be the best judge of socially undesirable. You go and ask the drunkard fellow, why do you drink Amrutado? You will get better sleep, whether it is road or whether it is home, it doesn't matter. Full. That means customers are never the best judge. Consumption will affect on the health. Consumption will. So like cigarette, alcohol, intoxicated drugs, all of this. So how do government tackle? Sometimes they will make a complete. Sometime may. What is this word? May. Because big revenue from that only. Next. Through persuasion, that means intervention. Through which way? Negative advertisement. ನಾನು ಮುಖೇಶ್ ಗುಡ್ಕಾ ಜಗಿಯುತ್ತಿದ್ದೆ, ದುರಾದೃಷ್ಟವಶಾತ್ ನನ್ನನ್ನು ಉಳಿಸಿಕೊಳ್ಳಲು ಆಗಲಿಲ್ಲ. Like this, we provide negative advertisement. We say the bad side of it. Akshay Kumar will come. Hospital ka सामने करके फूफू कर रहा है, क्या हो गया? बीबी अंदर बीमार है. See? In the entire career of Akshay Kumar, first endorsement is cigarette. And the same person is coming and saying cigarette is bad. Hypocrisy this is from Bollywood. Next, through legislation, prohibiting the advertisements and promotion of which good? In whatsoever manner. Negative good should never be advertised. Really? Rajasthan Royals, jersey you see on the top right here. Oaksman Smith, what is that? Whiskey brand. Imperial Blue. Men will be men. Advertisement will come in the TV, na? Men will be men. Seagram's, everyone knows. Imperial Blue is a whiskey brand. Tuborg sodas, everyone knows Tuborg is a beer brand. All credit goes to Vijay Mallya. He was the one who decoded this. Create a brand name and create every other alternative business in that same brand name. Kingfisher Airlines, Kingfisher packaged drinking water, Kingfisher calendar, Kingfisher, everything in the name of Kingfisher. See, they are also doing the same now. See, legend is. Next, strict regulation. What is it? to limit access of the goods, especially to whom? Vulnerable people like you, adolescents and children between the age group of 12 to 16, one who is converting from the small age group to the adult age, na? For such kind of people, see 100 meters from schools and colleges, tobacco free zone, after 100 meters you do whatever you want. We don't mind. For 100 meters restriction, and we will put GST Council highest tax bracket 40%, and government will decide below which demerit goods should never be sold. We will only fix the minimum price. In the market, let's say the market equilibrium price is 150 rupee. No, beer bottle minimum 300. It should not be 150 and all. Bare minimum, because we need tax na 200%. That is the reason. See, they will only come and fix the minimum price below which demerit goods should never be exchanged in the market. Next comes government intervention in case of a. See, the biggest problem with public good is a. Since it is non-rival, government cannot stop someone from using it. So what do? Simple. They will give the license to some private guy to provide public benefit. To provide which benefit? See there, a very common method followed by granting license to private firm to build the public facility, and we will issue the license to him. So charge the entry fee, national highway, toll charges. If you are ready to pay, get inside. If not, get outside. Go, come from that service road. In 100 meter, 5 ump is there. Come. Next comes, there are certain goods and services only and only government provides. We will never allow that to private, like atomic energy generation, securities in airport, scientific approval of drugs. In these cases, we will never give permission to any private. Only government will do. Only and only. Because it is a benefit to the public. What is it? Benefit to the? Clear. So this is how government will intervene to tackle the problem of free rider in the public good. And this is most important. Repeated question. And again, connection is there in chapter 10 here. Connection is there in price control and price floor, price ceiling, price control measures. Which measures? We have price floor, price ceiling. See, price floor. Floor means below. Minimum price. Which price? That is bare minimum you will get. Price ceiling, maximum. Ceiling means at top, maximum price. Price floor, also called as MSP, minimum support. Usually on agricultural crops. Government has fixed a MSP, minimum support price, and especially the information comes in chapter 10. In India, on 23 crops. How many crops?
23 crops.
1.5 times of their production cost is given as MSP. And this was decided very long back. They haven't changed it. So as per your syllabus, what is it? I am saying as per the syllabus, it is given in chapter 10. On 23 crops, 1.5 times MSP will be granted. That means, suppose, let's take some grains, food grains, lentils. In the market, demand and supply prices is 75 rupee. But government will say, don't worry, you don't sell in the market. I will guarantee you minimum how much?
150.
You come and sell to my government agencies only. My government agencies will buy from you. We will keep buffer stock. We will keep. In the summer time, whenever there is no rain, when the demand goes up but supply reduces, now we will issue whatever buffer stock we have maintained, now we will supply that to market. So my own government agencies, my own government will come and buy from you. See, their minimum support price is mainly on many crops in India has been supported, and that will be procured through government in order to support the price. Main objective is guaranteeing the steady and assured income to the farmers. This is MSP program. Price floor usually comes on agricultural crops. Some 23 crops. How many crops?
23 crops.
Not on every crop. Clear? Now this is MSP 150. Even in the market, if the price goes below, don't worry. I will buy at how much? This is price floor. Oh, next reverse, price ceiling. This should be the maximum price beyond which you can never sell in the market. See, suppose in times of some unexpected shocks, unexpected emergencies, prices will skyrocket. That time, government may intervene to set the price ceiling. Now, let's say 1 kg rice. 1 kg. If it becomes 150 rupee in the market, will you buy? Sir, you will stop eating rice only, sir. That's why it is an essential good. Government will come and say, no one can sell beyond 75 rupees per kg. That should be the maximum price. That should be the... sir, will Government of India do that? They may. What is it? But in your books it is there. We should learn. Clear? That is called price ceiling. That is maximum price. Which price? Above which it should never be sold. See, same concept in demerit also we studied. Below which it should never be sold. That is for demerit. For merit, good goods. Above which it should never be sold. Highest itself is the 75. This is called price ceiling. What is it?
price ceiling.
and price floor. Price floor means minimum price. Price ceiling, maximum price. Floor, minimum. Ceiling, maximum. Clear? By this, we are done with the merit goods and demerit goods. Last but not the least, government intervention to correct dash incomplete. Simple, government has made it mandatory. Complete disclosure of information. Which information? Now, for all this food FMCG brands, hello, what all poison you are putting in that food? Disclose. Backside. Even though not in the layman's and scientific name also, disclose. Anyhow, people will not read. Don't worry. You put at the backside. Anyhow, it is poison. What they will do? But during election and all, now be careful. You give some good goods. We have to get the votes. Later, you do whatever you want. We don't mind. Political contribution coming now, so we will allow you. See, all this government makes it to accurate labeling and content disclosure by the products, and also mandatory disclosure of informations in investments, like who are your promoters, for what purpose you will take funds, what is that you are raising this equity, now IPO you are coming, now why are you coming with this. After getting all the funds, later you do special resolution in your organization and then you change. But initially when you are introducing, there should be a mandatory disclosure of information. Next comes public dissemination of information to improve the. See, someone calls you like, I am a judge, you police officer and all, don't believe, do not give your OTP to someone, banks will never call and ask you for OTP. All this, public dissemination. When you call someone, caller tune will come now. All this, public awareness. What is it? Even after doing all this, still, our scammers are one step ahead of our government. All this. Next, regulating on what? Regulating on what? We will set standards for advertisement and we will make advertisement more and more. More and more. And less misleading. What is it? We are only agreeing. We are less misleading. Like Horlicks, taller, stronger, sharper. No. Theory jeet ki. Bullshit. Diabetes ki. That is how reality it is. See, we are only setting advertisement standard. It should be more responsible, more informative and less misleading. What is it? Less? We will mislead you, but little less. That's it. Clear? So, this was the government intervention to correct the information failure. Last but not the least, equitable distribution of income and wealth. What is it? Equitable distribution of? What is it? Simple concept. Take from the rich people in the name of collecting progressive tax and even on indirect tax also. On luxury items, more tax. Essential items, lesser tax. Whatever money you get, you spend it on welfare programs, like for example, targeted budget allocation, unemployment compensation, transfer payment, subsidy, social security, job reservation, land reform, gender sensitive budget. Sometimes when government intervenes, because of government intervention only failure will happen. See, every single time it doesn't mean that when government intervenes, failure will be corrected. Because of government intervention only, problem would have been gone much more bigger. That is called as dash failure. So, for all the policy maker, they should understand the cost and benefit associated with any government even before they are coming inside. Because of government intervention, there will be sometimes wastage of, and that will only create fresh and more serious problems. So, by this unit 2 also comes to an connection to this last unit. There is nothing in the last unit. That's it. First write this. First write this down. I will explain. Write down this. If anyone has not written, kindly write this down first. And also wait, with interest rate you write it. That interest rate concept comes from monetary policy actually. See this guy, God even made a team to promote his Royal Challengers liquor. Yeah, RCB. That is what, see, Vijay Mallya knew how to promote the business. Everything under the same name, every brand. Yesterday was a total destruction. I thought after 200 they hit Akka. Something they will balance, something they will win. First 6 overs only I understood. Gone. Match gone. But ಅದೇನ್ ಗೊತ್ತೇನೋ, ಯಾವಾಗ್ಲೂ ಜೀವನದಲ್ಲಿ ಹಂಗೆ. ನಮ್ಮ ಮನೇಲಿ ಬೆಂಕಿ ಬಿದ್ದಿದ್ರು ಪರವಾಗಿಲ್ಲ, ಬೇರೆಯವ್ರ ಮನೆಯಲ್ಲಿ ಸ್ವೀಟ್ ಏನ್ ಮಾಡ್ತಾವ್ರೆ ಅಂತಾನೆ ಯೋಚನೆ ಇರೋದು ಅವ್ರಿಗೆ. I can understand CSK people. Dhoni is not playing. I can understand your feeling. Don't worry. In Chennai, he will come for one match. He will play. And when the wicket falls off any of your team members, you will only support. Wow, wicket went. Nice. How 5 balls he will dart, 1 ball he will hit 4. Then full Instagram speaks about it. Don't worry. Contribution for credit. See, cap and trade system. Credit facilities we are providing. Carbon credit facility. Dhoni is the highest contributor. See, even I was a Dhoni fan. I don't say that I hate him. Even I like him. There is a saying. You die like a hero or you live longer to be a villain. Applies same to CSK management. Done, finished? See why IPL and all now. Shut and read. Anyhow, it's a business by end of the day. They are making crores together. What is that you are making? One more attempt of CA. Maximum. Come again. See, he already decided. Come again, sir. ಯಾರಿಗೆ ಬೇಕು ಸರ್ ಈ ತಲೆನೋವೆಲ್ಲ ಅಲ್ಲನಾ? Let's continue. Okay. But crazy last year when RCB won in Chennai, we distributed lollipop. Okay, let's go to the next unit. Okay, stop discussing. Next half an hour, we'll be finishing this. This doesn't take much time. Here, already half of the thing I have explained. Another few half things, I have to connect things, not even explaining. I have to just interconnect things. See, fiscal policy. Which policy? In short, dealing with public money. Fiscal policies are created by whom? Government of the nation. Government expenditure, tax, all those elements. See, whatever we spoke here, same to same thing, I will be interconnecting with the unit. Full. These are the elements which I am going to speak now. Wait. Hardik. Completed. Okay, done. Now observe. The very first one. Objectives of fiscal policy. What is the first topic? Now what is the objective? See, already I spoke about classical economists. Always at full employment equilibrium. Government intervention is not at all required. Government intervention is unnecessary. We will only self-control, self-regulate the fluctuations which is caused by the business cycle. Same story. Classical economist. And later 1930, Great Depression came up and all problems started. That solution was given by John Maynard Keynes. Counter-cyclical fiscal policy. Same story. Clear? So I'm not touching this once again. If I speak about the same thing, you will sleep off. Next. Objectives of fiscal policy. See, mainly there are 4 objectives. How many objectives? See, all 4 objectives cannot be achieved together. That is the problem. First one, achieving the dash employment, maintaining dash stability, accelerating the rate of dash growth, equitable distribution of income and see, this is what fiscal policy aims to achieve in the country. But the problem is, suppose if you want to go with equitable distribution of income and wealth, rapid economic growth will not possible. That is contradicting. So all 4 cannot be achieved together. Same way, developed countries have a different priority. Developing countries have a different. See, for a developed countries, first priority is bringing stability. Next one is, but for a developing nation like India, first and foremost, we should have a rapid economic growth. Next, full employment. Next, so priorities are different from developed countries and developing nation. Next comes automatic stabilizer and discretionary. Already I've spoken. Before 1930, classical economists said things will get automatically adjusted on its own without any intervention by the government. So it is called as built-in fiscal mechanism. Which mechanism? Which will operate automatically. That means there is a built-in tax and expenditure mechanism. If there is inflation, automatically expenditures will go up. Sorry, inflation means expenditures will come down, tax rates will go up. If there is deflation, expenditures will go up from the government, tax rates will come down. Any deliberate action, which action? By the government is unnecessary. What is it? Unnecessary. See, in order to reduce any fluctuations in GDP, automatically things will get adjusted and that will bring the stabilization. No deliberate attempt by government is required. That is automatic stabilizer. But we know things will not work like that. After 1930, we had one beautiful example. So we started following which fiscal policy later. Now this is deliberate intervention. Which intervention? By the government to control fluctuations in the business cycle, which is creating instability in economy. Instability in. How do you do that? Either by following When do you follow this expansionary fiscal policy? During downwards phase of business cycle. When do you follow contractionary phase? Upward phase of business cycle. That means when there is inflation, contractionary fiscal policy. When there is a deflation, so it is deliberate policy actions by the government by using fiscal policy tools. Which tools? By the way, which are those tools? Government expenditure, tax, budget and public debt. Now when you are following contractionary policy, government expenditure decreases, tax rate. Any one you will follow or combination of both to control the economy. When there is a deflation, government expenditure, tax rate, or any one you will follow out of these two or combination of both. That is called as expansionary fiscal policy. Clear? That's it. See, it is a demand-sided policy. Which sided policy? To control the GDP. By the way, GDP MP expenditure method C plus I plus G plus X minus M. So Keynesian policy of fiscal is a dash-sided policy. Demand-sided. To control what? Aggregate domestic product in the country. So here, the ability of a fiscal policy to influence dash as an aggregate. Which side is it? That is what? AD side. Which side? So same formula. C plus I plus G plus X minus M. How many types of fiscal policy is there? Two types. Expansionary and when do we use expansionary? When there is a recessionary gap, when economy is not performing well. What do? You increase all government spending or else you will decrease the any one you will follow. What is it? Any? See, either reduce all the taxes or increase the government expenditure. If not, adapt combination of both. So what are all the problems during this? Unemployment will be there. Consumption spending is low. Aggregate demand is low. There is a fall in GDP. So these all has to be tackled. And which kind of budget will you follow? Deficit budget. Which budget? And contractionary fiscal policy, full opposite. There is a dash in the economy. So what is the problem now? Now the problem is higher demand in the market, increased customer spending, general price level going up. How do you tackle? Reduce all government spending and increase all kinds of taxes. Or else adapt combination of both. That's it. This brings to last topic. Instruments of. By the way, how many instruments are there in fiscal policy? Which are those four? First one, government expenditure. Second one, tax. Third one, budget. Fourth one, public debt. Now that's it. By this entire chapter only comes to an end. That is what I said. Already we have done. Just the interconnection. Unit 4 is like a cocktail of all things whatever we studied in 5, Unit 1, Unit 2. Now see there. Government expenditure. When government spends, there are three kinds of spending. One is current expenditure on day-to-day running of government. Capital expenditure on infrastructure project. Next comes incomes received but not earned. Next comes role of government expenditure in a direct manner. Role of government expenditure in a direct manner means it provides more and more employment of labor. When government spends money, money will go to the hands of whom? C. When customer gets more money, that is household, demand will increase. Production should increase. Employment will increase. Employment of labor and purchasing of multiple goods and services. And when government spends money, that money will also work like a. Already we spoke about multiplier. Even government expenditure will act like a multiplier. When people spend more, what is that spending more? Marginal propensity to consume. Next, during the time of inflation. During the time of government should spend more or spend less? Spend less. Already there is money in the market. Now, why should the government spend? Government will spend less. It will reduce. When government reduces the spending, automatically money circulation will fall down. Automatically effect of inflation will go down because now people will not get more money in the hands. Whatever existing money is there, that will wipe out. How do? Monetary policy will come into picture for that and Nirmala aunty will come into picture. Next, during the full opposite, now spend more money, spend more on infrastructure project, any developmental project, make sure that people get more money in their hands. When people get more money, demand will, production should, employment should, entire economic activity will. Now, fiscal policy will work until recession, until contraction, by mistake. If you remember business cycle, until contraction, fine. By mistake, if the economy enters depression, fiscal policy will. Then what will work? Pump pricing or compensatory spending. Which pricing? This is interesting. In class, usually we'll create one full story. We'll explain it. But now if I touch that story, 1 hour will go. Okay, pump pricing. Which pricing? one huge money government will pump into the system. Sir, where will government get that money to pump huge money? Two options. Either print your own nation currency note, or if not, borrow. The problem with printing your own currency note is Zimbabwe, you remember. Later it will lead to hyperinflation. It will lead to clear. So we should be very careful when we are printing and pumping into the note. It's not printing and pumping. You should know when to remove that also. If you don't know when to remove, goodbye. Katam, Gaya. For solving one problem, you created much more bigger problem, hyperinflation. Clear? So pump pricing, injecting huge money into the system. It's like giving shock treatment. When a person is about to die, doctor will come with electric shock treatment. They will keep two iron, that what is it, iron box kind of a thing on chest. They will bounce back like that. We are giving shock to economy by pumping more money into the system. So automatically people get more money, automatically demand will skyrocket. To meet that demand, production should, employment should, economic activity will. That is pump pricing. Compensatory spending, like our government hospital treatment. You will get treatment, you will be fine, not immediately, definitely. That means only government will spend, only and only. C and I will not at all spend. Slowly government will start increasing, slowly, like slow treatment. Economy will bounce back. When economy starts seeing good trend, next is customers will also get activated, they will spend. Businessman will also start investing. That means these two are not spending, including what these two guys were supposed to spend. Who will spend? Compensating C and I, only government is spending to boost economy. That is called compensatory spending. It is like government hospital treatment. Not immediately, but definitely you will recover. Like that. Clear? So this is the measures during the depression. Clear? I said now, where will government get the funds? Either you need to print your own currency note, or if not, see, but farmer has a risk. That means first one, farmer means this one, monetization has a risk of crowding out. I will explain what is crowding out, important topic. Next comes tax. Simple logic. When to increase tax, whenever tax rate changes, disposable income in the hands of the public will also change. When Nirmala aunty levies more tax, disposable income goes down. When she reduces the tax, disposable income, purchasing power. So whenever there is an inflation, whenever there is an auntie will come with new tax and she will exploit you people, or she will increase the existing tax rate. Whenever there is a deflation, they will reduce tax. This is the measures, tax measures. Next comes budget. Already spoken about this. When there is a inflation, surplus, budget. When there is a deflation, deficit, budget. Deficit budget will stimulate the economy. Surplus budget will reduce the performance in the economy. This brings to the last but not the least. What is it? Public debt. That means where you are borrowing loan. Two ways. One, place of borrowing. Second one, form of borrowing. When we say place of borrowing, either inside the country or, if you remember, public debt expenditure, first take the loan to repay first loan, take the second loan to repay second, take the internal debt. What is it? From your own citizen. Now when you are borrowing from your own citizen, again two kinds are there, either short term or either short term means treasury bills, long term means capital bonds. What is it? Short term means treasury bills, long term means, and these are negotiable instruments. Which instruments? They are market loans. For long term, capital bonds. For short term, treasury bills. Next comes small savings, small savings of general public. Best example, NSC, National Saving Certificates, or National Depository Certificate, even SGB, sovereign gold bonds, now discontinued after gold price got skyrocketed. Clear up? Now that means here it is non-negotiable. You can't sell this in the open market. Only you will get back the money. But in this case, any treasury bills, capital bond, if you have emergency, you can sell this in the market and you can realize back your money at the present market value. Present. So these are negotiable. These are not negotiable. These are forms of borrowing. Place of borrowing either inside the country or either outside the country. This is public debt as an instrument. Simple. When your people have more money in the hands, that means during inflation, you will borrow from your people and you will repay the outside loan. When inside the country people don't have money, I will spend money inside. That is public debt. Clear? That's it. These are the instruments of fiscal policy. If any economy has to grow, they should focus on. Who is that man? Cell phone using? Keep it inside. No. Long-term economic growth. What is it? Long-term economic growth. So a country should follow sustainable development. Focus on which kind of infrastructure, and we should also focus on research and development. Next, focus on tax, especially tax policy. Nirmala aunty, if you keep on exploiting people, they will say tada bye bye. They will be not encouraged to produce and save. So kindly identify very well designed. And also whatever money you receive in the name of tax, how exactly are you going to spend through your public policy, how much subsidy you will give to farmers, and most important, protecting your externalities. How do you tackle by coming with external environment taxes and subsidies on inputs and support for whom farmers, MSP program, and also subsidy for the production of essential goods and services. All this they have to focus for long-term economic growth. Clear? And see, last but not the least, redistribution of income and same story. Take from rich, give benefit to poor. Which kind of rich people are you concentrating on? Ultra rich, extra rich and all. Next, how do you tackle them? Progressive tax. And also through indirect tax. Rich items, especially luxury goods, rich people will buy now more tax, and necessary goods lower tax. And whatever money you get from the tax, spend it on welfare program. What kind of welfare program? Poverty eradication, providing either free or Karnataka government forgot this word subsidy only, but not free medicine and not free education. That is business only. We MP MLAs only, we have a colleges and schools. We will run that. Other than that, see, unemployment compensation will give, pension we will give with the tension, and also essential commodities we will give like electricity. All this we were giving for free. Next, infrastructure based on selective basis. Various socio-security schemes under which people will be entitled for old age pension. Which pension? Unemployment. That means transfer payment they are speaking about. Subsidizing the production for mass consumption, essential goods and services, and public production and granting of subsidies for the sufficient essential goods and services, strengthening the human capital, all this. But the problem is, Nirmala aunty, if you come with more tax, if tax structures are not carefully framed, that will discourage people to produce and save. And next, if you keep on giving more and more benefit in the name of fiscal policy, like Amma canteen, Chittappa canteen, Dodappa canteen and all, even poor people will also not be encouraged to work and my leader is giving 1 rupee breakfast, 2 rupee lunch, 1 rupee dinner, 4 rupee entire day pass. For me, my leader is giving. For my son, my leader's son will give, because he will only become next CM, na? See, Tamil Nadu, Karnataka, best example. See, all this discouraging to work and save. Clear? So this is related to instruments and redistribution of income and wealth. Now comes the most important topic. Which one? Crowding. See, simple logic. When economy is not performing well, when economy is during the recession, all our thumbs up fellows will make one small mistake. Because of that one small mistake, long-term economic impact. What is it? What is that? See, when economy is not performing well, recession, we should borrow loan from outside. But stupid fellows, they will try to borrow from. Now you tell me, as a general public, if you want to give money to government, if government gives high interest rate, are you giving money or low interest rate? Okay, we will increase interest rate. Stupidity, when economy is not performing well, which rascal fellow will increase interest rate? Government will do that. Our thumbs up fellow, that is speciality in India. We will do that. So what will happen? Because interest rate is more, people will give money to government. For what purpose? To government to spend money in economy. Why government is spending money? If government spends money, people will get more money. They will buy more goods and services. Demand will. Production should. Employment should. Overall economic activity should. But nothing will happen like that. Why? Interest rate is with the assumption that if government increases spendings, all that economic development will happen, is what government thought. Is what government. But why will it not happen? When government spends money, when people get money in the hands, rather than spending on goods and services, they are saving. Why? Interest rate is. Because of this, demand for goods will. Household consumption will. When household is not consuming, why will businessmen come and invest money? Even business investment will. Or borrowings will decrease. Savings will increase. Why? Interest rate is. And this is the total limitation of discretionary fiscal policy, called as crowding. What is crowding out? Crowding out is a limitation of fiscal policy during the time of when economy is undergoing with lax fiscal policy, but which will fail. Which will? Why? Because of one small reason. What is it? Increase in interest rate. That is called crowding out. Simple logic. What is crowding out? Limitation of fiscal policy during the recession. Clear? Why did this happen? Main root causes: interest rate increase during the recession. Clear? Now what happens whenever crowding out happens? It will completely work opposite of compensatory spending. If you remember, pump pricing, compensatory, that means these two were not spending, compensating them who was spending. At least government, when they kept on spending, economy was bouncing back, na? But here it will never bounce back because these guys will never spend. Household will always save, business investment will not at all go up. Next, crowding out is always against dash policy, and that will ultimately lead to, see, sometimes government intervention will only create fresh and new problems, na? Crowding out. An increase in the size of government spending during the will crowd out which spending? Public spending. That means, sorry, private spending, C and I. What does it private spending means? Or in other words, spendings by government in the economy gets replaced, permanently replaced. That means these two guys, C and I, will never spend. Only who is spending? At least in this case, compensatory. After certain level, when economy slowly bounce back, those guys will come back. Those guys will spend. But here they will not at all spend. As a result, effectiveness on dash policy, in order to stimulate the aggregate demand, will be diminished to dash extent. And this will have an impact on. Clear? And this crowding out will happen only during contraction phase or recession phase by mistake. If economy is already in the depression, see, deep recession. Which recession? That means depression. Crowding out is very less likely to happen because already economy is at very bad phase. People will not be interested to spend. So crowding out very less chances to happen in depression. But where it will happen? Contraction. When? Clear? So this brings to the last topic of the chapter 7. Limitations of. Just now we studied now. What is the first limitation? Crowding out. Crowding out is the limitation of fiscal policy. And see, always and always, whatever our government makes, our decision making also lag, recognition also lag, impact is also lag, and implementation also every time delay. Every time. Oh, inflation has come. Okay, I will come with measures. Recognition was itself lag. And taking decision. By the time they take decision, inflation would have turned into contraction. Implementing inflationary measures when there is a contractionary measures in the economy. And result, laddu. Clear? Impact lag. Next, lack of information and uncertainty about inflation in. We don't get to know. You only said now, sir, business cycle highly impossible to predict. And all, yes, I agree. And also, integrity issue. Political interest, self-interest is more than social interest. Hello, my government constructed flyover. Hello, our government gave permission. Hello, our government gave funds. They stupid fellows. To construct one flyover, 15 years we have taken. Three governments. Hello, Modi did this. Siddaramaiah did this. See, yellow line inauguration of metro. All fighting. Stupidity. See, political. Promoting their self-interest rather than. India, best example. Karnataka, to perfect example. Cost is involved. That means whenever government does anything, cost is involved. Instantaneously changing dash spending and tax rates. Clear? That means government keeps on changing their spending, increasing, decreasing tax rate because of inflation and deflation. But certain government spendings cannot get adjusted. Sir, we are constructing some dam. Within next 2 years, we should construct because long gestation period is there. Because there is inflation in economy, we cannot stop spending on that. We have to complete that highway project in next 3 years. So we cannot adjust. And defense expenses. All this cannot be stopped. See here, increasing government borrowings creates burden not just for present, even in the future. And public works cannot get adjusted because of movement of the trade cycle. Like highway project, dam has a long gestation period, and certain finances cannot be controlled, like defense expenses. All these are the problem. And next again, once again, crowding out topic. See what happens, even to run business, even the business people will borrow loan from the banks. Even government is also borrowing loan from public. When these two guys starts competing, what is it? These two start guys to borrow money. What will happen to interest rate? It will boom up, no? During recession, if this booms up, private guy will come out. Business person will not borrow. Now who should borrow? When you borrow more money from public during contraction at high interest rate, what will happen? Clear? By this entire chapter 7 comes to an Kadam. Well, one of the biggest, and with respect to government policies. Which policies? Clear up. Flip back your page. Have a look. Before moving to the next unit. Chapter 8, unit 1, we will touch. Half an hour, aram se we can finish half of that. Theories you need to understand there. Or else we'll go with the chapter 10 better. We'll finish that. What all you should do, what all you should take care. That I will instruct. See, hardly it takes 5 minutes to instruct you there. Nothing big there. See, chapter 10 is divided into 5 parts. How many parts? And you have to read and come tomorrow without fail. See, first one, ancient India. What is it? India under the, let me say, king, queen rule, and India comes under the British rule. Next one is British rule. Clear? So these two topics are the first scenario. That means before independence. What is it called? Before independence. In this, sometimes the question comes from this ancient India. India was self-sufficient. We had villages with artisans, craftsmen. 1/3 to 1/4 of the world's wealth was with India. And those questions will come. Or else sometimes from the British ruling. India was predominant in cotton and jute productivity. Those questions will come. Next, this is first category. Not that important. Next comes second category. Post-independence. What is it? What all disaster we only created for ourselves. In year 1947 to 1980. What is it? 1947 to? 1980. This is also not that important. See, this is first half of the chapter. Not that important. If you observe a question paper, you will hardly get 1 or 2 questions from this area. That's it in the first half. 8 questions. How many questions? 8 will come from the second half, which is that early liberalization. What is it? Early liberalization, 1980s to 1990, precisely 1985. This is where question starts. This is where exam questions will come from the chapter 10. And most important questions, 1991, fiscal reforms, financial reforms, SEBI, all that measures taken by government to bring changes, that is full on important. And last but not the least, highest marks weightage, again, primary sector, secondary sector, all that Pradhana Mantri dash 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 Yojana, all that global innovative index, 40th ranking, dependency of agriculture, dependency of industry, service sector, all of the, see, these 3, whatever black color I have marked, this is where minimum 8 questions. And in this case, 1 or 2 question. It may come or even it may. And you can't ignore this chapter also, chapter 10. Minimum 8 marks or sometimes even worse scenario, 10 marks. Usually they will always come up with 10 only. If you see the past 5 papers, in 3 papers 10 marks, in 1 paper 9 marks, in 1 paper 7 marks. They have asked. So you can't ignore. And most question comes from where? Last area. Early liberalization 1980. From there and onwards, entire second half of the chapter is important. Every yojana, every scheme, especially Niti Ayog. Which one? In between we have a Niti Ayog. In that Niti Ayog, they will give all this information about e-vehicle, development of EV vehicles, all that Shunya campaign, e-Amrit, all those from that campaigns, from the programs of government, questions will come. So be careful. Clear? So these 3 is extremely important. This is where you have to focus on. You have to read and come full on. Entire chapter is filled with information. Clear? That's it. I said now only 5 minutes it takes to finish the chapter 10. It will not take much time at all. Okay, chalo. We'll go with the chapter 8, unit 1. I will give the background. See, in that starting meaning of money, characteristics. One question will come. Usually, how many questions? Like, for example, it is not easily reproducible. General form, it is recognizable. Uniformity will be there. That is called as legal tender. What is it called? Earlier barter system was there, indivisibility problem, all that intro part of money. What is it? Intro part of generic topic. That means characteristics. You will say, sir, standard way of deferred payment, measurement of value, all those durable, all this, whatever characteristic features are there. 4 characteristic features are there. Medium of exchange. Next, store of value, measurement of value, standard of deferred payment, all those. From there, entire elemental characteristics of money. What is it? One question will come from that area. Usually 1 question, and repeated question is that duplicability. That means public cannot easily duplicate it. That means it is not easy to counterfeit. Not easy to. That question is most repeated every single time. They will ask which among the characteristic feature is not the feature of money, or which among is not a characteristic features of money. Such kind of questions will come. Clear? Wait, let me show that. Here. See this meaning of money, barter system, fiat money. By the way, what do you mean by fiat money? Materially worthless. Next, all this, nature of money, generally acceptable, holding in the form of money, purchasing power, liquidity, it has no intrinsic value, legal tender, and this is where the question comes. One question will be from this general characteristics. And see this one, functions of money, medium of exchange, store of value, standard of deferred payment, all this, you may get the question. Clear? That is intro part. One question will come from the intro part. Okay, let's get started. Demand for money. What is it? Mainly there are two demands. How many demands? One, liquidity preference. I need to hold liquid money with me for some emergency purpose. Second one, derived demand. Which demand? In order to buy goods and... See boss, I don't spend every money on my first day of salary only. I will buy after 5 days some goods. After 10 days I need to travel somewhere. Prices may go up. I will hold money in order to derive a demand for goods and... So these are the two main reasons why we demand money. Why we? Next comes the whole chapter is dependent on this. Theories of demand for money. 3 plus 3. What is it? Total 6 theories. What is that 3? First theory, Fisher's theory. Which theory? Money is only used for transaction purpose. Which purpose? Except for buying goods and services. We don't keep money for anything else. This is what our classical economists before 1930, economy will always be at equilibrium, full employment. Those supported. Also called as which theory? From this Fisher theory, they will play around sometime. Nicely they will play. What is that? Now look at the board. Let me explain it. Now let's say Shashikiran is buying a chocolate. Let's say the price of chocolate is rupees 100. Price of chocolate is rupees 100. And let's say I'm meeting my girlfriend 5 times in a week. Assumption. Now married. Assumption. What is it? Assumption. Now let's say I'm meeting my girlfriend 5 times in a week, Monday to Friday. So number of times I bought the chocolate. Transaction. What is it? 5 transactions. So what will be the total demand for money? 500 rupees. So this is price level P. This is the transaction T. Now this is AD component. Which component? Fisher never focused on AD component. He only focused on AS component. Which component? So what is that now? If at all, if the price is rupees 100 in the market, don't you think there should be availability of money also 100 rupees in the market?
Yes.
Let's say if people have just 80 rupees in the hand, if product price is 100 rupee, can they buy?
No.
That means even money supply, money availability should also be 100. Then only they can buy the goods worth of rupees 100. So it means the main dependent factor is money supply. Which supply? So there should be money available. This is M. Money available worth of rupees how much? Worth of rupees 100. Then only the prices can be rupees 100. If money supply is less, prices are more, demand will not get created. So first and foremost, money supply. This is on supply side. Which side?
Supply.
Focus is on supply side. Whenever money supply changes, circulation of money changes, that will change the... And you know that already demand concept. Whenever price increases, demand. That means transactions will go down. When transaction goes down, multiplier effect will go down. That means velocity. What is it? How many times this money is getting circulated in the system? That is velocity. When will velocity change? When transaction changes. Shashikiran, rather than buying chocolate 5 times, if he buys 7 times, that means money will circulate how many times now? 7 times. If he buy only 5 times, money will circulate. So velocity will be constant. And when will velocity changes? Only when there is a change in transaction. Change in. Now simple. Velocity is V. Velocity is V. So this both put together. That is money and velocity. This is supply side. AS side. Now that means 100 rupee is getting circulated 5 times. How many times? That means even money supply should be how much? So AD should match with AS. Clear? So AS component is M and V. AD component P and... This is the formula with respect to actual money. Which money? Clear up? What is the formula with respect to actual money? MV and PT should be matching with each other. What is it? MV and PT should be matching. So PT should be equal to MV. What is it? PT should be equal to? Now we don't keep money just with our hands. We also keep money in bank. Even we do phone pay, Google pay, online transfers. Even that money gets circulated. That means there is a credit money available. Which money? Credit money. This credit money is what we call M dash. What do we call? And even the credit money will have a credit velocity. Which velocity? So this credit velocity is V dash. What is the credit velocity? Clear. So in short, it is not just PT is equals to MV. Now P and T should match with MV, along with that M dash V dash. So this is with respect to actual and credit money. What is that? Actual and this is what Fisher explained. Fisher only focused on the supply side. Fisher did not anything mention about the demand side, and he said money is only and only used for dash purpose, transaction purpose. So transaction motive. Which motive? Clear. Money is only and only used to buy goods and service. No savings, nothing. Only just to spend it on goods and. So this is the logic of Fisher theory. First equation will be PT is equals to MV with respect to actual money. Next, PT is equals to MV plus M dash V dash. Actual as well as credit money. What is it? Actual as well as? Clear. Now in an exam, they will play with you in numerical problems. Right, let me show that numerical. I think in September 24 attempt paper. Wait, let me erase this. Question number 71. In an economy, money supplies how much? 500. Now let me write M. Here let me write T. Here it will be. Hey, wait. P and T, na? V. Okay. Money is how much? And velocity is how much?
5.
So 500 multiplied by 5. 2500 crore. Okay, now they have given transaction. How much is transaction? 10,000. Now they are asking us to identify the average price level. What are they asking us to identify? And now see, observe, we know basic mathematics. We know that P and T should be matching with M and V. Now simple, what will happen? This P will remain LHS, this T will go to RHS. So what will happen? Now price will be equal to MV divided by T. What is it, MV? That means in short, 2500 crore divided by 10,000 transaction. What is the answer? 0.25. But observe the option ones.
Lakhs it is.
Thousands and lakhs. But question is in. Even in your maths exam, they don't play like this. In economics exam, they are playing. Question is in crore. Option is in thousands and lakh. And this is basic mathematics. When you are getting in decimal form, you are converting crores to lakh, means single decimal. When you are converting crores to thousand, double decimals. Simple. Now, logic is very simple. Suppose, let's say I have 1 crore rupees. How much? 1 crore rupees, let me call it as 1. If I have, let me say 0.5 crore, that means nothing but 50 lakh, na? 50 lakh is 0.5 crore. I can write this as 0.5. If I have 0.25 crore, that means 25 lakh. What is it?
25.
That is called 0. What did I get answer as? That means 0.25 is how much lakh? But most of them get inky pinky ponky, father had a donkey. On the result day, I am monkey, my friend is Venky. Literally, say simple common sense, that 0.25, even you can write like this. And you can still identify, that is 25 lakh. 0.25 crore means 25 lakh. Answer is 25 lakh is the price level. Like this they will play. Economics exam, but they will play with maths questions. Clear? Understood? Now, this was related to what? QTM. See, QTM is also called as dash theory or Fisher's theory. This was introduced by Irvin Fisher of which university? When was he introducing this? One of the oldest theory. And this was also supported by whom? Neoclassical. That means one who came after. They also supported. And the money is only and only used for dash approach. And see, demand for money should match with supply of money. Now, demand for money, P into T, should match with MV, actual plus M dash, V dash, credit. So, actual money concept, credit money concept. Both I explained. And this was the logic. If anyone has a doubt, kindly write this down if you want. So, there should be a direct connection between money supply and price level, and direct connection between transaction and velocity. So this is supply side. This is totally which side? Supply side. This is totally which side? Demand side, AD side. ಬೇರೆಯವ್ರಿಗೋ ನೀನ್ ಬರ್ಕೊಂಡಿದ್ಯಾ ಕಣ, ನೀನ್ ಇಂಟೆಲಿಜೆಂಟ್ ಫೆಲೋ. ಸೇಮ್ ಅದೇ, ಟೇಪ್ ರೆಕಾರ್ಡರ್ ಆನ್, ಟೇಪ್ ರೆಕಾರ್ಡರ್ ಆಫ್. Clear? So you should also remember formulas. From the formulas, they will ask questions. You have to be careful there. Today, the evening batch will be done. Last class. If anyone has a doubt with respect to, let's say, exchange rate mechanism and FDI, FII, attend the class if you want today. I will speak to them. If anyone is like, sir, conceptual knowledge is missing, their concept, especially chapter 9, unit 4, chapter 9, unit 5, those two. If you want, speak to the management and attend the evening batch, 4:15 to 8:45. Not even 8:45, maybe by 8:15 I will finish it off. Last day. And I thought of, let me say, asking them chapter 8 and chapter 9. Let's combine the batch. They said, no, test is there. They have to write the test, they said. After accounts marathon.
Yes, yes.
In fact, I said to Praveen, but they said, no, we can't. When you had an accounts test that time. ಬಿಡ್ಲಿಲ್ಲ ಅವರು ಹಂಗೆ ಮಾಡೋಕ್ಕಾಗಲ್ಲ ಅಂದ್ರೆ. ICU batch means central jail it is. They cannot come out of central jail without jamin. When is the jamin? When you pass exam. Nice torture ಅಲ್ಲ ಅದು. Full always like 12 hours in front of books. Not 12, 14 hours, huh? Enjoy. Done with this? Okay, now let's go to the next one. So the next theory, which theory? Neoclassical approach or Cambridge approach. Which approach? Neoclassical approach or? Now money is used for two different purposes. One is transaction, second one is a precaution. That means, see boss, I will get money once in a month, but I have to spend the money throughout the month. Immediately I will not spend everything. I will keep money as a temporary abort. What I will keep it as? That means temporary store of wealth. I will buy goods after 5 days. I will buy something after 15 days. I will travel after some 10-15 days to some place. I will meet my friend. So I will not spend everything. I know I am using money to buy goods and services, transaction purpose, but prices may go up. Tomorrow uncertainties may come. All of a sudden war will start. Something goes wrong. Now I need some emergency purpose, liquid money. That is precautionary money. Which money? And both of these are dependent on income. Both of these are dependent on simple logic. When you earn more income, you will also spend more. You will also save more. So they have a positive relation. Which relation? With respect to income. You earn more. You will also spend more. You will also save more. So total money demand. What is the total? Is the proportion of your nominal income. Proportion of your? When your nominal income increases, automatically more proportion money you will keep it aside. Sir, earlier I used to save 10%. Now I will save 15. Next I will save 20. Like APC, APS proportion keeps on going down with respect to consumption. Savings proportion keeps on increasing. Clear? So money is used for how many purpose? Two different purpose. One is transaction motive. Second one is a. And now in this formula, now what is this K? What is P? What is Y? What is PY? This is important. And questions will come from the formulas also. I will show. See here, MD stands for money demand. K is that proportion of nominal income. What is nominal income? PY. Only and only Y? Real national income. What is it called? Wait, let me show the question only. Chapter 8. See here, question number 96. What is the term? Y represents in the expression MD is equals to KPY. PY means nominal income. Only and only Y is. So even you should remember this formula components. Formulas, components. Now simple concept in the Cambridge approach. Which approach? Money is used for how many purposes? Two different purposes. Transaction purpose and precautionary purpose. And this is the formula. Money demand formula. Now, remember, money is also needed for some emergency purpose. So, not only just we use money for transaction, we also keep it as precautionary. We also keep it as. So, in short, money is a function of two different factors, transaction factor and precautionary factor. And this is what neoclassical theories are. Which classical? Classical theory said money is only and only used for a. But neoclassical is saying for two purpose, transaction and Fisher focused only on which side? And here we are focusing on demand side. That is what? See formula money demand. What is it? Demand side we are focusing. See difference between QTM and Cambridge. In QTM money is only used as a medium of, but Cambridge medium of exchange as well as store of value. In QTM dash motive. In Cambridge transaction and precautionary motive, and money is used as a flow concept. That means we are spending, it is flowing out, but here flow as well as. Clear? Understood? So this is the difference between QTM and Cambridge. So remember, QTM, Cambridge both are dependent on income. Both are dependent on income. Clear? Now in the third approach, that is Keynesian theory. Which theory? Now this is most important. Now money is used for three different purposes. How many different? Transaction, precautionary, speculative. And as I said, first two is highly dependent on dash income. They are dash related positive. If income increases, your demand to buy goods and services will also increase. Savings will also increase. But with respect to speculative money, there is a dash negative, and it is mainly dependent on interest rate. Mainly dependent on. Clear? So remember, this logic is most important. Now, let's say for example, I will just extend for 5 minutes. I will leave at 120. I will just finish this. Keynesian is only on one parameters. It is. Tomorrow I will start with liquidity trap. Clear? Okay. Now listen. On 1st of January, what is it? 2026. We are investing on bond. Let's say bond price is 100 rupee. Bond price is how much? And next on 1st of July. 1st of 2026. This bond price will increase and it will become 500 rupee. Now interest rates in the economy. What is it? Interest rates in the. Remember, when bond prices are less, interest rates will be high. Let's say 10%. When bond price is more, interest rates will be less. Let's say 4%. That means bond price and interest rates are inversely related. Which related? Now, whatever money we are keeping it aside for a speculative motive. Which motive? That means, let's say for example, now money is used for three different purposes. Like this, for example, Keynesian. Now, Rajashri example I had taken in the class. Now, what is that? She earns 15,000 salary. In that, she will keep aside 10,000, 2,000, 3,000. First 10,000 for transaction purpose. Another 2,000 for precautionary. Now, these two, transaction and precautionary, is used for mainly dependent on income. What is it mainly dependent on? Income. And it is positively related. If income goes up, transaction motive will also go up, precautionary motive will also. But this 3,000 what she is keeping aside, that is for speculative purpose. Which purpose? Speculative. And this logic is most important. Why am I keeping this money as a separate speculative purpose? To take advantage. What is it to take? Advantage. Future changes in interest rates or future changes in bond price. What is it? Future changes in or future change in. Now let's say Rajashri is investing on 1st of January. When bond price is how much? Whatever 3,000 rupees she kept aside as speculative money, now she will invest. She will keep less money in hand. She will not keep that speculative money in hand. What she will do? She will convert that into bond. Why? Interest rates in the market is high. Good returns will come. So opportunity cost is there. Simply if I hold money in hand now, like stupid fellow, I am losing out a earning capacity of how much percent? So opportunity cost is high. So I will not keep money in hand. I will convert my speculative money into bond when interest rates are high. Now after 6 months, sir, now bond price went up. Now it is 500 rupee. Now interest rate came down 4%. Now she will get full good money now. If she spends, she will get 400 rupee profit. That is capital gain. Which gain? 400 rupee. Now what she will do? She will convert her bond into cash. Now speculative demand will increase. Holding in hand. What is it? Now when she will hold more money in hand, when interest rates in the markets are less. If interest rate in the market is more, will she hold money in hand? No. That means Keynes explained the relation with speculative demand and interest rate. What is it? speculative demand and interest rate. That means simple. When interest rates in the market is high, we will keep less money in hand as a speculative money. Which money? We will not keep. We will convert that speculative money into investments. When interest rate is low, bond price would have gone up. Now we will convert our bond into speculative money. Now logic is very simple. When you will keep less money of speculative in hand, when you will keep more money, it is negative related with which interest rate. If interest rate is more, I will keep less money in hand. If interest rate is less, I will keep. So interest rate and speculative demand for money is dash related. Same like bond price and interest rate also. If bond price is less, interest rate is more. If bond price is more, interest rate is less. Remember, for both the parameters, interest rate is dependent and it is negatively related. Dash related. Bond price, interest rate is also negative relation. Interest rate, speculative demand for money is also. That means what? Now simple logic. I am keeping money, sir. How much? 3,000 rupees aside. Why you are keeping aside? Whenever I get a interesting opportunity, whenever I get a, for that I need money to invest now. For that purpose, I am keeping this speculative money aside. And when you will keep more money in your hand, when interest rates in the market is low. If interest rate in the market is high, will you keep this 3,000 in your hand? No, I will invest. Got it? This is what Keynes explained. So money is not just dependent on income parameter. It is also dependent on that too, especially which money? Speculative demand for money. Which demand for money? So speculative demand is negatively related with interest rate. Transaction demand and precautionary demand is dependent on income. That has dash relation. This is what Keynes explained. Simple logic. We will hold money now. Why? To take advantage. What is it to take? If I get any investment opportunity. What is that opportunity? Now I will invest. What I will do? Now I will. To take advantages of future change in dash price, bond price, or future change in interest rate. Both are one and the same, na? If interest rate is changing, bond price is also changing. That means my present investment, which investment? To take advantages in future change in bond price or future change in interest rate. That is what Keynes said. Who said? See, I will not touch this transaction and I will not touch this precaution. I will bug you up later if I touch that. Now, speculative demand for money. What is it? That is negative related with interest rate. Now, see here, straight away we'll come to the assumption. See, if you simply hold money, wait, I will erase this. If you simply hold money in your hand, returns will be zero because of opportunity cost. Rather than that, if you invest on any interest bearing asset, you will get interest or you will make dash gain. 100 rupee bond price became 500 rupee. When you sold, how much capital gain you made? So when you invest on any other bonds, you will get two types of return. Either one interest rate, second one is capital gain. See, interest rate and money is inversely related. That is speculative demand for money and interest rate is dash related. Now see, come to straight away point B. Current rate of interest is higher. How much percentage? We expected it to be 4, but current rate of interest is how much? Higher. Now when higher interest rate is there, will you keep money in hand or will you invest? See, that's it. At the high current rate of interest, we will convert our cash into. Agreed. Next. When current rate of interest is low, what is it? Current rate of interest is? See, now presently it is 4%, but we expected it to be. What you will do? Convert that bond into cash. Now I will not invest because interest rates in the market is less. So I will convert back bond into cash. See here, at the lower current rate of interest, we will convert our into. So simple logic. Transaction motive, precautionary motive is based on, but speculative motive is based on. So the total demand for money. What demand for money? Is a sum total of transaction, precautionary and so what is the total demand for money from Keynesian perspective? Transaction purpose, precautionary purpose and speculative purpose. And this first statement, first dialogue is most important. Keynesian theory of demand for money is also called as which theory? Which theory is that? I am leaving 1 second. I know energy is going down now. I know that. I am leaving. Wait. There is an exam question on that. Question number 83. May 2025 term paper. Under the Keynesian theory of national income determination. When you see this word, Allah, sir, chapter 6, unit 2 then. Wrong. Read the question full. Under the Keynesian theory of national income determination, which of the following term is used for? That means total demand for money is a dash preference. Liquidity preference. Which preference? So, demand for money is also called as dash preference. Clear? Understood? By this Keynesian theory also comes to an. So, remember, only liquidity trap I should explain. That is connection with Keynesian theory only. Liquidity trap. See, interest rate, whenever it is more, we will keep less money in hand. X-axis represents demand for money. When interest rate keeps on decreasing, we will keep more money in. If interest rate keeps on increasing, we will keep less money in. Clear? By this, half of the chapter 8 unit 1 also comes to an. I need another 15-20 minutes to just finish the remaining half. But here, speculative money is most important. Keynesian theory is most. Clear? So focus that and come. Revise tomorrow and come. Suppose if anyone wants to attend chapter 9, unit 4 and unit 5, you can attend today's class. Last class today, that will be the final portions in the regular batch. Clear?
Yes, sir.
Okay, bye-bye. We'll meet you guys tomorrow. Okay. Online students, hope you understood the topic. Yeah, bye-bye. We'll meet you guys tomorrow then. Good morning. So in the previous class, we were discussing about the concepts of theories of money demand. So there are 3 plus 3, total 6 theory. In the previous class, we finished with the first 3 theory. We discussed about, one second. Okay. So we discussed about QTM, we discussed about neoclassical, we also discussed about Keynesian theory, the simple way of understanding. In QTM, we only focus money is used for a dash purpose, transaction purpose. In neoclassical, money is used for transaction as well as precautionary purpose. And the last but not the least, Keynesian theory, money is used for 3 different purpose, transaction purpose, precautionary purpose as well as speculative purpose. Clear? And we have to continue ahead, we have to go with the money multiplier concept. Money multiplier or liquidity trap. See, liquidity trap. When I say money multiplier, everyone is like money multiplier. So liquidity trap, that is a continuation from the Keynesian theory. See, in Keynesian theory, we spoke about speculative demand for money. So what was that speculative demand? Wherein which it is highly dependent on interest rate. Whenever interest rates in the market is more, we don't keep speculative money in hand. Rather, we will invest it in the bond. Whenever speculative interest rates are less, we convert the bonds back into cash. We will hold more money in the hand. Now they are asking when you will be holding everything in your hand rather than investing. That means we also spoke about crowding out, if you remember. Why did the crowding out happen? When the economy is not performing well. Economy is not performing well. At that point of time, if the government of the nation is borrowing inside the country, they will increase interest rates. That will lead to crowding out. Now, complete opposite. If interest rate goes almost zero, what is it? Interest rate goes like 0.3, 0.5. When interest rates are like almost zero, now people rather than investing money on any bonds, rather we will hold it for a. So speculative demand for money will become dash elastic. That means the graph is going to be like this. E equal to infinite, perfectly elastic. So this is called as liquidity trap. That means whatever the speculative money, the one which the money we are ready to invest, the one which we are ready to invest it on bond, such money we will not invest at all. We will only and only keep it in hand because speculative motive is to invest and get the advantage out of it. But interest rate is almost zero. What is it? Interest rate is? So I will not invest. See boss, even if I keep money in my hand, I get the same returns. Even if I invest it in bond also, I will get the same return. So why should I take so much of risk of investing? So better I will keep it in hand. That is what liquidity trap. Which trap? Liquid money is getting trapped in the hands of the people. Clear? So remember, when the speculative demand for money, which money becomes dash? So the graph will be parallel to x-axis. This is called as liquidity trap. And in real life, Japan has experienced the liquidity trap. Now let us go ahead. Another three more theories of the demand for money. Post-Keynesian theory. Which theory? See, inventory approach given by Baumol and Tobin. And second one is Friedman restatement of quantity theory. And last one, behavior towards risk. What is it? Behavior towards risk. So let us understand one by one. I will give it in the form of a story. All the three, I will give it in the form of a background. First one, inventory approach. Which approach? See, money is like any other inventory held, like how we have a closing stock. Like that, money is like a inventory held. Money is like what? Now, the problem is we don't just keep money in hand. We will also invest, right? Because in the market, interest rate is more. If I keep money in my hand, I'm losing out an opportunity to earn interest. So we will be investing money. But Baumol and Tobin said every time you convert your money into investments or investment back into money, there is a fixed charges called as brokerage charges. You have to pay the brokerage charges. So you have to convert lesser number of times. If you convert more times from cash to bond, again bond to, you will end up losing money by paying dash charges, brokerage charges. So you should not pay more brokerage charges. You should not hold more cash in the hand. Always have combination of both. What does it always have dash? See, when I say combination, see, I know income will come once in a month, but expenditures are spread throughout the month. What is it? Expenditures are spread throughout the month. I will get salary on first of every month, but I will spend all 30 days, na? For your transaction purpose, whatever money is needed, hold back. Let's say, sir, out of 15,000, I need to spend some 8,000 rupees of money. That means keep 8,000 in your hand. Remaining money, whatever is over and above transaction, you can invest, but don't invest everything and don't keep on taking it back. If you do that, you will be end up paying dash charges. You will be end up paying brokerage charges. So you should not pay more brokerage charges, or you should not keep money in hand and lose an opportunity of earning interest. Losing opportunity of earning. So simple concept. Inventory, like money is like a inventory held. What is it? Money is like how we have a closing stocks now, like that money is also an inventory held in the hands of the person. Now whatever money you are holding, you should also hold it for your transaction purpose, and we should also be investing. But every time we convert cash to bond or bond to, we have a fixed charge called as. So we should not pay more brokerage charges, or we should not lose up money in the form of opportunity cost. We should have an optimum combination of both. What is it? This is what inventory approach given by Baumol and Tobin. Given by whom? And he also expressed a square root formula. What is that square root formula? Now, in what combination you have to keep cash and in what combination you have to invest. Only this formula is important. Till date, numerical questions have never been asked. They may ask you this formula. What is a square root formula or square root rule introduced by Baumol? So they may ask you this question. So kindly keep this in mind. This formula should be remembered. Clear? So this was the very first theory post Keynes, that is inventory approach. Which approach? And who introduced it? Baumol and Tobin. Clear? Like money is like a inventory held. Money is like any other. See, the real money or the real cash balance is an inventory held for a dash purpose. Inventory held for a transaction purpose. Which purpose? Clear? See, whatever the medium of storing the money, whether you are keeping in hand, whether you are keeping in your bank account, or whether you are investing on bond, you will have two kinds of return. One, interest return. What is it? If not, if you just hold money in hand, you are losing out the ability to earn interest. Opportunity cost gets added. When you convert your money into bond or bond into back to money, you have to pay them. So you need to maintain optimum combination of both bond as well as cash balance. Clear? Now, suppose he said, if you go and keep your money in bank account, let's say demand deposit. Which deposit? It's like your business account, current account. Or if you keep money in hand, you will not get any interest. There is a zero interest. What is it? Suppose instead of keeping in demand deposit, if you keep it in savings deposit. Which deposit? You will get some interest. At least you will get some return. Instead of keeping in savings or instead of keeping in demand deposit, if you keep in bond, and you will get positive returns, good return, but there is also risk of capital. You may also lose up money. So you decide in what you want to keep. If you simply hold currency in hand, you will not earn anything. You will lose out an opportunity of earning an interest. Because of inflation, your money keeps on decreasing. Money keeps on. That means your purchasing power keeps on. That is Friedman's theory. Which theory? Stupidity, not Friedman's theory. Inventory approach. Which approach? Next, what we are discussing will be Friedman's theory. Now, Friedman's theory is also interesting. Understand your permanent income. Which income? That means future income's present value. Which income? Future income's present value. Let's take one example. Assuming now I'm planning to buy a property, let's say a land space. Now I'm saying, so if I buy this for today at 10 lakh rupee, at how much? In future, maybe after 5 years, in 2031, this will become 50 lakh. This will become, that is in future, right? After 5 years down the line, it will become 50 lakh. But identify its present value today. That means if at all I say, sir, today one plate of Golgappa, your Pani Puri is 40 rupees. How much? Sir, in 2030, this Golgappa will be 100 rupee one single plate. That means what is 100 rupee in 2030? Today it is how much? Same way, in future, which will be 50 lakh, identify its present value. How much is the present value? Your future income's present value. What you should identify? Let's assume you will be, Shashikiran, you are going to make 50 lakh rupees in future. Now the present value, let's say the present value after inflation adjusted, this is 13 lakh rupee. How much? You are investing how much on land today? 10 lakh. Immediately that value is how much? 13 lakh. Now good investment. Go ahead. This is actually a finance concept. Every person who is trying to invest will understand its future income's present value. Based on that, investments are made. So simple concept. Understand permanent income. Which income? See, Keynes only spoke about present income based on interest rate. But Friedman considered permanent income. That means future income's present value. Which income? See, in mathematics, we have time value of money. Same concept here also. Whatever you will get in future, that is 50 lakh. Identify its permanent values, present price. Permanent values. That is what Friedman said. See, Milton Friedman extended the Keynes speculative demand for money of framework as asset price theory. Which theory? And he said cash is like any other capital asset. Who said cash is like an inventory? Baumol and Tobin. Cash is like any other capital asset. Milton Friedman. See, we said we need to calculate permanent income. Which income? See, demand for money for any other assets is like a permanent income or any returns that, let me say, the asset generates and incorporating the, there is a risk involved, boss. If you go and keep it in stocks and shares, risk is there. If you also invest on land, risk is there. If you simply keep money in hand, risk is there. What kind of risk are you taking? And what is the returns on that risk? That means identify its dash income. See, Friedman considered permanent income, but Keynes considered only current income in determining the demand for money. And he said wealth, whatever the Friedman said, wealth is the present expected value of all your future income. In future, whatever you will earn, identify its today's price. Shashikiran, you said you will earn 50 lakh rupees when 5 years down the line. Understand that 50 lakhs present value by removing inflation. By removing, again, we need price index, deflator value in order to remove that inflation. See, money is a good. Money is a, like any other durable consumer goods, and its demand is a function of great number of. What is it? Demand is a function of great number of. That means there are various elements which will affect the demand for the money. Maybe you may not keep well, or maybe you need to go out with friends. You need to watch IPL match. You will go for stadium. Like this, for different purposes, you are using money. So money is like which good? Money is like a capital good. Which good? Returns on the, let me say, invested money on different asset is going to be a different incomes. Different asset will generate a, see, for example, if you simply keep money in your hand, it will not generate any returns. Zero. If you keep it in bond, you will get the interest. If you keep in equity, you will get the, so simple. You need to understand your current value of your wealth. Which value? See, I understand what is the total money that you will make in the future. Permanent income. Shashikiran, you said 50 lakh rupee. Let's say discounted rate. Which rate? This is what? Price index. That inflation index. Let's say price index is 180. What is it? Price index is? Do it. 50 lakh divided by 180 into 100. 50 lakh divided by 180 into 100. 50 lakh divided by 180. 180 into 100. That means the present value is 27 lakh rupee. In future, you will make is 50 lakh rupees. Clear? So identify that present value, your future income's present value. That is called as current value of your total. So nominal demand for money is the function of total. That means whatever total wealth you will make in the future, in that what is its present value? Based on that you decide whether to invest or not. That is what the Milton Friedman spoke about. See, there is a positive inflation rate. If you simply keep money in your hand, purchasing power keeps on dropping. Even you should get the returns beating the inflation. What is it? Returns. Suppose if inflation is 6%, your returns every year should be greater than 6% or at least equal to 6%. If it is lesser than that, that money what you are investing is totally a waste. It is not beating inflation. So the real value of dash balance increases your dash cost of money holding, opportunity cost. If you simply keep money in your hand, that will create more and more. So rather than holding money in hand, you should invest either in, let me say, bond, either in case of shares, either in gold, either in land, different asset. Which asset? Different asset like money, bond, equity, physical capital or human. There is a positive returns with respect to the, whenever the price keeps on increasing of that asset, your wealth will also. Suppose you purchased a land value is increasing. That means if the land value is going up, your wealth is also, returns is also going up. Clear? And there is an inverse relation with. Now you tell me, if day by day interest rates are going up, will you keep money in hand? No, sir, stupidity, I'm losing out now. So that is what opportunity cost will always play in the inverse way. You will not keep more cash in the hand whenever opportunity cost is more. Only when opportunity cost is less, I will keep more cash in the hand. That is what liquidity trap. Which trap? Speculative demand for money becomes dash elastic. Perfectly elastic. When will this happen? When interest rate is almost zero. What is it? Interest rate is clear. Last but not the least, demand for money as a behavior towards. This was introduced by whom? James Tobin. Who introduced it? Now Tobin said, simple boss, there are 4 combinations. In that you decide how much risk you are ready to take. Whether you want to take 50-50 category, like 50% risky asset, 50% safe asset. You are playing safe game there. What are you doing? Combination of safe and risky asset. That is first category. Second one, if not, first I will go with the lesser risk. After learning, slowly I will increase my risk. Slowly I will low risk to high risk. What is it? Sir, I will invest, sir. First I will go and keep money in my FD, sir. And later I will come to my current account, sir. Later I will come to equity. Later I will come to mutual fund. Later I will come to bullions. Later I will come to index funds. Like this, slowly I will start taking risk. So they are called as risk aversions. What is it? When you take less risk to more risk. This is the ideal category. Or if not, keep combination of both safe and, if not, straight away taking high risk and later reducing the risk without knowing, by let me say getting influenced by all Instagram influencers, going and putting money, full stock, after boom, everything money gone. Later you will realize and then you will learn. That means more risk to less risk. Clear? So you have an option, either combination of safe and risky. Sir, I will also keep money in my bank account. I will also invest on FD. I will also go and invest on stock. That means I have a combination. What does I have? Or if not, less to. Sir, I will keep money in bank account. I will not keep in hand. At least I will get some return. And I will also invest it in stocks. Next, I will invest it in bonds. Slowly, I will increase my risk. Such people are called as whom? Risk aversion. And this risk aversion guy will never choose this third category. That is more to. And there is one more, intelligent fellows like our great grandpa. No risk at all. Full money in hand in locker. I don't even want any interest. I don't even want any return. My money should be full safe. I am not even ready to take risk. I am not even ready to. That is called as zero risk. And your grandma was much more better. She was investing on gold. But your grandpa, no, only cash at home. If not land, maximum. Only 2 things. Clear? So these are the 4 combinations Tobin said. See, combination of safe and risky or less risk to, or more risk to, or zero risk. Maximum question till date it has come is who introduced the behavior of risk theory? James Tobin. Who introduced? And he also spoke about preference. Again, related to demand for money. That is what even Keynes said. Now, if interest rate is more, don't keep money in and invest. If interest rate is less, then keep money in. And so it has a dash relation. with the demand for speculative money and the interest rate. So when there is an increase in interest rates on the bond, individuals will get attracted to hold greater proportion of their wealth in the form of and less in the form of. Simple. Interest rate is more, money holding will be less. Interest rate is less, money holding will be more. Negative relation. Clear? In this, most repeated question is liquidity trap. Which trap? So that is extension of Keynesian theory. What is that liquidity trap? Speculative demand for money will become when the interest rates in the market is almost zero, like 0.5, 0.2, 0.3, 0.7%. Even if I invest, I will get just 0.5. Even if I keep in my hand, I will not earn anything. It is almost the same. For that, why should I invest? I will keep money in. And which money? Only and only speculative money. It don't get confused with transaction money and precautionary money. We are only speaking about. That means we will not invest. Rather, we will use that for. That is to buy goods and services. Clear? By this, unit 1 of chapter 8 comes to an end. That's it. Total, how many theories are there? 6 theories. Which are those 6 theories? Number 1, QTM, quantity theory of money, also called as Fisher's theory. Money is only used for transaction purpose. 2 formulas were there. PT is equals to MV, actual price, actual money. Next, actual and credit money. PT is equals to MV plus M dash. Next, we went with neoclassical approach or cash balance approach. Which approach? Neoclassical or cash balance. There, money is used for 2 purposes. Which are those? Transaction as well as precautionary. MD is a proportion of PY. What is it? MD is a. What is that PY? Nominal income. Just Y. Real national income. P is a proportion. Clear. MD is money demand. Next comes Keynesian theory. Money is used for. Which are those 3 purposes? Transaction, precautionary. In the transaction and precautionary is dependent on and positively related. If income increases, transaction demand will also increase, precautionary demand will also. But in case of speculative demand, dependent on interest rate. If interest rate in the market is more, we don't keep money in hand because opportunity cost is there. If interest rate is less, then we will keep money in hand. Which money? Speculative money. If the interest rate becomes almost zero, what will happen? Liquidity trap. So which demand for money becomes perfectly inelastic? Speculative demand will become perfectly elastic, not inelastic. What is it? Perfectly clear. And why will that happen? Speculative demand perfectly elastic because interest rates in the market is almost. Rather, we use it for transaction purpose, not for an investment purpose. In real life, which country has experienced this? Japan. Clear? After that, 3 more additional theory. Number 1, inventory approach. Who introduced it? Baumol and Tobin. What did they said? Money is like any other inventory. Inventory held for any purposes, transaction, precautionary, whatever. But whenever you convert this speculative money from cash to bond or bond to, there is a fixed charges called brokerage. So you need to keep optimum combination of both. By keeping everything in hand, don't lose out money in the name of opportunity cost. By converting more times, don't lose out money by paying the brokerage charges. Keep balance of both. Keep balance of. Next comes Friedman's restatement theory. Identify permanent income. Which income? That means future income's present value. So money is like a capital asset. Money is like a. Who said money is an inventory? Baumol and Tobin. Who said money is a capital asset? Milton Friedman. Last one, behavior towards risk. James Tobin. Who said that? Clear? That means, boss, you have to calculate how much risk you want to take. Is it combination of safe and risk or low risk to high risk or high risk to? When a person takes low risk to high risk, he is called as risk aversion. What is it? Or completely zero risk at last. Clear? So it is also dependent on interest rate. In the market, if interest rate is more, investments will be more. Cash holding will be less. Speculative demand for money will be less when interest rates are high. Because there is an opportunity cost involved and it has a negative relation. Which relation?
Negative.
Clear? And all the 6 theories are important. This is where exam questions are going to come. Clear? Now let us get started with the unit 2, money supply. What is it? So we understood money demand. Why do we demand for money? 2 reasons. One, liquidity preference. Second one is derived demand to buy goods in. Now, to match demand, there should be also supply. Na? AD should be equal to AS. Money demand should match with money. Now, who are the sources of money supply in the country? There are 2 sources, primary source and secondary source. Who is the primary source of money supply in the country? RBI, Central Bank of the Nation. Money issued by the central bank is called dash money. Fiat money or high-powered money. Appa, intelligent fellows. Sources of money supply. Straight away come to this. All these are chotu-motu topics. Initially. And here, they will ask question from public definition. Which definition? Okay, I hope you remember stock concept, flow concept.
Yes, sir. Yes.
A strong guess is not coming in the class. Demand, supply, flow concept, stock. Okay, let me explain it once again. So what is the stock and what is the flow? Money printed and circulated by RBI. Money printed in, that is stock. Total amount of money at any particular point of time in the country. What is it? Total amount of money at any particular point of in the country. That is called as. In that, how much is money with the hands of the
Public.
for what purpose? Means of payment and store of value. That is called as.
Flow concept.
See, this flow is always a part of stock. That means let's assume RBI has printed 1000 crore rupees and circulated. In this, people have in their hand is 800 crore. That means this 800 was a part of 1000. 800 was a. And this flow is always with the hands of. So who is called as public? Rather than understanding who is called as public, understand who is not included in public. Producers of money. Who is not included in public? Who are those? Government and banking system. These two are never called as a public. Producers of money, these two are. And money held by the government. Money held by the bank, like interbank deposit. One bank keeping money with the. That is not public money. Same way, government's money, which is with the government, and RBI holds that. That is not public money. Except these two. Producers of money. Everyone else, including foreign central bank, including International Monetary Fund and World Bank, even though there's money, that means IMF money or World Bank money, which is held by, that is also called as a public money. So simple concept. Who is not called as a public? Producers of.
Money.
Who are the producers of money? Government and banking system are not the producers of money. Is that clear? Now from this, they will ask you a numerical question. Identify money with public. What does it identify? Wait, let me show that question. Yeah. Wait, not this. That is most easiest questions. Question number 56. Calculate currency with public from the following data. Notes in circulation. That means with the public only. Circulated coins in circulation. Yes. Small coins in circulation. Yes. Last one. Cash in hand with whom?
Bank is not.
It is not with public. So add the first three, subtract the last one. That's it. Add the first three and subtract the last one.
19,750.
That's it. Next, one more question I will show. Note in circulation, yes with public. Coin in circulation, yes with public. Cash on hand with the bank, not with the public. Coins on hand with bank, not with the. Add first to two, subtract next to two. These two are stock concept. First to two, that is a stock, and next two is not a part of flow. Add this two, subtract this two.
2,02,580.
Clear? See, we understood the concept from theory, but they will ask numerical problem. Same happened in QTM also. MV is equals to PT. So they can ask any theory concept in the form of numerical. Clear? So we understood the definition of public. Who is called as a public? Except producers of money. And next comes, who are the producers of money in the country? By the way, who is government? Central government, state government and local bodies. Like for example in Bangalore, BBMP, Broad Bengaluru Mahanagarapalika is a local government here, local body. Next, banking system, Reserve Bank of India and all those commercial bank which comes under Reserve Bank of India, one who accepts a deposit. Which kind of deposit? CASA deposits, current account and savings account deposit. CASA, current account and, or in short we can call demand deposits, current account and savings account deposits. Sources of money supply. There are mainly two sources. How many sources? The very first one, primary source of money supply is fiat money or high powered money issued by central bank of the country. Issued by whom? So remember, in every single nation, the primary source of money supply will be their dash bank. Central bank is the one who will print and circulate currency note, and such money is called high powered money or fiat money. Clear? And remember, fiat money means materially worthless. That is just a sheet of paper considered as a legal tender from the eyes of law. From the eyes of, suppose if law stops recognizing that as a legal tender today night, let's assume Modi will come and say, Bayo or bano, आज से 100 रुपए का note demonetized. That means 100 rupee note is just a sheet of paper. It doesn't have any value. That means government stopped recognizing it as a legal tender, and whatever the currency notes printed and circulated by commercial bank is the liability of the central bank. Liability of the, and before printing this high powered money, we need to keep a reserves, equal value of reserve. Which value? And that reserves will be combination of gold and forex. What is it? So let's say reserves will be either in the form of what? Gold or forex. That is foreign exchange reserve. Suppose in India we need to print 100 crore. We need to keep 100 crore worth of gold or 100 crore rupees worth of, or combination of these two in 100 crore. Combination of these two in? Clear. Now, none of the countries have so much of gold. So we are following something called as minimum reserve system. Which reserve system? Now we will keep 200 crore rupees as a reserve, and we can print currency to whatever extent. Not just India, any nation. We need to just maintain a minimum reserves of how much? 200 crore. Now that is just additional info in your syllabus. I have also given here in the notes. See, however, many countries have adapted a minimum reserve system wherein the central bank is empowered to issue currency to dash extent, any extent, by keeping only certain minimum reserves in the form of gold and foreign securities. But earlier we used to maintain dash reserve, equal value of reserves. Clear? So who is the issuer of the primary source of money supply in the country? Central bank. In India it is RBI. The money issued by central bank is also called as or fiat money. Next comes secondary source, commercial bank, in the form of borrowing and lending activity. In the form of what? Borrowing and lending activity. Okay, let's go to the example. Listen to this. Since I've already written in the main batch, I will take the same example. Now, Mr. Shashikiran, he will go to bank A and he will deposit 1000 rupees. He will deposit how much? Now, RBI will say you should keep reserve of 10%. Commercial bank, you can't use that entire 1000 rupees to give loan. You need to maintain reserve of how much? 10%. Okay. Now, what is 10% in 1000 rupees? Remaining money? 900. Now, this 900 rupees can be given as a loan. So, this 900 rupees, let's say Dhoni uncle will come and take loan from bank A for his treatment. Injured, na? So, he is taking treatment by taking loan, 900 rupee. And he will go to, let's say, Darshan's hospital. Darshan's. We had a student called Darshan. So, Darshan's hospital to take the treatment. And Darshan got the money. And he will go and deposit this in bank. Now, bank B got 900 in the 10% reserve. Remaining money. Now, Malia uncle will come to take loan for buying one more Formula 1 team. Clear? Like IPL team is there, no? Formula 1 team, badminton team. He will come and he will take loan. Now, Malia uncle. Now, he got 810. Now, Malia uncle went and bought, let's say, for example, some goods worth of some XYZ from Rajashri. Rajashri will go and deposit that to bank C. Now, bank C got 810 from the 10% reserve. Remaining money. Now, Nirav Modi uncle will come to do silver business. Which business? And he takes a loan of 729. Like this, again, he will go and, let's say, buy some silver from Shivu uncle. Now, Shivu uncle will deposit in bank D. Now, bank D will keep again 10% reserve. Like this, money keeps on getting circulated. Credit money. Which money? That means this portion. Now, let's only consider this first two area. Only and only Shashikiran and Dhoni uncle area. Now, how much Shashikiran deposited? Okay, in that, how much loan was given to Dhoni uncle? That means Dhoni uncle has a loan account now. Now, Dhoni uncle can withdraw how much? Shashi uncle can withdraw how much? But in reality, bank has only 1000 rupees, na? But Shashi can also withdraw 1000. Dhoni can also withdraw. So liability is 1900, but cash available with bank is only. That means at any point of time, bank's liabilities will be greater than its cash reserves. Bank's liability will be greater than its. That means liability is 1900, but bank in reality they have is only 1,000. That means where did this extra 900 has come from? Credit creation, na? That is what credit money. Which money? So this 900 rupee does not have any backup or reserve, like how RBI printed the old gold forex as a reserve. Na? This 900 rupee does not have any kind of a backup or any kind of a reserves. No reserves at all. So this 900 rupee is created by whom now? Commercial bank. Which bank?
Commercial banks.
Clear. That is what credit money. Which money? And whatever this logic I said, a full big story. This helps you to understand credit multiplier. Which multiplier? Credit multiplier. Simple formula. 1 by RRR. What is it? Appa, not your Rajmouli's RRR, stupid movie. We are speaking about required reserve ratio. Which ratio? Clear. Now, what did the bank said? Required reserve ratio is how much? 10%. Now, when this RRR goes up, automatically money multiplier concepts will go down. We will speak about this. Clear. So, this is just an example needed to understand credit money. Only Dhoni uncle and Shashi uncle transaction you remember now. This is enough. So, bank created a credit money worth of how much in this example? And that doesn't have any backup or doesn't have any kind of a reserve. See, money created by whom? In the form of giving a. By whom? See, simple. Money created by the, as a money supply, or banks create money supply in the process of borrowing and lending transaction with the, that is called as dash money. And even RBI will decide for whom you should give loan, for whom you should, for what kind of business you should give loan and what kind of business you should not. For betting, gambling and all, will RBI agree to give loan speculative purpose? No. That means indirectly RBI will only control this credit money. Now, how does that matter? See, if RBI says, now instead of 10%, now you guys are keeping 10% now. 1 second. Where is it? Here. Instead of keeping 10% reserve, now RBI will say you should keep 15% reserve. That means only 85% money is available to give loan. Na? If RBI decides not to give more and more loan, they will say keep 30% reserve. Now only 70% money is available to give loan. Na?
Yes, sir.
So like this, RBI will indirectly control that credit money in the system. RBI will directly control high-powered money. Indirectly, they will control this credit money. So simple. Wherever money is involved, RBI is involved, either direct or clear. Who is the secondary source of money supply in the country? Commercial bank. In the form of issuing which money? Credit money. Clear. Who is the primary source of supplying money? Central bank. That money issued by central bank is called or fiat money. Clear. Next comes CBDC, central bank digital currency. Now we are moving from paper currency to e-rupee. Which rupee?
E-rupee.
I hope you guys know that. In class usually I will open that, even applications are there. I will show that. Wait. E-rupee images. This is the e-rupee. And it is already a legal tender in India. This is the one. Instead of printing in the form of currency note, they are giving in the digital form. Which form?
Digital.
And from 2023 only it is legal tender in India. So going further, we will start removing the paper currency from the system. We will give more and more of digital rupee. Which rupee?
Digital.
Like your phone pay, Google Pay is there. Na? There is a separate application by every single bank called as e-rupee app. Which app?
E-rupee.
You should download that. You should register. Load money from your bank account to this e-rupee. And then you can send money. As simple as giving cash from one person hand to other person. You are sending it. Instead of printing in the form of paper, they have given in the form of digital format. Which format?
Digital.
This is what we call CBDC, Central Bank Digital Currency. Which currency?
Digital currency.
Clear? Even this is issued by RBI. It is also the legal tender. Issued by whom? Central Bank in the form of.
Digital.
And it is same like a sovereign paper currency but in the different format. Clear? And this is also popularly called as
Digital rupees.
digital rupees. Or then cryptocurrency. Is it issued by RBI?
No.
It is not recognized as legal tender. It is not considered as money in India. Then what is it considered as? Asset category. Which category? Like how you hold gold, land, mobile phones and all. Na? Like that asset category. Straight away any profits made by crypto, Nirmala aunty sleeping partner. 30% straight tax. 30.
It will reach to 50 when they.
By the time next additional cess and all will be there, don't worry. But at the moment, Nirmala aunty sleeping partner with 30% of stake. Clear? Straight away. Crypto earnings, any crypto profits, 30%, and it is classified as asset category. Which category? See, cryptocurrencies significantly faces legislative uncertainties and they are not legally recognized in India as a, and RBI has barred them from dealing with as a virtual cryptocurrencies in India. Clear? So crypto is not a legal tender. Crypto is just a asset classification. Which classification? Clear. Next comes the important topic. M1, M2, M3, M4. What is it? M1, M2, M3, M4. Now, see in India, how do we measure money? What we have in the system? Earlier, RBI used to give a narrow money measurement until 1967-1968 called as M1. What is it called? That is narrow measurement of money supply. But after 1967-1968, we started coming with aggregate monetary reserves. Not just narrow, we also came up with them broader. But after 1977 and onwards, after the recommendations of the second working group of money supply, now we are giving 4 alternative measurement. How many? M1, M2, M3, M4. What is it? M1, M2, M3 and M4. Clear. See, M1 considered as a narrow money and most liquid. M1 is narrow money and that means most liquid asset. M3 is called as broad money and least liquid. M3 is called as what? Broad money and least liquid. Now this is the formula of M1, M2, M3, M4, which you guys have to remember. Even you will get numerical problems from M1, M3, usually highest. What is M1 formula? Currency notes and coins with the public. And next, demand deposits with banking system. That means CASA deposits, current account and savings account, and other deposits with. These 3 things put together is what we called liquid money. Which money? Or also called as narrow money or broad money. Narrow money. M1 is called narrow. What is it? M1 is called? M3 is called as? M1 is least liquid. M1 is? Least liquid now. Superb. Most liquid. M1 is what? Then which is least liquid? M3 is called least. Clear? So M1 includes 3 components. Which are those 3 components? Currency notes and coins with. Demand deposits with. Banking system. Other deposits with. Next, M2 will be M1 plus savings deposit with post office savings bank. M3 will be M1 plus time deposits. M1 plus? That means FDs. FDs that you have kept in the banking system. Next, M4 will be M3 plus total deposit. See, in M2 it is only savings deposit in the post office. But in M3 it is total deposits of the excluding NSE. Excluding, if you remember, instruments of fiscal policy, public borrowings. In public borrowing, there are 2 places of borrowing, inside the country and when you are borrowing inside the country, you will borrow market loans and small savings. Market loan and in that small savings, general public money collected by RBI. In return, you will get interest every year and this is tax saving money. Which money? Such money, whichever is borrowed by the country's government from the general public should be subtracted. By issuing some certificates, government will borrow money. That is NSE certificate. Which certificate? That should be subtracted. And remember, in exam, if a numerical problem is given, if they have mentioned, if they have NSE is included in total deposits, NSE is, then only you should subtract. If not, don't subtract. Suppose they have given information about total deposits of post office. They have also given information about NSE, but nothing mentioned whether included or whether. Don't subtract. Only if the information is provided. NSE is a part of total deposits. NSE is a, then you should subtract. If not, don't subtract. Clear? Understood? Can you able to recognize the formula? Now there is one more extended formulas of this and it is given in the summary part. Where it is given in? Your ICAI, they will play around nicely. They will give it in the summary part. Wait, I will show that concept of money supply. There are total 6 more concepts that you should understand. How many more concepts? See, in the main material, they haven't given information. They have also spoken about concept of reserve money. Which money? And reserve money formula is also important. They may ask you the question, what is M1 formula? Currency notes plus coins with public, demand deposits with banks and other deposits with. What is the second component in M1? Demand deposits with bank. Only that has to be changed. Now observe, reserve money, currency in circulation, and last component, third is other deposits with RBI. Sir, same it will be in M1 also, na? In M2, middle portion is M1. In M1, middle portion is
Demand deposit bank.
with the bank, that is CASA, but here bank deposits with RBI. Only this one element you should remember. Only the middle portion of M1 formula will change. Middle portion of, and that will become dash money. By the way, what do you mean by reserve money? It is also known as central bank money or base money or a high powered. Determines the level of liquidity and the price level in the economy. What is it? Level of liquidity and the. Now they may ask you a question like this. Dash determines the level of liquidity and price level in the economy. And what is the reserve money formula? Currency in circulation, bank deposits with RBI, other deposits with RBI. See, in general, in M1 formula, the middle portion was demand deposits with the bank. What is it? That means CASA deposits. That is bank deposits. That was the middle portion. Now only you are changing this middle portion in the M1 formula. That becomes reserve money formula. Which formula? Now whatever we call now M1, M2, M3, M4. Now that has been extended. Now we call it as NM1, NM2, NM3, L1, L2. What is it? NM1, NM2, NM3, L1 and now this may also be a question. You can't believe your ICAI. If they want to screw up your happiness, they will ask all this such stupid questions also. So observe, NM1 is nothing but M1 only. What is it? NM1 is nothing but, what are the components of M1?
Currency notes and
Deposits with the banking system and other deposits with RBI. And what was M3? M3.
M1 plus
Time deposits. M1 plus. Now the same time deposits, whatever FD was there, we will divide that into short-term time deposits and long-term time deposits, and we will split that as NM2, NM3. See, NM1 plus the short-term time deposit. Next, NM3 will be NM2 plus.
long term debt.
That means whatever money that comes into the banking system. Which system? That will be NM1, NM2, NM3. No post office dealings and all. See, earlier M2, M4 was post office thing. But now no post office in between. Only and only banking system. NM1, NM2 and NM3. Next, sir, where will post office come? L1. See, continuation. NM3. Next, L1. See, L1 is NM3 plus all the deposits with them. Excluding NSC. Whatever we called M4. That M4 is nothing but L1. M4 is nothing but. Now L2 includes L1 plus every information related to financial institution, either financial institution lending or financial institution borrowing or any certificate of deposit issued by the financial institution. Every information related to financial institution. Which institution? Will come under L2. Every information related to post office will come under L1. And M1 is also called as NM1. Whatever term deposits was there, we are splitting that into short term and that is NM2 and NM3. So remember, NM1, NM2, NM3 purely speaks about bank. L1 speaks about post office. L2 speaks about financial institutions. Clear? This can also be a question. Since the information is given in the summary, you should also remember that. And ICAI knows how to screw up the happiness sometime. They will intensely ask from summary. They will do all these nataks. But with respect to numerical problem, which problem? M1, M2, M3. That is important. Calculate this. Let us see. Question number 49. Calculate. Which are they asking for? Calculate M1. M1 stands for currency notes and coins with the public. Demand deposits with the banking system and other deposits with the. See, you should know what to add. They have given extra information. Don't take the unnecessary information. Whatever is the required, only and only consider the required information. So end answer. Clear? Able to answer? That is why I said formulas are important. You have to remember formula. If you don't know the formula, gone case. Clear? Next, one more question. Let me show it. Calculate M3. Calculate M3. Able to get the answer? Deposits with RBI is missing. That means 0. That will be considered 0. Santosh, which is that? Why do we have to subtract? NSC, are you asking? Santosh. See, those are the money. That means whatever small savings of the general public is there, that is collected by the government. They will give some tax benefit. They will by issuing some certificate. That means, let me say, for example, I have borrowed loan from the public. So that money government is using, public is not using. That is why we are subtracting. Santosh, clear? Done. So look into the formulas once. Any doubt in this, let me know. Before moving to the next concept, that is money multiplier and money supply. What is it? Money multiplier and? Sir, time deposits comes under the other deposits with RBI. No, time deposit means FD. It's a FD money which is with the banks. That is not with RBI. Other deposits means IMF keeping money with RBI, some non-banking financial quasi-institutions or World Bank, any foreign government, any foreign central bank keeping money with the RBI. That is other deposits with RBI. I've also given in my material the information about other deposits with RBI. In the next sheet, it will be there. Observe, yes, here. See, other deposits with RBI. Usually, what all comes under the other deposits with RBI. Clear? Okay, can you able to recognize the formula?
Yes, sir.
Let's go to next topic. Money supply and money multiplier. What is it? Most of them have confusions in this topic. See, actually, very easy topic it is. By understanding money supply, we will also understand money multiplier. See, both are dependent on each other. What is it? Both are clear. So what is the, now let's say, for example, to understand money supply and money multiplier, we should understand the behavior of three different elements. Number one, behavior of central bank. What is it? Next, behavior of commercial bank. Last but not the least, behavior of a general public. So what we say, who is the issuer of a primary source of money supply in the country? And the money issued by central bank is called as high powered money. We believe that RBI is printing the currency note and it is circulating in the economy to increase the money supply. And RBI is the one who decides the RRR. Do you agree? Required reserve. How much money a commercial bank has to set aside from the deposits what they receive. So that is also called as small r. What is it also called as? Small r. So how do we decide this small r? That means required reserves divided by deposits received. What is it? Required reserves divided by? Sometime, instead of using the word required reserve, we will also use this word called as excess reserve. Which reserve? Divided by deposit. What is this? Now understand this logic. This logic is very important with respect to commercial bank. Now RBI will say, see, commercial bank, every time whenever you get money, you should keep aside 10%. How much? See, this was required reserve. But commercial banks, they will show some extra talent. They will keep another 3% or 2% extra. Why, sir? Some emergency may happen. People may withdraw money. I may need money to give back, na? So I know that RBI has instructed us to, let me say, keep a reserve of how much? But we are keeping excess reserve of how much? Now, what will be the total reserves? Now, rather than holding 10%, now we are holding 13%. So, whenever we hold more reserves, multiplier value goes down. If you remember, I said multiplier value will be 1 divided by RRR. Now, instead of RRR 10%, it has become. Now observe, suppose let me calculate both for 10% as well as 13%. Consider if it is 10%, this is first concern. Second concern is with 13%. This 10%, 1 divided by 10, that means 0.10. 0 point. How many times money will multiply? 10 times. That means if at all we make it 13%, now how many times money will multiply? 1 divided by 0.13. 7.69 times. That means observe, same money. Let's assume RBI is printing and supplying 100 crore. How much? This is H, or we also call it as MB, monetary base. This money, rather than getting multiplied 10 times, now it will multiply only. And why did this 7.69 time happens? Because commercial bank maintained extra reserve of how much? Because of that, effect of multiplier went down, money supply also went down. So we believe whenever central bank is printing the high powered money and circulating, we believe that commercial bank will not maintain excess reserve. Commercial bank will? If they maintain excess reserve, what will happen? Automatically multiplier value will go down, money supply will also go down. Clear? Like that, general public behavior, last but not the least. We believe general public will not keep more cash in hand, rather they will deposit. This is called small c, that is capital C divided by capital D. Cash to deposit ratio. Which ratio? We want more people to inculcate banking habit. I want people to come and deposit money in the bank, because if they come and deposit money in the bank, that money will undergo for circulation in the form of credit. We will give loan. That money gets circulated. Again, money supply will increase. Rather than that, if people simply keep money in their hand, that will act as leakage. What does it act as? Holding idle cash in the hand. We don't want people to keep more cash. That means we believe whenever RBI is printing more currency, RBI is printing, commercial bank will not maintain excess reserve, general public will not keep more cash in the hand. If this is the case, multiplier will also increase, money supply will also clear up. So this is the logic. We need to understand, let me say, logic from all the three of them perspective. First perspective with respect to which bank? With the respect of issuer of dash money, high powered money. Next, commercial bank. Commercial bank, we believe they only keep the reserves which is instructed by the, they don't maintain any kind of a excess reserve. Clear? And we believe that general public will not keep more. They will deposit more and more money with. Clear? Now, how do we identify R? Usually we need not to identify. They will only give in the question small r. That is decided by whom? Decided by. But we need to identify small e. What we should identify? See, this is how we identify small e. ER divided by D. Excess reserves divided by deposit. What is it? Excess reserves divided by. That is small e. How do we identify small c? Capital C divided by capital D. Clear? Now this topic is important. Listen to this carefully. They may ask you this question. Whenever central bank is deciding how much money to print and circulate, how much money to? That is based on external factors. Like in an economy, how much money supply is needed to create stability. To create. So it is external, exogenous. What is it? That is external factors. But public behavior is internal factor, endogenous. Internal. But how will government know how much people are ready to spend on goods and how much money they are ready to save? It depends upon one's individual choice, right? So public behavior is internal. What is it? Public behavior is? See here. Public behavior is endogenous, internal. Central bank behavior is exogenous. That is external factors. And we need to understand combined behavior. Which behavior? Of whom? Central bank, commercial bank and general public. That is what will define the concept of money multiplier approach. Now concept is very simple. Look at the board. Let's make your life more simple. Now we understood the logic behind multiplier and money supply. We want RBI to print and supply dash money, more high powered money. When they print and supply, we believe. What is it? We? Commercial bank is not maintaining. General public is not keeping. If that is the case, multiplier will go up. Now, the formula of money supply. Formula of which supply? MS will be small m. Multiplier into MB. Multiplier into, let's say RBI printed 100 crore. Let's say that is multiplying 5 times. So, money supply in the economy is 500 crore. So what is the formula for money supply? Formula for money supply will be a small m into mb. Hello, audio important. Respond here, intelligent fellows. This is important. What is the formula of ms? Small m into mb. See, by using the same formula, I can identify multiplier also. Now, multiplier will be ms by mb. Multiplier will be what? Or I also said one more formula, 1 divided by RRR. Clear? So MS by MB, this is most repeated question in the exam. They're repeatedly asking the question. Wait, let me show. Why to just say by words? Question chapter 8, chapter 8, chapter 8. Credit multiplier this. I will explain. Still, I have to do same formula. See, 1 by RRR. Chapter 8, chapter 8, chapter 8. One second. See here, question number 74. If the money supply in the economy is how much billion? Monetary base is how much billion? Calculate. There are 3 formulas in total. As of now, I just explained 2 formula. Which are the 2 formula? First one, MS by MB. Or if not, 1 by. Now, in this question, they have given information about MS. Money supply, they have given information about MB. So, what will be the formula? MS by. So, 1000 divided by 200 multiplies by how many times? Very difficult question this was. Very, very difficult question. Next, see, I will show how many times they have asked this question. This is also same to same. See, 1 by RRR will come, 15%. This credit multiplier. See here, another question. 48. Wait, let me erase this. They have given missing figure calculation here. Now read the question. First understand the question. Considering with the money multiplier as how much? They have only given multiplier value. Small m is given. This is small m value. Small m is how much? 1.5. And there has been an increase in investments. So increment. There has been increment of 600 crore in money supply. Sorry, this is MS. They are asking you to identify the MB. We know that small m is equals to MS by MB. They have given small m 1.5 is equals to MS. How much they have given MS? 600 divided by MB. Now MB will go to LHS. 1.5 will come to RHS denominator. So simple. MB is 600 divided by 1.5. Answer is. That's it. Repeated. Questions are like repeated like crazily. Wait, I will show. Question number 72. See, in the past 5 attempts, 3 attempts questions have come. In another 2 attempts, question has come from credit multiplier. Same formula, 1 by RRR. Someone is scolding very nicely. Where is our CSK pan? Maybe he is only scolding. Where is it? He didn't come. He didn't turn up. He's here only. Both of them. Finally, yesterday you proved once a fixers, always a fixers. For stubs, they didn't even allow to change the gloves in the middle of over. They got to know. Yeah, but suppose something, let's say, if the bat gets broken in the middle of over, hey, no, you are not allowed to change the bat. Play with the same bat. That is what I'm saying. When it is slippery, when things are going wrong in the hand, see, that is what called a sportsmanship spirit. Being a captain, now, best example I will give, Rishabh Pant. Last time, when he knew that the bowler has not done it well, it was a no ball, even before going with a review and even before taking, he withdrew that. Sportsmanship different, winning a game is, we can't expect with Ashwin and all, na. Yeah, we never expect. We are a business team. We openly say that. We are a business team, man. We don't win for cup and all. We play for business. End of the day, business matters. Okay, chalo, we'll have a healthy discussion later on. See, we are openly agreeing. Yes, we are a business franchise. Yeah. Okay, chalo, enough of icebreaker. This was just an icebreaker. Now come back. Money multiplier. What is it? Money multiplier. What is it? If the monetary base in the economy is how much? 250. And the open market operations by the central bank, where money supply is 1000 crore. Calculate the money multiplier. MS by MB. What is it? MS. How much is MS? 1000. MB is how much? So 1000 by 250. Clear? See, this is how easiest questions is going to be from chapter 8. So don't get confused. First understand the concept. Clear? Understood? Chalo, superb. Next, we'll go to the next topic. So we understood with the formula. So there are two formulas in multiplier. As of now, I have explained. So which is the first formula? Second formula. 1 by RR. Usually, they will give more questions from this formula. MS by MB. 1 by RRR, they will club it with credit multiplier. Which one? Even credit multiplier formula is almost the same. Clear? Now, there is a third formula. This is interesting. Now, MS 1 plus C divided by R plus E plus C into H. What is it? 1 plus C divided by R plus E plus C into H. Same way, if at all we just remove this H alap, if we remove that H part, that will become multiplier question. Which question? Or multiplier formula. So small m will be 1 plus C divided by R plus E plus C. Clear? Understood? Write this down. First write down all this formula. I will show a numerical problem from this. So don't worry, man. It doesn't matter who will win the cup, who will lose the cup. End of the day, IPL is a business. If you understand that bottom line of the story, na, fighting and all just for sake of entertainment. See, my Chennai students will say, sir, end of the day, we want entertainment. I'm like, yes, that is what you are watching IPL. So after discussion of 2 minutes, na, leave that and then come back to the normal topic. I still understand your concern. CSK has to win cup. Dhoni needs one farewell. You people are badly waiting. 2023, there was a good opportunity. You missed it. We will give you one more opportunity. Don't worry. We can give you reason of knee injury. Done? Finished? Shall I show the question? Okay. Now, look at the board. Wait. I've already solved here. Let me erase that first. R. They have only given 10% currency in hand. What is it? Currency in? How much? Deposits. 800. Excess reserve. 800 million. Now observe. Here the informations are given in billion. But here information is in? Next, money supply, currency plus deposit put together 1200. Clear? So identify multiplier. Now what will be the formula for multiplier? Small m is equals to 1 plus C divided by. Identify. Let's see. Now you have to convert. Either this billion should be converted to million or this million should be converted to. So how do we identify small c? Small c will be capital C divided by capital D. What is capital C? Capital D. So 400 divided by 800. Answer is 0.5. Now how do we identify small e? Small e will be ER. ER divided by D. What is it? ER. So how do we identify excess reserves now? Observe. Excess reserve is given as how much? Out of the deposit received is. Now this is interesting. Now most of them you will go wrong in this conversion only. See, 1 billion is how much? 1 billion is 100 crore. How much? In terms of numerical. 1 million. What is it? 1? Wait. 1 million is 10 lakh. 1 million is how much? Now they are asking how much is this 10 lakh out of 100 crore? How much percentage is this? This is where you guys will go wrong. Now observe. If I say 100 crore. What is it? As 100%. In this, how much is 10 crore? Can I say it is 10%? 1 crore. How much is 1 crore? 1 crore is nothing but 100 lakh. Do you agree? Now in this, let's say, If I have just 10 lakh, what is it? 10 lakh. That means 0.1 percentage. Na? That means 0.1 percentage. How much percentage? 1 percentage is 1 million. What is it? 1 million out of 1 billion. Out of. So how do you represent 0.1 percentage? See, when we are writing, for example, we already saw this now. 100 percentage is written as 1. 50 percentage is written as 0.5. In decimal values I'm speaking. Which value? Decimal value. 10 percentage is written as 0.1. 1 percentage is written as 0.01. So 0.1 percentage is written as 0. Got it? So we should take this as a decimal value. What is the decimal value now? 0.001. So they have given 800 million. So convert that into 0.001. Answer is 0.8 billion. What is it? 0. See, in this question they had actually given 0.8 billion. Can you observe here? But intentionally I only closed it. Suppose in the exam, what if they don't give? You should know how to convert, na? So what is the value of ER? This is the value of ER. ER is how much now? 0.8 billion. How much is the deposit?
800.
So simple. 0.8 divided by 800. Answer is 0.001. So we got the value of E. How much is E?
0.0.
How much is C? 0.5. How much is R? R they have only given 10%. That is 0.1. Now put all these values. 1 plus C. How much was C? 0.5 divided by R 0.1 plus E 0.001 plus C 0.5. So it will be simple. 1.5 divided by 0.601. Answer is 2.49 times. Clear? So you may get a questions like this. So first understand the question. So don't go with the emotional way of answering, because in the question they have given billion as well as million. Observe it carefully. Same thing happened in MV is equals to PT. And let me say question there was a crore, but in options there was a thousands and lakhs. So be careful. Clear? Understood? See now explanations are there for all the three logic. First one, we should understand the behavior of a central bank. See what is that? If the behavior of dash and dash remains unchanged, public and what is that? We believe public will not keep more cash. We believe that commercial bank will not maintain excess reserve. Whenever central bank pumps more money into the system, multiplier will also increase, money supply will also increase. Next, behavior of the commercial bank. See, this is interesting. We believe that commercial banks will not maintain dash reserve, excess reserve. What happens if they maintain excess reserve? As I said, the value of RRR, if goes up, multiplier value will come down. See, what is the formula for total reserve? First understand total reserve formula. Total reserve is required reserve plus excess reserve. By using the same formula, we can identify excess reserve. See there, total reserve minus required. Total was 13. RBI said only excess is 3%. Clear? Understood? Now they have asked question from this area once. Excess reserve formula. Wait, let me show that. Silly questions that has come. See man, question number 77. Which of the following is the correct formula to calculate total reserve minus? And students will say paper is very difficult, sir. What is it? Paper is very? All silly questions. And which you ignore the most. When you are preparing, you will not even give concentration on the silly things. That is where question comes. Clear? Understood? Next comes behavior of public. What is it? Behavior of. Now what we believe, public should not keep more cash in hand. Instead, they should deposit. So okay sir, while depositing, there are three options. How many options? One, either demand deposit, or if not, savings deposit. If not, one more is there. What happens if you keep money in FD, time deposit? That proportion of money we know that you are not going to touch for next 1 year. Because if you keep money in FD, we will give you 6% interest. If you keep in savings deposit, we will give you 2 to 3%. That's it. But you will get 6% now. So people, if they come and keep money in FD, That means they have very high intention that, boss, I'm not going to touch this for next 1 year. Bank can give it as a loan, na? That means they will get more and more dash reserve. See, the greater availability of free reserve and consequently that enlarges the volume of multiplier deposit expansion and monetary expansion. That means that money can be given as a loan and that will make more and more availability of a money. More and more availability of a. Now observe, question, same to same words. There is no difference. See, first read this statement once again. I highlighted one. Time deposits to demand deposit ratio means greater availability of a and consequently enlarges the volume of multiplier deposit expansion and monetary expansion. Now read this. What is likely the impact of increase in time deposits to demand deposit ratio in the banking system and the monetary expansion? It leads to higher availability of a free reserves and consequently enlarges the volume of multiplier expansion deposits and monetary. Word to word same. That is why read your material. Don't go with shortcuts. Read your. This is the reason. Clear? Understood? Now, simple logic. We don't want RBI to maintain more and more required reserve. That ratio should be lesser. Ratio should be. Even RR ratio should be less. Bank should not keep excess reserve. Even that excess reserve ratio should be less. General public should also not keep currency ratio as more. Currency ratio should be less. When these ratios are less, when these multiplier value will be increasing. That's it. Now what you need to remember is all the formulas. These formulas will play the major role. When you remember formula, automatically you will crack the exam. Clear? Understood? Any doubt in this? By this money multiplier and money supply concept also comes to an. There is one more small logic. Change in money supply. What is it? Happens because of change in reserves. Change in reserves. And once they have asked a question, only and only once the question has come from that area, I will show that question also. This is one. Monetary policy and money supply. Remember the formula. Change in money supply happens because of 1 by RRR. That is required reserve ratio into change in. Suppose RBI said 10% as a reserve. Now RBI also instructed you should keep another 1000 rupees as extra reserve. Another. That means change in reserves. Now, already you have said 10%, boss. Upon 10%, you are also asking us to keep another 1000 rupees as an excess reserves. Now, let's say what is 10% is represented as 1 divided by, I will write it here, 1 divided by 0.1. That is 10 times. How many times? Into multiplied by that rupees 1000. That means excess reserve. This is change in reserve. Now, another extra 1000 rupees you are asking us to keep aside. Now, this money 1000 rupee could have been multiplied 10 times in the market. Now, money supply would have gone up. But now this 10,000 rupee, how much? 10 times of 1000. This 10,000 rupees, there will be changes in money supply. That will go down. So, how to identify change in money supply? 1 by RRR into. Same question once they have asked in exam. Only and only once. Wait. Let me show that question. Look here. Not this one. Wait. Chapter 8. Only once that question has come here. Question number 73. If the required reserve ratio is 10% and there is an increase in reserve, what is that increase in reserve? Change in reserve. How much? What will be the change in money supply? Formula of change in money supply. 1 by RRR into change in reserve. Same thing I took as example now. 1 by 0.1 is 10 times. 10 times of 1000 rupee. How much is change in money supply? Clear? Only once they have asked this question. They may ask like this. So keep it in mind. Clear? Yes. So this was the concept of change in money supply. Now there is one more note given. If you observe, can the money multiplier become 0? What is it? Can the? Yes, see, common sense logic here. Sir, RBI will print 1000 crore and RBI will supply this 1000 crore into system. Same 1000 crore, either commercial bank will keep excess reserve or general public will keep money in hand 1000 crore or that 100, whatever, 100 or 1000 crore, whatever it is, whatever money that is printed by RBI, same money is held as either excess reserves by commercial bank or excess cash by the general public. Now one way credit, another way debit, nullified, na? Effect of multiplier will become 0. This can also be a question. Clear? So remember, RBI printed 1000 crore and they supplied 1000 crore. But commercial bank is keeping 1000 crore of excess reserve or general public is keeping 1000 crore of excess cash in hand. One way money came inside the system, credit. Another way money is getting debited. 1000 crore credit, 1000 crore nullified effect. So multiplier will become 0. Clear? So this brings to the last topic, credit multiplier. Which multiplier? See, in this there are two ways of asking question. How many ways? One, either they will ask you multiplier value or credit creation. What is it? So what is the difference? See, simple. Formula is one and the same. 1 by RRR. What is credit multiplier formula? What is credit creation? That means whatever initial deposits have come, after getting the value of 1 by RRR, if you multiply that with initial deposit, multiply that with, we will get the credit money created. Which money created? Clear? Okay, straight away let me come to the question. Now observe here. Both of them are giving answers for credit money created. What is it? Credit money? Or wait, let me show the exam question itself. Wait, I will go to exam question only. I will show you the exam question. Chapter 8, Chapter 8. Chapter 8, somewhere, here, this one. Wait, let me erase this. Okay, read the question first, understand the question carefully. Given the required reserve ratio, how much is required reserve ratio? And 12.5 percentage for every 1 lakh rupee, for every of deposits in the banking system. Calculate dash. They are not asking credit money created. They are asking what? What is the formula? 1 by RRR. That's it. I need not to multiply that with the initial deposit here. They are asking what are they asking for? Credit multiplier. What is the formula of credit multiplier? 1 by RRR. Total 2 scenarios are there. Now if it is 8%, what is it if it is? That is 1 divided by 0.88. 1 divided by, what is the answer? 12.5. Next, if it is 12.5 percentage, 1 divided by 0.125. Answer is 8. First one answer is 12.5. Second one answer is 8. That's it. First understand question. Next. Wait, I will show even in the other attempt papers. Now here MB question was given in this attempt. See, either monetary based question will come or if not multiplier question will come. Any one will be there in the exam. Read the question carefully first. Question number 55. Question number? Calculate. What is it they are asking? Total credit money created. They are not asking multiplier. They are asking what created? Money created. That means 1 by RRR into initial deposit. Whatever you will get multiplier value into initial deposit. See, banking system, if the required reserve ratio is 15%, for every 12 lakh deposit, that means 1 divided by 0.15 into 12 lakh. 1 divided by 0.15. How many times? 1 divided by 0.15. What is a multiplier? 6.66 into 12 lakh rupees. Got the difference? So first you should understand question. What is that they are asking? Are they asking credit money or are they asking credit multiplier? Okay, one more question. No, your monetary base has been asked. That's it. So like this, first you should understand the question. What is that they are asking in the question? Based on that, you have to calculate. Clear? So simple concept. 1 divided by RRR. What is it? 1 divided by? That is multiplier. If they ask credit money created into initial deposit, whatever initial deposit has come along, that you have to multiply. This becomes what? Credit money. What is it? Write down the formula. So this is credit money formula and this is credit multiplier formula. Credit multiplier is 1 by RRR. Credit money is 1 by RRR into initial deposit. By this, entire chapter 8 unit 2 also comes to an end. See, this unit, more numerical problems are there. Change in reserves in the percentage. Then what is the formula? Percentage only you convert. Harika, percentage will always come in the decimal, na? Convert that, multiply that, whatever, 0.1 if it is 10. Again, usually they will give whole value. They will not give that as a decimal. Once again, change in reserves. Harika, do not worry. Such kind of stupidity and all ICAI will not do. They will only do basic stupidity things. Clear? Understood? Any doubts? Let's go to the unit 3, last unit of the chapter 8. Only two major topics are there. How many major topics? One is monetary policy framework. Second one is organization structure for monetary policy decision. See, simple. This speaks about monetary policy. Which policy? Who creates monetary policy? RBI, Central Bank of the country. Like how we had fiscal policy, government expenditure tax. Now under monetary policy also we have a tools. Mainly interest rates. Which rate? Whenever we change interest rate, that will affect on inflation, that will affect on economic activity. So how does it affect? How do we impact? Now, what are all the objectives of creating this monetary policy? Straight away, let's get into the topic. First one, monetary policy framework. What is it? There are three topics under framework. One is objective, second one analytics. Analytics is also called as transmission mechanism. Third one is operating procedure. That is operating procedures of RBI. Clear? First and foremost, objectives. Now there are two kinds of objective, primary objective and other objective. There are four primary objective. How many? But as per your syllabus, now first two is always the one which you should mention. Later we are taking one more and last topic, this one. Organization structure of monetary policy decision. That is based on the Ujit Patil committee. Now we are also considering inflation targeting. Which targeting? As the primary objective. But as per your syllabus, if they ask, what are the primary objectives of monetary policy? What is it? Primary objectives of? Only these two you should write. Price stability and economic stability. Next, we are also adding another two more here. One is inflation targeting, other one is exchange rate stability. Now, after globalization, 1991 and later, because the world is opened up now, anyone can come, anyone can trade. Now, exchange rate mechanism, even that fluctuation should be controlled. What should be controlled? Exchange rate stability has also become primary. Clear? Now, other objective, rapid economic growth, the debt management, moderate long-term interest rate, adequate flow of credit to production sector, creating effective market for government securities. That was the first concept, objective. Next comes transmission mechanism or analytics of monetary policy. What is it also called as? Analytics of monetary. In this, there are four elements. How many elements? And all the four elements are mainly based on when we change interest rates in the economy, that means deposit interest rate or loan interest rate, that will affect on, as well as how the very first channel, savings and investment channel. Now you tell me, when will you save more money? When interest rates in the market is more or when it is less? When it is more, opportunity cost will be there now. Rather than holding money in hand, I will go and deposit in bank. Suppose if interest rate is less, interest rate is liquidity trap. Which trap? But that is to save. Suppose if interest rate is less in the bank, you will come forward to borrow more loan. Na? As an household, you have a dream na, to buy my own home, my own property. You will take loan. You will invest. As a businessman, if the loan is available at lesser price, your capital projects for which you wanted money to buy machinery, land, equipment, cost of borrowing is less because of interest rates are less. You will come and you will borrow. See, savings and investment channel. When you are going to save when interest rates are high, suppose if interest rates are low, bank deposit gets reduced because people are not interested to save. But at the lower interest rate, loans will be encouraged by the, because they will come borrow loan and they will invest it on household, especially which investment? Such as assets, that is housing investment, and even borrowings will become less. Cost of borrowings is lesser, na? Because of cost of borrowing is low, you will come and you will invest money on your capital project. Which project? Like capital goods, new equipments, new buildings. Next comes cash flow channel. Which flow channel? See, simple concept. Lending rate. Which rate? That is interest rate matters. Whenever interest rate is less, a businessman will come forward. He will borrow loan. Rather than using his own money, he will take bank's money. That means public's money. He will invest in project because his demand is greater, na? Product demand is good. Rather than investing my own money, I will take public money. I will invest. I will earn profit. From that, I will give that interest to bank. Remaining money is my income, my profit. So, whenever cash flow channel, which flow channel? Interest rate goes down, cash flow channel gets activated. That is when businessman will be boosting. Businessman will be taking public fund. Which fund? Clear? Because of reduction in the interest rate. That also reduces the income of the people. But businessman is interested to come and borrow the loan now. Next comes asset price and wealth channel. Simple concept. Whenever the asset price keeps on increasing, best example, your mom, she knows that next to 2-3 months gold price will go up. What she will do now? She will buy, because when asset price goes up, our wealth will also go up. Simple. If day by day, if asset prices are increasing, people are not interested to spend money on goods and services for consumption. Rather, they are investing. Rather than, see, they will affect consumption and they will also affect the, rather than consuming, consumption will go down, investment will. Why, sir? If at all asset prices are going up, na, my personal wealth will also go up. And with that document, whatever, let's say, sir, my grandpa bought a property, got to know there is one airport coming in the outskirts of Bangalore. He went to there, Chikbalapura, already one airport is there. Now we will come with airport in, let's say, for example, in Kunigal, or let me say Kanakpura Road. Opposite side, sir. I went and I bought a land now only. Later government set up a airport there. Price went up, na? Now my son will take the document, he will go to bank, he will take loan. Earlier that land value was just 10 lakh. After 2 years, now it is 50 lakh. Now you tell me when they will get more loan, when the land value is 50 lakh or when land value was 10 lakh. That means if your wealth goes up, your ability to borrow loan will also go up by using that particular document as a collateral, equity. Now you can borrow more loan from bank whenever your wealth is increasing because of that asset, because of that. Last comes exchange rate channel. Which rate channel? I will explain this in unit 5 of chapter, or unit 4 of chapter 9. Exchange rate mechanism. If I touch this now, you will get confused. But remember, what are the 4 channels? Number 1. Second one. Third one. Fourth one. In this attempt, they have asked a question from that area. Which of this is not a channel? See here, question number 6. Which of the following is not a of monetary policy? Savings and investment? Yes. Exchange rate? Yes. Cash flow? Yes. Was there any open market channel? Clear? They have asked a question from this channel also. Which are the 4 channels? Even that you should remember. Clear? Next comes operating procedures and instruments. That means operating procedures of RBI. Operating procedures of whom? How RBI will perform. See, RBI will intervene either directly or either RBI will intervene. Now, what is that operating procedures? Quantitative tool and qualitative tool. Everything is important in this. All this information, whatever they will provide now, na, full on. Quantitative tool. Reserve ratio and open market operation. Already we have spoken about open market operation. RBI will buy securities or RBI will sell securities when there is inflation and deflation. And by the way, why does RBI does this? See, this note is important. Open market operation is conducted for temporary liquidity. Sir, why did the liquidity mismatch happen? Because foreign funds are coming inside India, na? FDI, FII. When these funds comes inside, automatically money will come more inside. When that happens, automatically imbalance will create. To reduce that imbalance effect, we will do open market operation to only mismatch of temporary liquidity has to be settled. Simple concept. when people have more money in the hand, RBI will sell security. RBI will. That means you have more money, na? If there is more money in your hand, you will demand more. Prices will go up, demand will go up, inflation will go up. To control that, we will sell security. What do? In India, people are interested to buy government securities. Why? Guaranteed return and safety of funds. If you invest that same in the bond market or equity market, if market goes down, even the fund what you have invested will also go down. Returns will also be risky. But in government bonds, risk is zero. Risk is guaranteed return. Which return? So people are interested to buy when they have more money in their hand. So whenever people have more money, RBI will sell security. People will buy, money will come from people to RBI. Excess liquidity got sucked away. When economy is not performing well, deflation is there. Whatever RBI sold security, that time they will come and purchase. When RBI purchases, money will go out from RBI to public. Clear? This is open market operation. Buying and selling government security. Which security? On behalf of government. On behalf of? Who is doing that? RBI. To control liquidity, temporary liquidity mismatch which occurred because of foreign capital. What is that called as? Open market operation. When do they sell security? During inflation. To avoid this excess liquidity or suck away this excess. See, sucking out this excess liquidity. When do they buy security? During deflation. Why? There is a liquidity constraint. That means liquidity is not in the hands of people. Hey, 1 second. Monitor got turned off. Recording important. Hello? Came back. Okay, Harika, I will explain cash flow channel. First listen to this. Yeah. So, done with open market operation. Any doubt? Now, reserve ratio, CRR, SLR. What is it? See, simple concept. Let's assume a customer is coming and depositing 100 rupees in his bank account. How much? Now, this gets divided into 3 parts. How many parts? Now, one portion, RBI will say, commercial bank, you should always keep money with me. This is called CRR, cash reserve. Let's take an example, 10 rupees, where it has to be kept with the, and commercial bank will not earn any interest from this money. And we also kept on saying RRR, this only. Cash reserve ratio. This is the portion of money. What is it? From the deposit. Commercial bank has to keep with whom? And in return, you will not get any interest and all. Clear? Next comes SLR. What is the second concept? Statutory liquidity ratio. Let's say another some 25 rupees. How much? And this should be held in the form of gold or RBI approved security. Which security? Approved security. Usually government security. Which security, pa? See, you will get some interest. What you will get? Not a good interest and all, because you are investing in government securities, not in the market. And you can't take risk because it is public money. This is not government money and all. This is general public money. You can't take that risk. So you have to maintain this with whom? Bank themselves. Who should maintain? That too liquidity. Statutory liquidity reserves in the form of cash, in the form of gold, in the form of RBI approved security. You will get dash interest. Not a good interest and all. Some interest you will get. But if you keep money in RBI, you will not even get any interest. Now how much money you are keeping with RBI? 10 rupee out of 100. And how much you are holding? So 10 plus 25, 35. Remaining money?
65.
The 65 rupees is used to give loans and advances. What is it? Clear? Remaining. That is what? If you remember, I said 10% reserves. Remaining 90% can be given loans and advances. In my previous unit example, to make you people understand, I just took 10%, but it is always greater than, because it has component of CRR and. Suppose if RBI wants to grant more money into the system, pump more money into the system, they will say, okay, just keep 5 rupees with me. You just keep 20 rupees. If that happens, now 75 rupees will be available or 80 rupees will be available to give loan. Consider 80,000 crore, 65,000 crore, 80,000 crore. That means like thousands of crores. Even one single percentage here and there goes, 1,000 crores of money will be available to the public as free reserves. Which reserve? Clear? So this is the concept of reserve ratio. Which ratio? CRR and see, portion of deposit. What is it? Portion of deposit. RBI should keep, bank should keep with whom? That is called cash reserve. Portion of deposit which a bank has to maintain with themselves in the form of or RBI approved securities. Clear? These two are called quantitative measures or quantitative tools. Required reserve ratios and open market operations. Clear? Now comes qualitative tools. Which tools? Marginal requirement. Which requirement? Marginal requirement. Now let's say for example, now let's say Praveen. He has got a property worth of 50 lakh rupee. His grandfather got a 10 lakh rupee, but today the value is 50 lakh rupee. Now Praveen will go take that document, that collateral, and he will go to the bank manager. Now let's say for example, now Charan is a bank manager. Who is Charan? Bank manager. Now he will go and ask, Praveen will go and ask to Charan, hey Charan, take this document, 50 lakh rupee worth of property I have, give me loan worth of 50 lakh. Now Charan will say, didn't you attend economics class, stupid fellow? We can't give you 100% value. We can't give you some portion. We need to maintain as a safety reserve. Which reserve? Certain margin we can't. What if tomorrow, like Vijay Mallya, you will take loan and you will abscond? Or you will also sell your RCB team and you will go off. What to do? So we need margin. What does we need? So RBI has said. Who has said? RBI has said we can only give 80% of collateral as a loan. That means you will not get 50 crore. You will only get 40 crore. That remaining 10 crore is a marginal requirement. Which requirement? Against collateral. Against the... See, RBI will prescribe certain margin as a collateral as to be held as a safety stock. Has to be held as a... What if tomorrow real estate, let me say, falls like Dubai happened? Na? Everyone said Dubai safe haven, safe haven. Now first bomb went on Dubai only. Now real estate go now buy assets, properties in Dubai. People are not interested now. Now what if real estate value is down, goes down in the city? Automatically your 50 lakh rupee worth of property automatically will become. Anything may happen. Na? So we'll maintain the marginal requirement. Which requirement? Who will prescribe? That is called marginal requirement. Next comes moral suasion. Which suasion? That means RBI will say to commercial bank, you should set and follow my instructions. I said, nah, you should keep only and only as a form of gold or with security. Only and only which I have said as a safe security. I know you will get good returns if you invest it in market on any other public securities. But no, whatever I said, you should set and follow. Morally, I will pressurize you. Morally, I will. That is called moral suasion. Which suasion? By way of persuasion. That means, let me say, convincing, pressurizing, morally pressurizing. RBI will convince banks to keep money only and only with the, rather than any other certain. See, not just with respect to security, any rules and regulation for it matter. Tomorrow RBI will come and say, if anyone withdraws money from ATM, charge 75 rupees as tax. Hello, their own money, they withdrawing 75 rupees. Shut and listen what I am saying. I don't want more cash transactions to happen in my country. I want only online transaction, Google Pay, Phone Pay. Now RBI has proposed a new rules for UPI transaction. Still proposed. What is it? Not executed. Any transaction above 10,000 rupees made will not get immediately settled. Cooling period of 1 hour. That means if you send now, money will be received only after 1 hour to reduce all these frauds, scams. Later you realize, I sent to some scammer. Like this it will happen. Na? So to cut down that, approximately 50,000 crores of money has been lost in 2023 in India. 2024, 83,000 crores because of scammers. So RBI has proposed any transaction above 10,000 rupee cooling period of 1 hour. Still proposed. It has to come into a execution. Still just proposed law this is. And for senior citizen, anyone transferring beyond 50,000, not just a senior citizen approval, even nominee approval needed. Whose approval? Whom you will be mentioning as nominee in your bank account, maybe your son, daughter, grandson, granddaughter, uncle, auntie, chittappa, chittamma, or your friend, whoever it is, XYZ person, even they should approve. They should cross check why are they sending beyond 50,000. And if there is a multiple transaction happen within just 30 minutes, automatically there is an option called as block account. Even nominee can block account. Automatically, either a bank holder or either a nominee, anyone can block. These are just proposed rules. What is it? They are planning to bring. Still, yet to get executed, yet to get approval. These are just proposed rules. Like this tomorrow, if RBI comes with anything, banks have to shut and follow that. That is called moral suasion. Persuasion. Next, selective credit control. What is it? Selective credit control. That means for which business to give loan, which business not to give. For what purpose to give loan, for what purpose not to give. That will be decided by RBI. That is called selective credit control. This brings to the most important topic of this unit. That is market stabilization, liquidity adjustment, marginal standing facility. Clear? Before going to this, flip back the page, have a look. Any doubts, let me know. It will take another maximum next 15 minutes. We'll be done. Harika had a doubt. Let me clarify that. Okay, cash flow channel. That means when you are going to hold more cash, when interest rate is low, you will not keep money in bank. But when interest rate is low, businessman is interested to come and borrow loan and do business. Harika, that is cash flow channel. How much of liquid cash, liquid money that people will be holding? That is when interest rates are getting low. Done? Finished? Let us continue. Okay. Now let's continue with the same example. One story, small storytelling is there here. Now Praveen and Shashikiran, we both are business people. Now Praveen has supplied some raw materials to Shashikiran. Let's say worth of 50 lakh. How much worth of? 50 lakh. Shashikiran said, no boss, I don't have money. I will pay you after a month. Let's say Praveen has given the raw material on 1st of February when budget got announced. 2026. Now Shashikiran said, I will pay after 1 month. But Praveen said, I have attended law classes of Sai sir. What if you don't pay? Kindly sign bill of exchange. Okay, fine. I have signed a bill of exchange. Shashikiran said, I will pay on 1st of April. 1st of 2026. But in between, on very important day, 14th of February, Praveen has an emergency. If you don't gift a diamond necklace to girlfriend, breakup will happen. What to do? Shashikiran will pay money only on 1st of March. Now, Praveen will take this bill of exchange. Whatever the bill of exchange was there, he will take this bill of exchange. He will go to a bank. Charan is a bank manager. Who is a bank manager? Charan is a bank manager. Now, bank manager will discount this bill. What is it? Discount. 1 second. Discount the bill of exchange. And Charan is going to give, let's say, 45 lakh rupee. How much? Sir, why sir 50 lakh rupee bill value, na? What if Shashikiran doesn't pay on time? My discounting charges and all are there, na? So before only you are getting money 15 days in prior. So I will give you the money. Okay, very next day. Let's assume, madam, what's your name? Swastika. Okay, now very old customer of the bank, Swastika. Spell it? SW? ES, huh? THIKA. Okay. Something spelling. Okay, fine. We know the name. Now, Swastika, let's assume she was married during the time of COVID. Assumption, madam. Assumption. I know, sir. Still minor. I know. Okay. Let's assume she got married in 2021, 5 years ago. When? 2021. During the time of COVID, 2021. And all her family, relatives and all has given monetary gifts of 70 lakh rupee. How much? Even this also assumption. Not even 70 rupee will come. Don't worry. So 70 lakh rupees she has done a FD 5 years ago for the duration of 5 years. Now that money is getting matured on 15th of February. When 15th of? Now Swastika will come to bank. Charan, 5 years ago, I had done a FD. Let's assume Charan is a SBI bank manager. Same story. When customer comes and asks back the money, come after lunch break. What does it come after? Because huge money, na? 70 lakh rupee. It is not a small money and all. We will arrange it, come after the lunch break. But just yesterday, whatever Charan had extra money, he has discounted the bill and he has given to customer called Praveen. Now, Charan doesn't have a money. What Charan will do? He will ask other branches of SBI. For example, Baswangudi branch, Jainagar branch, like Indranagar branch and all. See, please say my Mana Maryada. One customer is there. I should give money. Everyone will say, no, I don't have money. No, I don't have money. As a last approach. Now, what will Charan do? Charan will go and ask a big daddy. Who is the big daddy? RBI. Now, RBI knows each and every transaction made by the commercial bank. Like how general public account is with the commercial banks, commercial bank accounts are maintained by RBI. Accepted, da? Now RBI say, yesterday you have discounted one bill, na? I know that. Get back that bill. Now RBI will rediscount. What is it? RBI will. What is this word? Rediscount bill of exchange. See, initial discounting was done between whom? Customer and banker. That was initial discounting. Now rediscounting is happening between whom? Commercial bank and RBI. Whenever RBI does this rediscounting of any commercial bills, they will grant a long-term loan. Which loan? Long-term loans to a commercial bank, and they also charge an interest for that. Let's assume some 7%. How much? This 7% interest rate. What is there, Allah? This is what we call bank rate. Which rate? Bank rate. Now, presently, this bank rate has been scrapped. No more bank rate. No more rediscounting of bill. No more long-term loans. No more. There was a time RBI used to rediscount the bill and they used to give a dash term loans. But now it has been scrapped. Instead of that bank rate, now RBI will no doubt give a loans to commercial bank under the concept called as repo rate. Under the concept called as what? And this repo rate comes under LAF, Liquidity Adjustment Facility. Which facility? Repo rate. Now, what is this repo rate? Simple. It is a short-term loan. Which term loan? So, sir, what is that short term means? For 14 days, 2 weeks. Short term, just 14 days. And let's assume 8%. I'm just taking a fictitious example here. That 7, 8 and all is a fictitious example to make you understand. That's not the real rate. Clear? In your syllabus, they haven't given the actual rate. So I'm not taking the actual rates in the real life. What is actually there? Now, RBI will also say, see boss, I will not give loan just like that. You should come and pledge a security as a collateral. You should come and pledge a security as a collateral, as a repurchase agreement. Which purchase agreement? Okay, pledge security as collateral, and it is a dash agreement. Repurchase agreement. So this 8%, whatever the interest rate that the RBI is charging on a commercial bank to give a dash term loan, that is called dash rate, repo rate. See, earlier we had a concept of bank rate. That is a long-term rediscounting of commercial bill and giving a long-term loan. Now that has been scrapped in the place of bank rate. Now, they have converted that as a penalty. What is it? Penalty rate. Penalty rate for not maintaining sufficient CRR and SLR. But presently there is no concept of bank rate. Bank rate has been scrapped. We only give loan under which facility? Liquidity Adjustment Facility. What is that called? Repo rate. Which rate? Okay, chalo. Now let's say for example, she got her back the 70. What's her name, madam? I forgot once again. Swastika. Now she got back her money. Okay, now RBI gave a loan to Charan, that is commercial bank SBI. Now bank gave back a loan to, sorry, not loan, FD money to customer. Now customer happy. Now in next 1 week, what is it in next? Let's say for example, one more student. What's her name, madam? Akshaya. Now Akshaya also one of the another FD holder. One of the another. Let's say some 20-30 lakh rupees. Now she will also come back. Hello, even I got married during COVID. Same FD 5 years. Money getting matured. Give back my money. Now once again emergency. What is that? Again, still you are still in this 14 days only. You are still unable to get back money by giving. Let's say from the RBI, you should get whatever pledging of security has happened. You should repurchase that. Even once again emergency. What is it? Now if the second time emergency comes, sir, will RBI once again help? Yes, but this time not under repo rate. This time not under. We call it as a penalty rate. Which rate? Under MSF facility. Which facility? Marginal standing facility. Which facility? And this time 1% greater than repo rate. 1% greater than repo rate. This is under MSF. Which facility? Marginal standing facility. And this time it is called as penalty rate. Which rate? Penalty rate. So what is that penalty rate? This is also called as MSF rate. MSF rate is nothing but repo rate plus 1%. Repo rate plus, clear? This is important. Now this MSF rate you can avail maximum of just 1% of your SLR security holding. Maximum of how much? Of your dash security holding? Clear? That means whatever you are supposed to maintain SLR na, in that 1% is the maximum money which you can borrow as a loan from the RBI under the dash rate concept. Penalty rate. Over and above repo, we will help you, but not under the repo. We will be helping you under the, that penalty is 1% greater than repo. We call it as marginal standing facility. Clear? Understood? Okay, chalo, both the transactions settled. Now Charan got back the money and even Charan repaid that money within 14 days. Even he repaid this money also after some 15 days. What is that after some? RBI got to know Charan is having more money. This time Charan is not having shortage. Charan is having excess money. Now RBI will come and say, Charan, last time when you had emergency, did I help or not? Yes. Now Karnataka government, Siddaramaiah is asking, he wants some money it seems. Why? To pay salary to his staff, he don't have money it seems. Giving free electricity, giving free bus. They have exhausted money. Now they don't have money. They are asking loan. I know you have more money. Give it. Now Charan, smart fellow. RBI, when I came and asked you a loan, did you give me money for free? How much interest you charged? I know you are my big daddy. At least 1% lesser I will charge. 1%? Okay, now whenever commercial banks have excess funds, they can keep that excess funds with RBI, or else RBI is only asking back that money. Hello, give, I know you have more money, you give. That is what we call reverse repo concept. Which concept? See, under repo, RBI was giving loan to commercial banks. So this was called as lending rate of RBI. What is it? Lending rate of RBI. Let me put one box on all this. Yeah, this is called lending rate of RBI. But now RBI is borrowing. RBI is, or else commercial bank is keeping their excess money with the RBI. This is called as reverse repo. What is it? Reverse repo rate. So this will be repo minus 1%. What is it? Repo rate minus 1%. This is called as reverse repo rate. Which repo rate? Clear up. I will write it as reverse. RRR if I write, you will again get confused. Reverse repo. So what is the reverse repo formula? What is repo plus 1%? That is MSF. Marginal standing facility rate. Clear up. And the questions have been asked from that area. Wait, let me show the questions only. MSF. From MSF, the questions have come. I think in September, here only we got now. See there, question number 76. Marginal standing facility rate is the penalty rate at which central bank lends money to the commercial banks over the rate available under the, which of the following is the correct option for calculating MSF? It is MSF plus, and here also they again plus 1 MSF rate. Actually both are correct. As per your syllabus, option C3 is the correct answer. But observe, they haven't given only single, like option 1, option 2, option 3. So you have to club this option 3 now with the 1. What is it? Club this option 3. 1 and 3. And even they have asked that particular question. What is the maximum rate? What is the maximum rate that we can avail? MSF rate. What is the maximum that we are going to avail? 1% of SLR security. 1% of. Even that question is asked. Wait, I will show that. Question number 92. Banks can avail MSF rate with a maximum of how much percentage? 1%. Is that clear? Maximum of 1% we can avail. Clear? If you want, you can write down this story. If anyone wishes, sir, I need to remember this concept. You can write down this flowchart. Write down fast. Hey, it is not a break, man. Still, one small topic is there. Wait, we have to finish that inflation targeting. Or shall I finish it off that inflation targeting? Later, will you write this in break? Okay, then look at the board. Settle down first. Settle down. Last topic. Organization structure for monetary policy decision. Last concept. See, RBI and Government of India both together have come up with an agreement. Come up with a called as Monetary Policy Framework Agreement. Sir, why is this agreement? For inflation targeting. Which targeting? If you remember, primary objectives of monetary policy, I said new more element Ujit Patel committee has recommended RBI to consider inflation targeting as a dash objective of a monetary policy. Now, we have come up with a monetary policy committee. What have we come up with? Now, under this committee, we also have an agreement called as Monetary Policy Framework Agreement. Who is entering under this agreement? RBI and Government of India. Now, they will keep target of inflation for once in 5 years. Target for inflation for? Wait. Let me erase all this so that I can mark down and I can explain. Now, we will keep an inflation target for once in 5 years. See, now in your syllabus, they have given the 5-year duration is 2016 to 2020. Still old record, but still that is what is there in your ICAI material also. Now, we should achieve a target of 4% CPI inflation. 4% CPI stands for Consumer Price Index inflation with a higher tolerable limit of 6%, lower tolerable limit of 2%. That means we are targeting to achieve a inflation of how much percentage? In every quarter. In every, boys, not the quarter what you are thinking. This is different. April, May, June is quarter 1. July, August, September is quarter 2. October, November, December is quarter 3. January, February and March is quarter 4. Clear? Suppose, listen to this carefully. In any 3 consecutive quarter, any 3 continuous, if the inflation goes beyond upper tolerable or inflation comes below lower, either goes beyond 6 or either comes below 2, then it is considered as a failure. What is it considered as? See, if the average inflation, if it is more than upper tolerable limit for 3 consecutive quarter, failure. Or else, if average inflation is lesser than lower tolerable limit in 3 consecutive quarter, it is called as what? It is called as a failure. So, we should try to achieve how much? 4%. Maximum upper tolerable?
6%.
Lower tolerable?
2%.
If it goes beyond upper tolerable in 3 consecutive quarter, failure. If it comes below lower tolerable for 3 consecutive quarter, failure. Clear? And once in 6 months, what is it? Once in? RBI will publish a monetary policy report. Who is publishing? Once in? What it will have? It will have a sources of inflation and forecast of inflation for the next upcoming 6 to 18 months. Next upcoming. See, the question can come in any of this. Multiple times questions have come from this monetary policy report. It will get published once in how many months? Who will publish that? What will it have? It will have source of inflation and forecast of inflation for the next upcoming 6 to. Clear? Now, who has recommended the inflation targeting as a primary objective of monetary policy? Ujit Patel committee. Which committee? Same way. There are certain informations given in the summary. What are they given in? For example, now whatever we decided that repo rate and reverse repo rate concept, even that was recommended by Narasimhan committee. Which committee? And that is given in the summary where I will show that concept of money supply unit 2, unit 3. Where is unit 3? Unit 3, I have downloaded that. Wait 1 second. Wait, it is there in the summary and even in the exam they have asked once. IOBOS knowledge portal, economics. Chapter 8, Unit 3. Look at the board. Look at the board. Can you see this? On the basis of, can you read this? The point. On the basis of recommendations of which committee? Narasimhan Committee of the Banking Sector Reforms, RBI introduced a liquidity LA facility. That is what? Repo and reverse repo concept. See, like this, there are multiple committees. Based on this committee reports. What is it based on this? The new concepts have been coming up with the particular topics. Clear? So that committee, who created that committee, who recommended, even that questions will come. And certain informations will be given in the summary. So you need to remember that. Clear? So remember, in case of inflation targeting, which committee? Ujit Patel Expert Committee suggested that. LA Facility, Narasimhan Committee. That will be the question. So once in 6 months, RBI will publish which report? Monetary policy report, and that will have sources of inflation for 6 to. Now see, it is not just India who is following this inflation targeting, even New Zealand, USA, UK, European Union, Brazil. Next, going forward, what is it going? We will also target of keeping nominal GDP. What is it? As a growth rate target. We will keep a growth rate for nominal and we will work as per the target of nominal GDP. Clear? By this, entire chapter 8 comes to an Katam. Clear up? So only chapter 9 is pending, another 2 hours. Next another 2 hours, we'll also finish with the chapter. And we are done with the entire syllabus or entire revision of economics. Clear? Chalo, now the time is 10:50, 10:50. Break 20 minutes. 11:10 we are going to start back. Okay, 11:11 we are going to start back. Okay. The next chapter, chapter number 9. So international trade. So there are total 5 units in this particular chapter. So unit number 1 speaks about theories of international trade. One of the small unit and also important from exam perspective. First we will understand what do we mean by international trade. There are 2 components in international trade. One, exchange of goods and as well as exchange of resources between the country. What is it between the? And when we are exchanging this either goods and services or resources, that involves greater comparing to internal. Why is it greater complexity? Because multiple currencies gets involved, shipping business gets involved, multiple documentation gets involved, multiple legal environment will be there. Your nation law, the other nation law is different, and your currency is different, their currency is different. Shipping business will be there. Taxes will come into picture, quantity restrictions, and even other barriers like rules and regulation, non-tariff barriers. So because of all these elements, international trade will be much more complex comparing to internal trade. And most important, whenever we conduct an international trade, it should be mutually beneficial. What it should be? That means both the countries has to get benefit. If there is only one nation who is getting the benefit, definitely we may not be interested in doing it. So it is always mutually beneficial. Which beneficial? So there are 5 theories of international trade. How many theories are there? Mercantile view, theory of absolute advantage, theory of comparative advantage, HO theory, and new trade theory. So let us understand one by one. The mercantile view, which is actually against the international trading pattern, because we should only and only export, not at all. We should impose tariff whenever they import it. So government gets more revenue, and we should block the imports. We should not at all encourage. We should only and only. This is called zero-sum game. But in general, international trade should not be a zero-sum game. It should be dash beneficial, mutually beneficial. Clear? But in mercantile view, it is a zero-sum. That means it is not mutually beneficial. That is mercantile view. Next comes theory of absolute advantage, introduced by Adam Smith. Was the first person to say international trade is mutually beneficial. How? And we consider only and only labor as an important factor. Which factor? See, out of factors of production, the whole analysis is based on labor hours. Labor? That means in order to produce the goods and services, what is the labor incorporated in them? What is the? That means we always need lesser labor hours. If at all, a labor hour is utilized for a lesser time, that is better. So now let's say India and USA, rice and wheat productivity. India is taking 2 hours to produce rice, but USA is taking. Who is better? India. India is only taking just but USA is taking 10 hours. Next, in terms of wheat productivity, USA is taking. India is taking. Who is better? USA. So international trade is possible. India is good in production of rice. USA is good in production of. So exchange between each other. Now mutually benefiting trade is possible. India has an advantage in rice. USA has an absolute advantage in. So mutually benefiting international trade is possible. And Adam Smith was the first person to say that international trade is not a. That means it is dash beneficial. So we should always consider absolute cost advantage, the country which specializes in the production and export of the commodity, in which their labor cost is lesser. Labor cost is, they should produce, because you have an absolute cost advantage. So whichever country has advantage, they will produce and they will export. Next, sir, what if one country itself has an advantage in both the productivity? What is it? One country itself has an advantage in. Now observe, India is only good in rice. India is also good in comparing to USA. Now how come mutually benefiting trade is possible? It is still possible. Who defined it? David Ricardo. Who defined? Now David Ricardo said, see boss, resources are limited. You can't produce each and everything. So compare. In whichever you have greater advantage. I know India, you are having advantage in both. In whichever you have more advantage, you select. Lesser advantage, you reject. Like how do we identify? Best, we will take up ratio. What do we take up? Now observe, 10 and 2. Can I say it is 5:1? 20 and 5. This is 4:1. Clear. That means India has more advantage in rice. 5:1. Greater ratio. That means India can produce 5 times better than USA in rice productivity. India can produce wheat 4 times better. How many times better?
4 times.
With respect to rice, how many times?
5 times.
With respect to wheat?
4 times.
I know India is having advantage in both, but greater advantage in.
Price.
Lesser advantage in. So India, you forego wheat. Let them produce. See, you can't produce each and everything. Resources are limited. And moreover, to get that mutual benefit, to better international relationship, you forego wheat. So higher ratio, advantage country will select. Lesser ratio, disadvantage country will select. Clear up? Now observe. We use a word advantage and disadvantage from Adam Smith point of view. Whose point of view? Let me say this word. Observe my words. India has absolute advantage in both. Do you agree?
Yes.
USA has absolute disadvantage in both. Do you agree?
Yes.
When we compare,
Compare.
India has greater advantage in,
Price.
lesser advantage in.
Wheat.
See, we are using this word greater advantage, lesser advantage from absolute point of view. But from comparative point of view, we don't use a word called as advantage and disadvantage, greater, lesser. Simple, comparative advantage. What is it?
Comparative.
That means whichever greater advantage is there for India, that is rice. India has comparative advantage in rice. USA has comparative advantage in wheat. That's it. We don't use a word disadvantage from comparative. We only use a word advantage, disadvantage, greater, lesser from absolute. And they will confuse you in the question. See like this. For example, chapter 9. There was one beautiful question. This attempt only. Where I will show. Chapter 9. Maybe this or the previous attempt. Not a benefit, not this one. David Ricardo was the answer for it. Chapter 9. I will show that question. That was actually good. Question number 85. Who proposed that countries should export goods in which they have a greater absolute advantage? That means absolute advantage is greater, and import goods in which absolute advantage is. That means both are advantage only. Greater advantage you will export, lesser advantage you will import. This is comparative, na? David Ricardo. And most of them, after seeing this word absolute, they went and marked Adam Smith. So first understand question. Greater advantage you will export, lesser advantage you will. That means India is having advantage in both. Greater advantage you are producing, lesser advantage you are importing because you are compromising. This is called comparative advantage. Which advantage? Who introduced it? David Ricardo. Simple. Take out ratio. Greater advantage, advantage country. Lesser ratio, disadvantage country. That means more advantage, India will select. Lesser disadvantage, USA will select. The word advantage, disadvantage will be explained only from Adam Smith point of view. But from David Ricardo point of view, we'll only just say comparative advantage. Which advantage? India has comparative advantage in. USA has comparative advantage. We don't use a word disadvantage there. Comparative in wheat. That means USA has disadvantage in both. Greater disadvantage rice, lesser disadvantage. So lesser disadvantage we will select USA. India will select greater advantage, that is rice. This is comparative advantage. Introduced by whom? Now same concept, little confusion, Heberler. Heberler considered opportunity cost. What did Heberler consider? See, simple here. You are compromising wheat to produce rice. That means what you are producing, what you have foregone, what you have. That means you are identifying foregone cost. Opportunity cost speaks always about which cost? Foregone cost. Now simple concept. Remember the formula. Selected by other commodity. What is it? Now let's take up an example. Now let's only consider India. What do we consider now? I will only consider this bottom part. Now let's assume India is producing rice. How many hours it is taking? That means in this 2 hours, how much wheat I could have produced. That means what you have foregone for wheat. Selected by rejected. Selected how much? 2. Rejected how much? So 2 divided by 5, 0.4. This is the opportunity foregone for. That means 40% of wheat I could have produced in this 2 hours. Compromising that I am producing rice. Next same. Selected by rejected. 5 by 2. What is it? 2.5. That means I could have produced 2.5 kgs of rice. By sacrificing that I am producing wheat in this 5 hours. First do it inside the country. For USA also. Selected 10. Rejected 20. 10 by 20, 0.5. Next 20 by 10, 2. First identify opportunity cost. What is inside the bracket is opportunity cost. After identifying inside the country, now compare between the country. Compare. USA is sacrificing 0.5 units. India is sacrificing. Who is sacrificing less? So India, you select rice. Now compare wheat. USA is sacrificing 2 units. India, who is sacrificing less? USA, you produce wheat. So this is Heberler concept. It is little confusing. First inside the country opportunity. Next compare the opportunity between the country. So two steps are there. Confusion. But David Ricardo said very simple. Take out ratio. Greater ratio advantage country. Lesser ratio disadvantage country. Life was simple. Clear? That was comparative advantage. Which advantage? Next comes HO theory. Eksha and Olin theory. Now listen to this difference carefully. In absolute advantage and comparative advantage, labor was the important factor. Which was the important? Except labor, we didn't even consider anything else. But in HO theory, we consider labor as well as capital. What is it? Labor as well as both. Now there are 2 steps in answering here. Labor rich country. Which rich country?
Labor rich.
India. India has more labor. USA has more. So by using labor and capital, which commodity you can produce at a cheaper cost? That you should identify first. India can produce a product by using labor at a cheaper price. USA can produce capital intensive good at a cheaper price. So India, you produce labor intensive good and send it to USA. USA will produce capital intensive good and they will send it to. This is step 1. Production mobility. Which mobility? We will only produce goods and we will send to other country. Now in USA, what is the shortage? Labor. In India, what is the shortage? USA, come and invest in India. India, you send your labors to USA. What happens? Since labor was not there in USA, labor price was very high. Now India is sending labor from India to. Labor prices will go down. In India, which was not available? Capital. Interest rates was very high if we take loan. Now when foreign company comes and starts investing in India, interest rates will fall. That means now in both the country, price of labor, price of capital will get equalized. It gets. That is why factor price equalization theorem is the another name of HO theory. Another name of. And HO theory is also called as factor endowment theory. Which endowment? Or modern theory of trade. What is factor endowment? Factor endowment refers to labor and capital intensive goods. Which intensive? In absolute advantage, comparative, we only considered labor. We didn't consider capital. Now capital as well as. There are two steps here. In step 1, we will only produce goods and we only send the goods. In step 2, we don't produce goods. Rather, we send the factors of production only. So first it will lead to production mobility. Later it will lead to factor mobility. So there are two steps in HO theory. How many steps? This was HO theory. Later, this HO theory was also extended by Paul Krugman. Who extended this? And he also got a Nobel Prize in 2008 for identifying the international trade pattern. Which pattern? See, what did HO theory said? Labor country will produce labor intensive goods and they will send to capital country. A capital country will produce capital intensive goods and they will send it to labor country. But Paul Krugman noticed, see boss, that theory was working then. But now two labor countries only exchanging between them. Two capital countries also exchanging between them. You also gave an example. See, Sweden, they also manufacture car. In USA also we manufacture car. Sweden cars are demanded in USA. US cars are also demanded in Sweden. Two capital rich countries also exchanging goods between each other. That was extension made by Paul Krugman to HO theory. Even to labor countries like India, Indonesia, India, Bangladesh, even they are exchanging goods between each other. That is what is said by Paul Krugman. Clear? Last theory, globalization or new international trade theory. Simple concept. Same product is exported as well as same product is. Why sir, are they mad fellows or what? Not mad fellow, pa. In your country, you are produced in excess. You are produced at economies of scale. Least cost to production. Huge quantity. Unable to sell everything in India. So you are also selling outside. Okay, but why are you importing same goods? Because of popularity. My people want Nike shoes only. They don't want to buy from my own country. What to do? They want Apple iPhone only. They don't want to buy from Indian phones. They want Rolls Royce only, Ferrari only. They don't want to buy Tata. They don't want to buy Mahindra. Because of popularity, bandwagon effect or network effect. Bandwagon effect or conspicuous necessaries. Someone else is using, even I want the same. Because of popularity, in short, show off. Even we want the same product. Same product is exported as well as same product is. That is globalization theory, extension of HO. Clear up? These are the 5 theories of international trade. Mercantile view, we should only and only export, not at all. Absolute advantage, said whoever is producing at lesser labor cost, you produce and export. Comparative, if one country is only good in both, take out ratio, greater ratio, advantage country, lesser ratio, disadvantage country. HO theory, now capital as well as labor, both is considered. First production mobility, later factor mobility. Factor price equalization theorem. Last one, globalization. Same product is exported, same product is. That's it. These are the 5 theories of international trade. Next comes advantages and just a read only concept. What are all the advantages of international trade? Specialization, effective use of resources, consumer get a choice, low price, economies of scale production, sharing of technology happens, division of labor. Our labor will work in India as well as we'll also send them to other country. Even capital will come from other country. Better international relationship will be there. Before going there and investing, first we used to send goods. It helps to earn a foreign exchange reserve. It will improve our GDP and employment. Since we are exporting now, we should produce. Employment will go up. GDP of the country will also go up. And also disadvantages. Dependency becomes more. Political turmoil. All this international relationship gets hampered sometime. Best example, Donald Trump. Stupid fellow. What he is doing now. And also certain industry will get boomed very fast like telecommunication, defense. And also we are highly dependent on them now. Our imports is also increasing. My own small domestic people gets affected when I allow foreigners to come and do business inside India and dumping like China. Excessively they will produce and they will start dumping inside my country at lesser price. Quick transmission of trade cycles. Business cycle gets affected very faster. Disadvantages. Clear? Unit 1 comes to Chota unit. Clear up? Unit 2. Continuation. Continuation from Unit 1 only. International trade policies or instruments of. Simple concept. When India is entering into a trade with other country, what will be rules and regulation? What all we will allow for import, what all we don't allow for exports. How much quantity we allow, how much quantity we don't allow. How much tax we will charge. What are the different types of taxes? Rules related to imports and exports. What is it? That is called instruments of By the way, what is trade policy? These are the policies designed and implemented in order to regulate dash trade, international trade. That means to regulate exports and imports. How are we going to allow imports and exports? If India enters bilateral agreement, what are the rules? Multilateral agreement, what are the rules? Now we know that by and large, every country wants to be a mercantile approach. That means only and only export, not at all. So why do you restrict import? Because I don't want to, because I should pay money. If I export, I will earn money. So how do you restrict? By way of tariff, taxes, or non-tariff? And this is what is the main component of the chapter. And FTA, free trade agreement, protectionism. What is protectionism? Protecting my domestic people. Why? If foreign companies are coming inside India, they start doing business. They are more effective. They have more money, more technology. They will take over. So I will give protection to my people by imposing taxes, by imposing some rules and regulation to foreign guy who is coming inside. I will always protect my people. That is called protectionism. Trade liberalization. Slowly we will remove rules and regulations. Slowly we will make it easier. That is trade liberalization in domestic market. And these are some abbreviations. They may ask question. For example, FTA, Free Trade Agreement, GCC, Gulf Cooperation Council, CEPA, Comprehensive Economic Partnership. They may ask you this question also. You have to go through this. Now the main chapter 9, unit 2 are these three topics. Tariff, non-tariff, export related. More questions will come from these two areas. Tariff means visible measure. That means taxes. Universally accepted. Every country does that. Non-tariff, invisible. What is it? In the form of rules and WTO clearly says you can't always go with non-tariff, only under certain circumstances. Only under. We'll speak about this, but which is the most universally accepted and everyone following? Tariff. Tariff means taxes on imports and exports. There are 15 types. How many types?
15.
In this, any type question may come. First and foremost, we will explain usually with bounded. Later, we will go to applied. Next, we will come to tariff as trade distortion. Straight away, we don't go to tariff as trade distortion. What is bounded tariff? I will explain here only rather than going there blah 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 blah. Full understand the story first, background. Bounded tariff. All WTO members. Which members?
164.
All 164. 164 WTO member countries have signed an agreement between each other stating, boss, this will be the tax, beyond which I will not charge. Once we are bound, tariff becomes permanent. Sir, what if I charge lesser than bounded? Yes, you can. That is called applied. Suppose, for a sake of example, suppose, sir, we have agreed for, can I charge 7, 8? Yes, that is applied. Can I go beyond 10? You can't. Then what should I do if I have to go beyond 10? Negotiate with the trading partner, sit in front of WTO, first compensate them, and then only you can increase. That means once you are bound, once you are agreed, you can't charge beyond that. That is called which tariff? And if you charge lesser than bounded, but some countries like China, stupid fellows, excessive production they have made, economies of scale, they are dumping into nearby country. Dumping into. Whenever they are dumping, that will disturb the trade in my country. And intentionally, they will sell lesser prices. They will sell it. That means even below their average cost of production in my country and below my retailer's price. That will create disturbance. Now, my customers will be only interested to buy that cheap Chinese product. They don't buy from my domestic guy. Because of that, competition gets hampered. Competition gets. So, to protect my domestic people, we will charge over and above bounded. That is called anti-dumping duty. Which duty? In order to protect the trades, they are disturbing the trade. See, trade as response to trade distortion. Tariff in response to what? Trade distortion. That is disturbing the trade here in my country. To protect that, I am charging which duty? Clear? Now, suppose Indian government does this to Bangladesh usually. Indian government will give subsidy to textile exporters. Why? To encourage more and more exports. When subsidy is given, cost of production will decrease. And all my Indian textile, whichever they are unable to sell in India, again, same excessive production has happened in India, they will start dumping to nearby countries like Bangladesh. Now, Bangladesh government got to know, India, stupid fellow, you are only encouraging, you are only giving subsidy to your people. Okay. Whichever textile coming from India inside Bangladesh, now Bangladesh government will charge extra tariff. That is called as, in countervailing, subsidy element is present, but in anti-dumping, subsidy element is. That is the main difference. And WTO agrees, yes, this is legal. A country can charge whenever any other nation tries to disturb the trade in the another nation. Usually, you are not supposed to charge beyond But in case of any trade distortions like dumping activity, in order to prevent that, either we can go with anti-dumping if the nation, one who is exporting, if they give subsidy to their exporters to dump, importing country will impose countervailing duty, and very much valid as per WTO agreement. You can still go beyond bounded only in case of trade distortions. Clear? Next comes specific tariff. Right, you can write down there fixed monetary tax. What is it? Fixed monetary tax per unit. That means for every single unit you import, this is the fixed tax. Like, sir, I will import one bicycle, 1000 rupee tax. Sir, 50,000 bicycle, same 1000 rupee tax. Sir, 5,000 rupee bicycle, same 1000 rupee tax. Fixed monetary tax per unit. What is it? Fixed monetary tax. And ad valorem, fixed percentage. What is it? Constant percentage. That means 10% or 15%, whatever. Let's say 10%. Fixed percentage. What is it? On your value of goods imported. Sir, 50,000 cycle, same 10%. Let's say, for example, 20,000 cycle, sir, same 10%. Sir, 30,000 cycle, same 10%. That is fixed tax. Which tax? Clear? Next comes mixed tariff. Which tariff? Either specific or ad valorem. We will charge both. We will try. We will first calculate whichever brings more money to government. Higher. Value should be? See, either specific or ad valorem. Whichever is higher. You need to remember this word called as or. What is it? This word or is important. Yeah, that has the questions. I will show that. Next comes compounded tariff. Which tariff? Now that means it is not or, it is and now. We are charging both. It is not A or B. Now it is A and B. That means specific and ad valorem. What is it? Specific plus ad valorem. That is called as compounded tariff. Clear? See, fixed monetary tax, specific. Fixed percentage, ad valorem. Either specific or ad valorem. Whichever is higher. Whichever is, that is called. Sir, now it is not A or B. Now it is A and B. I am charging both. We are charging what? Next comes which tariff? Variable tariff. That means, suppose, sir, in Dubai, sir, iPhone 17 Pro Max is 1 lakh rupee. But in India, 1,40,000. Oh, is that so? How much difference? You bring. After bringing, whatever difference is there, if domestic price is high, foreign price is low, pay that as tax. Pay that as? That is called variable tariff. Next comes escalated. Which one? If you import raw material, low tax. If you import finished goods, higher tax. Most favored nation. What is it? Between WTO members, like what we have already agreed, that is bounded. Between non-WTO member, higher than bounded. See, between members, less tax. Between non-members, that is called MFN. Most favored nation. Next comes preferential tariff. Which tariff? Nearby countries will form one small group. Between that group, lesser tax. Outside the group, more tax. That means up to bounded. That is called preferential tariff. Which tariff? We will nearby country. What is it? And keep this in mind. This only applies to nearby country. Nearby nations. Only and only nearby nation. Because in next unit, I will ask the same question there. RTA. In RTA, that is not nearby country. From any geographical location, you can form your own group. That is RTA, Regional Trade Agreement. Next comes technical tariff. Which tariff? See, based on specific components. Write down that word. Specific component. Specific components. Let's say, sir, I am importing a car. Okay, on car, so and so tax. Sir, after that, sir, for every kg of battery, extra 150 rupee. Like this component, spare parts, components, different tax on different components. What is the different tax on? Different components. That is called as technical tariff. Clear? Next comes bounded tariff. Which tariff? Bound. Already explained. Applied. Already explained. Tariff rate quota. Now this interesting. See, there is a tax as well as quantity restriction. Both. What is it? Tax as well as. One second. What happened to the monitor? It got turned off. Full, maybe CSK fans full happy today. So full disturbance. There also it went off, huh? It came back, huh? Oh wow, nice. Done. Tariff rate. Quota. See, we have a tax. Tariff refers to tax as well as quantity restriction. That means two elements are there. Up to certain quantity. Let's say, Shashikiran, if you are importing up to 1000 quintals of tomato, how much 1000 quintals of? Either we don't charge any tax or less 5% tax. Limited. Either no tax or limited tax. If you go beyond 1000 quantity, higher tax. Which tax? Higher tax will be imposed. That is called as tariff rate quota. See, up to certain quantity, no tax. Beyond certain quantity, tax. That is what we have, quantity restriction as well as tax restriction. Both are there. See, this is dual. Both elements will be there. Quantity element as well as tax element. And this question, this attempt they have asked this question. Next, prohibitory. What is it? Another favorite area of ICAI. Intention itself is to prohibit imports. We will charge 200%, 500%, 300%, 400%. Best example on automobiles. Even today in India, if you import any car from abroad, 100% tax. If the car value is 2 crore, tax is also 2 crore. In India now it is. Upon that, road tax different. Clear? Upon that, different taxes are there. So it is prohibitory. What is it? My intention itself is not to allow you inside the country, prohibiting you to come inside my country. Next, import subsidies. It is negative tax. What is it? Government is only giving you benefits to import. Either on per unit you import, they will give a benefit, or on total volume of whatever imported goods is there, some percentage they will give subsidy. So it is negative tax. Which tax? So these are the 15 types of tariff, and the question can come in any of this. Clear? Understood? These are universal measure, most visible measure. Every country does this. Now next comes invisible measure, that is non-tariff. What is it? Now this is interesting. This non-tariff, now you can't use it every time, only under certain circumstance. Because of this non-tariff measure, it will alter the rules and regulations of exports and imports. Now under this non-tariff, again divided into two kinds, technical and what is it? Divided into two kinds. First one is technical. Second one is, so by the way, what is this technical and what is this non-technical? Simple concept. Technical measures are product specific properties. What is it? Write down. These are the keywords. That means different spare part, different components, different elements, different kinds of rules. Product specific properties. See, underline here. I have also given in the next line. Product specific properties. Clear? Under technical, two elements are there, SPS and TBT. SPS stands for sanitary and phytosanitary measures. Which measures? Sanitary and phytosanitary. That means we are protecting animal life, human life, plant life, biodiversity life. From the product what you are sending into my country, in that if there is any kind of additives, pests, contaminants, toxins, disease causing organism like COVID, disease causing organism, if any of these elements are there and if it is affecting human life, animal life, plant life and even biodiversity, rare species, I have a complete control to ban that, or for a time being I will prohibit that. That is called as SPS measure. Which measure? Next comes TBT, technical barriers to trade. Now it is like shape, size, design, labeling, marking, packaging, functionality, even performance and standard and technical regulation. That means I have said you, see boss, China, when you are sending that packaging material, send bubble wrap. Because in India, people like to play with that bubble wrap after receiving item. But stupid fellow, you sent a plain wrap, rejected, get lost. I asked you to send in triangle, but you have sent in square, rejected, get lost. And this applies to both food product as well as, it is called as standard and technical regulation. This is how it has to be. This is how you should send. Even in manufacturing process, how you should produce. Everything is specified. Product specific property. What is it? In terms of size, shape, design, labeling and all. All this will matter. That is called TBT. SPS and TBT both will come under. And under non-technical, 13 elements are there. How many? Again, 15 elements total. 15 types of tax, 15 types of non-tax rules and regulation. In that non-technical, we have, non-tariff. What is it? Technical and non-technical. Under technical, two elements, SPS and TBT, product specific properties. Now this is non-product specific properties. Non-tariff, quota. Quota means quantity restriction. Which restriction? See, earlier in tax also, tariff rate quota. What was there? That means up to certain quantity, no tax. Beyond certain quantity, we used to levy the tax. Same way. Now we are not speaking about tax. We are speaking about rules and regulation. What are we speaking about? See, simple. There are 4 types of license government will give. First license is binding quota. Which quota? We will say up to what quantity you can import. That's it. Beyond that, you can't at all import. This is the maximum. Shashikiran, you can import 1000 quintals of tomato. That's it. After that, no, you can't even import. Your license is done. That's it. Suppose if I have to import beyond 1000, then you should take one more license. What is it? Non-binding quota. That means we are not speaking about tax here. See, remember, we are only speaking about rules and regulation. Tax is already covered in tariff. Now we are not speaking about the tax. Next comes absolute quota. That means quantity restriction will be there and origin restriction will not be there. Origin restriction will, that means you can import from any nook and corner of the globe. Only quantity restriction. Only up to this quantity you can import. Beyond that, you can't at all import. No permission, nothing. Only this quantity. Next comes tariff rate quota. Which quota? Earlier, this is what we discussed. Tax is also there, quota is also there. Now, jotege, origin restriction. Which restriction? That means only from these countries you can import. From these countries. Now, for example, Pakistan, we don't allow. Syria, we don't allow. Lebanon, we don't allow. Iraq, we don't allow. Like this we have mentioned. If you are importing from these specified country, we will not allow. Only from those countries which you are allowed to import. And this is the quantity. That is what you can. Tariff rate quota. Simple. Binding and non-binding, only quantity restriction. Up to certain quantity, binding. Even beyond certain quantity, non-binding. In absolute quota, only quantity restriction is there and you can import from anywhere, nook and corner of the globe. No origin restriction. There is no representation on the. But here, quantity is also mentioned. Restrictions on origin is also mentioned. Next comes embargo. Simple logic. Total ban. I will not allow that product inside my country at all. Full ban. Total ban. Either for a temporary period or indefinite. Either for some product or either for all the product on import or export. Either from one particular country or maybe from one. And this is the most extreme form of trade barrier. Which is that? Embargo. What do you mean by embargo? Third one. Now this is interesting. Now when government of your nation wants to buy goods and services inside India. That means let's say Karnataka government will say, I want to buy 1000 cars. How much cars? For all my IAS officers, IPS officers, police officers, my government officials, GST officials and all, I am giving a car for their work purpose. I need 1000 cars. How much? But one restriction. In that car, 70% of component. How much? See, government can specify 30, 40, 50, 60, 70, 80, 90, whichever you want. Certain percentage of components while manufacturing, it has to be compulsorily taken from my domestic market. If this component ratio is matching, then I will buy car from you. Like this, they will give a restriction. Why? I don't want imported components. I want to encourage my domestic people. That is why, while government of the country is buying inside the nation, they will impose this restriction. At least 70% should be a domestic component. Which component? Like this, they can come with restriction. That is government procurement policy. Which policy? And also, Indian government lost one case in WTO against us. India wanted to be a global leader in the solar manufacturing, solar energy producing. And Indian government just started Jawaharlal Nehru National Solar Mission. They launched it in 2000. And they said, see boss, I will only buy solar energy from you people, whoever is producing in India. I will only sell. I will only give money, but only one condition. When you are setting up this solar power plant, 100%. How much? 100%. Of the components and raw materials should be from my domestic market. This is violation. Why? Boss, up to 60, up to 70, up to 80, up to 90, you can say restriction. But you can't give a restriction of. In WTO, you have signed an agreement called as National Treatment Principle. That means you have allowed the foreign goods inside your country by collecting tax, either specific duty, advalaram, whatever it is. You have collected tax, right? Once that good enters your country, now you can't discriminate. You can't. See, if you didn't wanted that goods inside your country, you should have imposed embargo. Now, why did you allow that Chinese product inside country? After collecting tax, now you are saying to your manufacturers, if you are using any foreign components, even one small nut and bolt, raw material, any of this, I will not buy power from you. And all the solar modules, solar batteries, solar cells, they will get a cheaper price from Chinese. From Indian product, prices are very high. So they used to buy from China. But now, because of this condition, people will not buy from China. So China went and filed a case against India in WTO, and India lost. You can't impose 100% restriction like this. You can impose only up to certain percentage. And moreover, you have allowed that goods to enter your country. Already these importers have paid taxes on that. Upon that, now you are saying that you should only, let me say, use domestic product. You should not use the foreign product. That is called national treatment obligation violation. India violated that. What is that? Treat your other nation's goods as your nation's goods. You should treat other nation goods as after entering that in your country. A simple for boys, this example will work now. See, sometimes your mom and dad will be saying, "Na, next to home daughter is also like my daughter." ಪಕ್ಕದ ಮನೆ ಹೆಣ್ಮಗ್ಳು ನಮ್ಮನೆ ಹೆಣ್ಮಗ್ಳಿದ್ದಂಗೆ. You would have seen this dialogues. That means for indirectly for boys they are saying no line, square and all. She's your sister. She's your sister now. Next to home daughter is also like my daughter. Treat your neighbor's daughter as your own daughter. Appa, don't write this in exam and all. Treat the other country's goods and services like how you treat your own nation's goods and that is national treatment principle. Which principle? Clear? Understood? And India violated that. Because of that, we lost the case. And government can prescribe up to certain percentage. Up to, remember the car example. See, up to certain percent, 70, 80, 90. But you can't say 100%. That was government procurement policy. Next, trade-related investment measures. Now, this is superb measures. Now, Tesla is a beautiful example here. Now, Tesla said, boss, I will come to India. But I will produce everything in US and I will come and sell the car in India. They said, get lost, I don't allow you. Okay, I will produce in India only. But Indian government said, see, whatever you will export, in the last year, in which year? In that 70% or 75% you can import this year. That means, suppose, let's assume, if Tesla has exported from India 500 crore, how much? Indian government said, next year, not this year. Which year? 75% of its value, or let's say 100 crore you have exported. Next year you can import goods worth of 75 crore in that. That means another 25% shut and buy from my local market. 100% value of raw materials you can't import. Only up to. That means compulsory 25% where you should buy from. If you are trading in my country, if you are doing business in my country, certain minimal portion of raw material to produce goods, you should buy from local market. You should buy from trade-related investment measures. When you are doing a trade in India, we are having a restriction. Certain percentage of component should be compulsorily taken in the which market? Domestic market. Next comes marketing and after sales. Okay, Tesla, you come and sell in India, but you can't have official service center in India. Hey, why? My Tata will do. Mahindra will do. Maruti will do. You can only come and sell. You can't have after sale services. In India, watch manufacturers have this restriction. The foreign brands like Swiss Watch, Rado, Kenneth Cole, they can come and sell in India, but you can't have your official service center. Even Rolls-Royce. Rolls-Royce can come and sell his car in India. Rolls-Royce doesn't have official service center. Then who will do? Volkswagen. They will, because that is a parent company end of the day. They are doing it. Now Indian government can impose such restriction. Tomorrow, for example, any foreign brand will come to India. Any foreign manufacturer of car. Tesla only. They will say, Tesla, you can only come and sell car in India. You can't have your service center, official service center in India. Who will do? My own people will do. My Maruti will do. My Tata will do. My Mahindra will do. That is marketing and after sales restriction. Next comes financial. This example, you keep it in mind. They have asked this example once. Say, wherever we are reading, they can come up with the example also. What they will do? We will create restrictions on finance. We will say, you should pay taxes 3 months in prior. How many months? Which intelligent fellow will pay? That is what. I don't want you to import that. That is why I am creating all these new nataks and all. 3 months in prior, you should pay tax. Or else we will not allow you to exchange foreign exchange reserves. For FEMA, I will say, for the stupid fellow, don't convert his rupee into dollar. Don't give permission. Like this, intentionally, we are creating obstructions in the finance. We are making finance very tighter for you to import. Next comes price control. Intentionally, we will levy more and more taxes and make your product prices expensive inside country. Foreign goods, Nike shoes, how much? $199, okay, plus another $150 tax. 45,000 rupees one shoes in India. How many of them will buy now? If it is 18,000, people would have bought. At least most of them would have bought. Same shoes. Now how much? Now will you buy? Yes, consumer surplus goes down, sir. No, I don't want to buy at all. That is what. Intentionally, we are charging higher taxes. Which taxes? And making your product price expensive more and more so that it will be discouraged to people to buy. Non-automatic licensing and prohibition. Now government will say, last year I gave you license now for importing that good. This year I will not give. Hey, last year you gave, that was last year. This year I will not give. It is not non-automatic. What is it? It is not automatic licensing, non-automatic. And last year we were importing agriculture products from outside. This year prohibited. This year you can't. That was last year, na? This year did I say I will every year I will give you permission? No. Last year I gave, this year I will not give, prohibiting. I am prohibited this year, so you can't even import that. Or this year I don't give you license at all to import. Measures affecting competition. That means intentionally I will give license only to the some people. Let's say for Ambani, for Adani. Only they can import and they can sell. Others, no, for you no license. I will intentionally create a competition restriction. Which restriction? I will create some monopoly. Only they can import, only they can sell inside the country. And distribution restriction. After importing, who can sell and who can not sell. And administrative procedure, intentionally delaying it. First of all, in India, normal itself is delayed. Upon that, if they decide intentionally, if they want to delay you, until you die, we will not give permission. We don't give license. And customs clearance to full frustrations only. Full on. New additional certification, new permission. Oh, get permission from the state government. Okay, after state government, get permission from environment clearances. Hey, that was not there last year. Yeah, that was not there last year. This year it is there. Go get. Intentionally new license, new procedure, new obstacle, corruption, red tapeism, customs clearance, frustrating the importer. All this. Next comes rules of. I said na, certain goods, certain country we don't allow. Or suppose there will be smart fellows. Let's say Iraq product you are not allowing. From Iraq we will send it to Singapore. In Singapore we will assemble everything. We will produce car. And from Singapore we will sell it to India. Beta, even I am smarter than you. Show me certificate of origin. From where did you get this tire from? Iraq. Remove tire and give the car. I'm just giving example. They don't say like that. That means we will ask for certificate of origin. What is it? Regarding the origin of the goods. From where is the spare part has been did you get? You show me certificate. Like this, origin restrictions are there for certain products. Next, safeguarding measures. See boss, your product has already entered my country. Because of that, it has created a trouble inside my country. Now my people are already like boycott Chinese product, boycott Chinese product. They have come up with placards, all my domestic players. It has created an injury in my country. For a time being, what is it for a? Until this heat settle down, for a time being, I will not allow your products to come inside my country. Already your products have flooded the market. Unable to sell that only. So for a time being, temporary, I will prohibit. That is called as safeguarding. Whom you are safeguarding? My own people. By temporarily suspending the imports of foreign goods. That is safeguard measure. Which measure? So this brings to the last portion of this particular unit. That is export related measures. Number 1, ban on certain products. You can never export it from India. Government has banned it. You can't. And still you want to export, still you will bring influence and all, shit, and pay tax and then export. Pay tax here also and pay tax in the importing country also. Your product will become expensive. And sometimes government will only give incentive subsidies in order to encourage more and more. And next comes, last but not the least, voluntary export restraint. That is quantity restriction, quota restriction. Only up to certain quantity you can export. Beyond that you can't. So these are the export related measures. By this, unit 2 also comes to an clear. Unit 1 is done. So unit 3 is small, chota one. It will also not take much time. Just flip back your page, have a look. Any doubts before moving to unit 3? Let's start. Okay. Trade negotiation. What is the next unit? See, simple concept here. In last unit, we spoke about preferential tariff. Which tariff? nearby countries will form one small group. Between them, there will be lesser taxes. Now, it need not be nearby country. It need not be. Even from different geographical locations, you can create your own small group. That is RTA. What is it? Before that, understand trade negotiation. If you remember in bounded tariff, I said you can't charge beyond this agreed. If you want to charge beyond agreed, what you should do? Negotiate with the trading partner, compensating them. Negotiating. Trade negotiation. What is the concept? It is a complex interaction process. That means it will not get over in just one single round of meeting. You will say something, you will not agree. You will say something, you will not agree. It will be discussions with multiple rounds of meeting. Between whom? Between the nations who have a conflicting objective and other stakeholders. Once you come to conclusion, this will bring new rules and regulations for international trade. This will alter. What is it? This will alter the international trade rules. That is negotiating. That is complex interactive process between the nations having conflicting issue. It is a multiple rounds of meeting and that will alter or formulate new international trade rules. Now RTA, even though if you are in a different geographical location, you can still form your own small group and you can reduce barriers for international trade. That is called RTA. And write down, as of February 2021. What is it? As of? There are 339 RTAs. How many RTA? See here, as of February 2021. This was GK question. Once they have asked. As of February 2021, there are 339 RTAs worldwide. 339 RTAs worldwide. Even though if you are not from a same geographical location, you can still form your own small Kuttisa group and you can reduce the taxes, whatever that you are going to charge for international trade. Example, BRICS nation. Brazil is in American continent. Russia, India, China is in Asian continent. South Africa is in a African continent. 3 different continent countries have come together. They have formed a small Kuttisa group. Small group, Kutti. Not big and all, small. Just they control 40% of international trade. Next, types of RTA. This is important. They will ask question from these types and also they will ask from examples. European Union is an example of which type of RTA. They will ask like this. NAFTA. And also what do you mean by trading bloc? They will ask questions. So clear. Now let's assume Europe. Let's consider Europe as an example. Let's say the European country. Let's say some 3 countries. I will take random example like Germany, Italy, Netherlands. Now these 3 countries have their one small agreement. What is it? Between ourselves, free flow of goods. What is it? No tax, nothing between each other. And with any outsider, if at all we are importing, common tax. Which tax? Common external tax. We 3 will follow the same thing whenever we are going to export the goods. Now, whenever we are trading between ourselves, no tax, nothing. And common tax with the non-member. That is called as trading bloc. What is it called? Arab League and European Free Trade Association follows this. Next. Sir, I don't think so. Common tax will apply because Germany has some good relation with India. They have to charge little lesser. And let's say, for example, Netherlands has some good relation with US. They may have to charge little less. And let's say, for example, France doesn't have good relation with, for example, Japan. I will charge more for him. Now, as a member, you are free. You enter with your own negotiation. You come up with your own taxes with non-member. But between ourselves, we have eliminated all the tariff, all the quota, everything. Between ourselves, free trade. Between non-members, you are free to enter into relation. Free to. That is called as preferential agreement or free trade area. NAFTA. North American Free Trade Agreement between Canada, Mexico and USA. Between whom? Canada, Mexico and this agreement. And once they have asked, NAFTA is an agreement between which countries? Canada, Mexico and USA. Next, Customs Union. Which union? Best example, European Union, Gulf, GCC countries. Now all this group of countries will be having free trade between themselves. With outsider, common regulation, not for export, even for. And with any outsider, common tax. Which tax? Common tax, both for export as well as for import. Now this is also called as trading bloc. Which bloc? Trading bloc. This is third one. Customs Union. European Union is an example. Or GCC, Gulf Corporation Council, or Southerners Common Market. Next comes common market. Which market? That means now free trade between members, not just a free trade, even free flow of factors of production and output. Land, labor, capital. I can come to your place and I can take a land and I can start business. You can come to my country, you can take the land and you can start the business. You can send your labor from your country to my country to your country. Even technology, investments. land, labor, capital freely will move, not just goods and services, free trade, even factors of and even flow of output with outside or common regulation. Same, both export and import, we have a common rules and regulation. Next comes monetary and economic. Same, whatever we discussed here, Allah, same applies. Free flow between members, free flow of factors of production, common regulation with non-members. Now, between members, even common currency and common central bank. European Union follows euro as a common currency and European Central Bank as their common central bank. That is monetary and economic union. Which union? Clear, this is the fifth one. See, first five is most important. They may ask you from the concept or the examples of that. They will be asking same like our leading indicator, lagging, coincidental of chapter 5. Same to same. Next comes unilateral trade agreement. Simple concept. One country opens its doors to other country without any rules and regulation. Best example, India, Sri Lanka. Our Sri Lanka economy is not going good. India will say, okay, you send goods to India. You sell it in India. I will not charge any tax. No restrictions. Only for you. Only one country opening its gates to other country to support the another country's economy. To support? That is called unilateral trade agreement. Next, bilateral, between two country, two block, two region. Between two, if there is an agreement, rules and regulation between two country, two region, two blocks, or two association, two, that is bilateral. That is between two of them. Between multiple nation, multilateral agreement. Which agreement? So these are the types of RTA, 8 types of regional trade agreement. Clear? This is important. From this area, you will get the question. Next, only storytelling between 3 things. One is GATT, second one WTO, last is G20. G20 economies. Clear? Full storytelling that is. Simple. Let me give an understanding of this GATT. See, after Second World War, when after your favorite economist, John Maynard Keynes, he wanted to establish 3 world-class institutions. IMF, World Bank, ITO. IMF and World Bank got established. ITO was taking a lot of time. Why? There is a Kirik kid called as USA. This Kirik guy didn't agree to become a member. So all capitalistic economy who was following USA also didn't become a member. As a secretariat. What is that as a? For a time being, for a temporary purpose, we established GATT when 1st of January 1948. And that was existing for 47 years from 1948 to 1994. And GATT was only trading with goods. GATT was only? And it was just a treaty. It didn't have powers, just like a secretariat. It was a treaty. It didn't have much powers. So 123 member countries were there. And these stupid fellows were not listening to rules and regulations properly. And it was only and only covering with services was not there. Intellectual properties were not covered. Because of this, international trade treaties was highly exploited. And suppose if there is a dispute between two countries, it was not acting as a forum to resolve it. This was highly exploited and member countries felt we wanted something stronger for international trade. After Second World War, 8th round of meeting, which round? Called as Uruguay round. In that Uruguay round, all the members decided we will establish WTO and we will make this GATT as a part of WTO. Now WTO will cover goods, services and intellectual properties. What is it? Intellectual. Now, whatever goods council is there, that is what earlier called as GATT. And especially from 1980s. From when? GATT started losing its relevance. GATT started losing its. And this whole topic is important. And most over, the controversial topic was agricultural liberalization. Even today, leave about then, even today. Because many countries are facing food shortage. Population is increasing. They are unable to feed for their own population. And now all these developing nations are asking for support in food aids. Boss, first of all, to feed my own country only, I am unable to produce well. Upon that, you are asking to send to your country. We can't. Agricultural trade is the greatest dispute in everywhere, whether GATT, whether WTO, whether Doha round. Everywhere, every single place, agricultural liberalization was the controversial topic. Because of that, they were unable to come to conclusion every time and the meeting used to get extended another 2-3 years. And that has happened even because of Uruguay round. See, agriculture trade was a dispute. They were supposed to come to an end with all the discussions by 1980. By when? They didn't. It took till 1993, 1994. And these are the reasons. See, this last point. And GATT was not a proper institutional arrangement. It didn't have a proper forum to dispute settling. All this. And also globalization trend was increasing. And GATT could not able to cover all the 3 goods, services, trade properties and all intellectual property. and it was just a treaty. And see, intellectual property was missed out. World trade has expanded leaps and beyond the scope of GATT, and multilateral system was heavily exploited. Agricultural treaty was not successful. There was no proper dispute settlement system or institutional structure, which was inadequate in the GATT. Because of all this, GATT started losing relevance in 1980s. And this Uruguay round, last and final round, that made the establishment of WTO. Clear? Now WTO headquarters is located in Geneva, Switzerland. Now there are how many member countries? In that 117 of them are developing nations and 24 are negotiating members. Today, 95% of the world trade is controlled by GATT. Now superb, no not GATT, sorry, WTO. Now remember this. WTO was established on 1st of January 1995. When was WTO established? But it started its operations from 1st of July. 1st of 1995. Operations was started in 1st of July but established on 1st of January. Now it covers all the three: goods, services and intellectual properties. And what are all the main objectives of WTO? See, I have given in detail here. It will act as a forum for trade negotiation and all kinds of dispute has to be settled with transparency. We need to give more and more importance to developing nations and see their international trade should be freely, smoothly, fairly, predictability. We should raise the standard of living in all the country, full employment, large and steady growth, volume of real income, effective demand and expanding the production of trade in goods and services. All this also shortcut. Main key 6 objectives I have given. In simplified words I have given here. Clear? And hereafter all these treaties, principles, read only concept. Which concept? Now all this. See, for example, these are the structures of WTO. Ministerial conference, that is a topmost level. They will meet once in 2 years. Once in General Council, they will meet several times. If there is any trade dispute, agreement signing or any major decisions, these guys will take. And these guys are ultimate decision makers, topmost council, and all general operations are taken care by. And under them they have goods council, service council, trips. Under goods council, earlier what we call GATT, that is called as goods council. We also cover services, we also cover trips. And especially see both WTO and GATT works based on dash principle. Treat your neighbor's daughter as your daughter, same principle. Clear? And also India had multi-fiber agreement under GATT. Now it has been replaced with textile agreement under WTO. There are 16 types of agreement and 8 principles. See, principles on MFN, most favored nation, national treatment principle, like this. Different aspects are there. At last, I would have given shortcut to remember. Everywhere, remember these pointers. See, trade dispute settlement mechanism, tariff as a legitimate measure. You should not go with non-tariff. I said, na, WTO will only allow non-tariff, that SPS, TBT, embargo, government procurement, that 2+13. 2+ only under certain circumstance. Majority you can only go as a legitimate measure. You can't impose non-tariff every single time, and especially national treatment principle, anti-dumping duty, all this are the main principles of WTO. These are the areas that WTO will guide the international trade. And 16 agreement. How many agreement?
16.
Agreement on agriculture, always dispute. For a time being, we are giving market access, domestic support, export subsidy, like this. All these are the different agreements. Read only concept. Which concept? Now we'll go to Doha round. This is the 9th round. Which round? By the way, which was the 8th round of meeting? Uruguay round. After the second world war, 8th round of meeting was a Uruguay round. 9th round of meeting is an even in the Doha, most controversial topic. And Doha made a major changes in the international trade. Which changes? Major changes in the rules of international trade, especially in the 20 areas like agriculture, service, market access to agriculture, trading in services, facilities, environment, geographical indication, certain intellectual property rights. See, they made a dash modification, major modifications. Clear? So remember, they have asked question from once from this Doha. Which was the most controversial topic of Doha developmental agenda? Agricultural trade. And it was a dash round of meeting. It was established in Doha, Qatar. Next, G20 economy, global 20 economies. See, strongest 20 economies have created their own small group. They will meet several times in a year, or maybe whenever the requirement comes up, whenever global trade gets disturbed, one or the other way, because of war, because of COVID-19, one or the, see what all policies they will take, global policies on trade, health, climate and other issue. Till date, only one question has been asked from G20. Which among the countries not a member of G20? which is not the member of a. That means you should remember this 20 names. All major countries only. See, Argentina, Afghanistan, Brazil, Canada, China, European Union, including them France. Oh, sorry, Australia. Sorry, not Afghanistan. Sorry. Afghanistan is not there. Sorry, by mistake. Argentina, Australia, Brazil, Canada, China, European Union, including France and Germany, India, Indonesia, Italy, Japan, Republic of Korea, Mexico, Russian Federation, Saudi Arabia, South Africa, Turkey, UK, US. These are the 20. And now they have almost met during this COVID-19 pandemic, 2008 financial crisis, Iranian nuclear program, Syrian civil war, now Middle East war is going on all this. Earlier they met during the COVID-19 pandemic, and also inflation is increasing in many countries, and to control that prices, monetary tightening has been made, and all these restrictions has been imposed. First in the context of war in Russia and Ukraine, later they met during the COVID. Overall implementations of this export restriction by WTO members have increased after 2020, first with the context of pandemic, later because of the war, and also in many countries there are a food crisis. So this is G20 information. By this unit 3 also comes to an Katham. Clear? Full data, full information. That is what chapter 9 related to international trade. Okay, Rakesh has a question. Sir, then trading block and customs union seems the same. Yes, but the difference is in trading block, only common rules and regulation with respect to export. But in customs union, export as well as import. Rakesh, clear? Okay. Flip back your page, have a look before moving to unit 4. Exchange mechanism, interesting topic. I will not go deep here. Explanation will take more time. Yesterday already few students from ICU batch attended the normal batch. Yesterday they understood. You want to leave? Get lost. Bye bye. For these kids, these guys, Teja is so full waiting. I know. Wait, let me pause this video. 2-3 minutes shorta break. Okay, look at the board. Exchange rate mechanism. So there are 5 parts in this particular unit, and we will be finishing it. We will go with major highlights, whatever exam oriented. See, the problem with this last 2 units is they may ask question from this, or they may, especially exchange rate mechanism, 1 or 2 questions will come. Even FDI, usually repeated questions are coming in types of FDI. There, horizontal FDI, vertical FDI, conglomerate FDI, reciprocal investment FDI. So wherever exam most concentrated is there, that I will be covering. Clear? If I go detailed here, you will sleep off. And moreover, it takes minimum 2.5 hours to complete this whole. So exchange rate, what is it? Simple. Value of one nation's currency in terms of. So there are 2 ways of quoting them. Direct quote, indirect. In the left side, if there is a foreign currency, and right side, if there is a domestic currency, that is called direct. In indirect, left side will be domestic currency, like 1 rupee is equals to $0.95. Left side domestic currency, right side foreign currency. This is called as base currency. Left side is base, right side is counter. If this happens, that means left side domestic, right side foreign currency, that is indirect quote. In India, we follow direct quote, or also called European quote. That's it. Next comes foreign exchange rate regimes. There are 2 ways of determining exchange rate. How many ways are there?
2 ways.
Wait, let me take up the what yesterday. Just yesterday I wrote all that. Fixed exchange rate regime and floating exchange rate regime. What are the 2 kinds of exchange rate regime?
Fixed exchange.
And floating exchange rate. You see, inside floating, we also have one more thing, managed float. Which float? Now, what is fixed exchange? The nation's government or the central bank will decide what will be the value of their country's currency in terms of another country's currency. Here, the problem is you will decide some 3 years ago, 4 years ago, 5 years ago, until you change next time. Exchange rate will remain same. So it brings more and more. And because of that, international trade, international investments will be more in the country. It looks like, wow, amazing. What is it? Wow, amazing. ಆಯ್ತಾ ನಾ ಮಾತಾಡಿದ್ದು ಕೇಳಿಸ್ಕೊಳ್ಳಿ ಯಾವ್ದೋ ನಿಮ್ದು. Now they have to maintain dash reserve, huge foreign exchange reserves in order to support this fixed exchange rate. For example, now let's say if India, it is only fictitious example. Suppose if India has, let me say, fixed this exchange rate in 2020. Let's assume $1 is 70 rupees. What is it? But today it is 95 already. Now, suppose you want to buy a dollar will you buy in India? Or suppose if you go to USA and you buy, let's say in USA they are following floating rate. $1 today market rate is 95 rupee. To buy $1 you should pay how much? But in India if you want to take, just assume if India is following fixed exchange rate. So where will you exchange it? Why? Because I will get for 70 rupees only. Na? See, this is the problem. To support such kind of purchases, you need to maintain. But in floating, you need not to maintain. You just have to maintain. Because every single day exchange rate fluctuates because of demand and supply. That is floating exchange rate. So in floating exchange rate, stability will not be there. Flexibility will be there. And moreover, it is making international transaction risky. Today one rate will be there. Tomorrow different will be there. Day after tomorrow different. After 1 week different. But in fixed, it doesn't matter until government changes. Every single day it is going to be clearer. And fixed exchange rate, inflation doesn't work at all. Inflation is totally controlled because it is still 70 only from 5 years. It is not even working with inflation. Inflation is totally controlled. Inflation is. But here inflation is not. Inflation is operating. So this is the two types of exchange rate regime. Fixed exchange and floating exchange rate. Clearer. Next comes managed float. Which float? This is under floating. That means government will intervene, not directly, indirectly by becoming participant in exchange market. Like how you and me will buy the exchanges, na? Like that, government of the nation will also become a participant. They will also start buying and selling the domestic currency to control fluctuation. What is it? To control. This is called as managed float or the T float. Which float? Clear. So this is under floating and India is following this managed float. That means government will not decide, but government will intervene the market rates or they will intervene in the flow exchange market and they will try to control. They will try to, suppose tomorrow $1, sir, 95 has become 97, next 100. If it is fluctuating too much, from our reserves, we will start selling dollar and we will start demanding Indian rupee. Demanding. So when demand for Indian rupee goes up, automatically exchange rates will get stabilized. That is the intention. So remember, if government completely intervenes, fix it. If government becomes participant, managing. And remember, mainly there are two types of exchange rate, fixed and floating. And remember, till 1991, till India was following this fixed exchange rate. Till 1991. Later, they started slowly adapting to the changes. They had a dual system. Which system? Fixed as well as floating till 1993, especially 1993 onwards. What is it? 1993? We started following floating. That means managed float. Which float? This you have to keep it in mind. This can also be the question. Clear? So these are the two types of exchange rate regime. And again, we have given the advantages, disadvantages of them, all about that features. Clear? Next comes nominal and real exchange rate. What is it? So what is this? Nominal exchange rate, real exchange rate. Concept is very simple. In nominal exchange rate, today at which market is running based on demand and supply? Based on? That is called nominal exchange rate. Today $1 is 95. Real exchange. In this, value of goods and of one country to the another. So based on value of goods and services, we will decide exchange rate. That is called what? Real exchange rate. But the problem is in ICAI material, formula is wrong. And you should follow the same wrong formula. In exam, recent attempt, they have also asked a question from the same area. And even ICAI answer key also same refers to a wrong answer only. Whatever wrong formula is used. Same wrong formula, whatever end answer has come, that is only taken as answer key. So here remember, whatever formula is given in the ICAI material, it is reverse. I will explain what is that reverse. But kindly remember the wrong formula only. Remember the clear up. Also, what is this now? Let me take up an example for your understanding. Let's assume in India 1 kg tomato. Where in India 1 kg tomato, let's assume it is 70 rupee. How much? Same tomato in USA 1 kg. Let's assume it is $2. How much? Today, how much is $1? So multiply that. This is 190 rupees. That means what you get in India for 70 rupees, in USA you have to pay that how much? Now is it equal in terms of goods and services? No. Now we will understand. In terms of goods and services, what is the exchange rate? That is real exchange rate. Now the formula for real exchange rate. This is wrong formula. What is it? Which is mentioned in your ICAI material. Real exchange rate will be nominal. Today's exchange value. What is it? Nominal exchange rate into domestic price. That means domestic price of goods and services. Either domestic price. One second, I will take this to the left little. Or shall I erase this? Did you guys finish writing? Wait, I will. Domestic price. Which price? Divided by foreign price. Divided by dash price. See, instead of domestic price and foreign price, they can give index. What is it? Domestic index, foreign price index. Domestic price, domestic index, foreign index. Same to same, like GDP deflator concept. Now, today, what is the market rate? 95 rupee. In India, what was the tomato price? 70 rupee. In USA, in terms of Indian rupee, how much? 190. Do it, you will get answer as 35. That means $1 is not 95 rupee. In terms of goods and services, $1 is 35. Clear? Understood? What is wrong? It should be actually foreign price divided by domestic price. That was the real formula. But in ICAI material, what is that they have given? Domestic by foreign for real exchange rate. See, by using the same formula, we can identify nominal exchange rate. What we can identify? Nominal exchange rate. So what is nominal exchange rate? Real exchange rate. What is it? Real exchange rate into foreign price. What is it? Foreign price divided by domestic price. See, here also this is wrong formula. These two should interchange. It should be domestic by foreign, but they have given foreign by domestic. Sir, how to remember? What is the shortcut to remember? Remember, bank FD. What is it? Bank FD. FD will come during nominal. First to F, later D. Opposite in real, DF. So remember only nominal. Enough. If nominal, if you remember it as FD, that means in real it will be opposite, D by F. And this attempt they have asked a question from nominal exchange rate. Where is that? Where is that question? Question number 37. See, I have clearly mentioned even in this answer keys also. ICAI formula is wrong with respect to real exchange rate. What they have given. Considering that we are also doing in a wrong manner. But real formula, real answer is different. But in your exam, rather than taking 50 as an answer, they have taken wrong answer only. 12.5. Calculate, you will only get to know. Now, they are asking what? They are asking you to calculate? Nominal means shortcut to remember. F by D. FD. F divided by D. That means real into F by D. What is it? Real into F by D. What is real exchange rate given in the question? 25. See, they have only given 25. So, this will be 25 into F by D. Foreign price index. How much? 70 divided by 140. Answer is 12.5. Clear? You should take that wrong formula only. They have given answer key also as 12.5. They haven't given it as 50. Clear? So be careful. So this is real exchange rate. Which exchange rate? So we have to identify both nominal exchange as well as real exchange. Same like nominal GDP, real GDP calculation. We had formulas now. There also I asked you to remember the denominator. In nominal GDP divided by 100. Real GDP divided by price index. Keep these formulas in mind, shortcuts in mind. Clear? Here, nominal exchange rate, F by D. FD, bank FD. Real means D by F. Keep this in mind. Clear? Next, real effective exchange rate. Which effective? Same. We need GDP deflator. Simple. There is inflation in the exchange rate. We should remove inflation. What we should do? For that deflator value needed. How do we identify deflator? Nominal GDP divided by today's nominal exchange rate. What is the exchange rate in the market? Let's say deflator is 156. Let's assume GDP deflator value is how much? So do it. 95 divided by 156 into 100. This will get to know real effective exchange rate. 60 rupee. Let's consider 60. That means $1 is not 95. $1 as per adjusting inflation. It is only rupees 60. That means now it has increased. What is it? See, from 95 it has increased. That means we are getting better appreciation. What is it? There is appreciation happening. If you remember, I spoke about this. 1 second. Let me rewrite it. Let's assume $1 is rupees 95. Suppose if $1 becomes 90 rupee, this is called as appreciation. Sir, value going down na. That means rather than buying $1 for 95 rupee, now we are buying $1 at. That means better na. Indian domestic value is going up. That means appreciation. And suppose $1, suppose instead of becoming 95, if it becomes 100, if it becomes, this is called depreciation. What is it called?
Depreciation.
And we use this word called as appreciation and depreciation in floating rate. Which rate? Floating exchange rate. If it is fixed exchange rate, we will call it as revaluation. What is it? Revaluation and devaluation. What is it? Clear? So fixed exchange rate, we call it as deliberate upward revalue. Deliberate upward, that means increasing. Deliberate upward revaluation. Deliberate downward devaluation. Revaluation, devaluation comes in fixed exchange rate. But in floating exchange rate, appreciation and now when real effective exchange rate increases, REER, what is it? Real effective exchange rate. If it is increasing, that is called appreciation. When appreciation happens, remember, let's assume Shashikiran is a bench manufacturer. I used to sell my bench for $1. That means I used to earn how much earlier? Now same bench, $1 only I am selling, but now I am earning how much? Is it good or bad for me? Bad. So I will stop exporting more. Exports will decrease. But I was importing chocolate packet. One chocolate packet was $1. I used to pay how much earlier? But now I should pay only. Wow, superb. I will import more. So remember, when real effective exchange rate increases, exports will go down from the nation. Imports will. Whenever domestic currency appreciates. What is it? Domestic currency? Automatically exports will go down, imports will increase. This is real effective exchange rate increasing. Suppose opposite. When real effective exchange rate decreases, that means depreciation. Now same Shashikiran, for $1 bench I was selling at 95. Now I will earn how much? Wow, superb. Exports will, imports will decrease. So write down this logic if you want somewhere. Write this logic. Write this down. REER, real effective exchange rate. Finished? Completed? Okay, now look at the board. So third topic, foreign exchange market. Simple. It is an electronically linked network between all those who deal with foreign currency, banks, institution, brokers and other dealer who will transact 24/7. They will transact in two manner. One, current exchange rate. That means on the spot. You will go to the exchange counter, you will give the money, you will take the money. That is spot rate, spot market. Second one is a today will enter into transaction, but currency will be received in the future date. That is future transactions. Clear? Next comes determination of nominal exchange rate. Simple. Which exchange rate? That means based on demand and supply. Demand curve, supply curve, point of intersection. That is the price gets established. Today it is 95 per dollar. 95. Now remember, any one perspective you should remember, either from demand perspective or either from supply perspective. If you try to understand from both, you will become Rahul Gandhi. Goodbye, Katam, Gaya, Tata, bye bye. Because one is another with opposite to each other in relationship. What is that? Let me explain. Listen to this carefully. What did we said? Nominal exchange rate. How does nominal exchange rate gets decided? Based on demand and the point of intersection. Let's say today $1. This is supply of dollar. This is demand of dollar. So today it is 95 rupees. Okay, fine, superb. Suppose demand increases. What is it? That means money is going outside India. That means people are coming. They are selling assets in India. Whatever they bought earlier, they are taking back money and they are giving it to exchange counter. They are taking dollar. That means dollar demand is increasing. What is increasing? When dollar demand is going up, that means dollar RHS shift na demand for dollar RHS now D1 of dollar. Now this is new equilibrium. At this new equilibrium, now automatically 95 has become 100. 95 became appreciation or depreciation? depreciation of domestic currency. That means whichever currency's demand increases, that currency appreciates. Now dollar appreciates, rupee. Now here shortcut is understand which currency's demand is going up. Whichever nation's country's demand goes up, that currency goes up, that currency appreciate, opposite currency. Now life is simple because demand going up, that currency appreciate. But if you understand from supply, reverse. If supply goes up, that currency depreciates. For example, now supply, we'll understand from supply perspective. This is called inflow. What is it called? Wait, black color only I will take. So this was supply of dollar. This is demand of dollar. This was equilibrium, 95 rupees today. Now let's say supply is increasing. Supply increases means RHS shift na. S1 of dollar. Now this is the new equilibrium. At this new equilibrium, now what is happening to the price? Now it is becoming 90. That means rupee from 95 it is becoming 90. Clear? That means what is it? Automatically supply is increasing for which currency? Supply is increasing for dollar. They are bringing dollar now from outside India. What is it from? They are bringing dollar inside India. That means after bringing dollar, 1 second, this monitor is giving full trouble. Okay. Now they are bringing, let's say from outside India, they are bringing money inside India. They are bringing dollar. They are asking for what? Indian rupee. So demand for Indian rupee is increasing by increase in supply of foreign currency. Supply increased, na? That means now dollar value will go down. Rupee value will increase. See, that is what happened here. Appreciation, na? Rupee got appreciated, dollar got. See, this is reverse logic. Whichever supply increases, whichever currencies, that currency gets depreciated. But in demand concept, whichever demand increases, that currency will appreciate. So whenever demand perspective you are understanding, money is going out, outflow. What is it? Whenever you are understanding from supply side, this is inflow. What is it? Clear? If money comes inside India, foreign currency depreciates, domestic currency appreciates. If from India money goes outside, domestic currency depreciates, foreign currency. This is the logic. So always remember from demand side, easy. Whichever currency demand goes up, that currency appreciate, opposite currency. Clear? That's it. By this exchange rate mechanism also comes to an end. They may ask you different types of questions, like various questions they will ask in my material. Usually I will make you to write certain answers like this I have given. See in the next sheet. I will make you to write down certain questions. Clear? And already I spoke about this exchange rate, fixed exchange rate, floating exchange rate. Under fixed exchange rate, we call it as devaluation and revaluation. Floating will be depreciation, appreciation. In fixed exchange rate, stability will be there, but floating, flexibility will be there. Inflation is controlled in fixed, but here inflation is to, let me say, support fixed exchange rate, we should have huge reserve, but here not requirement of huge reserve, just adequate reserves. Clear? And appreciation and depreciation effects. This is just a read only. In my material at last I have given the shortcut to remember also. What all will happen when the appreciation of domestic currency happens? Depreciation of domestic currency happens. Same topic. Whatever we explained, same thing is given here. But biggest drawback of depreciation is inflation will go up. Both inflation, demand pull and cost push. Because we are exporting more now. Rather than selling inside country, we are interested to sell. So inside country shortage will happen, demand will be more, supply will be less, demand pull inflation. And since supply is increasing or decreasing, decreasing in India, but we are also importing lesser. Even if imports are becoming costlier, we can't stop, let's say, life-saving drug, petrol. When we are importing at high price, we should also sell them at a high price, cost push inflation. Clear? By this, unit 5 also comes to an, unit 4. Unit 5 is capital movement. Straight away, we will only discuss about FDI, and in this, FDI is the most important. Whole chapter is dependent on FDI. What is it? Whole chapter is dependent on? Straight away, wait, let me explain it, the main concept itself, from where question is going to come. See, first understand this. Difference between FDI and difference between FDI, foreign direct investment, foreign assets and infrastructure investments are coming to India. That means we are coming to India, investing on assets in India. Investing on in India. That means let's assume, for example, Praveen is a US citizen. He is running some company in USA. Let's say some software company, Google. Which company? Google. He is the owner of Google. Let's assume Praveen is the owner of Google. is coming to India, investing in India by investing on assets or infrastructure. Assets are, that is FDI. Next, instead of investing on assets, suppose if they come to India, invest it on securities market like capital market, stocks, bonds, shares, mutual fund, hedge funds. That is called FPI. See boss, we are not taking the risk of doing business in India. Rather, we will come and invest it on the securities market. That is FPI. If you are coming and doing business in India by investing on assets and investing on, that is called FDI. And whatever the total investment needed, if you are bringing greater than 10 percentage FDI. If the investment is made on equity lesser than 10 percentage, that is called FPI. And when you come to India on FDI way, that is a long-term investment. Here it can be either short or. And when you are coming to India, investing in India, doing business in India, that means you have an interest in management and control. What is it? That means you have an equity participation. Your decision-making authorities are there to the extent of equity participation. But here, equities are held purely speculative motive. That means profit motive. I don't have any rights in ownership or management or control. And when you come to India and invest it on assets and infrastructure, you are producing in India. What is it? It will contribute to, as well as here no contribution to GDP or employment. In FDI, you will just bring technology. It is just a technology transfer. But here it is only a fund transfer. This is the major differentiation between FDI and, since it will contribute to employment and GDP and it is a long-term investment. Indian government is not borrowing loan. Rather, you are only coming to India, investing in India. It is a non-debt financial asset. Which asset? We will give more importance to FDI. We give more importance to what? And how do we enter India? There are two types how we enter India. Very first one, automatic route approval. Second one is government approval. What is the simple concept? In India, RBI and Government of India has come up with one list. These are the set of business which is needed for growth and development of country. If any foreign company, individual or foreign associate, any estates, anyone from the foreign individuals comes to India to set up the business which is mentioned in dash road, automatic road, straight away enter India, register under Companies Act, start performing. You need not to ask government permission. Suppose, let's assume Praveen wants to start an educational institution, university in India. That is not mentioned in automatic route. Now you should ask a permission from the, only if government agrees, government approval. Now in India, there are only two ways of entering. Which are the two way? Automatic route and earlier, we also had third way, that is FIPB, Foreign Investment Promotion Board. Which board? We scrapped it in 2017. What is that? We used to send our MPs, MLAs outside India. Go, have a look, whatever they are doing, how they are improving. You also come and suggest us, we will do. They used to do foreign trip in Indian taxpayers' money with the family members. So later they scrapped it. Now we scrapped FIPB and replaced it with FIFP, Foreign Investment Facilitation Portal. What is it? Foreign Investment Facilitation. Clear? In India, entry is mainly of two types. Most of the entry will come from automatic route only. Clear? Okay, sir, we entered India. After entering India, how do we perform in India? Now, this is important, especially last two. Greenfield and brownfield. Repeated questions are there. See, either we will start a franchising business. Which business? That means we will only come here. We will establish that KFC, Domino's, Subway, franchising model. Or we will become a foreign branch. Which branch? Our own company's foreign branches set up in India, or else we will become a subsidiary company. Which company? We will be under Indian company. Like say we are investing some 26, remaining 74 Indian company has a stake. We will invest 49, Indian company has 51%, or we will invest 51, Indian company will invest 49%, or we have a control of 74 and Indian company has a control of 26. That is 26 is golden share. Next, or else we only have a full control of 100%, 100% subsidiary. Which subsidiary? 100% subsidiaries. Clear? Or else by equity injection, merger and acquisition, or any joint venture. Greenfield and brownfield. Which field? Wait, let me copy. Yeah. This is important. See, whatever I'm explaining now, subsidiary company, associate company, equity injection, merger acquisition, joint venture. Greenfield. That means this facility is not at all there. 100% fresh. 100%. We are only investing, we are only bringing this facility. See, freshly starting in the parent company. Next, brownfield. Already facilities existing. Infrastructure is existing. Either we will come here and merge, acquire, or take it on a lease and then we will develop the new one. But infrastructure was already there. Now in India, especially airport project, which project? 100% FDI is allowed under automatic route under the brown field. Under which field? For which project? They have asked question on this. Clear? And also this attempt they have asked question on this area. Merging, acquisition and leasing. That is brown field. Clear? Huh? So these are the ways through which you will perform. Now comes the most important question. This is most repeated. What is it most? Types of FDI. There are 4 types: horizontal FDI, vertical FDI, conglomerate FDI, reciprocal investment. Horizontal. From the foreign, you will come to India, you will invest in same business. Let's say for example, Yamaha from Japan will come with a bike manufacturing, and also they will set up the same in India. They will sell the same bike in India, same business. That is horizontal. Suppose Yamaha will come, they will not set up the bike manufacturing, they will set up a tire manufacturing in India. Similar business. Which business? One or the other way, it is helping your main business. That is similar. That is vertical investment. You will come to India, neither you will invest it in bike nor you will invest it in tire. You will set up your, let me say, musical equipments like guitar, piano. Totally different business. Totally. Conglomerate investment. Which investment? Sir, we will go to Japan and we will invest. Japan will come to India, they will invest. Exchange offer. That is two-way direct investment. Which investment? Or reciprocal. Appa, this is the most repeated question in exam. Most repeated. One or the other way, they will ask you this question. I will show in exam paper. This is most and most repeated questions. Clear? And what are the reasons for coming into another country for doing FDI business? Simple reason. See, boss, your market is growing. Day by day, your nation's population is increasing. I also want to take advantage. I also want to make profit. And in your country, resources are available for cheaper price. And I can get access to the cheapest raw materials and also I will come to your country. And your country, cheap labor ka dukan. India, see 30,000 you pay salary to BCom fresher. He will be full dedicated to you. Same work, if I have to get it back in my country, 1,50,000 rupees. In India, 5 employees will be there for that. 1,50,000, 30,000 into 5. Clear? Cheap labor. Next, technology seeking. In your country, technologies are, even I will bring technology. With that help, I will also take your infrastructure and we will build new technologies. Artificial intelligence. Next. To earn high profits. See, simple. I can come to your country, exploit your people by giving advertisement with Virat Kohli, Sunny Leon, Katrina Kaif and all. We will exploit. We will make high. And I want to do diversified business. Different business in different countries. And I'm like a multinational company. My product should be there in multiple nations. And Nirmala aunty said, you come, we will give you benefit. We will extract more tax from my people. For you, I will just put 20%. For my people, 30%. Sleeping partner I am with. Next, avoiding trade barriers. If I send goods inside India, Nirmala aunty was putting lot of taxes, tariff barrier, non-tariff barriers and all. Better, I will only come to India, produce in India, sell in India and export from India. That is what Apple is doing now. Environment measures. In your country, environment standard is very low. Whether you pollute river, whether you pollute water, whether you pollute air, no one is going to ask. Anyone dies, then we will think about it. Next, political. See, if political environment has a stable environment, let's say, same government is continuing, let me say after every 5 years, we will be interested in continuing. Suppose every 5 years, if government keeps on changing, new government will never agree for what old government did. Their tax is different, though those government taxes were different. Your policy is different, the old government policy is different. If it is highly unstable, we are not interested to come. If there is a stability over a 5 years, again and again, if the same party, same government continues the rule, that will encourage us for a foreign investment. And next, one or the other way, either for labor, either for land, either for raw material, either for resources, either for selling in the market, we are interdependent. Better, I will only come to your country. Next, internationalization. My product is available in multiple countries like Nestle, best example, Kit Kat, Maggi, coffee, all this. More than 190 countries they are present out of 196. So my product should be available in every place, every continent. Next, global advantage, geographical advantage is there. In your country now, it is located in such a beautiful place. I can connect eastern world as well as western world. Afghanistan is a beautiful example. It connects to Middle East, it connects to Europe, it connects to Asian continent. Three continents. Next, in your country, growth rate is high. 4th largest economy in the world. You are also increasing. We can exploit in your country nicely. Only GDP, that's it. We will also come. We will also take advantage of that high growth rate. And we will also start producing and we will make more profit. These are the reasons why you go for the FDI. Next, advantages and disadvantages. This one's total stupidity. What we speak in advantage, na total stupidity, because full opposite till way. See, we said large varieties of goods and services will be available for people at dash price. Even foreign goods will come inside. Domestic price will also be there. Na domestic producer, foreign producer. Customer will get a wide choice. Because of competition, lesser price. Foreign company starts competing with the. So domestic monopoly gets eliminated. All your Tata, Birla, only they were doing. Now it will also come. But over a period of time, stupidity, you will only create your own monopoly. Next, removes domestic monopoly, as I said. Next, effect on technology. Will bring which technology? Stupidity, your outdated technology, you will bring here and you will start exploiting. Next, employment opportunity. What employment? Low level employment. First of all, you are at technology. What is it? Capitalistic nation. For us, labor intensive technology needed. But which technology will bring? Capital intensive. Not suitable. And effect on environment. You will exploit. You will say optimum utilization. But you will start over exploiting. See, at disadvantages. You will bring which technology? In order to produce. But in India, it is not suitable because we are which country? And you will create discriminate and only low level. All decision making, major employment will be back in your home country. And you will bring which technology? And because of that, you will over exploit our resources. Over a period of time, you will only become monopoly and you will start exploiting us. Advantages, disadvantages. History of FDI. Chapter 10 already you would have studied. Till 1991, we never allowed. Only after 1991, we allowed. And slowly we started removing rules and regulation. We came up with FIPB, Foreign Investment Promotion Board, but we scrapped it. Now we have Foreign Investment Facilitation Portal. And we also came up with SEZ Act. You come to India, produce in India. We will not put any tax. But don't sell in India. Also sell abroad. But we will provide every facility. It is like kind of domestic territory of India, but not a domestic territory of India. SEZ Act. And FEMA under RBI. FEMA is there. That means FEMA will control all this foreign investment coming inside and foreign investment going outside. Under RBI, they will control all foreign investment. And see, FDI is a non-debt financial. For which development? Economic development of the country. How do we enter? Either through or see, over a period of time, slowly we are removing all rules and we are making it more easier for FDI investment. More easier for same way. Not every business we will allow. Certain business we will prohibit. Which are those? Lottery business, chit fund business, gambling business, Nidhi company, that is NBFC. From members will take money and we will give loan for developmental. That foreign company cannot. Transferable developed rights, farmhouse construction, real estate, manufacturing of tobacco and tobacco substitutes, and atomic energy generation and railway exclusively for government. Even private people are not. These are the prohibition list. Which list? Prohibition list of FDI. So these are the informations related to FDI and what all money we have received. India is the highest recipient of FDI, especially service sector. Which sector? IT infrastructure developments. Now AI. For all this, highest recipient. And see, we are ranked 8th among the FDI recipient when? COVID time. Full boom. When entire world is suffering, India's service sector is booming. We got to know. We can exploit people by their home only. We don't want to call them to office. I will only pay your internet bill. I will only pay your electricity bill. Don't worry. You shut and work 10 hours now. Morning 8 o'clock till evening 6 o'clock. Don't worry. Now we don't want you to come to company at all. See, my rent saved in building. All this cab, food facility, pantry facility, cleaning boys, maintenance, AC, full saving. I can exploit you from home only now. You just come once in a week or once in 6 months, enough. For training purpose, we will have office. After learning, you work from home. We will exploit you from home. Don't worry. Full highest recipient of FDI in India, service sector. Next, FPI. As I said, it is investment on capital markets like bond market, stock market, mutual fund, less than -% investment. And there is no management. Equities are purely held as a speculative purpose and opportunity purpose, as a profit oriented. And whenever this FPI brings money, they will bring huge volume of money like 10,000 crore, 2,000 crore, 5,000 crore, 12,000 crore, 20,000 crores. They will put huge money inside India. That is what money enters India. Liquidity gets, let me say, fluctuated now. Open market operations has to be done. When foreign funds are coming inside India, going outside India. Now, whenever these guys bring huge money or take out huge money, my domestic stock markets will become more volatile. Domestic stock markets will be more and more. If you sell or if they bring, automatically it will go up or automatically it will come down. And it will not provide any opportunity on employment. And simple concept, boss, I am interested to come to your country if there is a growth potentiality. If I can earn profit, where I can easily take out my funds back and I will say tada bye bye. Suppose if investment confidence gets shaken, last points here, if the investment confidence gets, this capital has a tendency of speedily shifting from one country to, and when this happens, that will make your domestic market more and more volatile. So in your country, if there is a growth potentiality, I will come, I will invest. My intention is only profit motive. Which motive? Clear, understood. And there is one more point here, which you have to understand in FDI concept. See, FDI, when we say investment not bought at first time, even subsequent investment. Which investment? Even that is FDI. Same way, even in FPI, whenever you are bringing not just first time, even subsequent whatever you bring and invest it on the securities market, that is also FPI. Clear? And remember, in India, not every business we are allowing 100% FDI. For few business, we are allowing 100%. For few business, we are not allowing. See, in chapter 10, that informations are there. See, in service sector, telecommunication sector has -% FDI. In insurance business, earlier it was 49. Now we have increased it to. Like this, under automatic route approval, certain business has a certain percentage. Like 26, 49, 51, only for few. 100, for few completely prohibited. What is it? Clear? By this, entire syllabus revision comes to an khatam. Clear? So anyone having any topic doubt or you want me to do any particular topic, once again, let me know. So hope so that past 4 days, 16 hours of torture. Almost 16 hours of torture, 4 hours every single day for 4 days. I know, see, in few places I have gone little fast. For the very reason, if I go slow there, you will sleep. That is for sure. And macroeconomics, now you have to sit, you have to read. You should learn that information. First and foremost, you should know the logic, why it is done. Like for example, fiscal policy, monetary policy, why it has been done. What is the effect? See, there will be having repellent effects. If one element changes, a series of elements will also. That entire overall logic is most important. And the same, this whatever the, let me say marathon is there, this will get uploaded in the YouTube for free. Whenever you want to revise, you can take it. And even previous videos will be there. In previous videos, actually I've gone little more detailed. Almost like 20 plus hour. In one of the video, 26 hours and all is there. Almost 20, that is 1,40,000, 1,70,000 views are there. That means most of them will sometimes, after the result, they will text me in Instagram, sir, by looking into your marathon, we passed. I'm like, sir, we didn't even purchase your class. We just saw your marathon when we passed. That really feels happy. Sometimes, see, there are people who may not be able to afford the classes, who may not be able to come down, who may not be able to, let's say, for example, purchase the class once again. They would have bought it somewhere. Maybe they have not understood. They may have to relearn things again. So definitely it feels happy at one point of time. See, that is what the real result for a teacher is not, let's say when you, after the class you say that, sir, we learned, sir, it was good. When you come out of exam hall, that time when you say, Allah, sir, we have done excellent. This is what it was expected. This is what has come. That is what we have made. That is the real review. On the day of exam, when you're coming out and you're texting me or when you're calling me up, when you speak, sir, this is what we learned, this is what exactly has come, this is what we have covered, this is what we cracked it. That is the real review. That is what I usually say. Once the class done, the review is just half, 50%. The next 50% review comes on the day of exam, not even on the result day. It is on your day of exam. See, result day is just an outcome of your efforts, what you have put in as an effort. So equally you have to concentrate on every subject. There is nothing called as this is my favorite subject, this is my favorite. You should concentrate on every paper. You have to, I know that, sir, maybe some paper I am finding it difficult. Some paper I'm really good at. It's up to you, but which you are really good at, make sure that you are banging in that. Minimum 70, 75, 80 should be the score in that. Whichever you are really good at or extremely good at, that is bare minimum 75. You cannot come below that 75 at all. So make sure that you are giving equal importance to all the subjects. And any doubts, feel free to connect. I hope you have my contact number, everyone. In the material first page only it is there. And even my mail ID is there. Clear? So text me up. Better way is texting me up in the WhatsApp. So usually 24 hours I will reply. If I am at class like this, like morning 4 hours, evening 4 hours, morning 5 hours, evening 4 hours, sometimes expect a delay in response. Or you can also post it in Arivupro portal. There I may not be that active, but WhatsApp, like for example, you will get a response. Immediate means you should come and meet me only. I will be roaming here and there Allah, for the classes part, break part, like this. The students used to come and ask doubts Allah, like that. If you want immediate response, you have to personally meet me. If not, usually within 12 hours or 24 hours, I usually respond. If I don't respond, give one missed call in WhatsApp only, so that your chat somewhere would have gone down Allah. It will come back. It will come to the top again. At least there is a high chances that I will see that fast. Clear Allah? All the best. Make sure that you guys prepare well, give your best, and come out. After coming out of exam, don't worry much. Even if you tensed, even if you don't get tensed, result day is going to be the same. Whatever you have prepared, whatever you have given best, relax, enjoy until your results. Meet you guys in CA. There also, torture comes at last. Paper 6B, strategic management. Here also last paper, there also. Devil always comes at last. There I will only handle 50 marks there, not 100 marks. FM and SM, financial management 50 marks, strategic management. There SM I will handle, FM will be handled by other faculty. Clear? Bye bye, we'll meet you guys in CA. Inter. Clear up? Chalo, online students, any other doubts you have? Okay, bye bye, we'll meet you guys in CA Inter.